Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Today, we are very happy, very excited, very joyful, very thrilled, very excited again to present to you the best marathon of CA Inter Audit in only English. Yes, guys, you heard it right. This is the best thing you are ever going to see on YouTube, probably. We have worked very hard to give you this marathon. Guys, what does this cover? All 11 chapters of audit as per new syllabus. Number 2, detailed conceptual clarity in all chapters. Number 3, wherever possible, we have tried to make you learn in the class itself. We have done our work. Now it's your time to bring wonderful, awesome, mind-blowing result. Guys, we are sharing a piece of our heart with you. We have whatever we know, we have given you to the best of content in shortest possible time. Okay, see it as many times as you can. Okay, what do we want from this marathon? Number 1, see this marathon as many times as you can. I assure you, I tell you, okay, there is no stamp paper guarantee, but I can give you that also. More number of times you see, more your confidence will increase. Every time you see it again, I bet on you that your confidence will be one level higher. Okay, so it's a humble request. We have given almost everything to this marathon. You make the best use of it. Watch it as many times as possible. This is pure gold content. And one more request, if I could do, okay, please like this marathon so it reaches maximum number of people, so we can pass the same positivity, same hard work, same enthusiasm to other students also, because YouTube works in that way. Okay, if you like, YouTube feels it is good, it will pass on to other people also. So if you like it, definitely give it a like button. And whenever we meet or wherever we meet, the world is very small, as they say. Just give a small smile. We will understand we are doing our bit for India. We are contributing to India by giving such kind of masterpiece, amazing, excellent, mind-blowing, extravagant lecture. More adjectives I don't know. Okay, so enjoy this masterpiece. Okay, fall in love with audit. Okay, we have given almost every single thing to this. Now it's your time to give wonderful result. And once you pass CA Inter, don't forget to comment on this marathon. Okay, and I will be so happy because we read each and every comment. Let the show begin, guys. Enjoy the best marathon, best thing on YouTube which you are ever going to see for CA Inter. The marathon is all yours. 3, 2, 1. Let the show begin. Thank you.
5, 4, 3, 2, 1.
Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Yes, guys, today we are very happy, we are very excited, we are very thrilled because we are bringing to you India's best revision lectures of audit. And yes, you heard it right. All the students who don't understand Hindi, who understand English a little better. Yes, these lectures are in only English. So for all the South students who were requesting since a long time, only English, only English. Yes, guys, We are there today. Okay, we are starting the only English revision series of Audit. Get ready to enjoy the best lectures of Audit in only English. Okay, what will be there in this revision series, in this revision marathon? Number one, world class revision lectures for all 11 chapters of Audit we are going to cover. Number two, okay, we will try to explain all the concepts. Okay, every concept will be covered. Number three, wherever possible, wherever we need to learn, we will make you learn in the lecture itself. Okay, of course these will be revision lectures. Okay, so you have to keep in mind that. Don't worry, we will work very hard that this is the best marathon for you as well and me as well. Okay, sir, from where are you going to do revision? Can you explain? We will do it from our magic book. Those of you who don't know, since many years this book is there. It's a summary book. We have compressed almost entire Audit in roughly 80 to 85 pages. So this is the magic book which covers all 11 chapters in around 80 to 85 pages. From this we are going to do. We don't have any soft copy of this because these are encrypted book. Plus we believe only hard copy brings hard result. Soft copy brings soft result, and we want hard result. The more you write in the books, okay, more you make it dirty, there is a high chance of result. So only hard copy is available at printing cost, but there is no compulsion. If you feel it will be fruitful to you, useful to you, you can buy. Otherwise ICI module is there, not to take attention. Okay, so yes guys, all the best to you, all the best to me. I hope, I wish, I pray that we shoot the best lectures of India. So you, me, both can have immense benefit out of this. What do I want from this revision series? Watch it as many times as possible. Okay, it's almost going to be a 20-hour, 19-hour, 18 to 19-hour revision series it is. Watch it as many times as possible. Okay, one time, two time, I give you absolute assurance. More number of times you watch, more your confidence will keep on increasing. I bet you on this. Okay, so make the best use of it. Okay, that's the only thing I want to tell you. Okay, do like the video so it reaches maximum number of people. Only if you like, you have to like. Don't like just as it is. Okay, and nothing as I want to tell you, nothing else. Okay, let's start right away. Today is the day of chapter number 1. Okay, what's the name? Nature, objective and scope of audit. What is the meaning of nature of audit? Nature basically means what's the meaning of audit? Advantage, disadvantage, features, okay, all such things and nature. What is the meaning of objective? Why am I doing audit? Okay, what's my objective of doing audit? Scope, what it covers, what it doesn't cover. In audit, what are things are covered and what things are not covered. Can we start? Yes, sir. Let's start right away. First is definition. Audit is independent examination of financial information of any entity. Let me break word by word. Word by word. See, it will take little time. 15-20 minutes I will build the base. So it will take time. After that we will go smoothly. Okay. What is the meaning of independent? Independent means auditor should be nowhere related to me. It should be completely different. Let me take simple example. If I do audit of my dad, okay, my dad has a 3-star hotel. If I will do audit, it is bound to be I will do biased audit. If I find any GST mistake, okay, that this mistake you have done, that will say, hey, first who came? CA came or you came? I said I came. And who gave birth? I said you only gave. Barabar, you and mom together. Then nicely audit. What is this GST, PST? Okay, our CA comes later. In dad, no GST. And I have to listen to my dad. I cannot be independent. That is why auditors should be independent. Why? There are so many people who invest in company based on an audit report. If auditor is not independent, if auditor is not biased, we are cheating 30 lakh people who invest in Reliance. Guys, today 35 lakh shareholders are investing in Reliance based on one report. Okay, they feel the Reliance has nothing done wrong. Auditor has checked everything in detail, given reasonable assurance. But if auditor is related to Reliance, auditor is under influence of Reliance, auditor is under some pressure of Reliance and gives biased report, Okay, then auditor is not wrong, but 30 lakh people are cheated because they believed that CAs are independent, CAs verify everything, CAs have full knowledge. Are you clear? So number one, auditor should be independent. Independence has two aspects: independence of mind, independence of appearance. What is the meaning of independence of appearance? Appearance means from appearance he should be independent. I should be nowhere related to the company, I should not hold any share of company, my relatives should not work in a company, I should not take loan from company, nor should I give loan to company, nor should I have business dealings with company. Thousand rules are there, but that is all in company law. In simple, clearly I should be independent. No one can tell I should have any relation with the company. My wife should not hold shares, I should not hold shares of Reliance. Independence of appearance. What is independence of mind? State of mind which allows me to form opinion on my own without being affected by other. Such mind which tells me I am not under pressure of anyone to work, I will work on my own. Tell me when pressure will come? When I have only one or two clients. If I have only two clients, okay, if they go away, my belonging, my survival will be very difficult. Okay, so that time it could be that I'm not exercising independence of mind, but it's okay, I will get another work. Okay, not only from appearance I should be independent, I should be independent from mind also. Let me take parallel example, you will understand. Many times in class, okay, through appearance you are saying that you are understanding, but from mind you have not understood. Sir will ask, did you understand? Yes, 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 fully understood. This is independence of appearance. In appearance you are telling, but from mind you are saying, was teaching, did not understand anything. What is this bakwas teaching? Are you clear? So from mind you are not independent. So tell me, auditor should be independent from mind or appearance? Both. So one word I explained. Audit is independent. What's examination? Checking. Now you will tell me what to check. Shall I check employee efficiency? Shall I check fixed assets are working? No, only financial information. So audit is independent examination of what? Financial information. Now you will ask me next question. What is financial information? It is financial statement and books of accounts based on which such statements are there. Books of accounts and financial statement. Next question. What is financial statement? Very simple. Five things. Balance sheet, P&L, cash flow. Balance sheet, P&L, cash flow. Statement of changes in equity, notes to accounts. I hope you know this. Statement of changes in equity, notes to accounts. One last time. Balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. So one last time. Audit is independent examination of what? Financial information. Whose? Of any entity, whether profit oriented or not. Irrespective. What is the meaning of profit oriented? Be it a profit making company Reliance or loss making company Paytm, we will audit all, profit oriented or not, irrespective of size or legal form. Or let any size, be it as big as what? Tata, or as small as what? A barber shop, or as small as what? Tea shop. Everyone's audit. Coffee shop, irrespective of size. Legal form. What is legal form? Sole proprietor, partnership, HUF, LLP, company. Anyone, sole proprietor, partnership, HUF, irrespective of size or legal form. When such an examination is done, what is examination? Checking with a view of expressing an opinion. Why am I doing audit? For time pass? No, to give audit report. What is expressing opinion? Audit report. Four types of report are there. Of course, that also we will see. Okay, so very simple definition. Three times we will speak. Audit is independent examination of financial information of any entity, whether profit oriented or not, irrespective of size or legal form. When such an examination is done to express an opinion thereon. Shall we speak the last time? What is audit? Audit is independent examination of what? Financial information. Whose? Of any entity. What is any entity? Whether profit oriented or not, irrespective of size or legal form. When such an examination is done with a view of expressing an opinion thereon. Small break, 5 seconds. Okay, audit is independent examination of what? Financial information of any entity, whether profit oriented or not, irrespective of size or legal form. When such an examination is done, why? With a view of expressing an opinion thereon. Okay, thereon means what? On financial statement. What is opinion called? Audit report. Okay, come here now. Next, overall objectives of independent auditor. How to remember? As per SA 200. So OO is there. Here also OO is there. 200 has double O. Here also double O. What are the objectives? After this, our base building will be over. Number one, auditor will give reasonable assurance that the financial statements are free from material misstatement. Not understood. What's the main objective of audit? To get reasonable assurance that the financial statements are free from material misstatement. What do you mean by reasonable assurance? Nicely listen. Reasonable assurance is a high level of assurance, but not absolute assurance. Okay, word by word. I want to get reasonable assurance that financial statement don't have mistake. Okay, but what is reasonable? High level of assurance but not complete assurance. Now you will ask me, why shall I not give complete assurance? Okay, four questions are there, all four have one common answer. One more time. Okay, why do I give reasonable assurance? Why audit risk can never be zero? Why auditor gives true and fair view and not true and correct view? Okay, because there are limitations in audit. See, audit also has limitations, so I can never give full assurance. One last time. Okay, three questions, one answer. Number one question, why I give reasonable assurance and not absolute? Second, why audit risk can never ever be zero? Okay, and third, why I give true and fair view and not true and correct? Why? Because there are limitations. What are limitations? Nature of financial reporting. Our financial reporting is based on lot of judgments by management, and these are subjective decisions. Now you will tell me, what is the meaning of word subjective? Changes from company to company. Our financial reporting is based on lot of judgments, and these judgments are subjective. Changes from company to company, management to management. Let me take five assumptions. Provision for bad and doubtful debt, useful life of asset, rate of depreciation, provision for warranty, impairment loss. Now these are based on judgments which will change from company to company, management to management. When you are preparing financials only on judgment, how can I give complete assurance? Okay, you are preparing on judgment, never ever absolute assurance is possible. So our financial reporting is based on assumptions, so I can never ever give complete assurance. Second, future events. See, going concern, I am saying business will be valid for unlimited number of years. It will be valid, but future is in no one hand. Future events or condition may cast significant doubt on entity's ability to continue as going concern. What if government will ban plastic tomorrow? Government will say ban petrol tomorrow. Okay, government will say compulsory electric vehicle. Many companies will go insolvent. I can never give absolute assurance. Who would have thought Sahara would be closed? Sahara was sponsor of Indian cricket team. Jet Airways would be closed. Okay, so there are future events which are never ever in my hand. Adverse event may affect the entity's ability to continue as going concern. Third, auditing procedure. I do audit with such state of mind that company has not done any fraud. Remember, audit and investigation are different. Investigation is done with a critical purpose to find out fraud. Audit is different. There are limitations on auditor's ability to get audit evidence. When I go for audit, I always believe management is perfect. I always believe there is nothing wrong done. There is a beautiful saying, auditor is a watchdog and not a bloodhound. What do you mean by the word watchdog? I am like a dog. I will keep smelling. If I find anything is fishy, I will go in detail. Okay, I will go very much in detail. But inherently, I feel company is correct. Company has not done anything wrong. And plus, if they do wrong, they will not tell me, sir, in purchase we have done wrong. Or please check purchase in detail. We have done wrong. So don't let us escape. Or please no. Okay, especially if it's a fraud by management. Employee fraud still can be caught by management or auditor. But if management has done fraud, they will never ever tell you. And I do audit with what state of mind? Everything is correct. So what is written? There are limitations on auditors' ability to get evidence because I believe everything is correct. And plus, if they have done fraud, they will not give me complete information. Similar point, not in nature of investigation. Okay, audit is not investigation. Investigation is done when there is a fraud. SEBI will tell, check creditors, check lenders. Okay, see, auditor cannot get absolute assurance that the financial statements are free from material misstatement. He doesn't have power of search, seizure, which are available with income tax officer. Okay, last point, timeliness of financial statement and relevance of information. Relevance, decrease in relevance of information over time. See, I want financial, I want things fast or slow. Okay, today there is deadline pressure, so I want maximum information in shortest time. If I want more information, there will be more cost, yes or no? On another side, I have to keep my audit also profitable. If I incur too much cost, there will be loss in audit. So tell me, on one side I want data very fast. If I want fast data, I need to incur more cost. On another side, I have to run my audit also properly. Audit should be a profitable engagement. So maintaining balance between the two is difficult. Let me explain again. See, we want more information early to get more benefit. But if you want more information due to deadline pressure, 15th April, we want our report to be ready. Okay, so we want more information, which will lead to more cost. And if we incur more cost, our engagement won't be profitable, audit engagement. So we need to maintain balance between benefit and cost. On one side, I need information fast, but in minimum cost. So in that minimum cost, whatever data I get, okay, I can never ever give complete assurance. I'll always give reasonable. Let's take parallel example. People say you should enjoy the life. Okay, 17 to 20 is a beautiful age. Have a girlfriend. Okay, go out with friends. This is the best age. But on another side, you have told me pass CA. So I'm not able to understand, shall I enjoy or shall I pass? I am not able to do both things. Balancing the two is little difficult. I hope you are clear. Okay. How do I remember this? Very simple. 4 question, 1 answer. Number 1, why do I give reasonable assurance? Why audit risk can never ever be zero? And one more question was there. Okay, why I give true and fair view and not true and correct? And last, what are limitations in audit? Auditor is fatty, fatty or fatty, whatever you want, fatty or fatty. Okay, auditor give fatty or fatty, fatty. Okay, F, nature of financial reporting. One more F, future event. 2F, nature of financial reporting, future event. Nature of financial reporting, future event. Nature of financial reporting, future event. A, nature of auditing procedure. Nature of auditing procedure. T, timeliness of financial statement and decrease in relevance of information over time. With what it means, I want financial data fast, but the information importance will reduce over time. I need data fast but in less cost, so my audit is also profitable. Maintaining balance between information and cost is difficult. So timeliness of financial statement and decrease in relevance of information over time. I, not in nature of investigation, not in nature of investigation. Clear? Okay. You have to learn very nicely what are limitations in the process of audit. Auditor ki fatty or fatty, whatever you want to say. Okay, what is F, nature of financial reporting. One more F, future events. A, what is A, nature of auditing procedure. T, timeliness of financial statement and decrease in relevance of information over time. I, not in nature of investigation. Learn nicely, your time starts now. Clear? If you are ready, we will start. Done? Chalo, what are inherent limitations in audit? Why auditor will always give reasonable assurance? Why auditor will give true and fair view? Auditor ki fatty or fatty? Nature of financial reporting. Future events. What's A? Okay, nature of auditing procedure. Timeliness of financial statement and decrease in relevance of information over time. I, not in nature of investigation. Simply clear, fully super duper clear. Come here, I have only explained one word. To obtain reasonable assurance that the financial statement are free from material misstatement. Let me explain what is material. See, misstatement means mistake. Okay, let me explain mistake first. See here. Not in detail, but briefly you should know what is the meaning of misstatement. Come here, come here, come here, come here, come here. See, to obtain reasonable assurance, financial statements are free from material misstatement and prepared as per FRF. Let me explain first what is FRF. Financial Reporting Framework. Just break the words, okay? Financial statements are as per FRF. Financial Reporting Framework. Whatever financials are there, I will report, present it as per the framework. What is framework? Rules, regulation, policies, procedure to be used for preparation and presentation of financial statement. Framework is nothing but rules, regulation, policies, procedure used for preparation and presentation of financial statement. Who will decide these rules? Okay, basically depends on nature of entity and laws applicable. What is nature? What's your business and what are laws applicable? In India, all companies have to follow Schedule 3. So that's what FRF. Okay, banking company have to follow Banking Regulation Act, RBI Act. Insurance company, IRDA Act. Clear. So basically, what's the framework? That's rules, regulation, policies, procedure. Every family has certain rules. Same way, financial statement should be prepared as per FRF. Who will decide FRF? Your entity and laws applicable to that entity. What's your business and what laws are applicable? Example, in India, financial statement should be as per Schedule 3. That is what law is applicable. We have to follow AS. Understood? Okay. Now, what is misstatement? Very important word. Listen nicely. Come here. Very simple. Huh? If you don't learn, it's okay. Misstatement basically means mistake. What is What is state? State means to tell, to mention, to specify, to assert. Okay. What is misstate? Telling wrong. Okay. Wrong mistakes are misstatement. Basically, mistake is misstatement. But what is the exact definition? Misstatement is difference between CAP. What is CAP? Classification, amount, presentation and disclosure of a reported financial statement item, and classification, amount, presentation and disclosure required as per FRF. Okay, simple, did not understand. Slowly. What's the next? See, misstatement is difference between classification, amount, presentation and disclosure of a reported item, and classification, amount, presentation and disclosure required as per FRF. Means very simple. Let me take easy meaning. You have written this answer. Misstatement is difference between your answer and answer required as per ICI suggested answer. Simple. So it's the difference between your answer and answer required as per ICI suggested. Over. So misstatement is difference between classification. Catch the first word. What you have done? Scrap sale and normal sale you have included together. So sales have increased from 100 to 900 crore. But 800 crore is scrap sale. You need to mention separately. Other shareholder will believe that, oh my god, 8 times sale increase, company doing very well. But you have done classification mistake. You have not shown scrap sale separately. Current and non-current you have to classify separately. Clear investments, asset, everything. What is the amount mistake? There was a sale of 1000 crore. You added 10,000 crore. Complete meaning changed. Class amount you changed. Purchase 1000 crore. You did how much crore? 100 crore. Array, then your profit is inflated by 900 damn crores. It's a mistake. Classification amount. Presentation. You did not show bad debts net. Okay. Debtors have to be showed net. You showed gross debtor. Opposite side bad debts you showed. Wrong. Nothing wrong you have done, but presentation is wrong. Okay. Discontinuing operation. One company is going to get closed. You are not showing separately. Shareholder will take decision thinking this is going to continue. Why don't you show you are going to sell this company? It's a discontinuing operation. You are going to close it. Okay. So very simple. Classification amount presentation is wrong. Okay. Classification amount presentation disclosure. Okay. 4 new court cases are there. You have not shown only. What if you will lose the case? You have to pay liability. Okay, so court cases you have not disclosed. Very bad. Related party. Okay, related party transaction not shown separately. Though they are included, but you have to show separately is required as per AS 18. It is also a mistake. So mistake can be done in 4 forms. You don't have to learn but understand. Misstatement is difference between CAP, classification, amount, presentation and disclosure. One more time. Classification, amount, presentation and disclosure of a reported financial statement item. And classification, amount, presentation and disclosure required as per FRF. FRF means what? Rules, regulation, etc. I hope you are clear. So now we are not concerned with all mistake. No, 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 no. Only material misstatement, it should not be there. What's material? Anything which can influence the decision of user. Now you will tell me, but what can influence the decision? Very nice question. It's usually 1% of sale. Okay, as of now. Detail it will come in chapter 3, but as of now 1%. So if my sale is 100 crore, 1% is 1 crore. Any mistake above 1 crore, if it is there, it's a material misstatement. I need to get assurance that the financial statement are free from material mistakes. Small mistakes, okay. But it should not exceed 1 crore, provided my sale is 100 crore. 1% of that, okay. Roughly in detail, chapter 3. Number 1, to get reasonable assurance that the financial statements are free from material misstatement. You got assurance now? What you will do? What you will do with assurance? Report on the financial statement and communicate as per standard on auditing. Second objective is what? To report on the financial statement and communicate as per essay. Okay, so 2 objectives I have. Number 1, to get reasonable assurance. Number 2, to report on the financial statement and communicate as per what? Standard on auditing, as per essay. Okay, so there is essay which tells how to report. There are 4 types of report. This is the last introductory part. Okay, come here. Very easy. After this, it will be very simple. Okay, because your base will be clear. Start. Okay, what are 4 types of audit report? Unqualified, qualified, disclaimer, adverse. One more time. Let's hear it, guys. Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. What's unqualified? See, qualified basically means person who is literate. Okay. Unqualified means not so literate. But second meaning of qualified is conditional. What's unqualified? Without any conditional. Financial statements are as per FRF. Everything is proper. Balance sheet, P&L, everything. Current asset, current liability, fixed asset. Mistakes might be there, but they are immaterial. So if financial statements are as per FRF, Schedule 3, AS, Companies Act, unqualified report, clean report. Okay, misstatements may be there, but they are immaterial. Second, if there are misstatements in one area, if misstatements are material but not pervasive. What is pervasive? Effect is not spread to multiple account, multiple assertion. What is assertion? I will explain in chapter 3. Effect is not in multiple account. Mistakes are there but only in debtor. Okay, it can be there. Then qualified. Qualified, why? It means conditional. Except debtor, all is good. Except debtor, all is good. Okay, debtor is wrong, understood. Except debtor, all is good. Example. I hope you understood. If this much water is green color, okay, this much water means other water is so perfect. No, it's white. Only this much. Misstatements are this much material, but they are not pervasive. They are not spread everywhere. Okay. If they are spread everywhere, then if the misstatements are both material and pervasive, effect is spread to multiple account, multiple assertion. Okay. Then it's adverse report. Okay. Because everything is wrong. Whole water adulterated. Okay, if entire water is green, then it's adverse report. Current asset, current liability, fixed asset, borrowing, share capital, everything wrong. Adverse report. Misstatements are both material and pervasive. But sir, what if I don't get evidence in these? If I get evidence, One area mistake is there, it is qualified. If the mistake is in multiple area, effect is not limited to one account but multiple, then adverse. But if I don't get evidence of one area, like you can check everything but don't check this data. So I feel mistakes could be material but not pervasive. Why not pervasive? Only one area, no, still qualified. Still qualified. But if they are saying, you go, they are like, books are with income tax. You're like, no, I want to audit. Books are with GST authority. Like, no, I want to audit. Books are with the custom department. Means you are not able to audit only. So you believe misstatements could be material and pervasive. Could be material and pervasive because nothing you are able to audit. Then you will give disclaimer report. Disclaimer means I was engaged to do audit, but I couldn't do audit. I was engaged to do audit, but I couldn't do audit. I hope you are clear. What are four types of report, guys? Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. Very simple. If everything is perfect, unqualified, mistakes are there but they are only in one area, not multiple area, okay, then what will come? Qualified report. Or you couldn't get evidence only in one area. See, you get evidence or couldn't get evidence, but they are only material but not pervasive, then qualified will come. If you believe or if you know mistakes are material but not pervasive, okay, if you believe they could be material but not pervasive, you did not get evidence, still qualified. But if you feel mistakes are material and pervasive, adverse. Could be material and pervasive, disclaimer. Many people, they feel always disclaimer will come if I don't get evidence. No, if I don't get evidence for one area, I cannot say I cannot give whole report. I will still give report, but except that area. Except that area. Okay, so qualified will come. If I don't get evidence in one area, qualified. I hope you are clear. Okay. Chalo, very simple. What are the objectives? To obtain reasonable assurance that the financial statements are free from material misstatement and prepared as per FRF. Second, you got assurance to report on financial statement and communicate as per SA. How many reports? 4. Unqualified, qualified, disclaimer, adverse. Read nicely. Clear? Super duper amazing, mind blowing, clear. Okay, shall we go ahead? Yes. Now we are actually starting. Okay. First question. Auditors should keep in mind following points to ensure my financial statements are not misleading. See, my financial statement has 5 parts: balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. They are not misleading. So I will check 6 things for that. How many things? 6. Number 1, accounts are as per entry from books of accounts. My accounts are as per the entry, but before entry what comes? Transaction. So based on transaction I would have done what? Entry. Based on entry my books of accounts are there. Very simple. Accounts are as per journal entry from books of accounts. Okay, so accounts are drawn up as per the entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. What is sufficient? Quantity. What's appropriate? Quality of evidence. Can you take some example? Example, I've done sales. There should be sufficient quantity of evidence sale has occurred. Example, purchase order will be there. I would have sent a quotation to him first. Then he would have given, the vendor would have given me what? Purchase order. Then I would have prepared an invoice. Then I would have a lorry receipt saying it is delivered. If this much document are there, quotation is there, purchase order is there, invoice is there, delivery receipt is there, I can say there is sufficient evidence. When will I say appropriate? Quality. Okay, if everything is matching, in purchase order rate is 32, in the invoice rate is 32, in the contract rate is 32. Its quality of evidence is also good. So there should be appropriate evidence, sufficient quantity, appropriate quality. I hope you understood. Okay, in detail it will come in chapter 4. Third, none of the entries are omitted in the process of compilation and nothing which is not in books has found its place in financial statement. None of the entries are omitted. Many times we omit purchase. Why? I will show purchase of this year, next year. Why? So my profit is more. If my expense reduce, profit will be more. No, none of the entries are omitted. Nothing which is not in books has found its place in financial statement. Sales are not in books, but I am including dummy sale. Why? To achieve certain target, companies do this. They want this amount of valuation. Okay, so they will show some dummy sale during year end. Okay, 2 point. Okay, none of the entries are omitted in the process of compilation. Don't omit. Nothing which is not in books has found its place in financial statement. Usually what I will omit, expenses, and what I will include, dummy sale. Very simple. None of the entries are omitted. Nothing which is not in the books has found its place in financial statement. Clear? Next, so first 3 points are done of entry. Now we'll come to statement. Information conveyed by statement is clear and unambiguous. Confusing should not be there. Okay, clearly sales and scrap sales should be shown separately. Okay, so unambiguous it should not be. Amount in financial statement is properly classified, described, disclosed. What's classified? Properly divide between current, non-current. Classified, described. For all entries, we should have a proper narration. Okay, and disclosures, AS1 disclosures are there, AS18 disclosures are there. Okay. Last, statement of account show true and fair view of operational results, P&L, asset, liability, balance sheet. Simple. Okay. So 3 point. Auditor should keep in mind following point to ensure my FS are not misleading. What is FS? Financial statement. Entry and statement. Entry and statement. What is entry? 3 points of entry, 3 points of statement. Only remember one, rest all will be easy. Accounts are drawn up with reference to entry from books of accounts. All the entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation. Nothing which is not in the books has found its place in financial statement. Learn first 3 points one more time. Accounts are drawn up as per entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation. Nothing which is not in books has found its place in financial statement. Learn nicely. 5-second break. First 3 point, entries. Clear? Chalo. Accounts are drawn up as per entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation. Nothing which is not in books has found its place in financial statement. Okay. Last 3. Information conveyed by statement is clear and unambiguous. What is inside the statement? Amount. Amount in financial statement are properly classified, described, disclosed. Last, statement of account show true and fair view of operational results and assets and liability. Very simple. Information conveyed by statement is clear and unambiguous. What is in the statement? Amount. Amount in the financial statement is properly classified, described, disclosed as per AS. And last, statement of account show true and fair view of operational results and assets and liabilities. Learn the last 3 points also. Done. Chalo, information conveyed by statement is clear and unambiguous. Amount in financial statement is properly classified, described, disclosed. Statement of account show true and fair view of operational results and assets and liability. Learn nicely. 1, 2, 3, start. Auditor should keep in mind following things to ensure financial statements are not misleading. Entry statement. Entry statement. Accounts are drawn up as per entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation, and nothing which is not in books has found its place in financial statement. Information conveyed by statement is clear and unambiguous. Amount in financial statement is properly classified, described, disclosed. Statement of accounts show true and fair view of operational results and assets and liabilities. Next question. Scope of audit. What does scope include? What it doesn't include? As a auditor, statutory auditor, what will I check? RAP I will check. RAP. Okay. Reliability and sufficiency of financial information. All information should be reliable and sufficient. Okay, so reliability and sufficiency, auditor will check by assessing accounting system and internal control, carrying out test, inquiry and other procedure. Very simple. See, before checking any area, big four companies do what? What is big four? Top four companies in the world doing audit. ENY, KPMG, PwC, Deloitte. Those of you who don't know, I am an article of Ernst and Young. Okay, so if you learn our audit, of course, these are revision lectures. In no way substitute to regular or fast track. They are just love. If you attend our lectures, I think it will be the best world-class lectures are there. Okay, so if you like these lectures, do refer to your friends. Okay, they will get unparalleled conceptual clarity. Okay, go ahead. Okay, so how to check reliability and sufficiency? By making a study of accounting system and internal control. So I will check the system is perfect or not. Purchase. If the system is good, other things will be good only. See, always remember, first in big four, for any area, they check controls. If controls are good, then rest things are good. Let's take example. If parents are good, children are bound to be good. Because children are nothing but reflection of parents. So number one, check what? Accounting system, internal control. Based on that, test, inquiry, other procedure. If sale control are awesome, other procedure will be less. If sale controls are third class, other procedure will be more. Simple. Reliability and sufficiency of accounting records, financial information. Auditor assesses information in accounting data and so accounting record and source data is reliable and sufficient. What is source data? Vouchers. How to check? Number one, making a study of accounting system and internal control. Based on that, okay, carrying out test, inquiry, other procedure. Two, coverage of all aspect of entity relevant to financial statement. I will check everything, but only relevant to financial statement. Means asset, liability, income, expense. Asset is working properly or not. Employee is coming on time or not. Employee is working properly or not. That's not my concern. Coverage of all aspect of entity, but only relevant to financial statement. Come to third, proper disclosure of financial information. Auditor will see financial statement properly summarize the record, judgment used by the management, accounting policies are consistent or not. Basically two things here. Judgments, okay, already discussed. Useful life of asset, rate of depreciation, okay, method of depreciation. Judgments are proper. Accounting policy is used, method of depreciation, method of inventory valuation is proper. Okay, so in proper disclosure of financial information, what I will check? Okay, auditor will see financial statement properly summarize records and transaction. Second, judgment used by management are proper. Accounting policies are consistently applied or not. I hope you are clear. So what is included in the scope 3? RAP. What is included? RAP. Very simple. Reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. B. Proper disclosure of financial information. One last time. Scope of audit. What does it cover? Reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. Proper disclosure of financial information. Learn nicely. Small break, 20 seconds. Time up. Scope of audit. Okay, what will be covered in audit? Number one, R. Okay, reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. Proper disclosure of financial information. Clear? Yes, sir. Now come here. What is not included in audit? Auditor will not do things which fall outside the scope of his competence. Example, okay, coal mines are there. You cannot value coal mine. Okay, how will you go inside coal mine? Black body will come out. Okay, so I cannot do things which are outside my scope. Okay, inventory, if there's complicated gas inventory is there, how can I value gas? I am not champion in that field. Okay, actuarial valuation, PF, gratuity, these workings are done by actuary, so I will only do those things which are in my competence. Okay, continue. Auditor is not expert in authentication of document. You have to check this document is true or false. You cannot check. You are not forensic auditor. Okay. Next, audit is not alleged investigation into wrongdoing. See, audit and investigation are different. Investigation is critical examination of accounts when fraud is done. Audit is separate from that. Okay, auditor doesn't have powers of search and seizure. Okay, these are not available with auditor. We are not doing raid on someone. And whenever we do audit, we go with assumption everything is perfect. Okay, simple. Last question. Types of audit: compulsory, voluntary. Okay. So now compulsory for who? Companies. Why? Public limited, okay, or private limited. Others' money is there. Second, banking company, trust. Okay. Insurance company, electricity company, banking, electricity, cooperative society. Public and charitable trust. Why? Because they are taking others' money. Okay. Trustees are there. Corporation under special act of parliament like ICI. Specified entities under income tax act. Example, if your turnover goes above a particular limit, audit is compulsory. So shall be for whom compulsory? Companies Act, banking company, electricity company, cooperative society, public and charitable trust. Corporations under special act of parliament. Specified entities under income tax act. For whom? Voluntary. Proprietor, partnership, HUF. Sole proprietor, partnership, little bigger than sole proprietor, partnership, HUF. Voluntary. If you want, you can do. Okay. Next. Advantages of audit. Okay. Nice question. Advantages. Okay. Why do I do audit? If someone tells you like that only, you can name 10 points. But we don't have to write like that. We have to write what is given in the book. Only then we get marks. Okay. Very simple. Audited accounts give high quality information. It gives confidence to user. Information on which he is relying is qualitative. Today, I want to buy shares of Tesla company. I know whatever Tesla tells, these are the sales. It is correct because auditor has told that it is correct. Okay. So audited accounts give that confidence to shareholder. Whatever information is there, it's true because auditor has checked. He has studied CA course and checked. He has checked everything is as per laws, rules, regulations. Second, it safeguards the interest of people who are not associated with management of company, that is shareholder. See, there are many people who are not doing management. They're like shareholder. Their interest is protected. Okay, because auditor will catch all fraud. It acts as a moral check on employee doing fraud. Tomorrow, any employee can do fraud, but today he cannot do. Why? Because he knows there is a person called auditor. He will check if there is any fraud. He will catch him. Okay. Audited statements are of great help to government authority in settling liability for taxes. Today, tax audit is there. CA will tell they have to pay this much tax. Okay. So, have they paid the same tax or not? Audited statement will help. Audited statements are of great help to banker in deciding whether to give loan or not. See, today bank will tell what? Have you done audit? You say no, you will not get loan. If you have done audit, they will ask you for last 3 years. Plus projected financial statement also they ask. Okay, what are your projection for 3 years? Based on that, they give loan. But those projected statement have to be signed by CA. Okay, so it's a great help audited accounts for banks to decide. And once CA will certify, bank will trust much more than the management or the company. Audit helps in detecting error and fraud. Auditor reviews existence and operation of control, reports weakness in them. Auditor will check control exists and is operating properly or not. There are two things in control: exist and operate. Let me take example. Sometimes you are there in class, but you're not studying. You exist in the class, but you're not operating effectively. All invoice above 50,000 will be signed by purchase manager. It's a control. But really signing is happening or not? It's review. So auditor reviews existence and operation of control and reports weakness in the same. We have to learn this nicely. Let's start. What are advantages of doing audit? Can you tell me? Very, very simple. Audited statement provide high quality information. It gives confidence to user. Information on which is relying is qualitative. So Tesla, whoever uses the financial statement, they know everything is correct. Why? Auditor has told. Second, it safeguards the interest of people who are not associated with management. See, every shareholder cannot become management. Okay, so it safeguards interest of shareholders who are not working with company, but they know auditor will check everything. Third, acts as a moral check on employee doing fraud or defalcation. You have to learn this very nicely. Okay. First 3 points, 1, 2, 3. One more time. Audited statement provide high quality information. It gives confidence to user. Information on which is relying is qualitative. Second, audited, it safeguards the interest of people who are not associated with management. Third, okay, acts as a moral check on employee doing fraud or defalcation. Learn nicely. Small break. 5 seconds. Then audited statement give high quality information. It gives confidence to user. Information on which is relying is qualitative. Okay. It safeguards the interest of people who are not associated with management, shareholder. It acts as a moral check on employee doing fraud or defalcation. Clear? One last time. Audited statement provide high quality information. It gives confidence to user. Information on which is relying is qualitative. It safeguards the interest of people who are not associated with management, shareholders. Okay. Last, acts as a moral check on employee doing fraud or defalcation. Come to next point. Okay. Tax. They are of great help to government authority in settling liability for taxes, tax audit. They are a great help to banker in deciding whether to give loan or not. So government authority, bank, government authority, bank, government authority, bank. Last, help in detecting error fraud, help in detecting error fraud. Auditor reviews existence and operation of control, existence and operation of control, and reports weakness in the same, reports weakness in the same. Clear? Very simple. Learn nicely last 4 also. Break. 5 seconds. Then 1, 2, 3, 4, 5. Listen nicely now. What are advantages of audit? Audited accounts provide high quality information. It gives confidence to user. Information on which is relying is a qualitative. It safeguards the financial interest of people who are not associated with the management. Third, it gives confidence. It acts as a moral check on employee doing fraud or defalcation. Okay, audited statements are of great help to government authority in settling liability for taxes. They are of great help to banker in deciding whether to give loan or not. It helps in detecting error and fraud. Auditor reviews existence and operation of control and reports weakness in the same. Shall we speak once all? Okay. Number one, audited statement give high quality information. Second, okay, safeguards interest of people who are not management. Acts as a moral check on employee doing fraud or defalcation. Government authority bank, government authority bank. Error fraud, and last, existence and operation of control. Clear? If you want last time we will speak advantage. Audited statement give high quality information. It gives confidence to user. Information on which is relying is qualitative. It safeguards the interest of people who are not associated with management, shareholder. Acts as a moral check on employee doing fraud or defalcation. Audited statement are of great help to government authority in settling liability for taxes. They are of great help to banker in deciding give loan or not. Audit helps in detecting error and fraud. Auditor reviews existence and operation of control and reports weakness in the same. Super duper clear. Now we have a very important question. I think it's the last question. After that, 2 time pass questions are there. So listen very nicely. If you want, you can take small break of 10 seconds. Because very important thing is starting. Very, very important. Last 15 minutes of lecture pending. For this chapter, very, very easy. But very, very much attention required. Only 15 minutes. Okay. So fully you should be devoted here. If you want, you can take break of 10 seconds. Start. Number one, who will prepare financial statement? Management. For whom they prepare? For the users. Who are user? Whoever starts from R. Debtor, creditor, auditor, partner, transporter, banker, shareholder, all people. So management is responsible party who will prepare financial statement, of course, as per the reporting framework schedule 3, for whom? Intended user. Intended user. But users don't trust management. Why? If management will only prepare, management will manage business, management will only tell, user will not trust. Let's take your example. If you write paper and you only check, then so you feel you are brilliant from day one only. You feel today also you are chartered accountant. So there has to be a third person who will give assurance to the users that yes, everything is perfect. And that person is a practitioner. Who is that called? Practitioner. So practitioner give assurance to the user that management has prepared financial statement properly. I hope you understood. Three people. Responsible party who prepare financial statement, for whom? Intended user. But there is a person called practitioner, not auditor. What's the difference between auditor, practitioner? I will tell you. Practitioner is the person who gives assurance to the user that financial statements are prepared as per FRF or everything is proper. Now, continue the same story. Okay. Management doesn't know how to prepare many times. So they will appoint one person like chartered accountant. Chartered accountant will audit. Who said? They can also help management. They will help management in preparing financial statement, in doing consolidation, many times tax representation. There is a case on client, GST. So CA will go along with the client. Okay. Now he's not giving any assurance here. These are related service. Related service. On this, SR applicable. In India, whenever you give related service, sir, give three examples. Preparation of financial statement, in consolidation you are helping. Okay, you are helping client in tax representation. These are standards, related service. On these standards on related service are applicable. The number starts from 4,000 to 4699. 4,000 to 4699. Not in our syllabus, in CA final. Okay, one more time. Many times CA will help the client in preparing financial statement. Okay, why help? Because they need the help. These are related service. On these standards in India are SRS, standards on related service, starting from 4,000 to 4699. But there is one more CA, Prajakta. This is CA Apurva who is helping management. Who is Prajakta? Okay, Prajakta will check financial statements are prepared as per FRF. Prajakta will check financial statements are prepared as per what? FRF. What is FRF, guys? Financial Reporting Framework. Sir, why Apurva cannot check? Apurva is prepared? No. Apurva is from client side. If she will only check, what's the use? She will prepare, she will check. No. So, different person, independent person. They will check financial statement are as per FRF. This is Prajakta. Come here now. There are two basic services given by practitioner in India. What are two services? Assurance, non-assurance. In assurance, I will increase the confidence of users of financial statement. In non-assurance, I will just help the client, like accounting, like consolidation, like tax representation. What is assurance? Practitioner give assurance. Now, there are two types of assurance: historical and other than historical. What is historical? Whatever is prepared, whichever financial statement are prepared are historical. What is other than historical? Prospective, future financial statement. Future, that's other than historical. Historical. On historical, listen very nicely, please, 5 minutes. On historical, I can never ever give absolute assurance. You will tell me why? Not possible, because limitations in audit. Fatty, you remember nature of financial reporting, future event, auditing procedure, timeliness, not in nature of investigation. I can never ever give absolute assurance. Why? Because limitation. Whenever I give reasonable assurance, what's historical? What is prepared? The prepared financial statement, whatever management is prepared on that, whenever I give reasonable assurance, that process is called as audit. In audit, standards on auditing are applicable, and whenever audit is done, we don't call practitioner, we call auditor. Practitioner is broad, he will check everything, but auditor will only check audit. See here, reasonable assurance. What is reasonable? High but not absolute. Absolute not possible, limitation. That is audit. On audit, SAR applicable. Essays start from 100 to 999. But it's okay if you don't remember numbers. These are standard numbers. Whenever any essay will be there, it will start from 100 till 999. Why? to ensure standard codification across the world. Okay, standard codes. I hope you understood. So on historical, whenever I give reasonable assurance, that is called audit. On this, standards on auditing are applicable. But sometimes on historical, I give limited assurance. What is limited? Okay, not as high as reasonable, not as high as moderate level of assurance. Why am I giving moderate? I should give reasonable only. Nice question. Limited review is there. Every 3 months in India, all the listed company have to do limited review. LR. Have you heard LR? Limited review. Compulsory every 3 months. AS25. Accounting Standard 25 interim financial reporting in India tells every quarter listed company have to publish interim financial reports. Okay. Now, in every 3 months, I don't have that much time. In 10 days, I have to give report. Can I do all procedure or limited procedure? Limited procedure. In limited procedure, what evidence I will get? Limited conclusion. In limited conclusion, what level of assurance I can give? Limited assurance. That is known as okay, review engagement. On these standards on review engagement are there. They start from 2000 to 2699. Understand very nicely. On historical, if every quarter I do audit, if year-end audit I do, that is audit, because I will get reasonable assurance. I will do lot of procedure. But whenever I give limited assurance, why you are giving limited? Due to time. Every 3 months I have to do the audit. Compulsory in India. Okay, for listed company. Limited review. Why limited? Because I want limited conclusion. Why? Because I have limited time. So I will do limited procedure. That is known as review engagement. On this, standards on review engagement are there. SRE applicable in final, but intro is applicable here. SRE 2000 to 2699. Clear? Now come here. What is the difference between reasonable and limited assurance? Reasonable is a high level of assurance. Limited is moderate level of assurance. In reasonable, there are extensive procedure. Here we have fewer procedure. Here we get reasonable conclusion. Here we get limited conclusion, because we get limited procedure, so limited evidence. In 10 days, how much can I do? Standards on review engagement. So understand, both are historical. Both are historical. What's the difference? Here I get reasonable assurance. Here I get limited assurance. I hope you are clear. Super duper clear, sir. Come here. When I give other than historical financial statement, means projected financial statement on future, other than historical, I can never give reasonable assurance. Okay, why? It's future. Okay, absolute to impossible. Reasonable also I can never give its future. I will always give limited assurance. Okay, those are known as standards on assurance engagement. Why limited? Because for future. Here standards on assurance engagement are applicable. 3000 to 3699. 3000 to 3699. Example, for bank loan. Whoever wants a loan, they have to give projected financial statement for 5 years. One more time, what they have to give? Projected financial statement for how many years? 5. Okay, it's for future. I will always give not ever reasonable. I will give limited assurance only. Okay, budgets are there. Budgets I am approving. Okay, I am saying this budgets are true. That is future. On future, I will always give what? Limited assurance. Standards on assurance engagement are applicable. I hope you are clear. One last time I will summarize and nicely explain you. Okay. I forgot. On all these, standards on quality control are there. SQC 1 to 99. These are from 1 to 99. On everything SQC is there. On all these, there are SQC, standards on quality control, from 1 to 99, out of which only one is issued, SQC 1. One last time. Okay. Number one, who is a practitioner, who does all this, but whoever does audit is an auditor. Okay, there are two kinds of service we give in India: assurance, non-assurance. Now, first question you will ask me, what is non-assurance? I don't give assurance, I'm helping the client. Okay, helping to prepare financial statement, helping in consolidation, helping in tax representation. On this, standards on related service are there. SRS. What is their SRS? They start from 4000 to 4699. CFI. But whenever I give assurance, Whenever practitioner gives assurance to users of financial statement, divide into two parts: historical, other than historical. Historical, other than historical. Historical means whichever is prepared. I can never give absolute assurance. Why? Limitations of audit. Second, whenever I give reasonable assurance, that is known as audit. In this, which standard are there? 100 to 999. Whenever I give limited assurance, why limited? Because I have to give report fast. I will have to make limited conclusion. I have done limited procedure. This is known as a review. Every 3 months listed company audit is review. Standards on review engagement are there, 2000 to 2699. Here I get reasonable assurance. Here I get limited assurance. Here I form reasonable conclusion. Here I form limited conclusion. But other than historical means on future financial statement, projected report, budgets, okay, I can never ever give reasonable assurance because future is not in my hand. I will always give limited assurance. So standards on assurance engagement are there. SAE 3000 to 3699. 3000 to 3699. Clear? Okay. On all this, SQC is applicable, standards on quality control. I hope you understood. This is most wonderful. Everything is done now. Now only 10 minutes. I just have to go through everything. Okay. Nothing great. Come here. Fast term fast. Assurance is the person who gives assurance to the user of financial statement. On historical financial statement, three types of assurance are there. Absolute, not possible. Reasonable assurance, whenever I give, that is audit, 100 to 999. Whenever I give limited assurance, that is known as review. Standards on review engagement, 2000 to 2699, because I am doing limited procedure and not full procedure. Lower level of assurance because fewer procedure. Yeah. Prospective financial statement, future. On future, I can never ever give complete assurance because future is in no one's hand. I will always give limited assurance. I will always give which? Limited assurance. Okay. 3000 to 3699. On all these, standards on quality control are there. Historical engagement, other than historical, okay, related service, all should be proper. SQC is there. Okay, standards on quality control, which will come in chapter 11. Last, many times I don't give assurance, I give other than assurance service, tax representation. On this, standards on related service are there. SRS 4000 to 4699. Our syllabus only audit is there, nothing else. Okay. Now come here, second best question. 100% it can come. What are elements of assurance engagement? Whenever there is any assurance engagement, how many elements are there? 5. Number 1, three-party relationship, which tells RIP, rest in peace. No. Responsible party, intended user, practitioner. Who is responsible party? Who prepare financial statement. Who is the user? For whom which we prepare financial statement. Who is practitioner? Who gives assurance. Simple. Read. Number 1 element is three-party relationship involving RIP, responsible party, intended user, practitioner. Practitioner is person who gives assurance. Responsible party is the person who prepare financial statement. Intended users are the user for whom it is prepared. Second, appropriate subject matter. What they will check? Financial statement. Information to be examined is subject matter. So what are elements in assurance engagement? Three-party relationship, appropriate subject matter. How they will check? As per suitable criteria. What is suitable criteria? Okay. What is suitable? Benchmark, which is used to check laws, rules, regulations, schedule 3. Our financial statements will be checked as per suitable criteria. Benchmark, which is used to check financial statement, laws, rules, regulations. Okay. By checking, what will I get? Sufficient and appropriate evidence. What's sufficient? Quantity. What's appropriate? Quality. Okay. So sufficient is quantity, appropriate is quality. Over. And last, everything will be in the form of written report, a written assurance report that conveys assurance about subject matter. Very simple. If you are not able to learn, in 1 second, I will make you learn. Tell me. What are elements of assurance engagement? What are elements of assurance engagement? Three-party relationship involving RIP, responsible party, intended user, practitioner. What I will check? Number 1, I will check the subject matter. How I will check? As per suitable criteria. What I will get? Sufficient and appropriate audit evidence. How will I write their evidence? Written assurance report. Over. Learn nicely. One more time. What are elements of assurance engagement? 3 times I will speak. One time done. 2 more times. 3-party relationship involving RIP. Responsible party, intended user, practitioner. What we will do? Check the subject matter. How we will check? Suitable criteria. After that, what we will get? Sufficient and appropriate evidence. What we will do? Written assurance report. Small break, 10 seconds. Read. Done? Chalo, 1, 2, 3, start. Tell me what are elements of assurance engagement? 5. Number 1, a 3-party relationship involving RIP, responsible party, intended user, practitioner. What they will do? Check subject matter. How they will check? As per suitable criteria. What they will get? Sufficient and appropriate evidence. What they will do? Written assurance report. Clear? See, audit and review difference is what? Audit is of course done at year end. I will get sufficient and appropriate evidence. I will do extensive procedure. Review is of course done every 3 months. I will get limited conclusion. Review is limited assurance. It gives lower level of assurance. Further, review involves limited procedure and gathers limited. Audit and review both are historical. But when I do every 3 months, that's review. Limited conclusion, limited procedure. Audit year end, extensive procedure, reasonable assurance. Over. Almost over, guys. Last 2 questions. See this. Relationship of audit with other subject. Tell me, is audit related with other subjects also? Yes, of course. How is audit related with accounts? You tell me. See, auditor reviews the accounting financial statements which are prepared as accounting process. Auditor should have knowledge of AS. Okay, when you prepare financial statement, you have to check whether AS are followed or not. So if auditor doesn't have knowledge of AS, how will he work? So auditor reviews financial statement which are nothing but as a result of accounting process. So auditor should have knowledge of accounts. Second, should he have knowledge of law? Yes. Auditor should have knowledge of all the law, Companies Act, this act. By you have to check compliance, related party disclosure. So law also. Third, should he have knowledge of economics? Yes, overall economic environment, market value of the asset, macroeconomic variable. Okay, so accounting, law, economics, stats, and behavior science. Why? Many times client is lying. Okay, when you look at his face, he's not giving you data because they have done fraud. So behavior science, because we have to deal with a lot of human beings while getting the data. So I should have knowledge of behavior science also. Statistic and maths. I don't do full audit. I do sampling. But for doing sampling, I should have knowledge of sampling. That's statistics knowledge. Okay. Auditor should have knowledge of statistical sample for arriving at conclusions. Okay. Data processing. Today, auditor should have knowledge of IT also. Every company is using data today. Amazon, Flipkart, look at the way data is generated. Data is the new oxygen of 21st century. Okay, gone are the days you will do normal audit. In Amazon, if you go, okay, I want to check all invoices. Please give me. Amazon will say we don't have, everything is in computer. But I to check invoice like this only. Are that you and your dad will check. Okay. What you have to do these days, things have changed. You should have knowledge of computer. We have to go inside the system to see is there any fraud. If Amazon you check one voucher, it's impossible to check one voucher in Amazon. If you keep on checking, years will pass. Amazon has 100 crore voucher. How will you check one? So what to check? You have to go inside the system. Check controls are proper. If control is good, be it 1 voucher or 10 crore, everything will be proper. So auditor should have knowledge of computers, EDP, electronic data processing. How things are done in computer. Banks, you cannot check one transaction in bank. You have to go and check the system of bank. If system is good, everything is good. Hope you understood. EDP audit is a discipline in itself. So auditor should have knowledge of computer. FM, you need to have knowledge of ratios, working capital, capital budgeting. Okay, for analytical procedure chapter. Analytical procedure is checking ratios. Okay, so that. Production also knowledge we should have, production, cost, system, etc. How to remember? Relationship of audit with other subjects, okay, other discipline. Auditor is what? Checking. So you should have knowledge of everything to become auditor. That is why CAs will learn this many subjects. So we can do audit nicely, okay. Relationship of audit with other subjects. So name all foundation subjects. How many subjects are there in foundation? 4. All 4. Audit and accounts, audit and law, audit and eco, audit and maths. Over. Audit and accounts, audit and law, audit and economics, audit and stats and maths. Subject names I told. Now tell me, which other subject I teach? India's best faculty, I. Okay, I teach which other? FM. Okay, so of course we'll write audit and FM. See here. Audit and financial management. EIS, audit and data processing, audit and data processing. Subject names you have to write. CA Foundation, 4 subjects very quickly. Okay, audit and accounts, audit and law, audit and one more, audit and accounts, audit and law, audit and third, stats and maths, audit and eco. Okay, one more, audit and FM. Okay, then which other subject? Audit only I teach. Okay, FM, SM is not given, but SM is what? Maybe economics. Economics is also behavior science. You can say SM is mainly behavior science. So behavior science. Okay, data processing production. Data processing production. Clear? Very simple. I think you will be able to do it. Okay, electronic data processing and production. One last time, audit and uh, accounts, audit and law, audit and eco, audit and maths and stat, audit and FM, audit and production, audit and electronic data processing. Okay, and last, audit and behavior science, because we have to get data from others. Come here. Why standards are needed? Okay, why do we need these standards? SQC, SRE, SAE, SRS, all this. They ensure good quality of audit, improve the quality of financial reporting. Okay, so number one, audit quality will improve, quality of financial reporting will also improve. Okay, improve audit quality, improve quality of financial reporting. Equip the accountant with professional knowledge and skill. All accountant will be updated with best skill and best knowledge if they have standards knowledge. Okay, equip accountant. Standard help to carry out audit as per global practice. Help to carry out audit is provide uniformity in audit of financial statement is carried out. Uniformity in audit. Okay, all audits of India will be done in proper manner. Uniformity in audit is standards are there, and global audit or Indian audit will be done properly. Standards are there. This is global. Help in carrying out audit as per global practice. Provide uniformity in audit as all are following the standards. Okay, so global audit, India also all audit will be done in same way. Global audit also, because standards are common worldwide. Okay, so very simple. Tell me why standards are needed. Ensure audit quality, improve quality of financial reporting, equip professional accountant with necessary with professional knowledge and skill. Remember first 3 points. Ensure audit quality, improve quality of financial reporting, equip the professional accountant with specialized skill and knowledge. Remember this much. Tell me with standard what will happen? My audit quality will be good. Improve the quality of financial reporting will also be good. Okay. All the people, all the CA, equip professional accountant with professional knowledge and skill. Help in carrying out audit as per global standard and practice. Help in carrying out audit as per. Okay. Uniformity in the audit is carried out using the standard. Uniformity in audit. Indian audits uniformity will be there. Simple. Let's speak 2 times. It should be very easy. Why standards are needed? Number one, ensure audit quality, improve the quality of financial reporting. Okay. Third, equip professional accountant with professional knowledge and skill. Helps in carrying out audit as per global standard and practices. Provide uniformity in audit of financial statement as audit is done using standards. Clear? Okay. So Indian audits are done properly. Global audits are there. Very simple. Last time lead, small break 10 seconds. Okay, 1, 2, 3. Why standards are needed? Ensure audit quality, improve the quality of financial reporting. Okay, third, equip professional accountant with professional knowledge and skill. Okay, helps in carrying out the audit as per global standard and the best practices. Okay, helps in carrying out the audit as helps in uniformity in the audit, as audit is carried out using the standards. Clear? Okay, last time, helps in ensuring audit quality. Second, improve the quality of financial reporting. Third, equip professional accountant with professional knowledge and skill. Okay, last 2 point, helps in carrying out audit as per global standards and practices, provides uniformity in the audit as audit is done using the standards. Okay, I hope you are clear. Okay, we have put in a lot of hard work. If you like this lecture, do press a like button to give us much more motivation, much more enthusiasm. We can work even more harder if you are liking the lecture. If you put in a nice comment, okay, it will give us extra motivation, extra dose of energy to make the chapters even better, even simpler, and even more hard work we will do. Thank you so much for appreciating. If you like, do share with your friends too. Bye bye. Good night. See you until next video. Thank you. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Continuing with Audit Revision series. Yes, guys, today it's the time for chapter number 2. What's the name? Audit Strategy, Audit Planning, Audit Program. A very simple chapter, very easy chapter, very small chapter. Stay tuned. We will revise entire chapter. What you will get in this lecture? Number 1, you will understand all the concepts. Number 2, wherever possible, we will try to learn also. So the journey for you is super simple and super easy. More number of times you watch this revision lecture, more confidence you will get. Okay. From where are we doing the revision, sir? We are doing it from Magic Book. Okay, Magic Book covers entire subject in roughly 80 to 85 pages. Okay, so it's very easy to revise. So we are doing it from that. We don't have any soft copy because we feel only hard copy will bring hard result, and all we want is hard results. If you wish, you can buy it at printing cost from our website www.mrugeshmadlani.com. Okay, I hope you are clear. Okay, and one more thing, these lectures are in only English. Of course, Hindi ones are already uploaded. Let's start right away. 3 words: audit strategy, audit planning, audit programming. Okay, so first you need to understand 2 words: strategy and plan. Then comes the program. Okay, let us start. What do you mean by the word strategy? See, strategy is what? Overall scope, timing, and direction of audit. First of all, understand there are how many people in a CA firm. Okay, CA. In every charter accountant firm, there are so many people. There is a partner, there is a senior manager, then there is a manager, then there are a lot of CAs working, which we call executive, and of course article. Okay, so partner, up below that there are 2 3 senior manager, below that 5 6 managers are there, then lot of CAs are there, and articles are there. Strategy is overall scope, overall timing, overall direction of audit. So who will decide it? Usually it's decided by partner and senior manager. Okay, what is audit plan? Who will do the work? When? How? Little extension of strategy. So that is basically decided by a manager. Okay, manager will make the audit plan. An audit program is very simple. When I teach you, you will tell me, sir, it's the easiest thing in the world. Can we start? Yes, sir. Now let me go even more detail. What is the meaning of word strategy? See what you want to achieve and why. It's overall scope, timing, and direction. What is the meaning of overall scope? How many locations are there in the company? What is the nature of business? What all business segments are there? What is the FRF, applicable financial reporting framework? How many business segments are there? For any business segment, do we need specialized knowledge? Like banking, we need specialized knowledge. Insurance, we need specialized knowledge. Okay, so basically I will see how many locations are there. Okay, I will see that how many business segments are there in Reliance, how many business segments are there. Okay, any industry specific requirement are there. Okay, I have to check that. So overall scope I will just check. Okay, overall scope means what? Overall direction, how many locations are there, what's the financial reporting framework, how many business segment are there, do I need any specialized knowledge? Come to second word, timing of audit. What do you mean? It's decided in strategy only. Is it a quarterly audit or yearly audit? If it's a listed company, I need to audit it every 3 months. Okay, but If it's not a listed company, okay, then I have to audit it at year end. So overall scope, timing, direction means what? Direction means what? Direction means, do we follow, rely on control or not rely on control? Two strategies are there in the world. Can we rely? See, last year we had done the audit, okay, so can we rely on the control or not? That's the direction of audit. In how many areas will rely on controls? Okay, when we rely on control, substantive will be less, and if we don't rely, substantive will be more. If you don't know, it will come in next chapter. So I hope you understood. Strategies overall, scope, timing and direction, key decisions taken by partner. I hope you understood what is the meaning of scope, what is the financial reporting framework, how many locations are there, how many business segments are there, does any segment require specialized knowledge, overall scope. Timing is it a quarterly audit or year end audit? Okay, listed company every 3 months, overall scope, timing, direction, do we rely on control or not rely on control? Okay, what are we following? So this is basically decided by partner. Now comes what? Audit plan. It is much more detailed than strategy. Who will do the work, when, how? Who, when, how? Who will do the work, when they will do, how they will do? It is nothing but audit plan. It's an extension of strategy. I hope you are clear. Yes sir, super duper fully clear. Okay, now program, of course I will tell you later. Now let me take one more parallel example, cricket analogy, to make you understand. Okay, strategy means overall scope, timing, direction, what you want to achieve, what you want to achieve and why you want to achieve. Example, let's take Indian cricket team. We want to play aggressive cricket. Okay, so that's a strategy, aggressive. Now, who will play the cricket, when, how? Okay, who all are aggressive players? Shall we select Ishant Kishan? Shall we select Rahul Tewatia? Shall we select that KKR hitter? Okay, so many people, Rinku Singh, whom to select, who will work, Hardik will work, who will do when the work. That's audit plan. We have decided we will play aggressive cricket, strategy decided by captain and coach, overall scope, timing, direction. Now who will do the work, when they will do, how they will do, that's audit plan, much more detailed than strategy. I hope you understood. Program, as I told you, I'll explain you again. Okay, it's very easy in the end. Okay, let's start right away. So if overall this is clear, first we'll do what? Audit plan. Okay, audit plan. Let's start right away. 1, 2, 3, start. What is the audit? The meaning of audit plan? Audit plan is who will do the work, when and how. Much more detailed than strategy. It is nothing, extension of strategy. First point, planning as per SA 300, audit planning. Planning is not a separate phase of audit. It's a continuous and iterative process that began shortly after completion of previous year audit and continues till current year audit. What is the meaning of this, and not understood? See, planning is not a separate phase of audit. Okay, it is not that first we will make strategy, then we will make plan. No, it's not a separate phase of audit. It's a continuous process that began shortly after completion of last year audit and continues till current year audit. Let's take example. As soon as you finish last year audit, you know we could have checked the sales little more in detail. Okay, we would have checked in purchase these three things even more. Okay, so it begins as soon as you end last year audit, and till the time you keep on doing this audit, planning is keep on doing there, you keep on planning. So planning is not a separate phase, it's a continuous process, began shortly after completion of last year audit. As soon as you end last year, you know these things I can check in detail, these things I should not have checked that much. Okay, began shortly after completion of previous year audit and continues till when? Current year audit. Let's take your example. After foundation, you thought life is easy. Little did you know, inter will come. After inter, you feel life is easy. Final will come. After final, job will come. After job, practice will come. After practice, marriage will come. 100 things. Life is never ever easy. Planning keeps on continuing. Same way as per SA 300. Planning is not a separate phase of audit. It's a continuous process that began shortly after completion of last year audit, continues till current year audit. Okay, next, first question. What are benefits of planning? Number one, proper organization and management of audit engagement. With the help of planning, I am able to organize and manage the engagement in a better way. How? See, in an audit plan, I will write, okay, How many hours will be given by article? If you don't know, Big Four will do billing to their client. Big Four is top 4 firms in the world: EY, KPMG, PwC, Deloitte. They will do billing to their client in what way? Based on number of hours. Based on number of hours. So it's article, exec, manager, senior manager, and partner. Okay, very simple. This much you understood. Yes, sir. This much everyone understands. Very good. Now see. Article. Okay, article is going to work for 100 hours, executive will work for 50 hours in assignment, manager 25 hours, senior manager 10 hours, partner 5 hours. Based on that you send the bill. Okay, so you plan. If you are able to do work in that much assignment, it's a profitable engagement. Okay, so with the help of planning I am able to do the engagement in effective and efficient manner. Means article per hour they charge 200 to the 2000 to client, but I to get only 3000 stipend per month. That is different story, but they charge to client at 2000 rupees. Just I'm telling you for your knowledge. I hope you understood. Okay, so come here, very easy. Now with the help of planning I can do audit in effective and efficient manner, because number of hours are fixed. If I am able to do in that many number of hours, my engagement will be profitable. Second, attention to important areas. When I do planning, I know risk of material misstatement. Which all areas are risky? Payroll is a risky, inventory is risky, sales is risky. So I can devote more time to that. Timely resolution of potential problem. Whatever problems are going to come, with the help of planning, I can solve it in the best way. I know this debtor is not giving confirmation. From first day, I will keep on doing follow up. Give confirmation, give confirmation, give confirmation. So maybe he will give. Okay, so very simple. Next, proper selection of engagement team. See, if manager will make the plan, okay, he knows which client or which article is capable of what things. Okay, so we can select engagement team as per double C, capability and competence. We know he can do inventory audit better, we know he will do cash and bank only. So proper selection of engagement team. Direction and supervision of engagement team. You selected the team, you can supervise the work. We will tell you review his work, you review his work if planning is done. Last, easy coordination. Sometimes we need to coordinate with joint auditor. Two auditors are doing audit together. Actuarial valuation, PF, gratuity. Okay, we need experts. Okay, for example, gas inventory is gaseous, so gas valuation, coal mines valuation. So we can coordinate in a better way. Okay, if planning is done with joint auditor, with expert, with actuary people, with legal counsel, etc. Clear? Okay. What are benefits of audit planning as per SA 300? First 3 point, next 3 point, super duper easy. Okay, start. Proper organization and management of audit engagement. Okay, attention to important areas. In those areas, timely resolution of potential problem. 3 points done. Speak nicely. Proper organization and management of audit engagement. Attention to important areas. Timely resolution of potential problem. Learn till your first 3 points. Learn nicely. Done. What are benefits of audit planning? Proper organization and management of audit engagement, attention to important areas, timely resolution of potential problems. Okay, 3 point. Proper selection of engagement team. Now same team, direction and supervision of engagement team, easy coordination. Proper selection of engagement team, direction and supervision of engagement team, easy coordination. Very simple. Okay, number one, selection of engagement team. Same team, direction and supervision of engagement team, easy coordination. What are benefits of planning? In 2 minutes over. Number one, proper organization and management of audit engagement. I will know important area, attention to important area. Those important area, timely resolution of potential problem. Okay. Now last 3 point, proper selection of engagement team. Same team, direction and supervision. I have selected, so I will do direction and supervision of engagement team. Easy coordination, easy coordination. Learn nicely, your time starts now. Small break, 10 seconds. Done. Tell me, what are benefits of audit planning? Proper organization and management of audit engagement, attention to important areas, timely resolution of potential problem, proper selection of engagement team, direction and supervision of engagement team, easy coordination. Come here now. Following procedure are to be performed prior to performance of FAP. There are two audit procedure for those of you who don't know. RAP, FAP. We will learn in next chapter. RAP, FAP, full form, risk assessment procedure, further audit procedure, risk assessment procedure, further audit procedure. Before doing further audit procedure, we need to do risk assessment procedure. In that, what planning we do? That is the question. Following audit procedure need to be done prior to performance of FAP, means RAP. In RAP, what do we do? General understanding of legal and regulatory framework applicable to the entity. What laws are applicable to the entity, you have to see. Okay, general understanding of legal and regulatory framework. Alcohol business, these laws are applicable. Banking business, these laws are applicable. That all is done in RAP. Second, analytical procedure to be applied as RAP. What is analytical procedure? Whenever anything is there, okay, for example, my boss Mr. Paul, who was my partner, okay, before starting the audit, he would look at the trial balance and find out error directly. Oh, sales is increasing but GST is not increasing, means dummy sale is there. Sales is increasing but transport cost is not increasing, means sales can be dummy. Okay, other things like tick he will do. What is this? Analytical procedure, checking ratios and finding mistake. Okay, so analytical procedure. Other procedure, performance of other risk assessment procedure, other RAP also he can do. Analytical procedure to be done as RAP, other procedure to be done as RAP. Then before doing FAP, we calculate materiality, which we will learn in next chapter, and experts. What all experts you need, that is decided at planning stage only. Very simple. So before performing FAP, we do RAP. In RAP, risk assessment procedure, what planning we do? Obtain general understanding of legal and regulatory framework applicable to the entity. Analytical procedure to be applied as RAP. Other procedure to be applied as RAP. Determination of materiality, involvement of expert. So simple. Shall we speak one more time? Yes, sir. Following procedures are to be done prior to performance of FAP. Prior to FAP, what do we do? RAP, general understanding of legal and regulatory framework applicable to the entity. What framework is applicable to the entity? Second, analytical procedure to be done as RAP. Okay, other procedure to be done as RAP. Okay, determination of materiality, involvement of expert. So simple. See, prior to FAP, we do RAP. In that, what we do? General understanding of legal and regulatory framework applicable to the entity. Second point, okay, performance of a risk assessment procedure, analytical procedure to be done as RAP. Other procedure to be done as RAP. Determination of materiality, involvement of expert. Learn nicely. Clear? 1, 2, 3, start. Let us speak. Following procedure are to be done prior to performance of FAP. What do we do? RAP. In RAP, what we do? General understanding of legal and regulatory framework applicable to the entity. Okay. Analytical procedure to be done as RAP. Other procedure to be done as RAP. We calculate determination of materiality, involvement of experts. Come here. Planning process. Next is what? Planning process. This is a new question, but more details of this question you will find in chapter number 11. Which chapter? Chapter number 11. Okay, so very simple. In planning, we have two stages: element of planning and planning. Element of planning and planning. Okay, so number one, in planning process, two elements are there in planning: preliminary engagement and planning. In planning, to very simple, two: development of strategy plan, strategy plan, strategy plan. So pre-planning, what is that? Pre-planning is preliminary engagement. One more time, listen to the question. Planning process, elements of planning. Elements of planning has two parts. Number one, preliminary engagement and planning. Preliminary engagement and planning. In elements of planning, preliminary engagement means before the engagement, and in planning we make two plans: strategy plan, strategy plan, strategy plan. Clear? Okay. Come here. Elements in the process of planning. Preliminary engagement, 3 point. Perform procedure regarding acceptance and continuance of client relationship and specific engagement. Okay, you have to see before accepting any client. Okay, you have to check a few things. Don't accept any client. Sir, we are getting money. Absolutely not. Money will come, money will go. You have to accept only those clients. 4 points you have to see. Did you do procedure regarding acceptance and continuance of client? What is acceptance? New client. What is continuance? Same client. Okay, 4 points are given here. In chapter 11 they are given. Here also they have given, but detail it will come in chapter 11. I will just tell you 1 or 2 points. Okay, number one, integrity of owner management, TCWG. Whichever client you are accepting, are they good people? Are they ethical group? Is it a terrorist group? Don't accept. Okay, integrity you have to see of owner, management, TCWG, those charged with governance. Second, whether we are capable of doing the assignment, we have necessary capability including time and resource. Okay, if the audit is of Adani group, I cannot do because I am all alone. Whether I am capable to do audit, do I have necessary time and staff of 100 people? Okay, that I have to see. Third, can I follow independence requirement? Will I be independent? Significant matters that have arisen during past and their implication on continuing engagement. Last year, these people did not cooperate in audit. Auditor left half audit. Shall I accept such a client? Okay, so number one, before accepting a client, perform procedure regarding acceptance of client. In acceptance of client, 4 points are there. You don't have to learn one if you want. Integrity of owner, management, TCWG. Now when you decide you accept the client, see whether you can follow ethical requirement. Independence, you have to be different from the client. Independence of mind, independence of appearance. Okay, you should be integrity, confidentiality, objectivity, professional competence, and due care, professional behavior. There we will study. Forget, can you follow ethical requirement including independence? Will you be independent from the client? Will you be different from the client? It will be covered there. Third, understand terms of engagement. Auditor will send engagement letter to the client. So responsibilities of auditor are written there. Responsibilities of client are written there. So tomorrow there is no confusion. Understand the terms of engagement. Auditor should send engagement letter to client to understand what are the terms, right? Very simple. Hope you understood. It's very easy. Okay. So elements in the process of planning: preliminary engagement and planning. In planning, what is that? Strategy, plan. Strategy, plan. In preliminary engagement, we have 3 points. Perform procedure regarding acceptance and continuance of client. One more time, perform procedure regarding acceptance and continuance of client. Second, evaluate compliance with ethical requirement including independence. And third, understand terms of engagement. Very simple. See, preliminary. First, accept the client. Perform procedure regarding acceptance of client. You accepted. Evaluate ethical requirements. Can you follow, including independence? Can you be independent? Are you nowhere related to the client? Okay. Last, understand terms of engagement. Once you are done with preliminary engagement, engagement letter is signed by both. Then we will make strategy and plan. Strategy and plan. Read once. Very easy. Then break 5 seconds. Chalo, start. 1, 2, 3. What are elements in the process of planning? Preliminary engagement, planning. Preliminary engagement, planning. In planning, 2 points. Strategy, plan. Strategy, plan. In preliminary engagement, perform procedure regarding acceptance and continuance of the client. Second, okay, evaluate compliance with ethical requirement, including independence. Understand the terms of engagement. Planning, 2 things: strategy, plan. Strategy, plan. Clear? If you don't learn also, it's okay. Very easy. Okay, come here now. Now we come to the second part. Okay, strategy. Okay, what's audit strategy? Overall scope, overall timing, overall direction of audit. What will be the key decisions taken by partner? Strategy is usually made by partner. Come here. Establishment of overall audit strategy. Number one, overall audit strategy. First point, when you make a strategy, keep in mind 5 points. Number one, determine the characteristic of audit that define its scope. What are the characteristics? What do you mean by characteristics? Okay, very simple. Okay, what's the financial reporting framework applicable? What all are the business segments? In any segment, if it's a banking, do we need specialized knowledge? Then I think Arif has specialized knowledge. We'll tell Arif, you do this assignment because we need banking knowledge. You are champion in bank audit. Okay. Second, okay, we will also see industry specific requirements are there. Okay. For example, pharma company has certain requirements. Then we'll appoint a person in the team who is expert in pharma. Very simple. Determine the characteristics of audit. Here we'll see applicable FRF. What are the business segment? Industry specific requirement is there. Okay. Second, team effort. Consider factors that are directed in the engagement team effort. Consider any special factors are there which we need to tell to the team. Example, Amazon audit we are doing. Volume of transaction is huge. You can never ever do manual audit. You have to rely on control. While doing the audit of Amazon, Flipkart, Uber, Zomato, you can never ever check one by one. Crores of transactions are there. You have to rely on controls. Okay. So if the volume of transaction is huge, we will tell them here we have to rely on control. Check the system nicely. I hope you are clear. Third, reporting objective. See the reporting objective to plan, nature, timing, and extent of communication required. Okay. How many times we need to communicate? Expected timing of report. When do you want the report? Okay. When all you want communication in a year, we shall communicate with you how many times? Okay. For example, Reliance, we want report on 10th April. Then we have to start the audit from Feb. Okay. So we will start the audit from Feb and give the report on 10th April. So here I will decide reporting objectives. When do you want the report? Expected time and type and timing of the report I will tell with the, I will talk means partner will talk with the those charged with governance or management. Next, nature, timing and extent of resources required to do the engagement. How many resources? Nature means, okay, which procedures are required? Timing, when will you do? Okay, extent, how much will you check? Nature, timing and extent of resources required. Okay, so how many people are required for this audit? How many locations are there here? Okay, so I will see nature, timing and extent of resources required. If it's a quarterly audit, every 3 months I will need people. If it's a year-end audit, I will need at year-end only. Okay, last, preliminary work. Last year, have you done the audit of this assignment? Okay, then see, can you rely on control? Have you done similar assignments? Okay, example, you are auditing Mahindra, but you have already audited Tata Motors. Then see, can you find out the key points? Okay, so consider the work of preliminary engagement and where applicable, knowledge gained on other assignments. See, other assignment, last year work you have done, then all this partner will take care and make a beautiful strategy. I hope you are clear. Okay. Overall audit strategy. What's the technique? Audit key TRP. Audit key TRP. Audit key TRP. Audit key TRP. Very simple. Determine the characteristics of audit. T, team efforts. R, reporting objective, nature, timing and extent of resources. Double R, reporting objective, nature, timing and extent of resources. P, preliminary work, preliminary work, preliminary work. Learn very nicely. Establishment of overall audit strategy. Audit key TRP. Audit key TRP. Determine the characteristics of audit. T, team effort. R, reporting objective. One more R, nature, timing and extent of resources. Preliminary work, preliminary work. Clear? Learn nicely. Two R are there, reporting objective, nature, timing and extent of resource. Rest all are one. Then establishment of overall audit strategy, audit key TRP. Audit, determine the characteristics of audit, team effort. R, reporting objective, nature, timing and extent of resources. Preliminary work, preliminary work. Very simple. One last time we will learn establishment of overall audit strategy, audit key TRP, team effort, reporting objective. Okay, sorry, team audit, characteristics of audit. T, team effort. R, reporting objective. One more R, nature, timing and extent of resources. Preliminary work. Come here now. Benefits of audit strategy. Audit strategy will help in four things. Okay, audit strategy helps the auditor. What are benefits of audit strategy? Number one, employment of qualitative resource. Which resource to employ? For example, risky areas are there, we will appoint a CA. Inventory audit, you do. Okay, cash and bank audit, okay, we will appoint an article. Okay, so employment of qualitative resource. Which resource to allocate for which area? Second, allotment of quantity of resource. How many to allocate? For example, inventory counting is there. How many people shall we allocate? Quantity of resource. Okay. Third, timing of deployment of resource. When to deploy? Okay. Shall we deploy every 3 months or year end? If it's a listed company audit, every 3 months as per AS25, interim financial reporting. But if it's a normal audit, year end, timing of deployment of resource. Management of resource, how resources are managed, directed, supervised, how briefing meeting is done, debriefing meeting is done, reviews are done. Okay, let me take example of this. See, First of all, when you go to do audit, partner will arrange a meeting or senior manager will arrange a meeting. They will tell you these are the key areas. That is a briefing meeting. Where briefing meeting will be done? What is debriefing? After you do the work, you come to office, you tell, sir, we have checked these things. Meeting debriefing. How your reviews will be done. Okay. When you finish the work, your work will be reviewed by manager. How that will take place. Okay. So all this strategy, it will be written everything. Okay. Very simple. Tell me. Audit strategy help in four things. Resources, 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 resources. Very, very simple. Number one, employment of qualitative resource means which resource. Second, how many, allotment of quantity of resource. Third, timing of deployment of resource, when, and management of resource, how to manage the resource. Very simple. So four resources are there. Number one, which resource? Employment of qualitative resource. Then how many? Allotment of quantity of resource. Third, timing of deployment of resource. Fourth, management of resource. Resources, 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 resources. One last time. Okay, employment of qualitative resource. Allotment of quantity of resource. Third, timing of deployment of resource. Fourth, management of resources. Very simple. Okay. Learn nicely. Small break, 10 seconds. Done. Tell me, audit strategy helps in 4 points. Employment of qualitative resource, allotment of quantity of resource, third, timing of deployment of resource, fourth, management of resources. Okay, come here now. If we make changes to strategy and plan, it will also change nature, timing, and extent of audit procedure. Very simple, understand. If I change the strategy, will my plan change? Yes. If my plan will change, my nature, timing, and extent of resources will change. Let me take an example. Earlier, we had made a strategy rely on control. Controls are good. Now we are saying they are not good. Then of course plan will change. If plan will change, nature, timing, and extent. Nature means which procedure. Timing means when to do. Extent how much. That will also change because I will do more detailed audit because my controls are not good. I hope you understood. So if we change strategy, plan will change. If plan will change, nature, timing, and extent of resources will also change. Very simple. Here. See here. Okay, we'll do this later. Come here. Direction, supervision, and review of the work of team member. How much your work will be directed, supervised, review depends on car, but slowly. Number one, capability and competence of team member doing the work. Who is doing the work? Is CA doing or article? Tell me, whose work will you supervise more? Sir, we will supervise the work of CLS, but article more. Why? Because he doesn't have that much knowledge, capability, and competence. Second, area of audit. If it's a crucial area, I will do more supervision, more review. Sales, more review will be done. Cash and bank, less review will be done. ROMM, risk of material misstatement. In whichever area, risk is higher. Okay, review will be more. If risk is low, operating expense, risk is low, less review we will do. But if inventory is there, I will do more review. So if ROMM is more in a particular area, risk is more of mistakes, then I will do more review. Last, size and complexity of entity. Size means it's a listed company or unlisted. Of course, listed, more review, unlisted, less. What is the meaning of complexity? Do we have multiple business segments? Then of course, more detailed review. If you have only one business like us, FM, SM, audit, less review will be done. By the way, all the updates of all the videos and important things will come in Mrugesh Madlani Virtual's Telegram channel. So please join that as well. Okay. Okay. So direction, supervision, and review of the work of team member depends on car. Capability and competence of team member doing the work. A. Area of audit. R. Assessed risk of material misstatement. S. Size and complexity of entity. Very simple. Direction, supervision, and review of engagement team member depends on car. Capability and competence of team member doing the work. A. Area of audit. R. Assessed risk of material misstatement. S. Size and complexity of audit. Learn nicely. Small break. 5 seconds. Done. Chalo start. Direction, supervision and review of team member work depends on car. Capability and competence of team member doing the work. A. Area of audit. R. Assessed risk of material misstatement. S. Size and complexity of audit. Okay. Entity. Come here now. Overall strategy and plan is whose response? It's auditor's work. Making a strategy, making a plan, it's auditor. You can share the things with management to do audit in better way. Example, you are going to do audit of purchase. You can tell management, Mr. Manoj should not be absent. Why? Array, tomorrow we want to do purchase audit. But don't share so much that it will compromise effectiveness of audit. Sir, what is the meaning of this? Don't tell them in purchase you have done lot of fraud, so we are going to check every fraud in detail. Don't forget. No. Are you mad? Okay. Overall strategy and plan is auditor's responsibility. You may share it with management, but it should not compromise effectiveness of audit. Don't share it too much. Let them know what is your strategy and what is your plan. It is your responsibility. It is your document. Read English. Auditor may discuss elements of planning to help to conduct audit in better way. So they will keep the staff ready, they will keep the papers ready. Although this discussion occur, strategy and plan is auditor's responsibility. While discussing matter, we should not compromise effectiveness of audit. Clear? Yes. Last, I have to document. What document means? Write everything. Okay, I need to write overall strategy, overall audit plan, changes made to strategy and plan, which will also change nature, timing and extent of RAP and FAP, risk assessment procedure, further audit procedure. So first I will document what? Strategy. What strategy? Record of key decisions taken by management. What key decisions you have taken? So I hope it's easy. See, strategy is overall key decision to plan the audit. Okay. Second, what's the plan? Plan is nothing. Plan is a record of nature, timing and extent of risk assessment procedure and further audit procedure. Risk assessment procedure, further nature, timing, extent of RAP and FAP. Second, changes made to strategy and plan, which will also change audit procedure. Very simple. What I will document? Strategy, plan. If strategy and plan is changed, audit procedure will also change. Which procedure? RAP or FAP? Both. Simple example we will take. Earlier, we were following rely on control. Now we said not rely on control. Of course, plan will change, but my audit procedure will be more or less more. Okay. So what I will document? Strategy. Second, plan. Plan is nothing but record of nature, timing and extent of RAP and FAP. Changes made to strategy and plan. It will also change nature, timing and extent of audit procedures. Okay. Last thing, guys. Okay. Almost over. That's audit program. Last topic is what? Audit program. Super duper easy and amazing. Come here. See, ultimately, what do we want? Audit report. How you will get a audit report? By audit evidence. How you will get audit evidence? By performing audit procedure. Series of steps, okay, of the audit procedure is audit program. Let's go reverse. See, by doing audit procedure, we get sufficient and appropriate audit evidence. What will you do with evidence? Give audit report. So audit program is nothing. Series of verification procedure to be applied to items of financial statement for getting sufficient and appropriate audit evidence. Listen, understand audit program for 3 minutes or 2 minutes. All questions are time pass. What's audit program? What you will do in each area. In sales, what you will check? In fixed asset, what you will check? In purchase, what you will check? Okay, what steps will you do? Audit program is nothing but series of procedure which you will apply to all areas for getting what? Sufficient and appropriate audit evidence. So we can give a report. So easy. One last time. What is audit program? Series of verification procedure to be applied to all items of financial statement for getting sufficient and appropriate evidence so we can express an opinion. So simple. Come here now. Come here. I will take one example so it's very easy. Okay. See here. This is provisions. Okay. But provision little difficult. Okay. Let's take borrowings. Okay. Borrowings. In borrowings, what you will do? This 8 steps. It is nothing but audit program. Okay. See. Number 1, trace the loan balance to bank confirmation. You want to check borrowing. Check the balance of every loan with bank confirmation. With this, what you will get? Okay, for every audit program, every step, okay, there is a assertion. What is assertion? Listen nicely in detail. It will come in next chapter, but very short. I am telling you 1 minute. Assertion means management is asserting, stating, specifying, telling we have followed this thing. Auditor will check. Assertion means management. Management is asserting, specifying, saying that our borrowings are C for complete. E, they exist. PD, they are presented and disclosed as per Companies Act or as per Schedule 3 and they are valued properly. Okay. Management is saying all such things. We have to check. Okay. If I get a confirmation, tell me if I get a confirmation, is the borrowing complete? Of course. Does the borrowing exist? Yes. Okay. Is presentation and disclosure proper? Yes. And it's valued properly. Okay. Come here now. Foreign currency loan is restated at the year end. What is restated? Okay. Amount is changed of foreign currency loan. Okay. Come here. With this, what you will get? If it's properly valued as per foreign exchange rate, the valuation is perfect. What is perfect? Valuation. Okay. So I hope you. So what I will do in each area? See, trade payable, I will do this. Provision, I will. If you did not understand, ignore. Fixed asset, I will do this. Understood? Okay. Tell me fixed asset. What I will do? Get fixed asset register. What this will ensure? Completeness of asset. Okay. Completeness of asset. Okay. So one last time, what is audit program? Series of verification procedure to be applied to items of financial statement for getting sufficient and appropriate evidence to express an opinion. To express an opinion. Understood? One last time. What is audit program? Series of verification procedure to be applied to items of financial statement for getting sufficient and appropriate evidence to express an opinion. Clear? Okay. Business vary in nature, size, composition. See, business vary in nature, size, let's take example. Size of every business is different. Nature, some can be trading business, some can be manufacturing. Composition. So work which is suitable for one is not suitable for another. So one audit program is a myth. You cannot develop one. Let's take example. Balaji wafer or Lay's wafer. You cannot compare it with Dharma Productions. Dharma Production makes movie. Kabhi khushi, kabhi gum. Understood? Dharma production is different and Balaji wafer is different. Business drastically different. Okay, in Balaji sales is an important thing, but Dharma sales come from television rights. Okay, OTT rights. So business vary in nature, size, composition. Work which is suitable for one is not suitable for another. So one audit program is a myth. Come here now. Whenever you make a program, first make a standard program having regard to nature, size, composition of business and how many controls are valid. Nature means which business, size means how much big, composition means the mixture, internal control. Make a program with minimum essential work. In every area, I will do this minimum work. Then based on experience, you can add a few areas. Okay, alteration. As experience is gained, we can add a few areas which were left out. Hope you understood. Okay, so first make a standard program. Then based on expectation, you can add a few areas. Okay, so very simple. We make a standard program based on nature, size, composition and internal control. Make a program with minimum essential work. As experience is gained, you can add a few points. If you feel, oh my god, controls are not good, let me add a few more points. If you feel, oh, everything is perfect, let me reduce a few points. Okay, so first make a standard program based on experience. You can add a few points, subtract a few points. Three questions are left now. All three can come. Constructing audit program. Whenever you draw any audit program, first you have to, it can come. What are points to be kept in mind while constructing audit program? Before you construct, first you have to see, okay, in that area, when you construct audit program of purchase, sale, fixed asset, are you relying on control or not? If you are relying on control, checking will be less. If you are not relying, checking will be more. Okay, so first of all, be very clear. Are you relying on control or not relying? While developing audit program, we have to see whether we are relying on the control or not. See here, while developing audit program, auditor may conclude relying on control is effective and efficient way to control audit. However, auditor may decide not to rely when there are other ways to get evidence. So first of all, before you make audit program, okay, see in purchase, sale, inventory, are you relying on control or not? If you rely, further procedure will be less. If you don't rely, further procedure will be more. So this is the first point. Then you write who is making audit program, who has done the work, who has reviewed the work. That also we write in audit program. Example, I made this, then I will write prepared by mrugeshmadlani, reviewed by manager Manish Gupta. Okay, so I have to write that. Come here. Following points are to be kept in mind while constructing audit program. Number one, stay within the scope and limitation of assignment. Always remember, never go out of your assignment. Stay within the scope and limitation of assignment. Sir, can you tell some example? Why not? Okay, why not? Stay within the scope, stay within the limitation of the assignment. Don't exceed the assignment. Let's take an example. We are here to check financial statement. We are nowhere concerned with efficiency of employee. Company is not using this fixed asset nicely. Okay. These employers come late. Okay. You are concerned with financial statement, not other rubbish things. In company there is abnormal loss. Okay. Stay within the scope and limitation of assignment. Only check financial statement things. Second, consider all possibility of error. Whichever is related to financial statement, I will check. Remember 2 points. Stay within the scope and limitation of assignment. Consider all possibility of error. Third, determine the evidence available. Identify best evidence for deriving necessary satisfaction. This much evidence is available. This much evidence is available. Determine the evidence available and identify best evidence for deriving necessary satisfaction. This much is available. This is the best evidence. So this is the gap. Let's take example. While checking fixed asset, okay, last year same assets are there. These were there this year also. These were there last year. Don't be concerned. Only check addition. Determine the evidence available. Till last year you have checked. Okay, only check those items which are required for necessary satisfaction. Read again. Determine evidence available. Identify best evidence for deriving satisfaction. What is the best? Only check addition. Determine evidence available. Identify best evidence for deriving necessary satisfaction. Next, apply only those steps, only those procedures which are useful for verification in that situation. Okay. Don't do all procedure. Apply only those steps which are useful. Example, again checking fixed asset. Only don't check all invoices. Check the invoice only of additions done in the current year. Because till last year you must have checked. Apply only those steps and procedure which are useful for verification in that situation. Last, coordinate the procedure to be applied to related items. What all are related items? Okay, similar items should be checked by same person. Person who is checking sale should only check debtor because he understands debtor better way. From sale only debtor will be there. Person who is checking purchase will only check creditor. Both are related. Okay. A third example, person checking fixed asset should only check depreciation. Both are related. Understood? So while you make audit program, very simple, 5 points. Number one, stay within the scope and limitation of assignment. Consider all possibility of error. Consider all possibility of error. Determine evidence available. Identify best evidence for deriving necessary satisfaction. Apply only those steps, only those procedures which are useful for verification in that situation. Last, coordinate the procedure to be applied. Coordinate the procedure to be applied. Very simple, two points. Okay, constructing audit program. First 2 points. Number one, stay within the scope and limitation of assignment. Consider all possibility of error. Learn 2 points. Clear? Stay within the scope and limitation of assignment. Consider all possibility of error. Determine evidence available. Identify best evidence for deriving necessary satisfaction. This much is available. This is the best. Okay. Number one, determine evidence available. Identify best evidence for deriving necessary satisfaction. Apply only those steps, only those procedures which are useful for verification in that situation. Okay. Last, coordinate the procedure to be applied. Coordinate the procedure to be applied. Similar items together. Okay. Last 3 again. Determine evidence available. Identify best evidence for deriving necessary satisfaction. Apply only those steps, only those procedures which are useful for verification in that situation. Coordinate the procedure to be applied. Coordinate the procedure to be applied. Read nicely. Small break, 10 seconds. Done. Chalo. What are steps to be kept in mind for constructing audit program? Okay, stay within the scope and limitation of assignment. Consider all possibility of error. Determine evidence available. Identify best evidence for deriving necessary satisfaction. To get that best evidence, apply only those steps, only those procedures which are useful for verification in that situation. Coordinate the procedure to be applied to related item. Coordinate the procedure to be applied to related item. Come here. Now, advantage and disadvantage, we are done. What are advantages of audit program? We will learn later. Stage 1, understand. In absence of written program, we can ignore certain books and records. See, if the program is not written, you might ignore 2-3 points. If it's written, you know these 8 things we have to check. Second, serves as a guide for audit to be done in future years. Okay, payroll audit was very difficult. That is employee benefit or salary. So you wrote the audit program. Now tomorrow another article will be there next year. He will see the audit program. It will be a good guide for him for audit to be done next year. Next, serves as a evidence in case charge of negligence is brought against the auditor. Okay, what is the evidence? In case someone will tell you have not done audit properly, what you will show? See this audit program. We have followed nine points. Serves as a evidence in case charge of negligence is brought against the auditor. Okay. It gives assistant. Assistant means article with clear set of instruction. Article, no, I have to follow these 11 points. It gives assistant clear set of instruction. Selection of assistant or article becomes easy when work is segregated, divided. When you make audit program, we know this work can be done by cash and bank, this article. This work will be done by this article. This will be done by CA. Selection of article or assistant becomes easy when work is segregated or divided. Now, whenever they do work, no, they put a sign off. What is sign off in English? Left click they will do. Prepared by Mrugeshmadlani. In their computer, automatic it comes. Okay, so left. Assistant by putting signature or physical signature also they can do. Except responsibility of the work can be traced back. Tomorrow I have done cash bank audit. If I do any mistake, they will catch me. Okay, assistant by putting signature. Except responsibility of the work can be traced back. Now, who will review my work? Principal. Principal can monitor progress of work by audit program. Principal can monitor progress. Principal means my CA will directly monitor how much work you have done. I said, sir, I am doing. Audit program at 9 points. How much you did? I said 4. Okay. Principal can monitor progress of work by audit program. Last, in case of major audit, it gives total perspective of the work. Total. Big audit is there. It will give me total perspective. This much work is to be done. Whatever points are written in audit program. Super duper. Now, any 5 you remember, more than enough. No need to remember all. Only 5. Start. Written audit program serves principal and assistant with total perspective of work. Written audit program serves principal and assistant with total perspective of work. Written audit program serves principal and assistant with total perspective of work. Okay, written. In absence of written program, there is danger of ignoring certain books or records. Clear? In absence of written program, there is danger of ignoring certain books or records. Serves as a guide, serves as a evidence, serves as a guide, serves as a evidence, serves as a guide for audit to be done in future year, serves as a evidence in case charge of negligence is brought against the auditor. Remember 3 points. One more time I will speak. In absence of written program, there is danger of ignoring certain books and records. Serves as a guide, serves as a evidence, serves as a guide for audit to be done in future year, serves as a evidence in case charge of negligence is brought against the auditor. Learn nicely. Only 3 points. Clear? Okay. Now 3 more points about assistant. If you remember 1 or 2 also okay. It gives assistant total perspective of work to be done. It gives assistant clear set of instruction. You have to do this much. It gives assistant clear set of instruction. Selection. Now we'll select the assistant. Selection of assistant becomes easy when work is segregated or divided. Assistant, now after selecting they will do the work. Assistant, and then they will sign after doing the work. Assistant by putting signature. Accept responsibility of the work can be traced back. So simple. 3 points of assistant. It gives assistant clear set of instruction. Selection of assistant becomes easy when work is segregated or divided. Assistant by putting signature. Accept responsibility of the work can be traced back. Learn nicely. It gives assistant clear set of instruction. I will select them. Third, they will put their signature. Okay, read. Okay, one last time, it gives assistant clear set of instructions. Okay, in case of selection of assistant becomes easy when work is segregated or divided. Assistant by putting signature, except responsibility of the work can be traced back. Last, principal can monitor progress of work by audit program. Last, in case of major audit, it gives total perspective of work. It gives total perspective of work. Okay, very simple. Last, principal and total perspective. So written audit program serves assistant and principal with total perspective. Written has 1 point, serve has 2 point, assistant has 3, principal, very simple. Principal can monitor progress of work by audit program. Total perspective, in case of big audit, it gives total perspective. It gives total perspective. Let's learn the technique. Written audit program serves assistant and principal with total perspective of work. Written audit program serves principal and assistant with total perspective of work. Written audit program serves principal and assistant with total perspective of work. 2 times we will speak. In absence of written program, there is danger of ignoring certain books and records. Serves as a guide, serves as a evidence. Assistant. It gives assistant clear set of instruction. Selection of assistant based on job becomes easy when work is segregated or divided. Assistant by putting signature accept responsibility of the work. Work can be traced back. Now come to principal. Principal can monitor progress of work by way of audit program. So simple. Okay. In case of major audit, it gives total perspective of the work. Learn nicely, your time starts now. As many times you want to learn. Small break of last 10 seconds. Read from here. Done? Okay. One last time. What are advantages of audit program? Written audit program serves principal and assistant with total perspective of work. In absence of written program, there is danger of ignoring books and record. Serves as a guide for audit to be done in future year. Serves as a evidence in case charge of negligence is brought against the auditor. It gives assistant clear set of instruction. Selection of assistant based on job becomes easy when work is segregated or divided. Okay, assistant by putting signature, accept responsibility of the work can be traced back. Principal can monitor progress of work by way of audit program. In case of major audit, it gives total perspective of the work. What are disadvantage of audit program? What are the bad things in audit program? Okay, very simple. Number one, work can become mechanical. Some parts are performed without understanding their real objective in the audit. What do you mean by this? See, work is mechanical. Sometimes you don't know why you are doing the work. Okay, see, many times what is that? Bad things about work is mechanical. You don't know that you are checking these assertions. Many people don't know meaning of assertion. Of course, it will come in chapter number 4. Okay, why am I obtaining fixed asset register? To check completeness. Okay, many times work is mechanical. I don't know the meaning of the point, but still I am doing. Second, inefficient assistant means article can take shelter behind the program. They will ask you, sir, this much basic also you did not check. Sir, it was not written in audit program, so I did not check. I am just preventing myself. I am taking shelter behind the program. Third, program is rigid and inflexible. Program can be rigid and inflexible. Business is changed, but program is not changed. Then it will be obsolete audit. Your business has moved from offline to online due to COVID, but same things you are checking in audit program. So it's rigid and inflexible. Okay, a business is changed, program is not changed. It will be obsolete audit. Last, hard and fast program may kill initiative of enterprising article. Any article who likes creativity, okay, if you tell him check this many things, his creativity will die. Hard and fast, then what's the use of audit? Audit will become science, it will not become an art. Are you clear? Audit is an art as well. Hard and fast program will kill initiative of enterprising assistant. Understood? Fully understood, sir. Chalo, start. How to remember? What are disadvantage of audit program? Marry. Marry, marry, whatever you want. Audit program, marry or marry. Okay. Number one, work can become mechanical. Some parts are performed without understanding real objective. A. Inefficient article or assistant can take shelter behind the program. R. Program can be rigid and inflexible. Business is changed. Program is not changed. Last I. Hard and fast program will kill initiative of enterprising assistant. Clear? Learn nicely. So M, mechanical, inefficient assistant can take shelter. Program can be rigid and inflexible. Hard and fast audit program will kill initiative. Remember one word, then we can make a sentence. Mechanical, work can become A. Inefficient assistant, shelter. Program can be rigid and inflexible. Hard and fast audit program will kill initiative. Learn nicely. Small break, 10 seconds. Disadvantage. Done. One, two, three, start. What are disadvantage of audit program? Work can become mechanical. Some parts are performed without understanding real objective. Inefficient assistant can take shelter behind the program. Program can be rigid and inflexible. Business is changed, but program is not changed. And last I. Hard and fast program will kill initiative of enterprising assistant. Clear? One last time. Disadvantage of program. Marry, whatever. M. Work can become mechanical. Some parts are performed without understanding real objective. A. Inefficient article can take shelter behind the program. Program can be rigid and inflexible. Business is changed. Program is not changed. Last. Hard and fast program will kill initiative of enterprising assistant. Clear? Yes, sir. With this, we are fully done with entire chapter, audit strategy, audit planning, audit program. Look at the amount of hard work which is going on in the background. So we can make the subject super easy for you. Do consider liking it. Okay. If you are new to the channel, subscribe is compulsory and please share with your friends. Okay. So they can get same positivity, same hard work. Until then, okay. Bye-bye. Good night. See you in the next video. Take care. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, after finishing 2 chapters, today it's the time to revise chapter number 3. This chapter is considered to be very lengthy chapter, but don't worry, people feel it's complicated. We are here to make it super easy, super fun, super interesting, and the best chapter for you. So be rest assured what you are going to get in this revision lecture. Okay, number one, okay, detailed understanding of concept. Okay, you will understand the concept wherever necessary. We will try to learn also, so this journey becomes very easy for you. Yes, guys, let's start. Risk assessment and internal control, chapter number 3 in only English. Of course, Hindi ones are already uploaded if you wish to watch. This is a only English lecture. Let's start right away. Okay, before we start, where are we doing the revision from? We are doing it from our magic book. Those of you who don't know, magic book covers entire concept in roughly 80 to 85 pages. So from this we are doing it. It's a relatively lengthier chapter, but don't worry, we will make it very easy. This is also called the base of audit. If you understand this chapter, there is a high probability you understand entire audit in the nicest way. So let's start. What is risk assessment and internal control? Why do I need to assess the risk? Okay, see, risk assessment means to find out which are the risky accounts. Okay, top 5 to 10 accounts. Okay, international standard gives a number. Our standard doesn't give number. It tells only identify which are risky accounts, but international standard tells identify which are the risky accounts. Now you will ask me, which is a risky account or what is a significant risk? Where probability and impact of error is high, where there is a high chance that error will happen, and if it happens, the impact is also huge. So probability means chance of error happening, or mistake happening, and if the mistake happens, the impact is big, probability and impact is big, then it's what? It's a significant risk. We have to identify top 5 to 10 significant accounts, okay? Those accounts where there are high chances of mistake. Why? Because once I audit those in detail, there is a high chance my audit risk will be low. I will concentrate more on them. So why do I need to know this chapter? So that I can know which are the risky account, which are the significant account where there is a significant risk. Because if I focus on those accounts also, there is a high chance that my audit risk will reduce. Let's take parallel example. There is a lot of syllabus, but we don't study whole syllabus equally. We know these are crucial chapters, these are big chapters, lot portion is going to come, so there is a high chance if I do these chapters also, I will pass. Same way in audit also, okay, there are immaterial accounts, certain are material accounts. We will identify top 5 to 7 account. Now your next question is how to know which are top 5 7 account where there is a high chance of mistake, probability and impact of mistake is high. So that is why I need to assess the risk. For that, management will of course implement control, and I have to identify those accounts, because if I audit those accounts also, there is a high chance I will reduce my audit risk. I will catch all the mistakes. Leftover mistakes will be immaterial. Okay, so this is a brief intro of the chapter. Let's start right away. Okay, let's start. For those of you, one more time, yes. Okay, please follow Telegram channel Mrugesh Madlani Virtuals. The name of Telegram channel is Mrugesh Madlani Virtuals. In that, you'll keep on getting update when is the next lecture of revision uploaded, or what is the strategy, etc., etc., etc. Okay, let's start. Okay, audit risk. What do you mean by audit risk? Listen very nicely, very nice chapter. It is a risk that auditor gives an inappropriate opinion when the financial statements are materially misstated. Okay, let's go very slow. Tell me, whenever there is misstatement in chapter 1, I taught you, whenever there are material misstatement, which opinion will come? If it's only material but not pervasive, qualified. If it's material and pervasive, adverse. If you don't get evidence and you feel misstatement could be material and pervasive, disclaimer report will come. I hope you know. But here, what is that? It is a risk that auditor gives an inappropriate opinion. When financial statements are materially misstated, which opinion should come? Qualified, disclaimer, adverse. Either qualified, disclaimer, adverse. But you are giving clean report. That's the audit risk. See, audit risk means we are misleading shareholder. Actually, there are a lot of mistakes, but you are giving clean report. So it is a risk that auditor gives an inappropriate opinion when the financial statements are materially misstated. We have to give what report? Qualified, disclaimer, adverse. But we are giving what report? Clean report. That is a risk. That is a risk. Now, how does that risk come? That we will see. It is a risk that auditor fails to give correct opinion. It comes by 3 ways. Okay. RO. See, audit risk is multiplication of 3 things. IR, CR, DR. Inherent risk, control risk, detection risk, inherent risk, control risk, detection risk. Okay, we will study all. First of all, IR into CR is ROMM, which is the most important discussion for today. Okay, risk of material misstatement is made up of 3 words: inherent risk, control risk, detection risk. But what is risk of material misstatement? Okay, that is made up of only 2 words. Audit risk is made of 3 words. What is ROMM? See, first let me break the word. Risk of material mistakes. Okay, how many mistakes can happen? What is the risk of material misstatement? Is made of 2 words. IR into CR. What do you mean by IR? Inherent risk. Okay, inherent risk means what? Just by looking at the account, we know that this wrong things can happen. Okay, let's take a simple example. When I look at a certain person, 5 minutes I will talk, I will know this things wrong can be there in that person. Or in your body, as soon as you are born, there are few defects. Okay, someone is very fair, someone is very black, someone is height more, someone height less, someone fat, someone. Okay, inherent risk. By looking only, there is a risk. Possibility that there could be misstatement before control. Even before implementing control, what wrong can happen? How do I get inherent risk? I will look at the company and that area. Okay, so number 1, I will look at the company. What are the owners of the company? Okay, how are accounting policies of the company? What are objectives of the company? Plus, I also look at the area. So I look at the company, I look at the area and decide inherent risk is high, medium, low. Let me take example. if it's a gangster company, if it's a company of a terrorist organization, inherent risk has to be high because they will do a lot of wrong things. On the opposite side, it's Tata Group. There is a high chance everything will be perfect. Okay, means risk will be low, inherent risk will be low. Plus, you don't only need to see the company, you need to see the area also. Now, many people will ask me, what will I see in a company, sir? Okay, how is this done in real life? If you don't know, I will tell you. In real life, we prepare a document known as UBT, understanding the business transaction. One more time, what do we prepare? Understanding the business transaction. One UBT document is prepared. Based on that, we do all this. Okay, let's take an example. You will understand little better. See here. Whenever I do understanding of entity, inherent risk is what? What are the risks before control? What are the risks? We look at the company plus area. Now you will ask me, in company, what will I look? Number one, nature of the entity, operations, ownership and governance structure, way it is financed, way it is structured. Okay, what's the entity? Is it a standalone entity? Is it a subsidiary of a company? Is it a subsidiary formed in Mauritius just to save taxes? Okay, is it a subsidiary of Adani? Okay, complex structure is there. There are 4 companies below with this company is there. Inherent risk is going to be high. What's the nature of entity? Who are your owners? How did you get finance? How is the company structured? Understood? Yes. Come to second. Relevant industry, regulatory and other external factors. What's the industry? How many customer you have? If you have only one customer, high inherent risk. If that customer goes, company will go. You have to look at company. If you have only one supplier, okay, what if that supplier goes, company will go. So relevant industry, regulatory and other factor. Let's take regulatory example. You are a gaming company. Government doesn't like online gaming. Look at the taxes they are imposing. Look at GST notice. Okay, you are a casino company. Government doesn't like. Rule, you are a bank. Okay, lot of regulations are there in India. So relevant industry, regulatory and other external factors. If there are too many factors, too many laws, then auditor has to check a lot. So inherent risk will be high that one law will not be followed. There can be certain regulation which are not followed. Understood? Entities selection and application of accounting policies. Are accounting policies consistent with FRF? Okay, method of depreciation, method of inventories as per the AS or not? We just have to see. Second, entities objective and strategy and those business risks that can lead to ROMM. What are the strategies used to achieve objective? Your objectives are too much, then what will happen? You will do wrong things to achieve objective. Okay, what are the entity strategy and objectives? What strategies are used to achieve objective? If your objectives are too high, 40% growth, you will do wrong things. Inherent risk has to be high. Okay, next, measurement and review of financial performance. See, if your performance is again and again getting reviewed, okay, you are getting funding from some people, okay, and there are a lot of pressures on you to achieve a certain performance, your inherent risk has to be high. I hope you are understanding. It will help to understand where more pressures are there, more risk of material misstatement, more chance you will show dummy sale, more chance you will do something wrong to achieve your targets. Only then you will get the funding. So in entity, I have to see this many things in real life. Okay, in real life, plus I will look at the area. Now let's take few example of area. I told you about the company. Okay, let's take example of area. Let me take 4 examples. Okay, before control, what risk are there? Just look at the area and see before control. Example, whenever incentives are linked to sale, sales is an inherent risk. Why? People will show higher sale because they will get more incentive. Whenever your salary incentives are linked with sale, they are going to show higher sale. In fact, sales in a listed company is always inherent risk. Why? Every listed company wants to show more sale or less sale. You tell me. More sale, right? Second example, purchases if made in cash. Always remember, purchase if they are done in cash, high chance fraud will happen. Third example, in a jewelry business, okay, jewelry showroom, inventory valuation. Same jewelry can be of 1 lakh, same jewelry can be of 10 lakhs, same jewelry can be of 1 crore, same jewelry can be of 10 crore. Okay, so inherent risk is there. There is a high risk that something wrong will happen. Okay, we are not saying it is wrong, but it may happen before control. What are the risks? By looking at the area. So in a jewelry business, inventory valuation is always an inherent risk. That is why we buy jewelry only from trusted people. Let me take last example. Related party completeness. Okay, you will hide related party transaction, you will not give full disclosure, we might not identify all related party because company themselves don't know at times. It is an inherent risk. Okay, so now let me come to inherent risk here. Possibility of an assertion about class of transaction, account balance, disclosure to a misstatement that could be material, either individually or when aggregated with other misstatement before control. Sir, did not understand at all. Slowly and nicely, I will explain. Be rest assured. Okay. See, what do you mean by the word assertion here? Okay, simple meaning today. Tomorrow when we do chapter 4 I will teach in detail. Okay, what is the meaning of word assertion? See, by the way, these lectures are in no way substitute to the regular or fast track. They are compulsory, right? These will help you to gain more confidence. Okay, let's start. Assertion means what? Management is clearly stating we have followed this. We have to check this is followed or not. Let's take example. Plant and machinery is 50 crore. Management is saying it's complete, it's properly valued. Okay, assertions these are. Okay, these are assertions. We have properly valued it, it's complete, it's the right of the company. Understood? Sales 700 crore sale is written. Presentation is proper. It has actually occurred. It's measured properly. That sale factually is done. Are you clear? It occurs. So assertion means management is stating. Whenever management write a certain item, it's stating, it's telling it is true. As an auditor, I need to check. Assert means management is specifying. Assertions are representation by management that if sale is written 700 crore, the amount is correct. Okay, it's properly measured, that sale has actually occurred, it is a complete sale, it's presented properly. Understood? I have to check. Now read this. Possibility of an assertion means one thing can be wrong. In what? Class of transaction, account balance, disclosure. Let's break three words. What is a class of transaction? P&L. What's the account balance? Balances are in balance sheet. Disclosure are in notes to accounts. So possibility of a assertion about class of transaction, P&L. Okay, account balance, balance sheet, and disclosure notes to accounts to a misstatement which could be material. Either individually, sometimes individually mistake is big, or small mistake, or when aggregated with other small mistake, it could be material. Before control. Now let's take example. Class of transaction in P&L, sales can be high. In a listed company, there is a high chance I will manipulate the sale to achieve target. If purchases are done in cash, there is a high chance fraud will happen. So while seeing IR, means you are telling IR will be calculated of every area separately. Yes. Okay, sales we can feel that inherent risk is high. Right? Company you have to see that area. Purchase, if you feel everything is perfect, nothing wrong can happen, then purchase inherent risk will be low. You have to decide. Okay, that auditor will decide. So possibility of an assertion about, okay, assertion about class of transaction, account balance, disclosure. Class of transaction, account balance. So in sales, what is the problem? You are feeling sales are overvalued. Okay, so in sales, problem is in measurement. Okay, purchases if done in cash. Account balance. Okay, let's take example, inventory valuation. Okay, in jewelry showroom, inventory valuation is a problem. Account balance. Disclosure, related party are not shown fully. Risk is there, they may be shown, but before control. So possibility of an assertion about class of transaction, account balance, disclosure to a misstatement that could be material, either individually or when aggregated with what? Other misstatement. Before control. I hope you understood. In real life, how do we understand inherent risk? We have to look at the company and the area. Okay, I already told you few example. I hope you understood. If you did not understand the definition, okay, means not able to learn, highly okay. Possibility of an assertion about CAD, what's the full form? Class of transaction, account balance, disclosure to a misstatement which could be material, which could be material, either individually or when aggregated with other misstatement. Before control. What's the important word? Before control. Okay, so any mistake if you feel can happen before implementing control is inherent risk. You just have to look at the company and you will know. Look at company and area. In this area, these four things can happen. These are inherent risk. Okay, in this can happen. Inherent risk. I hope you understood. In company, what to look at? Okay, here, nice review. Nice review. They can ask you understanding of entity and its environment. What to look in entity? Nice review. Nice review. Nature of entity. Relevant industry, regulatory and other external factor. Nature of entity, relevant industry, regulatory and other external factor. What is now E? C is silent E. Entity selection and application of accounting policies. Entities, objectives and strategy. Very simple. Entity selection and application of accounting policy. Entities, objectives and strategy. Review, measurement and review of financial performance. Over. Nice review. One last time. Nature of the entity. Relevant industry, regulatory and other external factors. Entity selection and application of accounting policies. One more E. Okay. Entities, objectives and strategy. Okay. Last review. Entities, measurement and review of financial performance. Measurement and review of financial performance. Nicely speak. N, I, C silent, double E is there and review is there. Learn nicely. 10-second break. Clear? 1, 2, 3. Let us start. Okay. So let us start one more time. Okay. What do I understanding of entity and its environment? What factors are seen? Nice review. Nice review. Nature of entity. Relevant industry, regulatory and other external factors. Entity selection and application of accounting policies. Entities, objectives and strategy. Okay. And last, review. Entities, measurement and review of financial performance. One last time. Nature of the entity. Relevant industry, regulatory and other external factor. What's E? Entities selection and application of accounting policies. Okay, one more E. Entities, objectives and strategy. And last, entities measurement and review of financial performance. Okay, yes sir. Come here now, come here now, come here now. IR is over. What is IR? Just look at the company and the area and find out what wrong things can happen before control. Before control. Are you clear? Yes. Now, tell me, for all this, wherever there is inherent risk, will management implement control? See, I know that whenever incentives are linked with sales, sales can be overvalued. Whenever purchases are done in cash, there is a high chance of fraud. In a retail business, cash and bank is always inherent risk. One more example we found out, chalo, of balance sheet. In retail business, whenever there is a retail, cash and bank always, there is a inherent risk, something wrong will happen. Inherent risk is there. Inventory valuation. In a jewelry business, inventory valuation is always an inherent risk. Related party disclosure, always inherent risk. Now, do I know or management also knows? Management also knows what they will do for that control. They will implement control. If that controls are not strong, as an auditor, I will check how is the system. I will understand the system. If it is strong, control risk will be low. If it is weak, control risk will be high. Can you give example? For same examples. Management will implement control. I have to check, are the controls strong or not? If they are strong, control risk is low, otherwise it is high. Same definition. Risk that there could be misstatement in CAD, class of transaction, P&L, account balance, balance sheet, disclosure. Okay. Risk that there could be misstatement in class of transaction, account balance, disclosure. That could be material, either individually or when aggregated with other misstatement, and it will not be prevented or detected and corrected by entities internal control. It will not be prevented. What's the meaning of prevented? Stopped. It will not be stopped or detected and corrected. If we are not able to stop, see, first of all, I would not like that mistake to happen. I will implement strong control. Or if it happens, then what I will do? Detect and correct. But if it is not prevented or detected and corrected, then control risk is high. So for all the mistakes which I told, retail business, cash and bank, jewelry business, inventory valuation, they will implement strong control. But as auditor, if I feel controls are not strong enough, control risk is high. Control risk is high. One last time. Risk that there could be misstatement in an account balance, class of transaction, disclosure that could be material, either individually or when aggregated with other misstatement. Okay, and most important, it will not be prevented or detected and corrected by entities internal control. Then my control risk will be high. How it is it done in real life? Okay, walkthrough document is prepared in all Big Four. I am article of Big Four, so I can tell what's walkthrough. Okay, walk through the transaction. Just walk through one transaction. I will check in detail. Okay, of purchase also, of sale also, and I will know whatever management is saying, are their controls strong or not. I will understand the control. Okay, I will do one transaction. Three things I will do in that transaction: understand the process, risk associated with process, related control to mitigate the risk. One more time: understand the process, risk associated with the process, related control to mitigate the risk. One last time: I will understand process, what are the risks in the process, and what are the controls to mitigate the risk. If after that I feel that controls are strong enough, I will say control risk is low, otherwise control risk is high. Now when we multiply IR and CR, we get ROMM. What is ROMM? Risk of material misstatement. What wrong can happen? Okay, if you feel there are a lot of inherent risk, okay, and controls are also not strong, okay, then ROMM will be high. Risk of material misstatement will be high. But if you believe there are less inherent risk and controls are also strong enough, then ROMM will be low. There is a low chance of mistake happening in that account. But why do I find ROMM? Based on ROMM, further audit procedures are designed. What is designed, guys? Further audit procedure. But before we discuss that, let me finish detection risk. Okay, which risk? Detection risk. Okay, come here. Very simple. Ultra concentration required in this chapter, then all chapters will go smooth. Okay, so come here. See here. Let's take two accounts. Purchase has low risk of material misstatement. Sales has high risk of material misstatement. How do I get it? IR into CR. Understood? Okay. Come to high first. Okay. In sales, there is a high chance of mistake. So I will design more audit. These are mistakes, cross. So I will design more audit procedure or less. If there is a high chance of mistake, more audit procedure, more further procedure. Till here we were doing risk assessment. Now further procedure, more procedure means more chance of catching mistakes, okay, less chance of not catching mistake. So detection risk is low. What do you mean by detection risk? It is a risk that, see, this many mistakes are there. Now we will do audit. It is a risk that audit procedure performed by auditor will not detect a misstatement that could be material either individually or when aggregated with other misstatement. See, after ROMM, I design audit procedure. But what is detection risk? I could not detect the mistake. If I could not detect, then detection risk is high. If I can detect all mistake, detection risk is low. Okay? Very simple. Read here. See, it is a risk that audit procedure performed by auditor will not detect. It's a risk, no, it's a risk. So will not detect a misstatement that could be material either individually or when aggregated with other misstatement. Now come here very nicely, very slowly. Whenever ROMM is high, there is a high chance of mistake. So I will design more procedure or less. Simple. Sir, more procedure than more chance of catching mistake. Okay, less chance of not catching. So detection risk is low. So ROMM and detection risk are inversely related. Whenever ROMM is high, more procedure will be there, more chance of catching mistake, less chance of not catching. So detection risk is low. Come here. Whenever my ROMM is low, okay, means I will risk is very less, so I will do more procedure or less. Why should I do more? There are no mistakes, they are nominal, so I will do less procedures. Whenever procedures are less, okay, there is a high chance of not catching all mistake, but it's okay, they are immaterial mistake, they are immaterial. Okay, so I will do less procedure, so there is a high chance of not catching mistakes. So ROMM or detection risk will be high. I hope you understood. ROMM and detection risk are inversely related. 1 mark it can come. Whenever ROMM is high, Okay, there is a high chance I will catch mistake. Why? Because more audit procedure, detection risk low. Exact opposite. When ROMM is low, I will employ less procedure. If I employ less procedure, there is a high chance something will be left out. So detection risk will be high. But okay, mistakes are immaterial. Mistakes are immaterial. I hope you understood. Now I will show you one final diagram, and I think you will understand audit risk like never before. Okay, you will understand audit risk like never ever before. Okay, 1 2 1 2 1 2 1 2 1 2 1. Here, listen nicely. See, inherent risk are total mistakes that can happen before control. You look at a company and the area and see this wrong can happen in a company. Okay, what all wrong can happen in a company? Inherent risk. For that, management will implement this umbrella. What's this umbrella? Control. This umbrella is a control. With the help of control, few mistakes we are able to correct, the left side ones, but right side ones will remain. Okay, no problem. Some mistakes will remain. Some mistakes will remain. After that, auditor will employ audit procedure. Auditor will employ strong audit procedure. See here. Here. After that, also some mistake will remain. No problem. No problem. Okay. This is audit risk. This is audit risk. Okay. Now, what is the risk? Okay. That mistakes are too many, but I give clean report. That's the risk. Okay. That's the risk. I hope you understood. Okay. So, first umbrella is what? Put by management, they will implement control. Second umbrella is put by auditor. After that, also if mistakes remain, okay, that is the audit risk. Okay, we feel those mistakes are not big enough, but actually when they are big enough, that is the audit risk. I hope you understood. Okay, now we will move to the second part. Okay, second part of this. Okay, I hope you are very much clear with this. Okay, very important what we learned. Okay, if you want one more time, I will explain you. Okay, the nicest way. Come here, come here, come here. I think this is very important because rest all chapters are dependent on this. Okay, come here. Audit procedure. Two, RAP, FAP. There are two audit procedure. Risk assessment procedure, further audit procedure. One more time. Risk assessment procedure, further audit procedure. What is risk assessment procedure? SA 315, which we just learned right now. What is SA 315? Identifying and assessing risk of material misstatement. See here. Identifying and assessing risk of material misstatement. How do you get ROMM? IR into CR. Same. Through understanding of entity and its environment. Understand the company. What are risks in a company? What are risks in an area? Inherent risk. And risk and control. Understanding risk and control is control risk. In control risk, what do? Do a walkthrough. Do one transaction from top to bottom. Top to bottom, do one transaction. That's walk through. Understand the process. Risk associated with the process. Related control to mitigate the risk. Are you clear? So very simple. This is 315. What is further audit procedure? We will see later. So this part is pending. Come here last time. Risk assessment procedure means what? SA 315. Identifying and assessing risk of material misstatement through understanding of entity and its environment. That's IR. Entity and its environment is IR. Okay. Yeah. Entity including risk and control, that's CR. Including risk and control, CR. One last time. Identifying and assessing risk of material misstatement through understanding of entity and its environment, IR. Okay, including risk and control, that's CR. I hope you understood. I hope you understood. Okay, so entity, environment, IR, CR, both multiply ROMM. That is what we have to find today. That is what we have to find. I hope it's easy. Okay, come here. Now we are moving on little. Directly come here. Second, okay, SA 315, identifying and assessing risk of material misstatement. How do I find? Understanding of entity and its environment, IR, and risk and control, that is CR. Now come here. SA 320, materiality in planning and performing the audit. After finding ROMM, usually we find materiality. We find what? Materiality. You found ROMM, risk of material misstatement. Based on that, materiality figure will come. Okay. Now, what is materiality? Come here. Fast term fast. Here. Materiality is one figure above which everything we will check, below which we will not check. Okay. Simple English. Materiality is anything which can influence the decision of user of financial statement. Above this, we will check the things. Below this, we will not check the things. Okay. So it could be any figure. We can take materiality as it's a financial figure. We can take it as a percentage of net profit, revenue, assets, or equity. Okay, if you take net profit, these are big four rules, you don't need to remember. It should be 5 to 10. If it's revenue, 0.5 to 1, assets 0.5 to 1, equity 1 to 2. Okay, now tell me, okay, let's take usually, which should we select? Tell me, should we select net profit, revenue, assets, equity, what? That depends on a few factors. Let us do that question first. Two questions are very important here, both we will do. Come here, come here. Come here, come here, come here. Okay, sir, coming. Sir, okay, coming, sir. Coming, sir. Where you are coming, sir? Materiality, sir. Sir, materiality. Okay. Yeah. Tell me. Sales, let's take figure as of now. Oh, no. We have to do other question, right? Then we tell me we should take net profit, sales, revenue, what? That depends on few factors. We are doing that first. Come here. Use of benchmark in determining materiality. Shall we take sales? Shall we take assets? Shall we take investment? What shall we take? Depends on following factor. Depends on following factor. Can we start? Why not? Okay. Use of benchmark in determining materiality. Okay. Number one, volatility of the benchmark. Never take that figure which keeps on changing. Okay. Example, profit is minus, then it becomes plus, then it becomes what, 200 crore, then it becomes again 10 crore. Don't take profit. We have to take the figure which is little stable. They are not telling what to take, but take that figure which is stable. Which is the best benchmark? Shall you use a percentage of assets? Shall you use a percentage of revenue? Shall you use a percentage of investment? What to use? Okay, volatility of the benchmark. Second, it should be element of the financial statement. Okay, you can take it as a percentage of sale, take as a percentage of profit before tax. You can take assets also. You can take equity also, element of the financial statement. Third, entity's ownership structure and way it is financed. Okay, if there is too much debt, then don't take profit. Whenever there is too much debt, don't take profit. Now you will tell me why not to take? Because whenever debt is there, people will show higher profit because they want more debt. So don't take debt. What to take? You have to decide. Nature of entity, where the entity is in its life cycle, industry and economic environment in which it operates. Where are you? Nature, what's the nature of entity? Where you are in your life cycle. Let me take a brilliant example of this. Okay, whenever we are at a starting stage, remember, whenever we are at which say starting stage, never ever take sales because it will be too less. Profit also don't take. Okay, you can take equity, you can take assets. Nature of entity at starting stage, profit and sales are not correct. Okay, why? Because we are just starting off, the figure will be too less. Item where user focus on financial statement. Where do user focus? Usually users are concerned with profit. So PBT, you can take profit before tax. Understood this much? Super duper. Yes. Tell me, what's the bench band? Use of benchmark in determining materiality. Definitely it can come. What's the benchmark in determining materiality? Materiality we will take, but what's the benchmark? Okay, use of benchmark in determining materiality. Okay, very simple. We knew. What's the technique? We knew. Okay, we will ask we knew which benchmark to take. We knew. Tell volatility of the benchmark. Okay, element of the financial statement. Item where user focus. Okay, sorry, one more time. Volatility of the benchmark. Element of the financial statement. Entities ownership structure and way it is financed. Double E is there. No. Entities ownership structure and way it is financed. Nature of entity, where the entity is in its life cycle, industry and economic environment in which it operates. Okay, and last, entity's ownership structure, way it is financed. Okay, nature of entity, where the entity is in its life cycle, industry and economic environment. U, where item where users focus on financial statement, where user focus. We have to learn this nicely. What's the best benchmark for determining materiality? We know. Tell volatility of the benchmark, element of the financial statement. What one more E is there? Entities ownership structure and way it is financed. Nature of nature of entity, where the entity is in its life cycle, industry and economic environment. U, item where user focus on financial statement. Learn nicely. Small break, 10 seconds. Done. Chalo, fast. Use of benchmark in determining materiality. Which should be the best benchmark? Shall we take sales, assets, equity? We know volatility of the benchmark. Element of the financial statement. One more E is there. Okay, entities, ownership structure, and way it is financed. Okay, nature of entity. Where entity is in its life cycle, industry and economic environment. U, item where user focus on the financial statement. Clear? Yes, sir. Next. Okay, now come here. Now we will understand which shall we take. Depends on company. I hope you got the answer. Depends on company. My one brilliant thing is that net revenue they have told 0.5 to 1, but profit they told 5 to 10. Why such deviation? They can take revenue also 5 to 10 only. Why? Okay, revenue they have told 0.5 to 1, net profit 5 to 10. Why such a deviation? Please tell. Oh, don't know, sir. I will tell you. Revenue figure is always higher. Remember, take on Kelsey. Revenue is 1000 crore. Okay, let's assume 1000 crore, 1% is how much? 10 crore. 1000 into 1 upon 100, 10 crore. But net profit will not be 1000, it will be 100 crore only. Why? After expense, no, it is. So take 10% now. 5 to 10. Okay, so 1000 crore, 10%. Again, it's 10 crore. In both, answer is coming the same. I hope you are able to understand. One more time. See, revenue figure is always higher. So take 1% of 1000 crore is how much? 1% of 1000 crore is 10 crore. Okay. Now. Profit is how much out of 1000? 100 crore. Okay. Because after expense it is. Now 100 crore take 10%. Or 10, both same. Understood. Profit figure low. So they to adjust, they have taken 10% and this. Yes, understood. But one last doubt, sir. Shall we take 0.5 or 1? Shall we take net profit if we take 5 or 10? What a doubt you are asking. Come here. That depends on ROMM. Which area, okay, you are taking? What is the ROMM of the company? Or you can take area wise also separate, okay? But generally, materiality as a company is calculated once and then area wise is also calculated. Area wise, if we calculate for current asset, current liability, that I will tell you. Usually, materiality as a whole is a percentage of either sales, PBT, anything. But shall I take 0.5 or 1? If I am taking sales, 0.5 or 1? Depends. If ROMM is low, means there is low chance of mistakes in the company. Company is good. Their IR and CR is low, means there are less mistakes. Then you can take materiality higher. Okay. Or we can take materiality higher. Let's assume 1000 crore, 1%. Here I will take 10 crore. Above 10 crore we will check, below 10 crore we will not check. I hope you understood. Fully super duper understood. Okay, don't worry, sir. I understood. This is 10 crore. Okay, so we see ROMM is low, means I have taken materiality 0.5 to 1. I have taken here 1 crore. Why? Mistakes are not there. These many mistakes are there. Immaterial. Okay. Now, but here, there are a lot of mistakes. ROMM very high. Okay, here I cannot take 10 crore. If I take here, this many mistakes will be left over. So tell me, what should I take? I should take 0.5. 0.5 is what? 5 crore. So this all I can correct. Still mistakes will remain. But these are immaterial. I hope you understood. So whenever ROMM and materiality are inversely related, whenever ROMM is high, materiality should be low. So we can catch all the mistake. Whenever ROMM is high, materiality should be low. Okay. But whenever ROMM is low, means there are no mistakes only. Mistakes are immaterial. Then I will take higher amount. Why to waste time? I hope you understood. So ROMM and materiality are inversely related. 0.5 shall we take or 1? Depends on ROMM. Okay. Come here now. Amount even lesser than materiality can influence the decision of the user. Now you will tell me one brilliant question. Sir, below materiality so nothing I will check. No, who told? You only told above materiality we will check. But in 3 cases, even below materiality you have to check. Oh, nice. Amount even below materiality can influence the decision of user of financial statement. What are those 3 cases, sir? Okay. Number 1, law, regulation or FRF requires measurement or disclosure of certain item. Law has told, regulation has told, financial reporting framework has told. Then we need to show. Example, caro and fraud. Fraud is of 1 rupee, 10 rupee, 1000 rupee. You need to show. That time materiality will not be valid. Okay, because fraud is a fraud. Caro has told you need to do statutory compliance. You have not paid to government 10 rupees or 100. You need to show separately. That time no materiality. Law, regulation or FRF requires measurement or disclosure of certain items. E, where attention is focused on particular aspect of entity's business. See, if user wants to see a particular business, you have to show. For Paytm Payments Bank. Okay, it's a very important critical component. Though it's immaterial, show because user want to see. Where attention is focused on particular aspect of entity's business. For Paytm Bank. Third, Geo Finance. Geo Finance is immaterial, but user wants to see. So, sure, then we need to audit. Okay. Key disclosures in specific industry. For every industry, there are few disclosures. Let's take example. For pharma company, it is R&D. For every pharma company, research and development is a key disclosure. They need to show research and development. Every pharma company in the world needs to show R&D. What is R&D? Research and development. Very simple. Shall I explain or understood? Fully understood, sir. Key disclosures for specific industry. For a pharma company, research and development is an important thing. They need to show separately, so we need to audit it. Okay. For insurance company, separate disclosures. Okay. A banking can be separate. Okay. So amount even lesser than materiality we need to show only in three cases. LED, where law, regulation or FRF requires measurement or disclosure of certain item. Where attention is focused on E, particular aspect of entity's business. D, key disclosures for specific industry. Key disclosures for specific industry. Learn nicely. Law, regulation, FRF. Attention is focused on particular aspect of entity's business. Key disclosures for a specific industry. Learn nicely. Your time starts now. Done? Break 5 seconds. Done. Amount even lesser than materiality could influence the economic decision of user. LED, where law, regulation or FRF requires measurement or disclosure of certain item. E, where attention is focused on particular aspect of entity's business. D, key disclosures for a specific industry. I hope you are clear. Yes, sir. Come here. Now, auditors should see materiality and its relationship with audit risk. While planning audit, we have to see that we set materiality at that level that risk is reduced. See, auditors' assessment of materiality may be different at a time and evaluating process. See, materiality can be different while planning the audit and performing. Let's take an example. At the time of planning, you thought, okay, I will keep materiality this much. Why? We usually start audit not in March end. We start in Feb only, because in Feb we need to know ROMM of all areas. So what I will do, sales figure I want to take, sales 0.5 to 1%. I will take till February sale and estimate for 1 month based on maybe last year figure or this year trend, etc. 11 month this month, 12 month how much. Did I get one figure? Percentage of that is materiality. Now COVID came in March or some other thing came in March, sales figure changed drastically, then I will again calculate materiality. Or while doing audit, I found, oh, I thought there are no mistakes, but in company there are a lot of mistakes. So I need to set materiality at a lower level. So materiality can be different while planning the audit and performing the audit. I hope you are clear. Very, very important and last concept of SA 320 is performance materiality. First, I will speak definition. You will not understand. I will explain. You will understand. Amount set by auditor below materiality level so that aggregate of uncorrected and undetected misstatement don't exceed materiality as a whole. Come here. If we have it here, it will be very good. If we don't have, then what we have to do? Nothing we can do. We have to draw. Chalo, no problem. Come here. Okay. Now, let's assume this is low to high. This is one account low to high. I hope you understood. Now here 1 lakh is what? This is materiality. So above 1 lakh I will check everything. Below that I will not check. Okay. Now what they are saying? There could be mistakes less than materiality. But those are immaterial. Okay, those are immaterial individually, but when they combine, they could exceed materiality. Let's take an example. One mistake is of 75,000. Two mistakes are of 60,000. One mistake is of 50,000. Two mistakes are of 30,000. And one mistake is of 10,000. Now, if we do total of all this, okay, let me do total. Okay, 120 and 50 makes 170, 170 and 60, 230, 240, 240 plus 75 means way higher than 3 lakh. Okay, now what I will do, there came a brilliant concept. See, small mistake can exceed materiality. Performance materiality means I will do work on performance materiality and not materiality. Materiality is an awesome concept. Materiality is a good concept, but I never work on materiality, baby. Oh, baby, I work on performance. I do work on this materiality. I perform my work on performance materiality. It is 50 to 75% of materiality. Now you will ask me another question. Shall I take 50 or 75? If it's a risky account, if ROMM is high, see, performance materiality is account wise. This is in big four, not in your book. Okay, performance materiality is account wise. Account wise, different materiality. Okay, for every account. Now, if it's a risky account, risky, then I need to check more or less. More. So I will keep 50%. That is, it will be 50,000. For the accounts which are not risky, mistakes are less, I will keep 75%. That is 75,000. Simple. Okay. Now come here. Magic I will show you. Here what's materiality now? 50,000. 50% of 1 lakh 50,000. So above 50,000 all mistake I will check. Below I will not check. Now let me check here. If I check, these mistakes will be corrected. Okay. Now, this is performance materiality is amount set below materiality. So, aggregate of uncorrected and undetected misstatement don't exceed materiality. Now, see, 30,000 into 2 mistake is of 60,000 and one mistake left of 10,000. Answer will be 70,000. Let this mistake happen, it's okay. It's still not exceeding 1 lakh. Why? Because I did the work at performance materiality. Now you will tell, what if more mistakes are there? Okay, that is an assumption. Entire risk can never be zero. That is what is audit risk. Understood, sir. So what is performance materiality? Amount set below materiality. So aggregate of uncorrected and undetected misstatement don't exceed materiality level. Over. Tell me, if my materiality will change, will performance materiality change? Yes, because it's percentage of materiality. And my nature, timing and extent of audit procedure will also change. Now you will tell me why audit procedure will change. Of course, its performance materiality is changed. I need to do more procedure. Oh yeah, understood. English given. Materiality as a whole may need to be changed when I find more risk. Okay. If the auditor concludes lower materiality is required, then it will also revise. See what is written, performance materiality. And based on that, nature means which audit procedure, timing, when, and extent, how much. Nature, timing, and extent of audit procedure will also change. I hope you are clear. Yes, sir. Super clear. Go ahead. This wonderful essay done. Till now, 2 essay, 315. Identifying and assessing ROMM. Second, materiality in planning and performing audit. 320. We are going ahead. Okay. Internal control. What's the next topic? Internal control. Very nice topic. Okay. Internal control. What is internal control? Internal control is a process which is designed by management, TCWG, other personnel to provide reasonable assurance about care, compliance with laws and regulations, safeguarding of assets, reliability of financial reporting, effectiveness and efficiency of operation. See, internal control is basically good things in you. Okay, you will pray to the temple every day, you will study nicely, you will never tell lie. These are your internal controls. In company also, if controls are strong, control risk will be low. By the way, whatever we are doing in this chapter is only for one thing: control risk, control risk, control risk. What is control risk? IR into CR, ROMM. Okay, so if my controls, I need to understand what is control. If my controls are strong, control risk will be low. If controls are weak, control risk will be high. Okay. As per essay 315, Internal control is a process which is designed, implemented, maintained. First of all, control is designed, then it's implemented, then it's maintained. Internal control is a process which is designed, implemented, maintained. One more time, designed, implemented, maintained. Who will do this? Management, TCWG, and other personnel, to provide reasonable assurance about achievement of objective with regard to care. Let me take an example. Okay, internal control is a process, means you are the way you are, you will study nicely, you will never tell lie, okay, you'll respect your elders. It's a process which is designed by TCWG. Who is TCWG? Who are above management. See, the board of directors, the non-executive director who give direction to the management, who give overall financial reporting process. See, Ratan Tata, his board of directors, his other directors, non-executive directors who give direction to Tata company, who decide the vision, mission, goal. Okay, they are different from, see, management is, Tata has several company, Tata Steel, Tata Motor, TCS, all have different heads. These are management. But there are common board of directors or trustees who manage Tata Group. They are those charged with governance. They are those charged with governance. So internal control is responsibility of, tell me who? TCWG? Is it the responsibility of management or people? All. Tell me when your ethics will be good, when your sanskar will be good, okay, when your traits will be good, when your grandparents are with you, when your parents are with you, when you are also there. Okay, so internal control is a system which is designed by TCWG, those charged with governance, management, and other personnel. Okay, that give reasonable assurance. If internal controls are good, it will give me reasonable assurance about care. I will follow all the laws. Nothing will happen to my data, that is asset, safeguarding of asset. Reliability of financial reporting will be as per AS. My financial reporting, and effectiveness and efficiency of operation. What are internal control? In purchase, a superb procedure. Control, a excellent procedure. Sales, excellent procedure. For fixed asset purchase, excellent procedure. One more time. But it's a responsibility together. Okay. For example, you want to paddle a boat. Okay. You want to paddle a boat in Udaipur. Then everyone needs to paddle, only then boat will go ahead. If only husband will paddle but wife won't paddle, boat won't go. Okay, so internal, by this time, if you are still watching lecture, like is compulsory. Look at the hard work we are putting in, guys. World class lectures are happening. We don't want anything except your love. So nice comment would do. Like the video. Without subscribing, you don't have to go. Okay, look at the hard work. Okay. Okay. Internal control is a process which is designed, implemented, maintained by above to bottom, TCWG, management, and other personnel to give you reasonable assurance about achievement of objectives with regard to care. Okay, three people will ensure, those charged with governance, below them management and staff also. So we get reasonable assurance about care. What is care? Compliance with laws and regulation, safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. Learn nicely, small break, 5 seconds. Done? Okay. Internal control is a process which is designed, implemented, maintained by TCWG, management, and other personnel to give you reasonable assurance about achievement of objectives with regard to care, compliance with laws and regulation, safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. Come here. Now, what are objectives of control? Number one objective, transactions are done as per general or specific authorization. Okay, what's general? All the invoices should be signed by department head. If you are in purchase department, purchase head. If you are in sales department, maybe sales head. All the expenses will be signed by department head. Okay, general. Second, so specific authorization. All expense above 5 lakh will also be signed by CFO. Okay, so that's a control. Transactions are done as per general or specific authorization. Point number two, if internal controls are there, transactions are recorded under correct amount, correct account, correct head. See here, correct amount, correct account, correct period, transaction is recorded if controls are strong. Third, assets are safeguarded from unauthorized access, use, disposition. No one will use computer of others if strong password are there. Unauthorized access. Use, car is of company but used by director's wife. How dare? Okay, but controls are strong, no one can use. Disposition, you are selling a company's asset to another director's company wherein director has majority stake. at a discount. You are selling the main asset to another company where director has a higher stake. You are misusing the company's money. Assets are safeguarded from unauthorized access, use, disposition. Last point, recorded assets are compared with actual asset at regular interval and action is taken about differences. Means you will do physical verification at regular interval if control is strong. Recorded assets are compared with existing, means as per physical verification, and whatever is the action is taken about difference. Simple. Read nicely for 4 points. Very simple. What are 4 objectives of control? Transactions are done as per general or specific authorization. All transactions are recorded with correct amount, correct account, correct period. Assets are safeguarded from unauthorized access, use, or disposition. Recorded assets are compared with actual asset at regular interval. Action is taken about differences. Okay, learn nicely. Your time starts now. Break 10 seconds. Chalo, done. What are objectives of internal control? Transactions are done as per general or specific authorization. All transactions are recorded with correct amount, correct account, correct period. Okay. Third, assets are safeguarded from unauthorized access, use, disposition. Recorded assets are compared with actual asset at regular interval. Action is taken about differences. Come here now. Now we have to study 4 questions back to back. After that, one major part of chapter will get over. It's a lengthier chapter. Okay. After that, IT chapter was there earlier. That will start. It's part of this chapter only now. Okay. 4 things we have to study. Listen nicely. Nature and characteristics of control. Out of that, which control are relevant for audit? Whichever are relevant, I will understand nature and extent of understanding of those control and components of internal control. 4 parts. One more time. General nature and characteristic of control. Then find out which controls. All controls are not relevant for us. Which are relevant for auditor. I am only concerned with those relevant for auditor. Second, nature and extent of understanding the control relevant to audit. Third, fourth, components of internal control. We'll finish in 30-40 minutes entire this portion. Listen nicely. After that, very easy. Come here. Nature of internal control. Why do we need internal control? What's the purpose? Internal controls are designed, implemented, maintained to achieve objective with regard to care, compliance with laws and regulations. Same point, copy paste. Why do we need internal control? Compliance with laws and regulations, safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. Come here. What are limitations of internal control? Human judgment in decision making. See, internal controls are good, that approval will be there. But what if the expense is wrongly approved? Okay, example, you went to Domino's, 100 rupees bill came, you did 1000 rupees. Your boss approved it because you never do wrong, but one fine day you did and he approved also. Limitations in internal control. Okay, human judgment can be faulty. Sometimes wrong expense are approved thinking everything is perfect. There was a mistake but you couldn't find, only samples were correct but you couldn't find. Human judgment in decision making. Second, judgment by management. Many times management takes a decision, this much control we will implement, this much risk is immaterial, let it happen. Let's take an example. In a super mall, little bit of pilferage is happening. Pilferage means small theft. So the owner is thinking why to do control for this. They are taking little portion only, biscuit, etc. Let them take. But one day they can take a TV also. Okay. So management assumes nature and extent of risk. It assumes and control. But when risk becomes too much, that is what? Internal control limitation. Judgment by management became wrong. We assume this much theft will be there. But someday theft can be big also. Third, lack of understanding purpose of control. Whoever is exercising control, he doesn't know the real purpose of control. Example, we tell you keep on studying, keep on studying. CA is a course which will change your life and it will really change. But the day you understand the purpose of CA, that it is 40 years of freedom, 5 years you have to study and 50 long years of happiness is going to come. The day you understand, you don't need anyone, you will still pass. But you don't understand, you are like, studying is difficult. Everything in life which is extraordinary is difficult. Only thing better in life is to roam around and do nothing in life. Okay, always remember, all the things which give you money are difficult. All the things which are time pass are very easy. So you have to decide, okay, when you want to struggle. Whether you want to struggle right now or you want to struggle after 5 years, then whole life you have to find a job. But if you pass right now, life is awesome. So many times we don't understand purpose of control. Okay, then controls are not proper. Let's take an example. Okay, for example, there is a security guard who will check the bills. Okay, outside a mall, if you come, he will check every bill is proper, bill is proper. He doesn't understand the purpose why company is doing all this. One fine day, what will happen? Big theft will happen. Company will close down, his job will go. That time he will understand, had I checked the bills every time, today such situation won't be there. We don't understand purpose of control. Third, limitation in case of small entity. In case of small entity, there is no segregation of duty. Okay, there are not maker checker. What is segregation of duty? Work of one person is reviewed by another. But in limitations, in small entity, owner is only there. He will exercise everything. So that's a limitation. Fraud can happen. Owner will not be able to see everything nicely. And we cannot appoint more people also. Why? Because limited budget. Third, internal control can give you reasonable assurance. How much ever control you will implement, never ever 100% assurance you will get. In mall, so much security is there. Still COVID happened. COVID burst happened. Okay, in airport, so many things they check. Still flight explosion happens. Okay, flight blast happens. It does happen. Internal control can give you reasonable assurance. Collusion among people. Two or more people coming together and doing a fraud. You designed a brilliant system. Okay, there will be one person who will raise the quotation. Second one will approve the quotation. Third one will do journal entry. Fourth one will do payment. So all purchases are proper. Number one will invite quotation. Second one will finalize the quotation. Third one will do accounting entry. Fourth one will do payment. Now what if all these four come together? What they say, all will get 10%. If you approve this vendor, we will get 10%. But the quotation person says, I will approve that vendor which has cheapest quote. He's like, no problem. There is one vendor, my friend, he will only submit 5 quotes. You don't take quote from anyone. So he submits all 5 quotes. You will approve the lowest one. Okay, accounting person will pass entry. Payment will do payment. Collusion. All are doing fraud. Are you clear? And who is at loss? Company, the shareholder. Collusion. Control can be misused when 2 or more people come together and misuse the control. So now, what are limitations of small entity? Okay, sorry, limitations of internal control. Very simple. Judgment in LIC. What's the technique? Judgment in LIC. Human judgment in decision making, judgment by management. Human judgment in decision making, judgment by management. Human judgment in decision making, judgment by management. Clear till here? Okay, limitation in case of small entity. Limitation in case of small entity. Lack of understanding purpose of control. Lack of understanding purpose of control. One more time. Okay, judgment 2. Human judgment in decision making, judgment by management. Human judgment in decision making, judgment by management. Lack of understanding purpose of control. Limitation in case of small entity. Remember, 2 judgment, 2L. 2 judgment, 2L. One more time. Human judgment in decision making, judgment by management. Human judgment in decision making, judgment by management. Lack of understanding purpose of control. Limitation in case of small entity. Lack of understanding purpose of control. Limitation in case of small entity. Internal control can only give you reasonable assurance. Collusion among people. One last time. Human judgment in decision making, judgment by management. Okay. L is judgment in L. Lack of understanding purpose of control. Limitation in case of small entity 2L. Internal control can give you reasonable assurance. Collusion among people. Break 8 seconds. Done? Tell me, what are limitations of internal control? Okay, judgment in LIC, judgment, human judgment in decision making, judgment by management, lack of understanding purpose of control, limitation in case of small entity. Internal control can only give us reasonable assurance, collusion among people. Moving on. Control relevant to now. First question done. Okay, nature and purpose of control, nature and characteristic. Control relevant to audit. How to identify which control are relevant? See, all controls are not relevant. We have to identify those controls which are relevant for audit and not all control. How to identify? Factors which help in deciding which control are relevant for audit. Number one, size of the entity you have to look. If size is bigger, listed company, more control will be relevant. Unlisted, less. Nature of entity, how it is structured, ownership characteristics. If you have a lot of subsidiary company, if you are a small dummy company in Mauritius, okay, more relevant. We need to check you more because there is a high chance there will be fraud. Complexity of system, how many businesses you have. If you have more businesses, more control relevant. Diversity and complexity, legal and regulatory requirements. Are you an alcohol company? Are you a gaming company? Then lot of laws are there. We need to check all. More control will be relevant for audit. I hope, see, it's a general question. You cannot learn. Okay. Materiality we will see. Significance. How many accounts are significant? If more accounts are significant, more control relevant. Whether control can prevent or detect and correct material misstatement. If control can correct misstatement, it's relevant. If control cannot correct, not relevant. If you don't remember anything, do you remember nice review we had learned? Understanding of entity, nice nature of entity, industry, regulatory, other external factor, entity selection of accounting policy, entity strategy, measurement and review of financial performance. Same 2-3 points are there. See how to identify control relevant to audit. 3-4 things: size of entity, nature of entity, ownership structure, way it is financed, materiality, ROMM we can find out. Okay, whether control can prevent or detect and correct material misstatement. Okay, simple. One last time I will read. Don't learn. Size of entity, nature and complexity, diversity, legal framework. Okay, components of internal control we are yet to read. Materiality, significance, whether control can prevent or detect and correct material misstatement. Now come here. This is only for understanding, nothing to learn. For 5 minutes. Control over completeness and accuracy of information. See, sales, okay, sales is complete and accurate. Okay, are those controls relevant to ensure that sales is complete and accurate? Yes. If auditor makes use of this data in applying further audit procedure, then control is relevant. One more time. Is the sales complete and accurate? Is it relevant? Read. It is relevant if auditor makes use of this data in applying further audit procedure. MCQ can come. Second, control relating to operations and compliance objective. Are law followed? Is the operations proper? Is it relevant? Yes. If auditor intends to make use of this data in further audit procedure, then relevant. Same. It is relevant if auditor uses this in applying further audit procedure. Come here. Control over completeness and accuracy of information, relevant or not? Relevant if auditor makes use of this in further procedure. Control relating to operations and compliance, relevant or not? Relevant if auditor makes use in applying further audit procedure. Come here. Internal control over safeguarding of asset. Okay, internal control over safeguarding. See, assets are proper or not. Financial reporting part is relevant, but asset is operating properly, that is not relevant. Is machine working nicely? Not that much relevant. But the machine value is relevant. See here. Auditor's consideration of such control is relevant to financial reporting. Operations auditor is not concerned. Safeguarding control relating to operations are not relevant. Next, control relating to objectives that are not relevant to audit. Okay, production is happening properly, sales target are achieved or not, marketing is proper or not, okay, HR is proper. These are not relevant. Control relating to objectives is not relevant to audit. Okay, control relating to those objectives that are not relevant, those controls are also not relevant. Statute will tell auditor to report on certain control. For example, Caro, all points are relevant. Why? Because statute has told you have to report on Caro. So those controls will be relevant. If statute tells auditor to report, auditor's review of internal control will be broader and we need to check those controls. Now let's do super summary of control relevant to audit. Come here. This so you understood. Okay. How to identify control? Size of entity, nature of entity, legal regulatory framework, complexity, ROMM, materiality. You understood. Come here. Very faster. Control over completeness and accuracy of information. Is the information complete and accurate? Relevant, not relevant? Relevant if auditor makes use of this data in further audit procedure. Control over operations and compliance. Relevant if auditor uses this in applying further audit procedure. Safeguarding of asset. Financial reporting part of asset is relevant. What's the value? But is asset operating effectively? Not relevant. Control relating to objectives that are not relevant. Many things are irrelevant. Production, finance, marketing, HR. Those controls are not relevant. Why? Because it's not relevant for audit. Second, statute will tell. Then it's relevant. Why? Because auditor has to check all the things which are required by statute. Example, Caro. Now, very simple. Last. Whichever control are relevant, I will obtain their understanding. Is the control strong enough to prevent or detect and correct material misstatement? Number one, first I need to see the design of control. Then I will see it's implementing properly or not. First, if control is only not strong, how to check whether it's implementing properly? Whether I ask you, hey, are you signing audit report? You are like, I am not CA only. So first I need to check whether the control is proper. Only then I can see it's operating effectively. If you are not CA only, how the hell will you sign audit report? See, design involves considering whether control can prevent or detect and correct material misstatement. If control is strong, then then only I will see is it operating effectively. Means control exists and we are using it. Okay, implementation is checked later if the control is good. If you're not studying only, I ask you, will you pass? First you have to study. Okay, design of control is strong, only then I will see whether it's implemented properly or not. Your dad will ask, did you pass? You're like, I did not give exam only. Control, the design is proper, then only I will see implementation is proper or not. Example, dad, why are you not flying the plane? I am not a pilot. So first we have to see is dad pilot, only then he can fly the plane. I hope you are clear. Come here. All three parts are done. Nature and characteristic of control. Control relevant to audit. Understand the control relevant to audit. In understand, first see the design of control. Is control strong enough to prevent or detect and correct material misstatement? And then see it is implemented properly or not. If control is only not strong, how the hell will it be implemented? Okay. Yes, sir. Last point, components of internal control. In this first 3 points are important, then entire chapter is easy. Okay, this is very hard, but we have to do it. Yeah. Okay. Come to components of internal control. Here. How many components are there, sir, of internal control? Fine. Control environment, risk assessment, information system, control activity, monitoring of control. Very simple. See, I will explain you very briefly. By the way, many people are asking me, why are we studying components of internal control? Can you explain me that first of all? Why we are studying? To see whether internal controls are strong or not. Many times, whether you are strong or not, your family will decide. If your family is strong, very supportive, all are qualified, super strong, beta, you have to study. You are bound to study, okay? But your family is weak, you might also fail. So components of internal control are there to see control is strong or not. All this grand masti we are doing only for control risk. Control risk is high, medium, low. Can we start? Yes. Number one, control environment. How's the overall environment? Second, what are the risky areas? Third, how is the system? These days we don't need to see risky areas. System is most important because everything is automated. So see the information system. Fourth, see what controls company has designed. Control activity. Okay. Do they have any monitoring process for control? That if controls are weak, they are immediately corrected. Is there a monitoring process? After this, I will write my conclusion. Are controls strong or not? One last time, control environment, risk assessment, control information system, control activity, monitoring of control. One last time, control environment, risk assessment, information system, control activity, monitoring of control. One last time, control environment. Then we'll identify what are the risky areas. Third, information system. Then fourth, control activity, monitoring of control. We will see all, be rest assured. Come here. Control environment. What is the meaning of control environment? Control environment sets the tone of organization. It will influence the other elements of control. What's environment? Basic environment of control. How is the overall environment of company? How good are people? Okay, how good is TCWG? How good is management? If they are good, controls are bound to be good. Children are nothing but reflection of parents. What are your family value? What are your parents? What are your upbringing? What is your neighbor? What is your society will decide whether your control will be good or not. Okay, so control environment. What are elements of control environment? Number one, participation by TCWG. Those charged with governance. Who are these people? Are these IIM qualified, IIT qualified? Okay, are these top most educated people? Then you will ensure they are independent from the management. Is TCWG also together? Management is doing the fraud. You tell to those charged with governance. Tata G in Tata Motors, this fraud is there. Ignore all this, so keeps happening. Try to understand in business, it is necessary. You understood? Oh my God, controls are third class. TCWG, only the name is those charged with governance. They are actually not doing anything. They are together with management. Both are doing fraud together. So we have to see whether TCWG is good. What's their experience? What's their stature? Are these qualified people? How they act on information they receive? Clear? Second, HR policies and procedure. What are the policies for recruitment, orientation, training, updation? Are proper policies there? Okay, or there are no policies? Our family people are only working. Okay, so we have to see policies. More strong policies, more strong control. Policies regarding recruitment, orientation, training, counseling, compensation, remedial, communication and enforcement of integrity and ethical values. Is there integrity and ethical values like honesty, diversity? Are there in the company? If they are there, controls are bound to be strong. If there are no ethical values, control will be weak. Will influence the administration and monitoring of control. Commitment to competence. Management consideration of how competence level for particular job is translated into skill and knowledge. Do you see the competence level? Or family people are promoted. Nepotism is there. Who is becoming the next manager? Is he the owner's son only, or is he the capable person? Okay, how competence level are seen for particular jobs, or do we tend to promote family only? If we tend to promote family, control will be weak. Organization structure, framework within which activities are planned, monitored, directed. How is the structure? Too much big structure is also bad. Too short structure is also bad. Okay, there should be adequate structure. How many levels are there? Framework within which activities are planned, monitored, and controlled. What's the management philosophy and operating style? Okay, how management takes the risk, what's their attitude towards financial reporting, what's their approach towards taking business risk. You tell management this sales should come in next year. Okay, why have you recognized in this year? Sir, shut up. First of all, you are just an auditor. Okay, you are not able to do anything in life. That is why you did CA course. Okay, don't tell us sales is much more difficult. When do we recognize it's our headache? Understand, controls are maha third class. He doesn't understand only what is control in life. Okay, so he is different person. He is taking too much risk, which is very bad for controls. Okay, management approach towards risk, approach towards financial reporting, accounting function. Last, assignment of authority and responsibility. How authority and responsibility are given? You have to see how reporting relationships are established. How authority and response, is it given based on merit, or is it given based on just generations? Okay, how authority and responsibility are given. Clear? Okay, let's learn nicely. What are elements of control environment? 1, 2, 3, 4. Get on the dance floor. What are elements of control environment? PC, comma, PC, comma, PC, comma, PC, comma. Participation by TCWG, HR policies and practices. Double P learn. Participation by TCWG, HR policies and practices. Participation by TCWG, HR policies and practices. One more time. Participation by TCWG, HR policies and practices. Clear? Learn nicely. Clear? Participation by TCWG, HR policies and practices. Double C. Communication and enforcement of integrity and ethical value. Commitment to competence. PC, PC. So this is double P and one C. Participation by TCWG, HR policies and practices. Communication and enforcement of integrity and ethical values. Clear? Okay, participation by TCWG, HR policies and practices, communication and enforcement of integrity and ethical value. Next, commitment to competence. Commitment, PC, comma, comma, C. Commitment to competence. Organization structure, management's philosophy and operating style. Last, assignment of authority and responsibility. Comma, comma, commitment to competence, organization structure, management's philosophy and operating style, assignment of authority and responsibility. Nicely, 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 very nicely learned. Okay. One more time. Read first of all this much. Nice question. Elements of control environment definitely can come. Done? One, two, three, start. Participation by TCWG, HR policies and practices. Commitment. Okay, participation by TCWG, HR policies and practices. Communication and enforcement of integrity and ethical value. Commitment to competence. Organization structure. Organization structure. Management philosophy and operating style. Assignment of authority and responsibility. One last time shall we speak? Okay, what are elements of control environment? PC, participation by TCWG, HR policies and practices. One more C, commitment to competence, communication and enforcement of integrity and ethical value. O, organization structure, management philosophy and operating style, assignment of authority and responsibility. Learn nicely. One last time. Small break, 10 seconds. Comma. Learn comma now. Done? One, two, three, start. Chalo. What are elements of control environment? PC, comma. What is P? Come on, everyone. Participation by TCWG, HR policies and practices. Participation by TCWG, HR policies and practices. C. Communication and enforcement of integrity and ethical value. Commitment to competence. Organization structure. Management's philosophy and operating style. Assignment of authority and responsibility. Clear? Yes. Come here. Second, after identifying control environment, risk assessment. Okay, I will do risk assessment. Identify what are the risky areas. Tell me which are risky areas where probability and impact of mistake is high. Let me show you one diagram. You'll understand in 1 second. See here. Mistake, probability is high here and impact is high. Probability is high, impact is high. So I am not concerned with low level risk, medium. I am concerned with critical risk. How to identify risk assessment? Identify those areas which are very risky. Top 5 to 7 areas. Because if I check these areas also, my risk will drastically reduce. Critical risk. Okay? Read. Very simple, in 2 minutes over. Identify the business risk relevant to financial reporting. Very simple. First, identify the risk relevant to financial reporting. Estimate the probability of risk. Estimate the impact of the risk. Very simple. Estimate significance means impact. Estimate the likelihood of occurrence means probability. And third, decide about actions taken to reduce the risk. Decide about actions taken to reduce the risk. Decide about actions taken to reduce the risk. Very, very simple. Okay, one more time. Risk assessment. Auditor shall obtain risk assessment. Identify the business risk relevant to financial reporting. Second, estimate the significance of the risk. Assess the likelihood of occurrence and decide about actions taken to reduce the risk. One last time, entities risk assessment. 4 points are there. Identify the risk relevant to financial reporting. Estimate the probability of the risk. Estimate the impact of the risk. Deciding about the actions taken to reduce the risk. Very simple. First point. Listen nicely. Last time. Identify the business risk relevant to financial reporting. What all risks are there relevant to financial reporting? Second, estimate the probability of their occurrence. Estimate the significance of their occurrence. Okay. Significance means how much important they are. Impact. And third, decide about actions taken to reduce the risk. Over. Learn nicely. Small break, 5 seconds. Okay. Identify the business risk relevant to financial reporting. Assess the probability of the risk. Assess the impact of the risk. Deciding about actions taken to reduce the risk. Come here. Next, I will understand information system including related business process relevant for financial reporting. Okay. Third, after doing risk assessment, understand systems. Okay. Which system is used relevant for financial reporting? What is your finance system? Are you using Tally? Are you using ERP? Are you using Zoho Books? Okay. Which system? Information system including relevant business process relevant to financial reporting. Which system you are using for financial reporting? Come here. Auditors shall obtain understanding of information system including related business process relevant for financial reporting. We have to understand which system we are using for financial reporting. Very easy. Come here. How to understand? Auditors shall obtain understanding of information system including related business process. But which system? Relevant to financial reporting. Number one, class of transactions that are significant to the financial statement. Number one, identify which transactions are important in the financial statement. Material accounts. Now you will tell me which are material accounts, which are above materiality. Class of transactions that are significant. Those accounts which have higher probability and impact, which are above materiality. Number one, identify class of transactions that are significant to financial statement. Which accounts are significant? Above materiality. Number one, class of transactions that are significant to the financial statement. Procedure by which such transactions are initiated, recorded, processed, corrected, and transferred to general ledger. See, these accounts are important. Sale, purchase. Second, understand the process by which such transactions are initiated, recorded, processed, corrected, and transferred to general ledger. Third, all the related information and supporting documents used to record the transaction. Sales transactions are recorded based on invoice. All the related records and supporting information used to record this transaction. So simple. Next, control surrounding journal entry. Okay, what are the controls in journal entry? Who will pass journal entry? Okay, authorized people will only pass. Is it approved by someone? So simple. Next, okay, financial reporting process used to prepare financial statement. What's the closing process? Source document, journal, ledger, trial balance, adjustment, adjusted trial balance. How are accounts closed? Final accounts. What's the financial reporting process? And last, how system capture event and condition that are significant to financial statement. What is event? Notes. How notes are prepared. Okay, how system capture event, related party transactions. Okay, a subsequent event. How system will capture event and transaction that are significant, means those things which are recorded in notes. Clear? So entire system you have to understand. If the system is good, control risk will be low. System is bad, control risk will be high. Super understood. Okay, start. 1 2 3 start. Information system including the relevant business process relevant for financial reporting. In that, how many points are there? 5. Number one, class of transactions that are significant to the financial statement. Second, process by which such transactions are initiated, recorded, processed, corrected, transferred to general ledger. Related records supporting information used to prepare. See, very slowly we will learn. Number one, very simple. Don't try to learn or as you cannot learn. First of all, chance is very less of this question coming because it's complicated. Inside complication, it's too complicated. But still, if it comes for us, it will be easy. Okay. Number one, class of transaction that are significant to financial statement. Which are significant? Which are above materiality. Okay. Class of transactions that are significant to financial statement. 2. Procedure by which such transactions are initiated, recorded, processed, corrected, transferred to general ledger. How are these transactions initiated, processed, corrected, and transferred to general ledger? Okay. Third, related records and supporting information used to record transactions. What are related records and supporting information? 3 points done. Number one, class of transactions that are significant to financial statement. Process by which such transactions are initiated, recorded, processed, corrected, transferred to general ledger. Related records and supporting information used to record this transaction. Fourth, control surrounding journal entry. Control surrounding journal entry. 4 points are done. Learn nicely. Class of transaction significant. How transactions recorded. Related records used to related records and supporting information. Journal entry. Break of 10 seconds. One, 2, 3, start. Can we start? Yes. Number one, class of transactions that are significant to the financial statement. Process by which such transactions are initiated, recorded, processed, corrected, transferred to general ledger. Related records and supporting information used to record this transaction. Control surrounding journal entry. Very simple. Entire process. Financial reporting process used to prepare financial statement. And last, how system captures event and condition that are significant to the financial statement. I hope you are clear. Super duper clear. Clear. One last time, shall we speak? 1, 2, 3, start. Number one, class of transactions that are significant to financial statement. Process by which these transactions are initiated, recorded, processed, corrected, transferred to general ledger. Okay. All the related record and supporting information used to record this transaction. Control surrounding journal entry. Financial reporting process used to prepare financial statement. How system capture event and condition that are significant to the financial statement. Moving on. Next, 3 are done. Control activity. What do you mean by the word control activity? What controls are we designing? Do we need to check all control? No, those relevant to audit. Those relevant to audit. Let me read nicely. Auditor shall obtain understanding of control activity relevant to audit. Control activity are policies and procedure to ensure risks are reduced. Which control are relevant for auditor? That relate to significant risk. Whichever are significant risk, only those control are relevant, or those that are relevant in the judgment of auditor, which you find. See, I will not understand all control. Those control which are relevant for audit, or those which are relevant in the judgment of auditor. Simple. Now, following points help in deciding which are significant risk. Why should I know significant risk? Because I will check only those control which are relevant to significant risk. Okay. So, which are significant risk? Fraud is a significant risk. So, any control related to that, I have to check. Okay. Second, related party, always significant risk. All controls related to related party, we will check. Transactions outside the normal course of business. You have sold a company, you have acquired a company. All controls relevant to that is normal. Second, complex transactions, sale and lease back is there, impairment loss is there. Degree of subjectivity in measuring information. Okay, subjectivity, judgment is involved, impairment loss. Okay, fair value of asset, percentage completion method of sale. Okay, whether risk is related to significant accounting development or change in regulatory requirement, law has changed, it's relevant. Simple. See, I am concerned with which control that relate to significant risk. Always remember in life, if nothing you remember, 4 are significant risk. 4 are always significant risk. Fraud, related party, non-routine, judgmental. Fraud, related party, non-routine, judgmental. See here. Following are always significant risk. Number one, fraud. So those controls will be relevant. Second, related party, always significant. Non-routine transaction. What's non-routine? Scrap sale in huge quantity. Okay. Second, you sold a company. Fourth, you acquired a company. Okay. Judgmental, non-routine and judgmental. Okay. Outside the normal course of business. Means which usually doesn't happen. And last is non-routine and last is judgmental. What do you mean by judgmental matters? Impairment loss is a judgmental matter. Okay, fair value of asset is a judgmental matter. Provision for bad and doubtful debt, judgmental matter. Sales recognized on percentage completion method in construction contract. How much contract is that? Judgmental matter. So this 4 will always be significant risk. Which are always significant risk? Okay, fraud, related party, non-routine, judgmental. Fraud, related party, non-routine, judgmental. Fraud, related party, non-routine, judgmental. Okay. Clear? Fraud, non-routine, fraud, related party, non-routine. So definitely we need to check only those control which relate to significant risk. Which are significant risk? 4 always. Fraud, related party, non-routine, judgmental. Come here. Now I need to monitor. Okay, whether entity has strong monitoring system that controls are relevant over time. Why do we need monitoring? To seek performance of control over time. Helps in assessing the control and taking remedial action. Clear? Okay, so all 5 components of internal control are over. Okay, only first 3 can come. Control environment, risk assessment, information system, control activity, and monitoring of control. Why do I see these components? To see controls are strong or not strong. I hope you understood. Yes. Moving on. Now, most important, once we do this, the next chapter will almost start very easy, very easy. Okay. Next is evaluation of internal control by auditor. See, there are 3 stages in control. If you want, you can take small break, 5 seconds. Start. What are 3 stages? 1, 2, 3. What are 3 stages of internal control? Understand, evaluate, test. One more time. Understand, evaluate, test. One last time. Understand, evaluate, test. Understand the control. Number 2, evaluate the control. Number 3, test the control. First, in walkthrough. Walkthrough means I will do one transaction, understand the process, risk related to the process. What are the controls to mitigate the risk? I understood the controls. Now I will evaluate whether those controls are strong or not. After evaluate, I will go ahead and test the controls. That is the last part we will study. Okay, understand, evaluate, test. Now there are 4 methods of evaluating the control. One more time. First I understand the control. Okay, then I will evaluate and see whether it's strong or not. Okay, if it is strong, I will do test of control. Now there are how many methods to evaluate internal control? 4. Come here. Formulate audit program after understanding internal control. You know what is audit program, right? Series of procedure to be done. But if my controls are strong, I will do less procedure. If my control is weak, I will do more procedure. There are 4 methods to evaluate internal control. Very simple. Narrative record. What is narrative record? It's in a paragraph form. It's a complete description of system as found in operation. Actual testing and work is necessary before you write a narrative record. In a paragraph form, you will write, this is how I feel sales controller. This is how I feel sales system is. But after checking only, you can write. It's a good method, not a bad method, okay? But usually used for smaller operations. What is the another problem here? If person will change, maybe control will change, but it doesn't document all that. So very simple. First method, paragraph form. It is a complete and exhaustive system as found in operation. Actual testing and operation are necessary before such record is developed. Good in cases where there is no formal system. And last, it's more suitable for small business. I will write in paragraph form all. Good for small business. Actual testing is necessary before I write my evaluation of internal control. But what if people will change? Control may change. Come to second flow chart. It's a graphical representation rather than understanding paragraph. In graphical form, I will explain entire system of sale, purchase. It gives bird's eye view, not possible in any method. In one page, see, narrative record can be 10, 12 pages. In this, in one page, I will understand entire system. Okay. It is also necessary to for auditor to understand features of the system. Okay, entire system I will get in one page. So it's little good. Checklist and questionnaire. What's the difference? Checklist is filled by member of auditing staff. Okay, he will go to the client based on the on job requirement. He will prepare checklist. In purchase, I will check this. In sale, I will check this. Answer will be in yes, no, not applicable. If controls are good, yes. Not good, no, and not applicable wherever. So it's basically filled by member of auditing staff. It is customized as per the requirement of the client. Okay, your answers are in yes, no, not applicable. Wherever there is no, we will discuss with our principal and then decide whether controls are strong or weak. What is ICQ? Internal Control Questionnaire. 2 words. It's most widely used as per textbook. Most widely used is ICQ. What is ICQ? It's a detailed question. In sales, 100 question. In purchase, 100 question. In inventory, 100 question. In HR, 100 question. I will give it to whom? It might be more also. I will give it to them. It will not be filled by auditor staff. It will be filled by the client. Then client will give it to concerned department heads or department people who will fill it. And then we will return it back to the auditor. Auditor will see if there are any questions. We can meet those department people and solve it. Here also answer will be in yes, no, not applicable. Wherever there is no, I will discuss. Yes means controls are good. See, series of questions. It's most widely used for collecting information about internal control. It is given to client. Client will get it fill from executives and employees. Understood? All inconsistencies are discussed with the staff. Okay. Auditor then prepare a report of deficiencies and recommendation of improvement. Clear? Auditor will then prepare a report. See, everything is no, you will discuss. What's the difference between checklist and ICQ if you ask me? Checklist is filled by member of auditing staff. ICQ is filled by them only, employees. It's filled by whom? Employees only. Okay, so the employees themselves will fill it, okay, and then give it to auditor. Auditor can then discuss and finally decide controls are good or bad. Four methods of evaluating it, and it's much more detailed. ICQ is much more detailed. There can be irrelevant question also. What are four methods for evaluating internal control? Narrative record flow chart checklist question है. Narrative record flow chart checklist question है. Tell me number one. What do you mean by the word narrative record? It's in a paragraph form. Okay. If you want a diagrammatical presentation, flow chart is the best. Okay. Member of auditing staff checklist. Okay. Most widely used, much more detailed. They will fill question. Internal control question. Tell me, what are the benefits of evaluating internal control? Why do I evaluate the internal control? Tell me what's the benefit of evaluating internal control? Okay, very, very simple. Okay, with the help of evaluating, I will know adequate internal control system is in use and operating as planned. If my controls are good, internal control system is good. Okay, second, effective internal audit department is there. If control is good, internal audit department is good, means they are giving regular suggestions. Okay, third, by evaluating I will know areas where control is weak and where it is excessive. Okay, if the control is weak, I will do more procedure. If weak, I will do less. If strong, I will do less procedure. Areas where control is weak and excessive, extent and depth of examination he needs to carry out in different area. Tell me, my depth will be more where controls are weak, my depth will be less where controls are strong. Okay, what should be the audit technique and procedure in the given circumstance? Remember, there is only two procedure: rely on control, not rely. If controls are good, I will rely, substantive will be less. If controls are weak, I will not rely, substantive will be more. I hope you understood. Yes, sir. Okay, extent and depth of examination he needs to carry out in different areas. These 3 points are very good. Areas where control is weak, where it is excessive, extent and depth of examination he needs to carry out in different areas. What should be the audit technique and procedure in given circumstance? All 3 points are related. One more time: area where control is weak, where it is excessive. Based on that extent and depth of examination he needs to carry out in different area, what should be the audit technique and procedure in the given circumstance? Last 3: whether control can safeguard the asset, whether controls can stop the asset, whether controls can safeguard asset. If it cannot, whether errors and frauds are likely to be located in the business. If controls are not strong, error, fraud can happen. Whether worthwhile, if error, fraud happen, whether suggestions can be given to improve control system, then controls are good, otherwise they are bad. What are the benefits of evaluation of internal control? Tell me, what are the benefits? Huge list. Very simple. First 2 point, then 3 point, then next 3. Super easy. If 5 you remember, then also it is good. Benefits of evaluation of internal control: whether adequate internal control system is in use and operating as planned. Second, okay, whether effective internal audit department is there or not. Learn 2 points. Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is there or not. Learn nicely. Clear? Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is there or not. Third, areas where control is weak and where it is excessive. Areas where control is weak and where it is excessive. Extent and depth of examination he needs to carry out in different areas. Okay. What should be the audit technique and procedure in the given circumstance? Learn 3 points. Very easy. Areas where control is weak and where it is extensive. Where it is weak, extent and depth of examination he needs to carry out in different area. What should be the audit technique and procedure in the given circumstance? What's the technique? Rely on control or not rely? Learn nicely. Clear? Now last 3 points. Whether control can safeguard the asset. If it cannot safeguard, whether error and fraud are likely to occur in business. If they occur, whether worthwhile suggestion can be given to improve control system. Over. whether control can safeguard the asset. Second, whether if they cannot safeguard, if errors and frauds are likely to occur in business, if they occur, whether worthwhile suggestion can be given to improve control system. Clear? Okay, one last time. Let's learn it. Let's learn it. What are benefits of evaluation of internal control? Whether adequate internal control system is in use and operating as planned. Areas where control is weak and where it is extensive. Okay, sorry. Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is there. Areas where control is weak, where it is extensive. Extent and depth of examination he needs to carry out in different areas. What should be the audit technique and procedure in the given circumstance? Last, whether control can safeguard the asset if it cannot safeguard, whether errors and frauds are likely to occur in the business. Last, whether worthwhile suggestion can be given to improve the control system. Hope you are clear. Last time, if you want, you can learn. First 2 points are the easy, sir. Okay, last. Small break, 5 seconds, 10 seconds. Okay, start. Okay, 1, 2, 3, start. Whether effective internal control system is in use and operating as planned, whether effective internal audit department is there, areas where control is strong, where it is weak, extent and depth of examination he needs to carry out in different area, what should be the audit technique and procedure in the given circumstance, whether control can safeguard the asset, whether error and fraud are likely to happen in business. Last, whether suggestion can be given to improve control system. If you remember 5 points also, more than enough. Now, entire automated environment we will do. See, till now, what was there? Very superb, very amazing, very nice, understood. Okay, why are we doing all this? To understand control risk. But these days, there are companies like, let me take 5 companies. Amazon is there, Flipkart is there, okay, Make My Trip is there, Go Ibibo is there, Zomato is there, Uber is there, Blinkit is there. These companies are not manual. These are fully automated. So I need to understand their controls also. But to understand their control, I need to understand their system. Okay, you have to understand entire environment is changing. Gone are those days you will do tick 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 tick. Entire banking system is automated, insurance is automated, e-commerce is automated. We need to go inside the system and check. So whatever we are going to learn now is basically done by those persons who have knowledge of IT plus audit. Very few people in India have knowledge of IT and audit. We need to understand automated environment so I can understand risk in that environment, control in that environment. Why automated? Because entire world is automated today. Look at banks, look at e-commerce. Understood, sir. Bank I automated, e-commerce automated, Amazon automated, Uber automated. So to understand the controls and risk, we need to understand automated environment. Yes, that is our next topic. Okay, let's start. After that, we will understand automated environment. What are the risks in the environment? What are the controls? What if controls are weak? Okay, what if controls are strong? How to report? Okay, only then we can do audit in nicer way. Gone are manual days. Okay, sir. So we need to understand the automated environment. Companies like Ola, Uber, Zomato, Swiggy, Blinkit, okay, all these are following automated environment. Look at the banks today. Everything is automated. So if I want to understand them, I don't need to understand normal. I need to go inside the system, understand the system. And who will do this? Those who are champion in IT plus also have the knowledge of audit. So it's 2-in-1 combo. Let's start. What is automated environment? It is basically a business environment where code, processes, operation, accounting, decision are carried out by computer system, also known as IT system. Let's take example. Automated environment is a business environment where code, what is P? Processes. HR is a process, sales is a process, purchase is a process, recruitment is a process, processes. Operation means what? Inside process, small steps are operation, like invoice preparation is there, okay, delivery is one, packaging is third. So process is operation. Accounting, is of course done by, let me take example also. Sales is automated process. You go to MACD, automatic sales will be done. How you can enter what, enter the detail which burger you want, automatic machine will take cash. These days vending machines are available, they will take cash and order directly, it will come. You just have to give a coupon or you just have to give a receipt and automatically food will come. So processes, what are operations, packaging, deliveries are done by robot these days. Okay, so it is basically automated environment is an environment where processes, operation, accounting, of course tally is that, processes, operation, accounting, decision. What's a decision? Amazon delivery, within how many days it will come, whether to give goods on credit or not. Okay, if loan is sanctioned to this customer, how much amount should be sanctioned, Uber will come in how much time, we don't need to call, on the spot it will take, it will come in 4 minutes and it comes also. It's a decision. So automated environment is an environment where processes, operation, accounting, decision are carried out by computer system, also called as IT system. Very briefly learn, 2 seconds. It basically refers to a business environment where code, processes, operation, accounting, decision is carried out by computer system, also known as IT system. Come here. What are features of an automated environment? What are features of automated environment? Number one, ability to process large volume of transaction. How are you able to do such large volume of transaction? Due to faster business operations. Okay, in a bank, take the example of bank, take the example of IRCTC. Okay, millions of tickets are booked, millions of tickets are booked. How? Due to faster business operation. Number one, ability to process large volume of transaction. How? Due to faster, enables faster business operation. Third, accuracy in data processing and computation. Huge accuracy is there. How accuracy is achieved? Integration between business operation. Let me take an example. As soon as you withdraw money, automatic balance is deducted in ATM. You deposit money, automatic it is added because everything is linked. Let's take another example. As soon as you pass entry of purchase, automatic inventory will include. As soon as you pass entry of sale, automatic inventory will reduce. What is this called? Integration. Accuracy in data processing and computation. How does this accuracy come? Through integration between business operation. Absolutely clear. Learn the first 4 points. What are features of an automated environment? Ability to process large volume of transaction. How are we able to process? Okay, faster business operation. Accuracy in data processing and computation. How does accuracy come? Through integration between business operation. Learn only 4 points. Rest 3 are very easy. I will easily make you learn the rest 4. Okay. What are features of automated environment? Ability to process large volume of transaction. How are you able to process? Enable faster business operation. Due to faster business operation. Learn the first 2 points. One more time. Ability to process large volume of transaction. Enable faster business operation. Accuracy in data processing and computation. How is the accuracy coming? Through integration between business operation. Are you clear? Okay. Learn nicely. One last time. Ability to process large volume of transaction. How are you able to do? Through faster, enable faster business operation. Accuracy in data processing and computation. How is accuracy coming? Through integration between business operation. Next, better security and control. How such security is there? Because less prone to human error. You take example of ATM. There is a pin, there is a card. Okay, so better security because there is no human error. Everything is automated these days. Okay, so better security and control, less prone to human error. IRCTC example. It gives latest information. When you booked, that was coming a waiting of 20. Okay, the seat number 20 waiting. Now when you go to the center or maybe one day before or on the spot when train is just supposed to depart, you will check, you will get a reservation. Why? Because it's connected with cloud. Internet connectivity is there. So number one, provides latest information. How? Through connectivity and networking capability. From this one question will surely come. These are very, very easy questions. You just need to learn now. Okay, start. What are features of a business environment? 1, 2, 3, start. Ability to process large volume of transaction. How are you able to do? Enables faster business operation. Accuracy in data processing and computation. How is such accuracy coming? Integration between business operation. Better security and control. Less prone to human error. Provides latest information, connectivity and networking capability. Clear? One last time. 1, 2, 3, start. What are features of an automated environment? Okay, only the first point remember. Ability to process large volume of transaction. How? Through faster business operation. Accuracy in data processing and computation. How is the accuracy coming? Okay, how is the accuracy coming? Integration between business operation. Better security and control. Less prone to human error. Provides latest information, connectivity and networking capability. Learn very nicely. Your time starts now. 5 seconds. Two points remember. Done. 1, 2, 3, start. Ability to process large volume of transaction. How are you able to process? Through faster business operation. Accuracy in data processing and computation. Integration between business operation. Okay. Next, better security and control. Why? Due to less prone to human error. Provides latest information, connectivity and networking capability. Come here now. Understanding of IT environment asked multiple times. We have to understand how IT environment is organized, IT dependency, IT activities. Okay, if we understand IT environment, we can know the risk. If risks are more, I will not rely on a control. Okay, very simple. Understand the IT environment. So understanding IT environment means how IT department is organized, IT activity, IT dependency, IT risk and control. Come here. Number one, in IT, whenever I understand IT environment, I need to see information system being used. Which system we are using? Are we using Tally, ERP, Zoho Books, QuickBooks? Okay, information system being used. Second, their purpose. Is the system used for financial part or non-financial? I am only concerned with financial, not with production, marketing, HR. Their purpose. Third, location of the system. Is it a global system or local? Means we have 30 branches. All branches have different system, or there is one. If there is one, it's easy. I need to understand only one system. Second, architecture. Is it client server? What is client server? YouTube is one client. We all are server. Is it an app based system? Is it client server? Sir. Then architecture is done. Yeah. Version. What's the version? Sometimes if we have tested the last version, we don't need to test again. Okay. If the version has changed, of course we need to check. Okay. Interface within the system. Is my system linked with someone? Let's take example. When you upload photo in Insta, automatic it uploads in Facebook. Both are linked. When you make payment in Uber, okay, automatic Uber payment is done through Paytm. Both are linked. So does our system have interface with other system? Then we need to check that other system also. Interface within the system. Is it an in-house software or ready-made? If in-house is there, I need to check everything. If ready-made is there, I must have already checked. Or I can get certificate from the person who made that, whether the controls of that are proper or not. So in-house versus package. Interface within the system. Outsourced activity. Have I outsourced my IT outside? Then I need to see whether outsourced activities are proper. And key person, I need to understand who is the CIO, Chief Information Officer, Chief Information Security Officer. All this is documented in a standard form, standard template. Okay, let me speak one last time. Understanding the IT environment. 9 points. It's very simple. Definitely it can come. Number one, information system being used. Their purpose, location of the IT system, architecture, version. Just remember 6 points. Okay. Information system being used. Their purpose, location of the IT system, architecture, version, interface within the system. So simple. One more time. Information system being used. What is their purpose? Location of the IT system, architecture, version. Only remember 5 points. Over. Information system being used. Their purpose, location, version, architecture. Clear till here? Now double I. Interface within the system, in-house versus package. Interface within the system, in-house versus package. Outsourced activity, key person. Outsourced activity, key person. Superb. Over. One last time we shall speak. Okay. 1, 2, 3, start. Okay, understanding IT environment. I will see how IT department is organized, IT activity, IT dependency, information system being used, their purpose, location, architecture, version, one more time, information system being used, their purpose, location of the IT system, version, architecture, double I, interface within the system, in-house versus package, location of the IT, sorry, that is the in-house versus package, outsourced activity, key person. Last time read 10 seconds. Done? 1, 2, 3, start. Let's hear it last time. Okay, I need to understand IT environment. In that, what I will understand? Number one, information system being used, their purpose, location of the IT system, architecture, version, okay, double I, interface within the system, in-house versus package, outsourced activity, key person. Now let's go ahead. Okay. Now after understanding IT environment, we need to understand the risk. We need to understand the risk. Okay. And auditor will understand what are the risks in IT. Okay. 1, 2, 3, start. I understood IT environment. What are the risks? If you want to understand risk, one's very simple. Phone you have used in life. Sir, I am watching lecture in phone only. 3 steps are there. Input, process, output. In a phone, there are how many steps? 3. This is input. I will enter my password. If it's correct, it will do process and then output will happen. I can see what is there. Very simple. Okay. So number one, these 3 points are only the 3 risks and everything will be over. Input, process, output. Number one, what can happen? Unauthorized access to data, unauthorized access to system and program. You can see unauthorized data of the system, or you can access the system only unauthorized. See, inside system data is there. If you access make my trip server, that is unauthorized access to the data, sorry, app. Then if you see the data inside that, unauthorized access to data. So 2 unauthorized access can be there. Unauthorized access to data, unauthorized changes to system and program. You are changing the Tally app only. Okay, Tally application. Inside Tally data, if you are seeing unauthorized access to data, unauthorized changes to system and program, excessive access or privileged access, super user. See, many times we have an admin who will give access to all. Okay, admin will decide what right will be given to A person, B person, C person, D person. But what if their admin only misuse? Let's take parallel example. In a hotel, okay, there is master key. With the help of master key, I can open all the rooms. But what if the person who has master key only does the theft? That is the point. So 3 points of access. Unauthorized, I will access data. Unauthorized changes to system and program. Excessive access or privileged access. Admin is misusing. Super user. Super user. Fourth. Now process will come. Incorrect processing of data or processing incorrect data or both. What is incorrect processing? Okay. 2 plus 3 should be 5. Answer came 6. Incorrect processing, formula error. Okay. Or processing incorrect data. You had to write 2 plus 3. You wrote 2 plus 2. Data is only wrong. Answer will come wrong only. No. Clear. Incorrect processing of data. Some formula error is there. Incorrect data processing. Data is only wrong. Of course, answer will be wrong. Both are separate. Incorrect processing of data means processing is wrong, or processing incorrect data. Data is only wrong. Okay, then the answer has to be wrong. So incorrect processing of data or processing incorrect data or both. Direct data changes, loss of data. Direct data changes, loss of data. Direct, you are changing the data, or data is only lost. Direct data changes from back end, you are doing, okay, loss of data. Failure to make changes to system and program. You are not able to update the system. With changing time, system should be updated. Lack of adequate segregation of duty. Lack of adequate segregation of duty. What is the meaning of this? Work of one person should be reviewed by another. Work of one, but there is no maker checker, so that is also a risk. I hope you understood. Okay, let's learn very nicely. See, till 6 points it's very easy. Only 2 you need to remember. What are the risks by using the IT system? What risk can come when we use automated environment? Very simple. Unauthorized access to data, unauthorized changes to system or program, excessive access or privileged access, super user. Okay, now incorrect processing of data or processing incorrect data or both. Direct data changes, loss of data. Direct data changes, loss of data. Failure to make changes to system or program, and segregation of duty. Lack of segregation of duty. Lack of adequate segregation of duty. Segregation of duty means work of one is checked by another. That is also not there. Learn nicely. Super easy according to me. Last time, unauthorized access to data, unauthorized changes to system or program, excessive access or privileged access, super user, incorrect processing of data or processing incorrect data or both, direct data changes, loss of data, failure to make necessary changes to system and program, lack of adequate segregation of duty. Learn. Small break, 10 seconds. Done. 1, 2, 3, start. Unauthorized access to data, unauthorized changes to system or program, excessive access or privileged access in bracket super user, incorrect processing of data or processing incorrect data or both. Okay, next, loss of data, failure to make necessary changes to system and program, lack of adequate segregation of duty. Very simple. Now tell me, so many risks are there, can I rely on control? No, I cannot rely on any control. I need to check everything in detail. What's the impact of risk? If we can't rely on automated control, we cannot rely, because there are so many risks. We cannot rely on IT dependent control also. What is IT dependent? These are basically manual control but uses some IT. See, IT dependent means control are manual but dependent on IT. Example, you do calling based on debtors report coming from system. Debtors outstanding report comes from system and you do calling. Now understand, if system is only wrong, debtors report will also be wrong, calling also be wrong. Okay, calling will also be wrong. So always understand, when there are so many risks, I cannot rely on automated control, I cannot rely on IT dependent control. I need to check everything in detail. Second, tell me, substantive audit will be more or less? Of course more. I cannot rely on data given by system, everything needs to be checked in detail. And then I will report. Report we will of course read later. Communicate with those charged with governance and issue modified report. What is modified? Qualified, disclaimer, adverse. What to communicate, that we will see multiple number of times in different chapters also. Clear? Come here. There are basically three types of control. How many control are there? Three. Briefly I will explain. General control, application control, IT dependent control. One more time. General control, application control, IT dependent control. General control, application control, IT dependent control. What is general control? It remains same for all app. Be it any app in the world, it's Make My Trip, it's Clear Trip, it Go Ibibo. For any app in the world, general control will remain the same. See, these are policies and procedures that relate to many apps. It maintains the integrity and security of data. There are four general control. Number one, access security. Access security means, tell me, who can gain access to system? Only authorized user. Any company, general control are there. General access. Tell me, in any company, access to system is given just like that, or there are control? There are control. These are general control. Okay. Access is authenticated to meet financial reporting objective. Now, application system acquisition, development, maintenance. Whether you acquire the system or develop and maintain. See, many times I will acquire ready-made system or develop and maintain. Control should be proper so we can meet financial reporting objectives. All systems should be proper. Not one company. All company will buy new system or develop and maintain, but control should be superb to ensure systems are developed, configured and maintained to meet financial reporting objectives. Program change, whenever you do any changes, it should be authorized, it should meet our objective. No unauthorized change should be done. To meet that new system, continue to meet the objective. Data center, to ensure everything is stored in data center, to ensure production system are designed to meet financial reporting objectives. See, ultimately what we want, financial reporting. So what are general control? Same for all. Access security, tell me, be it one app or any app, Make My Trip, Paytm, Go Ibibo, access security is in all. So number one, how to remember in 1 second? First access, then what I will do? Application system, either acquire or develop and maintain. Application system, acquisition, development and maintenance. Acquisition, development and maintenance. Now, what will happen there? Okay, program change, I will bring changes. Whatever changes I bring, it should be authorized. It should be authorized. Program change. And last, data center and network operation. Data center and network operation. These controls are general control because they apply to all apps. Be it Make My Trip, be it Clear Trip, be it Go Ibibo. Any app in the world, this control will remain same. How many control? 4. Only MCQ can come. Access security. Application system acquisition, development, maintenance. What I will do with system? Program change, and everything is stored in data center. Very simple. Last time, access security, application system acquisition, development, maintenance. Okay, then what I will do? Program change, data center and network operation. Learn nicely. Small break, 5 seconds. Done? Okay. Access security, application system acquisition, development, maintenance, program change, data center and network operation. Now come to next, application control. These are both application and manual control. Application control are those control which change from app to app. Okay. Different for Make My Trip, different from Paytm, different for Go IBO, different for different company. Okay. These are built into the app to see everything is proper or not. Okay. Example, in the app we have what? Few example. Okay, mandatory fields are there. If you don't enter your roll number, if you don't enter your phone number, if you don't enter your address, hall ticket will not come. Mandatory field. Reasonableness check. Many gaming websites are there. Above 18 only allowed. Reasonable. So if your age is below 18, it will not accept. Okay. So these are, every app has different control. This change from app to app. General control remains same for all apps. Last, IT dependent control. These are basically manual control but use IT. I already took example. Okay, calling done based on system report. Debtors calling based on system report. Manual control calling but dependent on system report. Okay, so that is IT dependent control. Basically manual control but uses some form of IT. Now always remember, okay, application and IT dependent control will be effective when general control are effective. These both are children. Children will be good when parents are good. So general control is parents. Okay, these remain same. Every company has to follow general control. Application control and IT dependent control keep on changing from app to app. They will be effective when dash are effective. Tell me what? General control. Clear? So if general control are effective, application and IT dependent are also effective. Moving on. Now, there are several methods to test the control. If I want to test a control, let's name a control. Discount will be given by store manager. It's a control. How to check? Number one, inquiry I will do. I will ask any person. Okay, whenever we want to give discount in Big Bazaar, who will give? They will say store manager, store. Very easy. Inquiry is very, okay, a very efficient method because it takes very less time. You ask someone who will give discount, store manager, over. Very efficient method but not effective. Why? We will not get true evidence. How they will lie? Okay, they will never lie to auditor. No, discount is not given by store manager. Many times if he is absent, given by other person also. No, they will not lie. So which is the most efficient method? Means less time consuming, inquiry, but least effective. It will not give us the best evidence. If you want best evidence, it's reperformance. Reperformance is the most effective method but least efficient. What is reperformance? Auditor's independent execution of procedure that were performed as part of entity's procedure. Means I will do the same control again which entity has done. Example, depreciation rationalization. They are saying depreciation is 42 crore. What I will do? What I will do? What I will do? Depreciation is 42 crore. What I will do? Take 1 asset, 2 asset, 3 asset, 4 asset, 5 asset, 6 asset, 7 asset, 8 asset. Make a list and take the rate of depreciation. If it is coming 42 crore, reperformance. Auditor's independent execution of procedure that was a part of entity procedure. I will get, if the answer is matching, I will get the best ever satisfaction in this world. So which is the best method? Tell me. Okay, most efficient method. Okay, most effective method is reperformance but least efficient because it takes lot of time. Very simple. So tell me, inquiry is most efficient, very less time consuming but least effective. Reperformance, very effective method. If you are doing, comfort will be very high but least efficient. Why? Because it takes a lot of time. Okay, observation is also a method. Looking at, see, store manager is giving discount or not, you silently observe. Inspection is checking documents. Okay, checking. So they are saying, which is the best method? Tell me. There are 4 methods to test control. REO, reperformance, inquiry, inspection, observation. These methods we will study tomorrow in detail. What are the methods to test control? REO, reperformance, inquiry, inspection, observation. Reperformance, inquiry, inspection, observation. Reperformance, inquiry, inspection, observation. quick MCQ. Which is the most effective method? Reperformance. But most efficient method? Inquiry. Which is the best method? Is auditor's judgment. Who we are to tell auditor? Auditor judgment. But they are saying, okay, which method to use? Auditor judgment. However, inquiry in combination with inspection. Okay, you do inquiry and check documents. That's most effective and efficient evidence. Okay. Some more methods are, if in your book more methods are there, they have deleted everything. Only 3 points are kept here. Some more methods for testing are only 3 points now. Obtain understanding of how automated transaction is done by doing walkthrough of transaction. Okay, using combination of method like inquiry, inspection, observation. Do walkthrough of one transaction. What is walkthrough? From starting to end. Check one transaction in detail. Okay, I told you that is walkthrough. Okay, by using combination of method like inquiry, inspection, observation. Okay, obtain understanding of how automated transaction is done by doing walkthrough of transaction using combination of method like inquiry, inspection, observation. 2. Observe how user does transaction under different scenario. When discount is given, how transaction is done. When it is not given, how it is done. Last, inspect the configuration in an app. In every app, see the codes. How are the codes? Okay, coding is proper or not. So some more methods are 3 points. Obtain understanding of how automated transaction is done by following combination of method like inquiry, inspection, observation. Okay, observe how user does transaction under different scenario. And last, inspect the configuration in the app. Inspect the configuration in the app. Learn nicely. Your time starts now. Very easy. If you cannot learn also, okay, very simple. Start. Okay, some more methods are obtain understanding of how automated transaction is done by using combination of method like inquiry, inspection, observation. Observe how user does transaction under different scenario. Inspect the codes in the app. Configuration is codes. Okay, come here now. Data analytics, almost the last topic. After that we have one more topic. Okay, and we are done. Data analytics for audit. Okay, see, these days, various tools and techniques are being used to analyze the data. They say data is the new oxygen of 21st century, and who knows it better than you? Sometimes you discuss, okay, today I want to buy a shoe. In 1 second, the ad comes, Puma, why don't you buy? Nike, buy. Puma, buy. Adidas, buy. And you're like, oh my God, how the hell did they know that I want to buy a shoes? Okay, many times you are just thinking, after the trip we will go to Goa, and suddenly ads come, make my trip, etc. These days your data is used to such extent you and I can never imagine. You see our one lecture, 100 recommendation will come. What this also, what this also, what this also. They know you are CA student in YouTube. Okay, everything, maybe more than your parents. YouTube knows you better today. Okay, so there are several tools and techniques to tap large volume of data. Even auditor use this tool and technique. Tools and technique which auditor use in analysis is called data analytics for audit or computer assisted audit tool. Even auditors are using tools and techniques to do audit in a better way. These are known as CAT, computer assisted audit tool, or okay, CAT, computer assisted audit tool. It is used in testing electronic record. There are specialized tools like IDEA and ACL. You know what's IDEA? IDEA is a software. What's ACL? Audit Command Language. One more time, Audit Command Language. So when auditor uses this tool and technique, it is called as what? Data analytics for audit. Data analytics for audit. Tools and technique which auditor uses is known as CAT, Computer Assisted Audit Tool. Computer Assisted Audit Technique. Okay. It's used to test. We use several tools like IDEA and ACL. IDEA is one tool. Audit Command Language is another tool. How does it help auditor? Okay, it helps in 7 points. Very simple. Now, when auditor uses these tools and techniques, it helps in doing analysis or audit in a better way. Number 1, check completeness of data for TOC and substantive. You want to see your data is complete or not. When you check test of control or substantive, what it will do? Okay. As soon as you give the data to IDEA and ACL, you tell them, you give data, there are 10,000 voucher. They will do total of 10,000 voucher. Total of sale is 690 crore. But in the PNL, you have written 700 crore. It will tell the sample is only wrong. You have not given complete sample only. How will I do audit? So number one, it will check completeness of data. How? It will do total of data and compare with financial statement. So check completeness of data for TOC and substantive. Out of which these tools like idea, audit, command language, select audit samples. Okay, they will also help in selecting the samples because sampling is done based on software. Third, recomputation of balances. What is recomputation? Reconstruction of trial balance from the transaction data. This is the data. From there we can construct a trial balance. So single entry, you know, no. You give them some balance, they'll give you trial balance. Reconstruction of trial balance. Okay. Reperformance of mathematical calculation, depreciation, interest. Okay. You just have to give them list of assets. It will automatically calculate depreciation and interest. Then you can see is it matching or not. Okay. Next, analysis of journal entry. It will do which entries are passed after 10 p.m., which entries are passed at night, which entries are passed by other than normal person, okay, which entries are little fishy, which entries are passed by CFO. Analysis of journal entry, out of which you can find out fraud investigation, and evaluating impact of control deficiency. What's control deficiency? When a control cannot prevent or detect and correct material misstatement. Okay, if the control is not strong enough to stop the mistake, that's control deficiency. So it will evaluate the impact of control deficiency. Very simple, in 1 minute over. Tell me, today auditor uses the tools and technique is known as data analytics for audit. Okay, the auditor uses the tool like idea and ACL for what purpose? Very simple. Remember first 4 points. Check completeness of data for TOC and substantive. From the same data, select audit sample. Double R, reconstruction of balances, that is reconstruction of trial balance from the transaction data. Reperformance of mathematical calculation, depreciation, interest. Learn nicely. 4 points. Then check completeness of data for TOC and substantive. Out of the same data, selection of audit sample. Reconstruction of balances. Reconstruction of trial balance from transaction data. Reperformance of mathematical calculation, depreciation, interest. Last 3 points. Analysis of journal entry. Out of those journal entries are passed after 10 p.m., passed other than normal computer, passed by CFO, suspicious entry, we can know fraud investigation. And last, evaluating impact of control deficiency. Evaluating impact of control deficiency. Last time we will speak. Okay, tell me, why are these tools used? To check completeness of data for TOC and substantive. Out of same data, selection of audit sample, reperformance of mathematical calculation like depreciation, interest, reconstruction of balance, reconstruction of trial balance from transaction data, analysis of journal entry. Out of the same entry, fraud investigation, evaluating impact of control deficiency. Now I will report the findings. Always remember, if there is a normal, see, deficiency means what? When control cannot prevent or detect and correct material misstatement. Normal deficiency, significant. What significant deficiency? If probability and impact is very high. See, if the chance of mistake is very high, normal deficiency will be reported to management. But whenever there is significant deficiency, what is significant deficiency? It will come later also. But I am telling you, if the probability and impact is high, due to this weakness in control, the loss will be, probability is also high, amount is also high. It's a significant deficiency. It will be reported to both management and TCWG in writing. In writing. Normal deficiency, see here. At the conclusion of the audit, why did I do all such things? To find out deficiency. Normal deficiency will be reported through MCQ will come, internal control memo, management letter. But significant deficiency in writing. In writing. What is deficiency? If control cannot prevent or detect and correct material misstatement. With this, we are done with this chapter also. This was earlier a separate chapter. Last part is pending. But before that last part, I think this was also pending. This left side is pending. Okay, come here. We found, okay, we'll finish this and then come to the last part, which is of 10 minutes. Okay, ROMM we found out. Okay, ROMM is at two level: financial statement level and assertion. What is ROMM? Okay, IR into CR. It is at two level: overall financial statement level, assertion level. What is overall financial statement level? Affect many, account many, assertion. Affect almost all financial statement. Three examples: going concern not valid, but financial statements are valued at cost. Whenever going concern is not valid, financial statement have to be shown at NRV. But if you are showing at cost, everything is wrong. Accounting standards are not followed. Every balance is wrong. Are you clear? Okay, financial statements are not prepared as per Schedule 3. Everything is wrong. Fraud done by management. Everything is wrong. So there are two ROMM exist at two level. Overall financial statement level affect many account, many assertion. What is a assertion level risk? For particular class of transaction, account balance disclosure means it affects only particular account and particular assertion. Example: class of transaction. In sales, there is a risk of cutoff. Assertion means one assertion, one thing. Okay, assert means management is saying we have followed this many things. Okay, so it's affecting one assertion only. In sales, only cutoff risk is there. Cutoff means what? By mistake, April sales will come in March. Why? To inflate the sale. Okay, so it's assertion level. Account balance. Jewelry business, okay, inventory valuation, account balance. Debtors, there is a risk in valuation. Related party, there is a risk in completeness, disclosures, right? Why do I need to identify account level risk? Okay, because I have to work more on those accounts. My further procedure will be more in that particular account, not all accounts. Read. These risks are there to determine nature, timing, and extent of audit procedure, to obtain sufficient and appropriate evidence and reduce the audit risk. So tell me, I am concerned with overall financial statement risk or assertion risk? Both. Next, auditor assesses control risk as to rely on control or not rely. See, there are two strategies in this world: rely on control, not rely. Once you rely on control, okay, then if the control is not good, what you will do? Check alternative control. Check alternative control. Let's take an example, okay. You are relying on control, but biometric data is not available. No problem. Check manual data and ask, sir, why today manual data? Sir, light was not there, so biometric is not available of 14th April. Okay, no problem. When you are relying on control, if the control is not good, check alternative control. Is manual attendance is there? Okay. But manual is also not there. Okay, manual alternate control not there. Then check compensating control. Compensating control. What is compensating? Example, you have a doubt in sales, okay, but documents are not available. Confirm with party whether he has received. If he has received, still controls are good. Still controls are good. One last time, when you check control, check the control. If that is not good, check alternative control. If that is not good, check compensating control. Confirm with the party. If still it is good, then we will still follow rely on control. We will still follow rely on control. But if it is not good, we will change to not rely. And once we change to not rely on control, substantive will be huge. Substantive will be huge, which we will discuss right now. I hope you understood. Okay, but sometimes there's only one control. If that is not working, then directly not rely. Directly not rely. I hope you are clear. How to identify risk of material misstatement? I already told you. Again, it's a repetition, but let's do it again. Okay, how to identify ROMM? Obtain understanding of entity and its environment. Okay, so understand entity and its environment, that is IR. Okay, second, assess the risk, whether it's a financial statement risk or assertion risk. It affects whole financial statement or particular account. Third, relate the risk to what can go wrong and controls which we want to test. Okay, for every risk there is a what can go wrong. What can go wrong in this risk? What can go wrong? Let me take an example. See here. What can go wrong? If accuracy risk is there, revenue can be recorded at incorrect price. Then what is the control? You will ask them, sir, accuracy. What if revenue is recorded at wrong price? What control you have? They will say logistic manager will review the invoice before revenue is recognized. There is a person who will check. This is the control. Okay. So for every risk, relate the risk to what can go wrong, taking into account relevant controls which we want to test. And last, consider the likelihood and impact of misstatement. What is likelihood, probability and impact, and see whether it can become material misstatement. Understood? Yes, sir. Unlimited times. 1, 2, 3, start. How to identify and assess ROMM? Obtain, first, very simple. Obtain understanding of entity and its environment, including relevant control. Very simple. Obtain understanding of entity and its environment, including relevant control. Second, assess whether it is a financial statement risk or assertion risk. Whether it is a financial statement risk or assertion risk. Third, relate the risk to what can go wrong. From this risk, what can go wrong, taking into account relevant controls which we want to test. And fourth, consider probability and impact of misstatement and see whether it can become material misstatement. I hope you understood. Read nicely. One last time. Obtain understanding of entity and its environment, including relevant control. Second, see whether it is a financial statement risk or assertion risk. Relate the risk to what can go wrong and relevant controls which we want to test. Last, consider probability and impact of misstatement and see whether it can become material misstatement. Understood? Yes, sir. Read nicely. Done? 1, 2, 3. How to identify ROMM? Obtain understanding of entity and its environment, including relevant control. Second, see it is a financial statement risk or assertion risk. Third, relate the risk to what can go wrong at the assertion level. Third, consider probability and impact of misstatement and see whether it can become material misstatement. Last point. We are almost done. Not almost, done only. Last question is there. Come here. Audit procedures, very, very important. Come here, come here, come here. I will take 5 minutes, okay, because it's very important. If you want, you can take small break, 2 minutes, and then see if you want. Okay, start. Come here. There are two audit procedures, 315, 330, 315, 330. What is 315? Identifying and assessing risk of material misstatement through understanding of entity and its environment and related control. When you understand entity, what is that called? IR. Okay, you do a walkthrough and understand control. Okay, it's CR. So IR into CR is ROMM. That's 315. 315. Now come to here. After RAP, risk assessment procedure, we do FAP, further audit procedure. It has two children, TOC, substantive. TOC, substantive. In substantive, there are further two, TOD and TOD analytical. TOD analytical. What is TOD? Test of details and analytical. Listen very nicely here. Okay, one last time. Further audit procedure, TOC, substantive. TOC, substantive. In substantive, TOD analytical. TOD analytical. I will take 4 or 5 situations 2-3 times so you understand nice. Here, after identifying ROMM, we feel controls are good or bad. If at all I feel control is good, then I will test the control. I will test the control. No use testing a control which is bad. If you feel controls is bad, in understanding only you feel it is bad, no use testing the control. Let's take an example. No use putting water in a bucket which is whole. See, I will put water here, it is wasted, no? See, a lot of water is there. This water is wasted. Are you able to understand? But I can put water here. See the proper. Why? This is there, I can drink also. Listen, no use putting water in a bucket which is whole. Means no use testing those controls which are bad. If here I feel controls are bad, then TOC will not happen. First of all, understand we are discussing TOC. When you understood control, why are you doing test of control? To see controls are really effective throughout the year. See, at one point of time controls are good. I understood it, but I need to see whether they are effective throughout the year. So for that I do test of control. But I will do test of control. In that I will take 25 samples for whole year to see controls are effective for full year or not. See, what is the intention of doing test of control? To see whether controls are strong enough, controls are operating effectively throughout the year or not. But when will I do TOC? When I feel controls are good. If I feel controls are bad, no use testing those control. I will directly do substantive. In substantive, I will do test of details. In test of detail, what do I do? That I will teach you tomorrow. But basically, we check assertions. We check assertions. Means one sample I will check. When I feel controls are bad, okay, no use of doing test of control because I know it's bad. Why to test? Okay, I will directly do TOD, test of details, in substantive TOD. But listen nicely. If I feel purchase control are excellent, I will do test of control 25 sample throughout the year. Why throughout the year? Is it effective only for 1 month or throughout the year? If it's effective, if after test of control I feel controls are still effective, then I will do less test of detail. Only analysis I will do, means ratios I will check and conclude. Analytical is ratio, in detail it will come tomorrow. No need to do test of details. Little you can do, cut off you can check, do only analytical, audit over. But if I feel controls are good, but in test of control I feel it is bad, while testing the control for 12 months, taking 25 sample, I feel it is bad, then I will still do TOD. Okay. One last time, let's take two situation and end this. In FAP, we have TOC, substantive. Two, TOD, analytical. TOD, analytical. Listen very nicely. If I feel sales control are good, I will test the control. Why? To see are they good throughout the year. If they are good, no need to do test of details. Little you can do. Just do analytical, ratios check, audit over. Because anyways, controls are superb. But in purchase, I feel controls are bad, then directly TOD will happen. In payroll or inventory, I feel controls are good. I will test the control. During testing of control, I feel they are not good. Then I have to do more test of detail. More test of detail. I hope you understood. Yes. So one last time. Wrap fab. In fab, TOC, substantive. TOC, test of control, substantive. In substantive, TOD, analytical. TOD, analytical. I hope you are clear. But now we are just ending, guys. Over. See, audit procedures are there too. Wrap FAP. In FAP 2, TOC and substantive. Substantive is 2, TOD, analytical. What is test of controls? Okay. What is test of controls? Test of control is there to check effectiveness of control throughout the year. Here we have three questions. Nature, timing, extent of TOC. Nature means which procedures to design for test of control. Okay. Inquiry, inspection, observation, nature. Timing, okay, nature, timing, and timing means when to test control. Shall we test throughout the year or during particular time? Extent means how much detailed checking. Shall we test more, shall we do more TOC or less? Depends. Okay. Number one, nature of TOC. Perform audit procedure in combination with inquiry to see operating effectiveness of control. In nature means which procedure to design for TOC. We see three things: how controls were applied, by whom they were applied, consistency with which they were applied. One more time. How controls were applied, by whom they were applied, consistency with which they were applied. Number one, how they were applied. Were they applied in emergency? Okay, or there is a proper system. If there is a proper system, then no tension. If they are applied in emergency, means they can be lapsed. Okay. Second, by whom they were applied. Where did they apply? By senior officer. Consistency means are they applied throughout the year, or during some time you follow control, sometime you don't follow. So three things in nature of TOC, which procedures to design. Three things. Okay, how they were applied, by whom they were applied, consistency with which they were applied. When you do nature of TOC, how they were applied, by whom they were applied, consistency with which they were applied. How they were applied, by whom they were applied, consistency with which they were applied. How they were applied, by whom they were applied, consistency with which they were applied. Read. If your control is dependent on other control, test the other control also. Example, debtor calling is based on report system. You need to check system report also. Come here. Extent of TOC means shall you check more test of control or less? You have to check more or less. Depends on 4 points. Depends on 4 points. Frequency of performance of control. Is the control operating throughout the year? Okay, how is the frequency? Is in a year, is the control working 1 lakh times, maybe sales? Then you need to test more. Length of time auditor is relying. Is the control valid only for 2 months? Example, you are doing purchase only 2 months in a year. then I need to check only 2 months. But if it's a payroll control, payroll means what? Attendance control. Attendance is every day. Then I need to check more. Frequency means how many times is the control performed. Second, length of time auditor is relying. What's the length of time? Expected rate of deviation. If you feel there are too much deviations, deviation means control is not followed, then test mode. Then test mode. Relevance and reliability of audit evidence to be obtained from control. Okay, relevance and reliability. Is the control relevant and reliable? If you feel it's more relevant and more reliable, means you can rely on the control, then less checking. Relevance and reliability of audit evidence to be obtained regarding operating effectiveness of control. 4 point. Extent of TOC. 4. Frequency, length of time, rate of deviation, relevance and reliability. One last time. Frequency, length of time, rate of deviation, relevance and reliability. Okay. Extent of TOC, frequency of performance in a year. Okay. Length of time auditor is relying. Expected rate of deviation, relevance and reliability of audit evidence to be obtained from the control. Very simple. Read nicely. Tell me, extent of TOC, how much to check? Depends on 4 factors. Frequency, length of time, rate of deviation, relevance and reliability. Frequency, length of time, rate of deviation, relevance and reliability. Okay. Timing. Auditor shall test control at particular time or throughout the year. That depends. If it's an attendance control, you need to check for all 12 months. If purchase is done only twice a year, then check only 2 times in a year this control. Okay. So you have to see auditor shall test control at particular time or throughout the year. For example, physical verification of stock. It's only done in year end. So test at year end only those control. But attendance or sale or purchase is done throughout the year. You need to check throughout the year. Okay. So nature, timing, extent. Nature, how they were applied, by whom they were applied, consistency with which they were applied. Timing, particular point of time throughout the period. Extent, frequency, length of time, rate of deviation, relevance and reliability. Over. Last question, guys. Genuinely last. If last year controls were good, can we say this year also it is good, or we need to check again? Can we use the audit evidence of last year regarding operating effectiveness of control? Let's take parallel example. You passed in foundation. Will you pass in inter also? Okay, same question. Using audit evidence in previous audit regarding operating effectiveness of control depends on 6 points. Effectiveness of control and its application by entity. Is it still effective? Then I can rely. If it's not, I cannot rely. Effectiveness of other elements of control. Are the other elements same? Okay. Means in your family everything is same. Then you will still pass. Second, effectiveness of general control. Is general control effective? Then our control will also be effective. 3 points. Effectiveness of control and its application by entity. See other elements of control. Effectiveness of other elements of control. Effectiveness of general IT control. Learn nicely. Clear? Tell me, can we use audit evidence of last year regarding operating effectiveness of control? Depends on 3 points. Effectiveness of control and its application by entity. Effectiveness of other elements of control. Effectiveness of general IT control. Clear? Fourth, risk arising from characteristics of control, manual or automated. If it's a manual control, you might not rely, you need to test. But if it's automated, I can rely. Okay. Risk of material misstatement and extent of reliance on control. If it's ROMM, then don't rely. If in that area risk of material misstatement is more, don't rely. Last, risk arising from lack of change in control due to changing circumstance. Your business has changed, but control has not changed. Then don't rely. Example, earlier you had an offline business. Now it's online business. You cannot rely because business has changed. Risk of lack of change in control due to changing circumstances. Okay. Last 3 points. Risk arising from characteristics of control, manual or automated. Risk of material misstatement. Risk arising due to lack of change in control due to changing circumstances. Learn nicely. Done? Okay. Can we use the audit evidence of last year or not? Last year controls were effective. Can we say this year effective? Depends on 6 points. Effectiveness of control and its application by entity. Effectiveness of other elements of control. Effectiveness of general IT control. Risk arising from characteristics of control, manual or automated. Risk of material misstatement. Risk of lack of change in control due to changing circumstances. Learn nicely, super nicely learn. Done? One, two, three. Last year controls were good. Can we rely this year? Effectiveness of control and its application by entity. Effectiveness of other elements of control. Effectiveness of general IT control. Risk arising from characteristics of control, manual or automated. Risk of material misstatement. Okay, risk arising due to lack of change in control due to changing circumstances. Circumstances changed, but control did not change. Then don't rely. If your business has changed but control has not changed, don't rely. Test this year also. Okay, read once, it will be very easy. Hope it's clear, guys. If you have watched till here, okay, I hope you can see the hard work. I so hope you can see how complicated this chapter is. We have tried our best to make it simplified. Watch it 2 times, 3 times, 4 times. I guess it should be very, very simple. Do like the video. I think this video you have to like so it reaches maximum number of people. Okay, and please subscribe the channel if you are new. We will keep on working hard. Your subscription, your like give us the unlimited love and positivity. Thank you so much. See you until next time. Bye bye. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Continuing with Mega Marathon Revision series of Audit. Till now, we have done 3 chapters. Chapter number 1, Nature, Objective, Scope of Audit. Chapter number 2, Audit Strategy, Planning, Program. Chapter number 3, Identify the risky areas. Now, it's the time to gather evidence. Okay, while doing the audit we have to gather evidence, and audit evidence series is essay 500. Okay, lot of essays are there. It's a very lengthy chapter but very easy chapter as well. Okay, and we are going to make it more easy, more super, more fun for you. Be rest assured, power pack lecture is here. Okay, let's start right away. For those of you, these are only English lectures. If you are looking for Hindi lectures, they are also available in our YouTube channel. Sir, from where are you doing the revision? It's done from our magic book. Those of you who don't know, this book covers entire syllabus in roughly 80 to 85 pages. That is why it is called a magic book. These lectures are in no way substitute to regular or fast track. After that, you have to, of course, do these lectures. Then you will get lot of confidence. Can we start? Yes, sir, right away. Let's start. Audit evidence. Wonderful. What is the standard of audit evidence? Those of you who don't know, SA 500. SA 500 deals with what? Audit evidence. See, auditing is a brief intro is there. Auditing is a logical process. Auditor is called upon to assess actuality of situation and give true and fair view. Any opinion given on reckless and negligent examination may expose auditor to legal action and loss of standing and loss of prestige. What do you mean by all this? See, auditing is a logical process. You have to check the all evidence, every evidence, and then give an opinion. If by mistake you don't check the things and just certify that it's an unqualified report or clean report, case can be there on you of negligence. Okay, ICI can do inquiry on you and you have to face a lot of case, plus reputation of the institute will go down. Okay, so brief, it is the time pass. Okay, what is audit evidence? All information arrived by auditor in arriving at a conclusion based on which his report is there. See, whatever report you are giving, unqualified, qualified, disclaimer, adverse, on what basis you gave report, that is evidence. What is audit evidence? All information collected by auditor in arriving at conclusion based on which his report is there. One last time, what is audit evidence? evidence. It's all information collected by auditor in arriving at conclusion on which his report is based. Audit evidence include two things. Number one, information contained in accounting records. Number two, all information that supports the accounting record and supports auditor's logic for true and fair presentation of financial statement. Let me explain even more. What is audit evidence? Information contained in accounting records. What are accounting records? Contract, voucher, invoice. Okay, so all these are accounting records. Second, all information that support this record. What will support this record? Okay, written representations are there, management meetings are there, minutes of the management meeting, okay, minutes of board of directors meeting, okay, confirmation from debtor, creditor. All these are other evidence that supports the auditor's logic. Okay, so audit evidence basically include two things: information in accounting records. What are accounting records? Ledger, invoice, contract, voucher. Other information that supports the accounting record and supports auditor's logic for true and fair presentation. What is other information? Confirmations obtained, okay, minutes of board of director meeting, etc. All this is what audit evidence. It includes two things. Number one, information in accounting record. All information that supports accounting record and supports auditor's logic for true and fair presentation. Just read once, very time pass, very easy. Clear? Let me speak last time. What is there in, tell me, audit evidence? Information in accounting records, all information that supports accounting record and supports auditor's logic for true and fair presentation. Shall we go ahead? Yes, sir. Please go ahead. Okay. Types of evidence depending upon nature, source. Nature, source. Depending upon nature. Visual, oral, documentary. One more time. Visual, oral, documentary. What is visual? Which you are able to see. Okay, observation. Okay, inventory counting management is doing. You are seeing that. Visual, depending upon nature. What's oral? Inquiry. You ask few people, sir, why has rent increased? He will tell the reason. Inquiry. Okay, so visual, oral, documentary. What do you mean by the word documentary, sir? What do you mean? Written, right? Many documents are there. Okay, inspection. You can check the documents, that is documentary. Invoice you are checking. Okay, a sales invoice, purchase invoice, documentary. So tell me, depending upon nature, three: visual, oral, documentary. Visual, oral, documentary. If you want parallel words, visual is what? Observation. Looking at a process being performed, looking at production process. Okay, visual. What is the meaning of oral? Inquiry. Okay, visual, oral. What do you mean by the word documentary? Checking the records, inspection, and depending upon source, internal, external. External, internal. What is the internal evidence? Your sales invoice is internal evidence because you have prepared it. Okay, tell me one external evidence. Maybe quotations are external, which you receive from others. Okay, purchase order, okay, or purchase invoice which you receive from others is external. So what is internal? Maybe your sales invoice. What is external? Purchase invoice. Are you clear? Okay, very simple, time pass, only MCQ can come. Types of audit evidence depending upon nature, source. Nature: visual, oral, documentary. Source: internal, external. Internal, external. Come here. Now, they are saying audit evidence should be sufficient and appropriate. So, behind these two words, ICI has gone too emotional. Okay. So, our audit evidence should be what? It should be sufficient and appropriate. What is sufficient? Quantity of evidence should be proper. Appropriate is quality. One more time. So, audit evidence should be what? Sufficient, appropriate. Sufficient is quantity, appropriate is quality. So, SA 500 tells us quantity of evidence should be sufficient, appropriate has two words, quality has two words, relevance, reliability. Relevance, reliability. We will look at both. Okay. Now, how much efficient is sufficient? How much audit evidence is sufficient? Sufficiency of audit evidence is influenced by Mrs. Okay. So Mrs. will decide how much food husband will have. Okay, just to learn. Okay, same way. So auditor's judgment as to sufficiency is affected by Mrs. What do you mean by Mrs.? Materiality. If it's a material account, always collect more evidence. How much evidence is sufficient depends on materiality. For material account, collect more evidence. Our risk of material misstatement, if then that account ROMM is higher. Example, okay, in sales, if risk of material misstatement is higher, we will collect more evidence. As compared to purchase, we will collect less if their risk of material misstatement is low. Last, size and characteristics of population. Size means what? How many samples are there? Okay, if the population is huge, we will collect more evidence. Okay, size and characteristics of population. Is your population homogeneous or heterogeneous? Let me take example. Our sales are very simple, FM, SM and audit. So it's homogeneous sample. But Reliance has several business, refinery business, Geo Mart business. Our Geo is there. Okay, then they have Geo themselves, then they have Geo Finance. So heterogeneous population, they need to correct sample about everyone. Of course, more evidence will be collected because they have several business as compared to us. So auditor's judgment as to sufficiency is affected by three factors: misses, materiality, risk of material misstatement, size and characteristics of population. Just let me read size. If size is bigger, more. If heterogeneous, different kind of population is there, okay, we have several businesses, then more evidence we require because we require evidence about each business. But our business is similar, FMSM and audit pen drive, so less evidence is okay. So learn nicely. Auditor's judgment as to sufficiency is affected by Mrs. One more time, Mrs. Materiality, RRR, risk of material misstatement, size and characteristics of population. Small break, 5 seconds. Done. Auditor's judgment as to sufficiency is affected by Mrs. Materiality, risk of material misstatement, size and characteristics of population. Come here. Now we have relevance and reliability. Relevance and reliable. Appropriate means what? Quality of evidence. Relevance and reliability. Relevance of audit evidence is affected by PAD. Relevant. What is a relevant evidence is affected by PAD. Purpose of audit procedure. What you are checking? We are checking fixed asset. Then collect the evidence of fixed asset only. Okay. Assertion. In fixed asset, what you are checking? Which assertion? Valuation. Then you have to check the bills only. Okay. Whatever evidence you check, it should be relevant and reliable. What is the meaning of relevant? It should deal with logical connection. Okay, it should have some connection with the evidence. Okay, whatever evidence we are collecting, it should be relevant. Number one, it depends on purpose of procedure. What you are checking? Fixed asset. Then collect samples of fixed asset only. In that, what you are checking? Valuation. Which assertion? Valuation. Then we will check invoices only. And third, direction of testing. Are we doing test of detail or test of control? What difference does it make? See, test of details when we are doing, we will check each and every voucher. But in test of control, I am not concerned with amount. I am only concerned with controls are followed or not. Huge difference is there. In test of control, my main aim is not to check mistake, but it's to see whether controls are followed or not. But when I do TOD, test of details, okay, I want to find out all the mistakes. So I hope it is clear. Relevance deals with logical connection of audit evidence. It depends on three things: PAD, purpose, assertion, direction. Purpose, assertion, direction. Purpose, assertion, direction. Purpose of audit procedure, what you are checking? Fixed asset. Assertion, which assertion you are checking? Valuation. Purpose, assertion, direction. Are you doing test of detail or test of control? Clear? Okay. Reliability, this you already know. Which evidence is more reliable? Tell me, internal or external? Always remember, external is more reliable. But if internal controls are strong, control over preparation of information are strong, our internal controls are strong, then internal is more reliable. Let me take an example. Okay, you are saying in your book debtor balance is 50,000. But when debtor will confirm it is 50, way more reliable. So number one point in reliability, external is more reliable than internal. But when internal controls over preparation of information are strong, if our internal control are super strong, then internal is also more reliable. Then I want to ask one more question. Tell me, audit evidence directly obtained by auditor is more reliable or indirectly? Of course, directly. Directly is more reliable. Tell me, documentary is more reliable or oral? Of course, documentary is more reliable than oral. Tell me, written is more reliable? Yes, written. Original is more reliable or photocopy? Of course, original. Xerox is less reliable. So already you know this. I was just doing revision. One last time. Reliability of audit evidence. I will ask question, you reply. Tell me, what is more reliable, internal or external? Sir, external. Second question. But if my internal controls are strong, then internal is also very reliable. Then I want to ask you, directly obtained by auditor is reliable or indirectly? Directly, you will say. Okay. Then I want to ask you, original is more reliable or photocopy? Sir, original is more reliable. Then tell me, written is more reliable or oral? Of course, written. Over. Read. Reliability is increased when it's obtained from source outside the entity. If internal controls are effective, internal is more reliable. Audit evidence directly obtained by auditor is more reliable than obtained indirectly. Documentary is more reliable than oral. Original is more reliable than photocopy. Okay. Come to second. Very nice. Very nice this one. Designing and performing substantive procedure. Most important diagram. I am telling you, it will come now. Today finally it has come. Okay. So here. Little bit we have learned. In fact, I taught you nicely, but I hope you know. If you don't know, then again. Okay. SA 315 already discussed in chapter number 3. What is SA 315? Identifying and assessing risk of material misstatement. How do you know ROMM? IR into CR. Understanding of entity and its environment is IR, and related control is CR. One more time. Identifying and assessing risk of MM, risk of material misstatement. Okay, so this is there. How do you know ROMM? Understand the entity and its environment is what? When you understand entity and environment, it is what? IR, and its control is CR. That you know, IR, CR, ROMM. Now come here. Further audit procedure. TOC substantive. In substantive, we have two. TOD analytical. Test of detail analytical. Okay. In test of detail, two are there. We will check assertion. When you check balance sheet assertion, it is known as verification. P&L assertion is known as vouching. But this, if you don't know, forget. Now read. This much you understood. Further audit procedure has two parts. TOC substantive, test of control substantive. In substantive 2, test of detail analytical. Come here. Auditor's assessment of risk is judgmental. There are limitations on management, including management may misuse the controls. Okay, understood. Depending upon circumstance, we will decide only analytical procedure is enough, only test of detail is enough, or a combination of both is enough. Many example I will take, you have to understand. Come here. Sometimes when I feel controls are good, okay, first I will do risk of material misstatement. I will understand the process of sale. If I feel controls are too good, I will test the control. When testing, we have to take samples of full year. I already taught in chapter number 3. Why do I do test of control? To see whether controls are effective throughout the year. One day they were good. Are they good throughout the year? So I will do test of control. In test of control, I feel control are superb. Then no need to do test of detail. I will just check ratios overall. Okay, overall I will check, compare with last year, little bit of ratio check sales with GST. Okay, over. I will do only analytical. But sometimes if I don't get comfort, let's take example of purchase. Okay, in purchase, controls are good, but I did TOC, test of control. I found that they are not good throughout the year. Then I will not do analytical. I will do more of test of details. Okay, I will do test of detail. In test of detail, what do we check? Assertion. Okay, so you have to decide only analytical is better, only TOD is better, or sometimes combination is also better. Okay, let me take an example. Debtors controls are good, so you did test of control, they were still good. Okay, then you did analytical. But for subsequent realization, okay, are debtors able to realize after balance sheet date? We can do cutoff. Okay, only for subsequent realization of debtors. Are we receiving money after April? Because audit we are doing in June, July. Are we receiving money? For that much part we can do what? Test of details. Okay, test of detail means checking sample. Let's take another example. Sales controls are super. I did test of control. I still found they are good. I will do analytical. But for cutoff part, I can do TOD, cutoff part, test of detail. So you have to decide what is better. TOD is better, analytical is better, or combination is better. You have to decide area wise. You have to decide area wise. Let's take last example, borrowings. In borrowings, you can never do analytical. Okay. Borrowings, if they have increased, we need to check the documents. We need to check agreement. Only TOD can be done. Are you clear? If borrowings are same, then to nothing to do. Okay. Last year also 10 lakh, this year also 10 lakh. But if they are changing, I will do test of details. Test of detail, check the documents, how they have increased. Board resolution is passed. Okay. See the loan agreement, etc. So one last time. Okay. When I do further audit procedure, I have to decide whether to do only analytical, whether to do only TOD, or a combination of both. Okay. Analytical is more used for transactions that are predictable. Of course, we will see in detail because our next part is analytical only. Come here now. I hope you understood this diagram. You have to see very nicely. If any doubt, you can ask me. See till here only. Okay, 1, 2, 3, start. How many audit procedure? Wrap, fab, wrap, fab, wrap, fab. In wrap, what do I do? Identify and assess risk of material misstatement. Come here. After wrap, there will be fab. Further audit procedure. TOD, substantive. TOD, substantive. Sorry, TOC, substantive. After TOC, substantive 2. TOD, analytical. TOD, analytical. Read nicely. Small break, 5 seconds. Then tell me, what are two audit procedure? Wrap, fab, risk assessment procedure, further audit procedure. In risk assessment procedure, identifying and assessing risk of material misstatement through understanding of entity, its environment and related control. In further audit procedure, TOC, substantive. In substantive, TOD, analytical. TOD is better or analytical? Depends. Or combination is also there. Come here. Now, what are methods or techniques to perform procedure and get evidence? How many audit procedure are there? 2, RAP and FAB. In that, if you want to get evidence from RAP and FAB, after doing risk assessment procedure and further, if you want to get evidence, there are this many methods. Methods or technique to get audit evidence. Or you can also make a question like that. Methods or technique to perform audit procedure and get audit evidence. One last time. Method or technique to get audit evidence, or method or technique to perform audit procedure and get audit evidence. One last time. How many procedure are there? 2. Wrap, fab, wrap, fab, wrap, fab. But in wrap and fab, if you want to get evidence, these methods are there. What are the methods or technique to get audit evidence? What are the methods or technique, okay, in performing audit procedure to get audit evidence? These techniques are there to get audit evidence. Number 1, analytical procedure. I will not teach right now because I will teach exactly in 5 minutes. Full essay we have to study, standard on auditing. Okay, come here. Second, external confirmation. This also we have to study, but I will still explain. Represents direct written confirmation to the auditor from third party in paper form, electronic form, any other form. You want to confirm bank balance, you want to confirm debtor balance, you want to confirm creditor balance, then what you will do? Direct confirmation, SA505. We will study in detail in this chapter only. Okay, so tell me, why is it better? Because it's external. We are receiving directly from third party. Original form, paper form, original. I hope you are clear. Recalculation. It consists of checking mathematical accuracy of books or records. Okay, it may be done manually or electronically. What is mathematical accuracy? You have received an invoice. You are doing total of that invoice and seeing whether that total is matching with the total in invoice. Of course, it will match. Okay, but still you are doing. You are calculating again. Okay, let's take example. You go to a restaurant. Okay, five of you go. You have eaten a lot of food. There will always be that one friend who will calculate the answer given by software. Software will say the bill is 857, but that person will take calculation and calculate. What is he doing? Recalculation. It involves checking mathematical accuracy of books or records. Can be done manually or electronically. Reperformance involves auditors' independent execution of control that were performed as part of entity's control. What does it mean? Auditor will perform same thing again which entity has done. Example, we are saying depreciation is 32 lakh. What I will do? Take the assets, all the assets, and take the rate as per Companies Act. and calculate again re-performance. If I get 32 lakh, I will be too happy. Interest, okay, interest. They are saying this much interest is received by bank. You take the amount of fixed deposit, multiply by number of days, same answer is coming, you will feel very happy. Involves auditor independent execution of control that were performed as part of entity's control. Entity has said it is this much, but you are again re-performing the thing, okay. Inquiry. It consists of asking people within the entity or outside to gain certain thing, okay. It can be formal inquiry, oral inquiry, written inquiry, okay. Example, you ask, sir, why this rent has increased? Sir, we took one factory in San Francisco. Okay, but where are the sales of that factory? Oh, that is not there. Why? Means some fraud can be there. Just asking random question. Asking questions to people within the entity or outside. It can be oral inquiry, written inquiry, anything. Inspection, checking documents or record. It involves physical examination of documents or record in paper form, electronic form, or any other form. Checking invoices, inspection. Observation. See, at the year end, what is the stock count is there? We do inventory verification. Usually we don't do, management does, but I will look whether they are doing it properly or not. I will also check few things, okay. So I will take a paper and I will check. It consists of looking at a process performed by others, but the evidence, but it is limited to the time, observation takes place. Means you get evidence only at that particular point of time while you are checking. Let's take example of your parents. Your parents will, when they are going to office or when they are at home, they keep on seeing whether you are studying or not. But their evidence is limited to the time you are studying. They know, okay, when they are not at home, what you do. Okay, so observation is a good way, but it only gives comfort at the time when we are observing. After that, we don't know what is happening. It consists of looking at a process performed by others. Example, management is doing inventory count, you are checking. But evidence is limited to the time, okay, we are doing observation. Very simple. Tell me, what are methods or technique to perform audit procedure and get audit evidence? One last time. Method or technique to perform audit procedure and get audit evidence. One last time. Method or technique to perform audit procedure and get audit evidence. Rio. Money heist season is there. In that Rio and Tokyo are there, no? From there we brought, okay. Combination of method or technique to perform audit procedure and get audit evidence, okay. What are methods or technique to get audit evidence? Rio. Analytical procedure, external confirmation. Analytical procedure, external confirmation. Analytical procedure, external confirmation. Able to learn? Small break, 2 seconds. Okay, double R. Reperformance, recalculation, recalculation. E. Rio. I. Inquiry, inspection. Observation. So there are 2R, 2I, 1O. 2R, 2I, 1O. What are methods or technique to perform audit procedure and get audit evidence? Method or technique to perform audit procedure and get audit evidence. Rio. Analytical procedure, external confirmation, reperformance, recalculation, inquiry, inspection, observation. Inquiry, inspection, observation. Learn first two. Analytical procedure, external confirmation. Learn double R, double I. Your time starts now. Then recalculation, reperformance, inquiry, inspection, observation. One last time shall we speak? What are method or technique to perform audit procedure and get audit evidence? Rio. Analytical procedure, external confirmation, reperformance, recalculation, inquiry, inspection, observation. Now. Many people are asking me, after RAP, what will happen? SAP. In further audit procedure, TOC substantive. In substantive, we have two. TOD analytical. In test of detail, what I will check? I will check assertions. Many people are asking, in test of detail, what I will check? Assertion. Balance sheet assertions are different. P&L assertions are different. What is the meaning of assertion? Management is telling we are following this thing. Auditor check, are we really following? Assert means to state. Assert means to specify. Assert means to tell. See, assert. I'm asserting, I'm stating, specifying, mentioning, telling. Assertions are representation by management. Management is telling. Okay, assertions are representation by management. Explicit or otherwise. What is explicit? Clearly explained. Otherwise means implied assertion. Example, if sales is 700 crore, means it is properly measured. Okay, it's complete. Okay, it is presented properly, it's implied. They're not telling it is presented, it's implied. So some assertions directly management is saying it's valued properly or measured properly. Some are implied. Okay, sometimes what happens? Okay, your mom will tell I love you, she will hug you, but your dad might not hug you. Okay, but doesn't mean your dad loves you. It's a hidden love. She is also asserting some things are to be felt. Dad don't express the same way as mom, because boys are different, girls are different, but he also loves you, maybe same or maybe more or whatever. Assertions are representation by management, explicit or implied, yeah, otherwise. Okay, that are embodied in the financial statement, included in the financial statement, and checked by auditor to detect different misstatement that may occur. One last time, assertions are nothing but representation by management, explicit or otherwise, clearly explained or implied, that are included in the financial statement and checked by auditor to detect different misstatement that may occur. Simple meaning I will tell. Assertion means management is saying, either clearly explained or implied, we are doing this things. Auditor, you check whether we have followed this or not. Simple. Assertions are representation by whom? Management, explicit or otherwise, that are included in the financial statement and checked by auditor to detect different misstatement that may occur. So simple. Read nicely once. Then assertions are representation by management, explicit or otherwise, that are included in the financial statement and checked by auditor to detect different misstatement that may occur. Okay, start. Number one, what are the assertions? Presentation. Okay, this is for both. It's for asset, liability, income. See, some assertions are for balance sheet, some are for P&L. This is for both. Okay, things are properly presented and disclosed as per Schedule 3 Companies Act. Okay, completeness, asset and liability are complete, income expense are complete, applicable to P&L, balance sheet, both. There is no unrecorded asset, unrecorded liability, unrecorded income, unrecorded expense. Okay, completeness. Measurement, this is only for P&L. Okay, now you will tell me how to check measurement. Okay, let me take an example. Of course, for this we have chapter number 5. Transactions are recorded at correct amount. How to check? See, this is only P&L. Sales is recorded at correct amount. How to check? You tell me. How to check sales is recorded? Contract. Okay, before doing the sale, there will be a contract done. So you have to see the rate in contract is matching with invoice. If matching, it's proper. Measurement. Okay, occurrence, sale has actually occurred. How to check it has actually occurred? Lorry receipt. If the sales is dispatched, if there is an invoice, we have received confirmation from customer also. Sale invoice is there. Lorry receipt is there, it is dispatched. Confirmation received from customer, of course it has occurred. So measurement and occurrence is for P&L, is for P&L. Okay, transactions are measured properly, they have actually occurred, there are no dummy sales. Okay, next. For same words, if you say for balance sheet, okay, same words if you say, it will become valuation, existence. Okay, for fixed asset, we don't say it's measured, we say it's properly valued. Okay, how to check it is properly valued? Invoice. Okay, check the invoice of fixed asset, properly valued. Exist, we don't say that fixed asset has occurred, no, fixed asset exists, meaning is the same. When we do P&L, we use measurement and valuation. Measurement, sorry, we use measurement and existence. Sorry, we use measurement, occurrence, measurement, occurrence, measurement, occurrence. Same word. For balance sheet, measurement will become what? Valuation. And occurrence will become what? Occurrence will become what? Existence. Okay, so this is for valuation. Asset or liability is at proper amount. Asset or liability exists. How to check whether it exists? Physical verification. Physical verification. Okay, so valuation, existence is for balance sheet. When you look at fixed asset, we say it's valued properly. Fixed asset really exists. Right and obligation. Asset is a right, liability is an obligation. Asset is my right, liability. How to ensure asset is my right? If this house is in my name, title deed of this house is in my name, I will say it is my house. Okay, liability is an obligation. How to check? Check loan agreement. If the loan is in the name of company, it's my obligation. I have to repay. Understood? Okay, but understand very nicely. Occurrence and measurement is for P&L. Okay, but this we'll understand in next chapter better. But same words, when you say for balance sheet, it becomes what? Existence valuation. Asset or liability exist, they are valued properly. Rights and obligation is also balance sheet. Asset is a right, liability is an obligation. Tell me, how many assertions are there? You don't need to learn, but still let's learn. PC, move right. Priyanka Chopra, go right. Priyanka Chopra, go right. PC, move right. PC, move right. PC, move right. PC, move right. Presentation, completeness, measurement, occurrence, valuation, existence. Presentation, completeness, measurement, occurrence, valuation, existence. Rights and obligation. One last time. Presentation, completeness, measurement, occurrence, valuation, existence. Rights and obligation. Last time. Presentation, completeness, measurement, occurrence, valuation, existence. Rights and obligation. Learn nicely. Small break, 15 seconds. Then tell me, what are the assertions? Some are balance sheet, some are P&L. Presentation, completeness, measurement, occurrence, valuation, existence, rights and obligation. With this, SF 500 is over. What's the name of SF 500? Okay, audit evidence. Now let's move to 520. What is the meaning of SF 520? Analytical procedure. Okay, what do you mean by analytical procedure? Analytical procedure, let me forget English. Let me explain you the meaning. This was a separate chapter earlier. Now, of course, it's not separate. It's part of a small, big chapter. Okay. So, SF 520 analytical procedure. There are several ways to get evidence. One such way is analytical procedure. What is the meaning of analytical procedure? I will tell later. But first, understand what is analytical procedure. I will take 5 examples or at the max 10. Just checking ratios and having a comfort is analytical procedure. Let me take simple 5 example. Okay, one employee salary is 10,000. We have 20 employees. So 2 lakh salary is coming per month. Okay, multiply by 12, 24 lakh. Nothing to check. Per employee 10,000. We have 20 employees. So how does it make 2 lakh rupees? This is 1 month. Multiply by 12. If it's 24 lakh, I will not check anything. Through analysis only I got comfort. What is analysis? Multiply. Sitting in an AC cabin and doing ratios. Second example. 1 month security guard expense is 10,000. 12 months is 1,20,000. Game over. What to check? Analytical I did. Okay. 1 month rent is 1 lakh. 12 months is 12 lakh. Game over. Analytical I did. I don't need to check anything. I hope you understood. Okay. More hard example also we will take. See here. Occupancy rate to determine total hotel revenue rather than checking all invoice. Okay. Take monthly occupancy of hotel. This month 43%, next month 62%, then 74. Multiply by average room rent. Okay, January take, February take, March take, April take. Take occupancy rate, multiply by average room rate. You will get a good approximate figure if it is matching. Okay, little difference will come. TDS and professional fees. You want to know income of any professional? 10% TDS would be deducted. Whenever I give professional service, 10% TDS is deducted. So if my TDS deducted is 2 lakh, my income will be 20 lakh. How? Reverse calculation. In 1 minute you can do. GST to sales. Any organization, if you want to know what is their income, cross multiply. If 18 is GST, sales is 100 because 18% is there. Okay, then I will see they have paid GST of 20 crore. Then how much will be the sale? In 1 second we can do payroll and number of employees per square feet and rent. 1 square feet rent is 32 rupees. This is a 2000 square feet house. Okay. So 2000 square feet office multiply by 32, 64,000 over. Okay. Freight outward and sale also we can do. Okay. See, sales is this much, but freight should be usually 3.2% of sale. So we'll see it is 3.2% or not. Just roughly I said. I hope it's clear. Okay. Number of trips in a month and fuel cost. Okay. In an airline company, biggest cost is fuel cost. If I want to check that fuel cost, how I can check? Simple. I will see how many times the flight has gone from Mumbai to Delhi. How many times it has got from Mumbai to Coimbatore? How many times it has gone from Mumbai to Bangalore? How many times it has gone from Mumbai to Chennai? Okay, multiply and multiply what? Average cost per flight. Okay, it goes here, average this much cost is there. So I will just multiply in one trip, this should be the cost. It has gone 32 times in a year. So multiply. Approximately, this is analytical. Analytical is just checking ratios, just checking. Factory light bill we can check. How? With number of units produced. To produce 1 unit, we require 4 units of electricity. We produced in this year 10,000 units. So 40,000 units multiplied by per unit rate. If electricity bill of factory matches, my comfort will be very high. I hope roughly you understood. Simple. Sitting in a AC cabin and doing analysis. You don't have to remember this example. Be rest assured. Come here. What is analytical procedure? Analytical procedure means evaluation of financial information. I want to find out that financial figure. Analytical procedure is evaluation of financial information through analysis of plausible. What is plausible? Possible, reasonable, believable relationship with financial and non-financial data. One last time. Analytical procedure is nothing but evaluation of financial information. What is financial? This one figure. Financial. Analytical procedure is evaluation of financial information through analysis of possible, plausible, believable, reasonable relationship with financial and non-financial. How financial will have relationship with financial? Very simple. Every year sales are increasing by 20%. Has it increased this year also? Financial. GST to sale, financial relationship. TDS to professional fee, financial. Sir, can you tell financial to non-financial? Yes. 1 square feet, this much rent. So this much square feet, how much? Number of employees to salary. Non-financial to financial. I hope you are able to understand. Okay. So very simple. In one line, understand. Analytical procedure as per SA 520 is evaluation of financial information. How? Through analysis of plausible. Plausible is possible relationship with financial and non-financial data. See, to get comfort on financial figure by making the relationship with either financial or non-financial. If we are able to make a relationship, our work will reduce a lot. I need to do less test of detail. Through analytical, I can get extraordinary comfort. Learn nicely, small break, 5 seconds. If you can learn, otherwise also okay. Then analytical procedure means evaluation of financial information through analysis of plausible relationship with financial and non-financial data. Shall we go ahead? Yes, sir. Come here. As per SA 520, analytical procedure means evaluation of financial information through analysis of plausible relationship with financial and non-financial data. It also covers investigation of fluctuation or relationship that are inconsistent with the amount or that differ from expected value by significant amount. Means what? See, when you compare relationship, if some difference comes, it will investigate also. That is what is the meaning. Come here now. Purpose. Why do I do analytical procedure? To obtain relevant and reliable evidence. If I want some evidence, analytical is also good way. To design and perform the procedure near the end of audit. Don't forget to do at the end. Why at the end? To see financial statement are as per auditor's understanding of entity. See, in the end, we should know every figure. Oh, sales has increased, but GST has increased. Okay, understood. This year sales every year 15% up. Why down? Oh, COVID came. See, in the end you have to do. So you know every damn figure. Okay, this year depreciation is why this much less. Oh, two assets are there. They are at research stage. Okay, any damn reason you have to do analytical procedure at the end. So you know financial statement are as per your understanding. Okay, in the end we do every figure. We should know the reason. Okay, sales has increased. Or but carriage cost has not increased. Freight cost. Why? Oh, rates in Maharashtra of carriage have reduced. That is why. Understood. Everything you should know. Okay, to design and perform analytical procedure near the end to form understanding that auditor's understanding is consistent with understanding of entity. Come here. When is analytical procedure done? At three stage: planning, during the audit, and these three questions we have to do over. This entire essay over. Okay. Analytical procedure are done when? Can you tell me? Planning, during the audit, and one last time. Planning, during the audit, and planning, during the audit, and come to planning. MCQ can come up. When is analytical done? Starting planning, during the audit, and in planning, analytical procedure help in understanding client's business. Identify areas of potential risk which you were earlier unaware of. See, as soon as I start the audit, I will do planning. I will look at the trial balance and see those things which are fishy. Okay, sales has increased, but courier cost has not increased. There is a doubt in sale. Okay, this year we are saying sales has increased a lot, but my cost of goods sold has not increased. How such sale can be there without cost of goods sold? So I will do a tick. So analytical procedure help in understanding client's business. Two, identify areas of potential risk by looking at trial balance. Second, they can help in determining nature, timing, and extent of audit procedure. Wherever fishy things are there, there is some doubtful, I will employ more procedure. Helps in determining nature, timing, and extent of audit procedure. Last, in analytical procedure, in planning stage, I use both financial and non-financial data. What I will use? Financial and non-financial data. I hope you are clear. Yes, sir. Very nicely learned. Super easy. Analytical procedure in planning stage. Okay. Number one, in planning stage, analytical procedure help in understanding client's business. Identify areas of potential risk. Wherever there is risk, analytical procedure helps in determining nature, timing, and extent of audit procedure in planning stage. In analytical procedure, we use both financial and non-financial data. Very simple. Learn nicely. Start. One, two, three. In analytical procedure in planning stage, help in understanding client's business. Identify areas of potential risk which we were earlier unaware of. Wherever there is a risk. In analytical procedure, it helps in determining nature, timing, and extent of audit procedure in planning stage. In analytical procedure, we use both financial and non-financial data. Over. Come here. Two questions, very nice. Definitely they can come if they want to ask. Okay, earlier this was a separate chapter, so definitely it came. Factors to be kept in mind for analytical. Come here. Shall I do analytical or TOD? Okay, come here. Tell me, analytical is better or TOD, test of detail, is better? Factors to be kept in mind for deciding analytical is better or TOD is better. Shall I do test of details and check assertion, or get comfort by ratios only? What is more better? You tell me. Depends on question. Number one, predictability. It's more appropriate when relationship between two items are predictable. If two items are predictable, analytical is best. Example, sales and debtor, you can do analytical. Sales and cost of goods sold. Sale increased by this much. Cost of goods sold is 65% of sale. Good. But you can never do analytical in between. Those things which are not predictable. Example, sales and advertisement. Not predictable. This much ad you do, this much sale will increase. No. So it's more appropriate when relationship between two items are predictable. Then dash is best. Analytical. Inherent risk. In any area, what is inherent risk? Before control. Before implementing any control, what risks are there? I took very much example in chapter 3 if you remember. Whenever there is a retail business, cash and bank is always inherent risk. In a jewelry business, inventory valuation is always inherent risk. Whenever purchases are there in cash, it is always inherent risk. Whenever incentives are linked with sale, it is always inherent risk. So in whichever area, before control, what risks are there? If inherent risk is high, analytical alone can never give comfort. You have to do TOD. See, when something is wrong in a person, you cannot do analysis. You need to check in detail. So if IR is high, inherent risk is high in any area, then analytical may not be the best option. You can do it, but test of detail is compulsory. Come here. Availability of data. Data should be available for analytical. You want to do number of trips and fuel cost, but you don't have data only of number of trips. Then how you can do fuel cost working? Okay, you want to do number of production units and factory light bill, but number of production unit data only not available. How you can do? So data should be available. Account type, it's more suitable for income account because they are over a period of time as compared to balance sheet, which is at a point of time. This I did not understand. I will tell you. See, PNL is over a period of time. It's for 12 months, okay? Over a period. So I can apply analytical. Let's take 3 examples. Sales, I can do analytical. Security expense, 1 month 10,000, 12 month 1,20,000. Rent, 1 month 20,000, 12 months 2,40,000. I can do more useful for income accounts because they are over a period of time. Balance sheet is at a point of time. Cash and bank is 20,000. What to do analytical here? Okay. Investments, still investment we can do with the help of interest, but hope you understood. The balance sheet is at a point of time. It's accumulation of several years balance. Okay. Balance sheet is a mixture of several years. Okay. This year debtors I can compare with sale, but I cannot compare overall debtor and do analytical. I hope you understood. So it's more suitable for P&L accounts because they are over a period of time. But balance sheet is at a point of time. Today cash is 25,000. What to do analytical? Cannot do. Source, it's more suitable for similar transactions. Okay, transactions which are similar nature, analytical is best, but those which are non-routine where judgment is involved, analytical is not best. Let me take example. Similar nature purchase sale. What are dissimilar? Profit and loss on sale of asset, impairment loss is there, research and development expenditure. On all this analytical cannot be done. Last time, it's more suitable for those things, okay, that are of similar nature, but those which are of dissimilar nature, non-routine transaction, judgment is involved, analytical is not best. Like profit and loss on sale of asset, research and development expenditure, you cannot do analytical. I hope you are clear. Impairment loss. Nature of assertion, it is more effective for certain assertions as compared to others. If you want to gain comfort on valuation, analytical is best. It's good for completeness, it's good for occurrence, okay, but it's not good for rights and obligation, presentation and disclosure. Let me take example. Fixed asset is 100, next year 90, next year 80, next year 70. Good. Means depreciation is 10 rupees in 100. 10 years life, 100 upon 10. It's 10 depreciation. 100, 90, 80, 70. Good. It is giving me comfort in valuation. It's giving me comfort in completeness of the asset. Okay. But I can never know with analytical this asset is mine or not. It is not giving me comfort in rights and obligation. Okay, it's not giving me comfort in it is presented properly or not. So it's good for certain accounts like valuation, completeness, occurrence, okay, or existence, but it is not good for other assertion. See here, more effective for some assertion as compared to other. Analytical procedure is used to address completeness, valuation, occurrence. Disaggregation, the more data can be divided, analytical will give more accurate result. Example, you want sales commission to sales, but for that agent wise commission should be there. You are operating in 4 countries, France, okay, Indonesia, Malaysia, France, Indonesia, Malaysia, Europe. Now if commission is available country wise, then you can do reverse working and go to sale. But if data is not available, data cannot be disaggregated or divided into different countries, then analytical is not the best method. Okay, degree to which information can be disaggregated or divided helps in detecting the mistake. If it can be divided into 4 countries, I can do reverse calculation and predict the sale and see total sale are matching or not. But if country wise data is not available of sales commission, then I can never reconcile sale. Hope you are clear. Okay. Factors to be kept in mind for analytical. What factors you need to keep in mind for analytical? Prasad, Prasad, Prasad. What is P? Predictability. What is R? Inherent risk. Okay. What is A? Availability of data, account type. Let's learn PRA. One more time. Predictability. Okay. R. Sorry, Prasad. R. Inherent risk. A. Availability of data, account type. Availability of data, account type. SAD, SAD. Okay. Source, assertion, disaggregation. Source, assertion, disaggregation. Source, assertion, disaggregation. One more time. Source, assertion, disaggregation. Learn nicely. Factors to be kept in mind for analytical. Okay, what factors need to be kept in mind? Prasad, Prasad, Prasad. P. Predictability. R. Inherent risk. Availability of data, account type. Availability of data, account type. Source, assertion. Source, assertion. Source, assertion. Disaggregation of data. Disaggregation of data. Learn nicely. Your time starts now. Done. Let's try one more time. Factors to be kept in mind for substantive analytical procedure. Whenever I want to do analytical, what factors I need to keep in mind? Prasad, Prasad, Prasad. P. Predictability. R. Inherent risk. Availability of data, account type. Availability of data, account type. Source, assertion, disaggregation. Source, assertion, disaggregation. Shall we go ahead? Yes. Another nice question. Techniques available as analytical. You want to do analytical, it also has techniques. There are 4 techniques in analytical. Shall we start? Number 1. What are techniques available as analytical? Trend analysis. Comparing the trend of 2 or more prior year and predicting the figure of this year is trend analysis. Example. Every year sales is increasing by 20%. This year also it will increase. If it matches with 20%, good. I am getting lot of comfort. Comparing trend of 2 or more prior period to compare this year balance. Let's take second example. Okay. A GP margin. GP margin every time is increasing by 1%. Is it increasing this time? Good. Trend. Comparing the trend of 2 or more prior period to predict balance of this year. Ratio analysis. It's used for predicting asset, liability, income, expense. Okay. See, one figure on your own you cannot compare. But ratio of 2 can be compared. Sales and debtor. Okay. Debtors turnover ratio, creditors turnover ratio, okay, inventory turnover ratio, you can find cost of goods sold. Okay, so these ratios, several ratios are there. GP ratio of the industry. Okay, used for analyzing asset liability. Ratios can be compared with time. Okay, within the group or outside the group. Third, reasonable test, very important. It uses non-financial data for audit period under consideration to predict the balance. It doesn't use financial data. It uses non-financial data to predict the balance. This is more applicable to income accounts. Okay, let's take example. Based on number of employees, predicting salary. Number of employees are 100. Per employee salary is 12,000. Cross multiply. Non-financial data. Per square feet rent is this much. Total rent. We have 32,000 square feet. Rent should be this much. Non-financial data. Clear? It uses example, hospitality expense. Per plate food cost is 32 rupees. Total 350 plates of food were given. Cross multiply. It uses non-financial data. Occupancy rate of hotel month wise is this much. Average room rent is this much. Predicting the total revenue of hotel. Non-financial. Reasonable test. In reasonable test, MCQ will come. It uses non-financial data for the audit period under consideration to predict the balance. Uses non-financial data to predict the balance. I hope you are clear. Reasonable amount is reasonable or not. Okay. Last, structured modeling. It uses statistical model from financial and non-financial data to predict balance. What is statistical model? It uses technique of mean, median, mode. Okay, statistical model it uses from financial and non-financial data to predict the balance. It uses statistical techniques which you study in statistics to predict the balance. Okay. So tell me, what are techniques available as analytical? TRS. Techniques available as analytical. TRS. trend analysis, ratio analysis, reasonable test, structured modeling. One more time, trend analysis, ratio analysis, reasonable test, structured modeling. One last time, trend analysis, ratio analysis, reasonable test, structured modeling. One last time, trend analysis, ratio analysis, reasonable test, structured modeling. Clear? Learn nicely. Chalo. What are techniques available as analytical? Trend analysis, ratio analysis, reasonable test, structured modeling. Last, analytical procedure are used during three stages as I told you. Number one, planning during the audit end. Planning during the audit end. Planning is done. During the audit is little big. In the end is just 1 minute or 30 seconds. Okay. During the audit. Now, while performing and designing analytical procedure alone or in combination with TOD, when you do analytical alone or along with TOD during the audit, 4 points are there. 4 points are there. Very simple. Through one example, I will try to explain and you will understand little better. Okay. Through one example. Number one, determine the suitability of analytical procedure for given assertion taking into account risk of material misstatement. Okay, let me take simple example, you will understand better. During the audit, if I do analytical, let me take an example, then you will understand little better. See here. Basic salary is 10 lakh. Okay. Provident fund is usually 12% of basic salary. So now tell me, how much should be provident fund? Cross multiply. 1,20,000. Now, if actually it comes the same figure, my comfort will be skyrocketing. I will be so happy. Okay, 10 lakh into 12 should be 120. Everyone knows this. Now, in the books also, if provident fund is 120, it's okay. Sir, if 5% difference is there, then also okay. But beyond 5% difference, then I have to investigate. Okay, below 5% is immaterial. Mistakes will happen. Now, take this same example and come here. Number one, determine the suitability of substantive analytical procedure for given assertion taking into account risk of material misstatement. First of all, you have to see, is analytical suitable or not here? Shall we do TOD or analytical? This is predictable relationship, I think. So analytical we can use. Depends on Prasad. Predictability, inherent risk, availability of data, account type, source, assertion, disaggregation. I think this is predictable, basic salary and provident fund. So determine, first point, determine the suitability of analytical procedure for given assertion. What do you want to check? I want to check PF is measured properly. Yes, I think we can use analytical because the relationship is predictable. Come to second point. Evaluate the reliability of data from which auditor's expectation of recorded amount or ratio is developed. What do you mean by reliability of data? See here. Is salary figure reliable? Evaluate the reliability of data from which auditor's expectation. You develop the expectation 12% out of where? Basic salary. See, the basic salary figure is reliable. Evaluate reliability of data from which auditor's expectation of recorded amount or ratio is developed. Come to third. Determine expectation of recorded amount. As per you, how much it should be PF? 120. Basic salary 12%. Determine an expectation of recorded amount or ratio. Third, last, determine the amount of difference that is acceptable without any investigation. If this much difference comes, no tension. Usually it is 5%. So let me do this. 6,000. If the difference is 1,26,000 or 1,14,000, no problem. Till 6,000 it is allowed. This 5% not given in book, so don't worry. So 4 points during the audit 4. Now they will go emotional in this 4. In this 4, usually second and third can come. Usually, okay. Actually in exam anything can come. These are CA exams. Okay. Start. While designing and performing analytical procedure alone or in combination with a TOD, 4 points are there. 1, 2, 3, 4. Get on the dance floor. determine the suitability of analytical procedure for given assertion. First G, is the analytical procedure suitable? Second, evaluate the reliability of data from which auditor's expectation of recorded amount or ratio is developed. Is the data reliable? Third, determine expectation of recorded amount or ratio. Determine the expectation. Fourth, determine the amount of difference that is acceptable without any further investigation. If this much difference comes, no need to worry. Okay. Read nicely. One last time. Determine the suitability of analytical procedure for given assertion. Can I apply analytical procedure for this assertion? It's more suitable for completeness, measurement, valuation. Second point. Okay. Evaluate reliability of data from which auditor's expectation of recorded amount or ratio is developed. Is the data reliable from which you made an expectation? Third, determine expectation of recorded amount or ratio. Four, determine amount of difference that is acceptable without any investigation. First, look at this example. Did you look at it? Sir, what to look here? So easy. Now, understand this. Not try to learn, but try to understand. Inside this second and third point. These 4 points only we have to study. This standard also over. Read nicely. Small break, 10 seconds. Clear? 1, 2, 3, start. Analytical procedure during the audit. Okay. Number 1, determine the suitability of analytical procedure for given assertion. 2, evaluate the reliability of data from which auditor's expectation of recorded amount or ratio is developed. Is the data reliable? Third, multiplied. Determine expectation of recorded amount of ratio. Okay, recorded amount of ratio. Last point, determine the amount of difference that is acceptable without investigation. This much difference comes, no tension. Now, all 4 points we will read. I told you second and third can come. First, very easy. Analytical procedure, copy paste they have done. It's more suitable to P&L accounts. Okay, large volume of transactions that are predictable. It is more suitable if relationship is there between two amounts. Okay, suitability will depend on how effective it will detect misstatement. Different analytical procedure give different level of assurance. Some will give lot of assurance. Sometime analytical will give okay assurance. Then I need to do more procedure. Okay. Analytical procedure may also be used when TOD is used. You can also do along with TOD. Nothing great. Come here. This can come and third can also come. Third, is the data reliable? From salary you took PF, is the salary figure reliable? Extent of reliance on data for using analytical. Extent of reliance on data. Number 1, same point. Source of information available. Always remember, external is more reliable than internal. But when internal control over preparation of information are strong, internal is more reliable. In fact, you knew this, okay? Number 1, if they ask you extent of reliance on data for analytical, very simple. Source of information available. External is more reliable than internal. Okay. Control over preparation of information are strong. Internal is reliable. Comparability of the data. Is the data comparable? GP ratio. Then it is very much comparable. You can compare with industry margins. Okay. So the data should be comparable, then more reliable. Fourth, nature and relevance of information available. It should be as a result of expectation rather than goal. Okay. See, whatever information you take, whatever expectation you take, it should be as a result of your expectation rather than goal. Example, you are checking sales, okay. You are like, we want to grow at 40%. You want to grow is okay, but COVID is there. How can you grow? So you have to set reasonable expectation rather than goal. If that estimation is based on good estimation rather than your goal, then it's reliable. Example, if you tell sales 40%, no. Everyone is growing at 20. If you keep 20, then it's reliable. Let's take example. Many times what we'll say, foundation you failed, but you are saying I will get all India rank. Look at you, understand, not possible. Okay, you failed in foundation. First attempt you can still try. So whatever expectation is there, I'm not saying it's impossible, but difficult. It should be as a result of expectation rather than extraordinary goal. So if that the data is out of good expectation, then you can rely. But if you are making the data out of goals, then you cannot rely. It should be as a result of expectation rather than goal. So you have to remember extent of reliance on data for using analytical. Extent of reliance on data for using. Can I rely on data? Number one, source of information available. External is more reliable than internal. Control over preparation of information are strong, then internal is more reliable. Okay, third, comparability of the information with industry data. If my GP margins are comparable, I can rely more. Nature and relevance of information, it should be based on expectation rather than goal. Means it should be a reasonable expectation rather than goal. So 4 point you have to learn. Source of information available, control over preparation of information. One more C is their comparability of the information with industry data. Nature and relevance of information, it should be as a result of expectation rather than goal. Learn nicely, your time starts now. 5 second break. Okay, extent of reliance on reliability of data for analytical. Can I use analytical? Depends on source of information available. External is more reliable than internal. Control over preparation of information is strong, then internal is reliable. Okay, then one more C is their comparability of the information. Nature and relevance of information, it should be as a result of expectation rather than goal. One last time, source of information available, control over preparation of information, comparability of the information with industry data. Okay, nature and relevance of information, it should be as a result of expectation rather than goal. Last, risk of material misstatement. You are saying multiply by 12 is 120. Can you develop whether expectation can be developed precisely? Come here. This 10 lakh into 12 is 120. Can it be, is this a precise figure? Okay, see here. Risk of material, whether expectation can be developed precisely depends on 3 points. Number one, degree to which information can be divided. Same example, sales commission. If your sales are in 4 countries, if you can divide nicely in 4 countries, then it is can be used as analytical. Then it's a good data. Degree to which information can be disaggregated. If information can be, if sales commission is available country wise, then you can predict the sale. Second, available data should be available. If factory production units are not available, how you can predict factory light bill? Okay, accuracy with which the results can be predicted. So accuracy can be more in GP margins. Accuracy can be more when you compare sales commission with sale, but accuracy will be less when you compare research and development. Accuracy will be less when you do profit and loss on sale of asset. Accuracy will be less when you compare advertisement and sales. Okay, so can expectation be developed precisely? Is this figure of 120 precise or not? Depends on DAR. D-A-R. Degree to which information can be divided. 2. Availability of data. Accuracy, RRR. Accuracy with which the results of analytical procedure can be predicted. So it can be predicted when relationship is there. Cannot be predicted in sales and ad. Okay. So expectation can be developed precisely depends on DAR. Degree to which information can be disaggregated. Availability of a data. Third, R. Accuracy with which the results of analytical procedure can be predicted. Learn nicely. D. Degree to which information can be disaggregated. Availability of data, financial and non-financial. Accuracy with which the results of substantive analytical procedure can be predicted. It can be predicted when common things are there. Uncommon cannot be predicted. Read nicely. Small break, 10 seconds. Then tell me. 1, 2, 3. ROMM. Whether expectation can be developed precisely depends on DAR. Degree to which information can be disaggregated. Okay. A. Availability of data. R. Accuracy with which the results of analytical can be predicted. This can also come. Whether expectation can be developed precisely depends on DAR. Degree to which information can be disaggregated. Availability of data. Accuracy with which the results of analytical can be predicted. Now difference came, okay, investigate whatever difference is coming, inquire with management, ask them what is the reason, take their response, okay, take their response and see is the response matching with your understanding. Now they will say what, sir, actually it is 130, your is 120, no, 10,000 difference is there. 10,000 is due to apprentice salary. Apprentice are not paid provident fund. Okay, so there you have to exclude, then it will match. Okay, any reason they can give. Okay, inquire with management and obtain the reason why answer is not coming. Okay, and see whether it's matching with your understanding. If it is not matching, do other procedure. Perform other procedure in two situations. When management doesn't give explanation, or their explanation are not adequate, you still feel unsatisfied. If the difference come, inquire with management, obtain appropriate evidence, okay, and see whether their understanding, whatever reason they give, is matching with your understanding. Okay, if perform other procedure in two situations, when they are unable to give the explanation or their explanation is not proper, you are not happy. Okay, last, in the end also we do analytical. Why do we do in the end? To see entire financial statement are as per your understanding, which you obtain during audit of individual items. What is individual items? See, you checked one item also, no, okay, you had checked sales, purchase, debtors. During that, whatever understanding you had, now is it clear? When you are checking full, okay, the conclusion drawn should support the conclusion. Corroborate means support the conclusion formed during audit of individual components. In the last, every figure should be clear. Sales, GST, okay, I know the reason. This sales has increased, but courier cost has increased a lot. Oh, in Germany the rates have increased. Oh, understood, this is the problem. Okay, so in the end, I do analytical procedure to support the conclusion formed during audit of individual components. Now, every individual component and total understanding should match. This helps to draw reasonable conclusion and make a nice opinion. So with this, analytical is also over. 2 essays are over. 500 audit evidence. 520 analytical procedure. Let's come to 530 audit sampling. Come here. Why do we check sample first of all? Now you will ask me a nice question. Why did audit sampling come into picture? What a nice question. See, today there is a focus on internal control. Controls are strong, right? When controls are strong, if there is one error, it will keep on repeating. And if there is no error, it won't repeat. Today the focus is on internal control. So routine checking is just a formality. No need to check everything. Internal controls are strong. Okay, based on sample, I can conclude about entire population. If sample is this much, population will be this much, because controls are strong. You cannot check in Amazon. If you check 100 crore voucher, you will die. In Flipkart, you cannot check 10 crore voucher. In Uber, you cannot check all vouchers. Sampling is there. Let me take 3 parallel nice example. Blood. If you're not well, blood sample. Entire blood they don't take out. Okay. Little sample they see. That if little sample is this much, does he have typhoid or not? Corona. They will not remove your nose. Directly they will do some small testing and find out whether you have COVID or not. In a birthday, we want to eat cake. We don't take full cake. Little we take. If it's good, we will take another bite. Sample everywhere. Wheat grains, okay, you'll look at little wheat grains and see whether it is good or not. Okay, shall you buy the whole basket? Mango, okay, when you want to buy a box 20 kg, you will see one mango. If the fruit is good, you're like, okay, let me take the box. Sampling. Remember, in today's world, focus is on internal control. No need to check everything. Based on sample, you can conclude if sample is this, then population will be this. Okay, nowhere in sampling it is written what to test, how to test, how much to test, okay, which items to test, how to check, and how much in detail. It's all judgment of auditor. Okay, but one thing is written: whatever you do, you are bound by your opinion. Whether you use sampling, don't use sampling, check full, check half, check 1%. It's all your responsibility, your judgment. You are chartered accountant, but you have to be bound by your audit opinion. This was also a separate chapter. Of course, now not a separate chapter. SA 530, audit sampling definition. See here. It is application of audit procedure to less than 100% of items in a population. So based on sample, I can conclude about entire population. So easy. It is defined as application of audit procedure. I will apply two audit procedure: RAP, FAP, RAP, FAP. to less than 100% of items. It is not written less than 100% procedure. No, 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 no. To less than 100% of items. So based on sample, I can conclude about entire population. One last time, it is defined as application of audit procedure. I will apply audit procedure to less than 100% items. Okay, means maybe 10%, 20%, but all procedural RAP fab. It is application of all audit procedure RAP fab to less than 100% items, not less than 100% procedure, less than 100% items within the population. So based on sample, I can conclude about entire population. If sample is such, population is such. Last time, what is sampling? It is defined as application of audit procedure. I will apply audit procedure to less than 100% of items. So based on sample, I can conclude about entire population. Simple. Read once. Done? Tell me. It is defined as application of audit procedure to less than 100% of items in a population. So based on sample, we can conclude about entire population. Tell me, how should my population be? Characteristics. What is population? Total number of items are population, from which we select a sample. Okay. How should population be? It should be complete. Population from which sampling is done should be complete population. Okay. Let me take example. If we are checking controls, okay, we have to see controls are effective throughout the year. Then population should include sample of all 12 months. You are checking the control of sale, but you took sample of only 11 months, or you took population of 11 months to select sample. What if everything is wrong on 12th month only? So whenever you take population, it should have the units of all the 12 months. Okay, population should be complete. Population should be complete, so auditor can draw conclusion whether control is operating throughout the period. You took data of 11 months. What if controls are failing in the 12th month only? Okay, so population is appropriate. Population should be appropriate for audit objective. When you are checking sales, take the population of sales and not purchase. When you are checking purchase, don't take inventory, take purchase. It should be appropriate for audit objective. Reliable. Information on which sampling is done should be accurate and reliable. Accurate and complete. Okay. If the information is only wrong, sample will also come wrong. So the information upon which sampling is done should be accurate and complete. Easy? Tell me, how should our population be? Like a car. Like a car. Completeness, appropriateness, reliability. One more time. Completeness, appropriateness, reliability. Arey, one last time. Completeness, appropriateness, reliability. Come here. Approaches to sample. There are two approaches: statistical, non-statistical. Statistical, non-statistical. Briefly, I will explain. Maybe you will understand nicest way. What is statistical? Here we use mathematical rules of probability to select the sample and evaluate the result of sample. See, I will use mathematical rules of probability like mean, median, mode. Okay, all such things I will use to select the sample. Okay, there are specialized software which will use mathematical rules of probability to select the sample and evaluate the result. So your sample is more defensible. If tomorrow anyone will tell you used your brain, I will say no, software gave me this sample. It's more objective, more unbiased, because I am not applying my brain. Software is selecting. It's statistical. When there are large number of similar items like sales voucher, similar sales are there, cash voucher, statistical sampling is the best. What is non-statistical? You apply your brain. Here we don't use mathematical rules of probability. We apply our brain. 5 examples. Check last 10 transactions. Check first 10 transactions. Check the entries after 10 p.m. Check the entries passed by CFO. Okay. Check the unusual amounts. Okay. I am applying. Here I cannot say that sample is matching with population because I am using my brain. But in statistical, I will say sample will match with population. Why? Because system is selecting the sample. I am not selecting. So statistical uses probability, but okay, and statistical tool, but non-statistical is based on judgment of auditor. Let me read very easy. Two approaches to sampling. It is an approach that has random selection of sample item, uses the probability theory to evaluate sample result and sample. It's more scientific because it's based on auditors it is more scientific because it's not based on auditor's judgment, but based on mathematical rules of probability. It is used when there are large number of similar items, as I told you, payroll, cash, sales, similar sales. What is non-statistical? Your sample size and its composition depends on experience of auditor. Okay, you will tell last 5 transactions. Let me check after 10 p.m. all entry. Let me check entries passed by CFO. It's neither simple. It is very simple. It's neither objective nor scientific. It is not unbiased, not scientific. Closeness of sample with that of population cannot be said. Why? You cannot say that sample is matching with population because you have applied your brain. Okay. Come here. What is the advantage of statistical sample? Let us understand first. Amount of testing doesn't increase in proportion to increase in population. See, in statistical, if population will increase a lot, sample will not increase that much because it uses probability. It must have captured all combination. So amount of sample size will not increase with increase in population. Sample selection is more objective, more defensible. Tomorrow you can never ever tell any problem is there. It's more objective, more defensible is there. What is more objective? Unbiased. Okay. And more defensible. No one can say that you have done some bias. Why? I will say by software give me this sample. It is a method of estimating minimum sample size with specified risk and precision. I will select small sample size, but still I will get at most precision. Why? Because mathematical rules of probability are there. It gives better description of large mass of data than complete examination. Rather than checking all sample, this will give me better view by checking little sample also. It is a method of taking calculated risk and corresponding precision. I am taking a risk, but the precision, had I checked all also, it wouldn't have made much difference, little difference. So it is a method of taking calculated risk, but I am getting utmost precision. Okay, learn nicely. Advantage of statistical sampling. What's the technique? Pose, pose, pose. Very simple. Amount of testing doesn't increase in proportion to increase in population. So P for population. Amount of testing doesn't increase in proportion to increase in population. Why? Because it's statistical. Oh, sample selection is more objective, thereby more defensible. Oh, sample selection is more objective, thereby more defensible. Oh, clear? It's a method of estimating minimum sample size with specified risk and precision. It's a method of estimating minimum sample size with specified risk and precision. In small size, I am getting full precision. It's a method of estimating minimum sample size with specified risk and precision. E. It gives better description of large mass of data than complete examination. See, large mass of data, I am getting better view. Had I checked all also, nothing great would have happened. It gives better description of large. So P, population, objective, minimum sample size. Okay. E, better description than complete examination. Last one I need to learn. It is a method of taking calculated risk, corresponding precision. Calculated risk, corresponding precision. I am taking small risk, but the precision I am getting is perfect. Had I checked all also, little difference would have come. What are advantage of statistical sampling? Pause, pause, pause. Amount of testing doesn't increase in proportion to increase in population. This is clear. Sample selection is more objective, more defensible. S. It is a method of estimating minimum sample size with specified risk and precision. E. It gives better description of large mass of data than complete examination. It gives better description of large mass of data than complete examination. It is a method. It is a method of taking calculated risk and specified precision. Calculated risk and corresponding precision. Learn nicely, little difficult, but it should be easy. Learn. Small break, 20 seconds. Advantage of statistical sampling. Then, what are advantage of statistical sampling? Amount of testing doesn't increase in proportion to increase in population. Sample selection is more objective, thereby more defensible. S. It's a method of estimating minimum sample size with specified risk and precision. Okay. E, it is better than complete examination of data. It provides better description of large mass of data than complete examination. Okay, had I done complete examination, nothing much have come. It is a method of taking minimum risk and corresponding precision. Calculated risk and corresponding precision. If you don't remember last one also, okay. Okay is question. Okay, first point. Amount of testing does not increase in proportion to increase in population. Understood. Population will increase, but sample size will not increase that much. Sample selection is more objective, more defensible. Third, it is a method of estimating minimum sample size with specified risk and precision. It gives better description of large mass of data than complete examination. Had I checked all also, nothing much would have come. Read nicely, only 4 points. Done? 1, 2, 3, start. Amount of testing does not increase in proportion to increase in population. Sample selection is more objective, thereby more defensible. It is a method of estimating minimum sample size with specified risk and precision. E, it gives better description of large mass of data than complete examination. Clear? Okay. Factors to be kept in mind for deciding extent of checking. How much shall I check? Tell me, shall I check more or less? Depends on this many factors. Factors to be kept in mind for deciding extent of checking. Number one, size of organization under audit. Of course, if it's a listed company, bigger company, more checking. Smaller company, less checking. Adequacy and reliability of books and records. If books and records are reliable, less checking. Otherwise, more checking. What are the internal control? If internal controls are strong, less checking. Okay. Tolerable error range. If I can tolerate lot of errors, less checking. See, tolerable error range means what? How much error you can tolerate. If you can tolerate more error, less checking will be there. Okay. Last, degree of desired confidence. If you want more confidence, more checking. Less confidence, less checking. Factors to be kept in mind for deciding extent of checking. Very simple. Size of organization under audit. Okay. Adequacy and reliability of books and records. State of internal control. Learn 3 points. Size of organization under audit. Adequacy and reliability of books and records. State of internal control. Tolerable error range, degree of desired confidence. Tolerable error range, degree of desired confidence. Tolerable error range, degree of desired confidence. Learn nicely, your time starts now. Clear? Factors to be kept in mind for deciding extent of checking based on sample. Size of organization under audit. Adequacy and reliability of books and records. State of internal control. Tolerable error range, degree of desired confidence. Tolerable error range, degree of desired confidence. Factors to be kept in mind for deciding extent of checking based on sample. Very simple. Number one factor. Okay. Number one factor, size of organization under audit. Adequacy and reliability of books and records. Okay. State of internal control. Tolerable error range. Degree of desired confidence. Okay. Moving on towards next concept. Now we have to study about sample design, sample size and selection of items for sampling. Number one is sample design. Whenever you design a sample, okay, what all things should be there in a sample or what aspects you have to keep in mind. While making a design of sample, what things you have to keep in mind? MSD, our own Thala Mahendra Singh Dhoni. Okay, number one, that's the technique, but let's understand the first. Okay, let's understand it first. Nature of evidence sought and possible deviation or misstatement condition which help in deciding what population to use for sampling. I think the most important concept has come. So listen to it very, very nicely. Okay, let's start right away. Sampling, sampling, sampling. See here. What do you mean by the word deviation and misstatement? Is important? No, because it is very important. Okay, come here, come here, come here. See here. In sampling, whenever we do, there are two things in life: TOC, TOD, TOC, TOD. Whenever we do test of control, and if controls are not followed, it is deviation. Whenever I check the transactions, okay, if I check transactions, if I find mistake, it is known as misstatement. One last time, Okay, in fact, two more times I will speak. Whenever I check controls, if controls are not followed, we call it deviation. But come on the opposite side. Whenever I do test of details, I check transaction. If there is a mistake in transaction, instead of 100 crore, sale is 1000 crore, it is misstatement. Same word is misstatement. One more time shall I speak? Whenever controls I am checking, test of control, if a control is not followed, we call it deviation. But when I am checking transactions and I find a mistake, I call it misstatement. So whenever I am doing test of details, if I find error or fraud, it is misstatement. Okay, but whenever I am checking control, if controls are not followed, I call it deviation. This you have to remember compulsorily last time. Whenever control is not followed, deviation. Whenever I am checking transactions, they are not followed, misstatement. Come here. Nature of evidence sought, possible deviation or misstatement condition which help in deciding what population to use for sampling. Very simple. See, whenever you get evidence, whichever area you find more deviation or misstatement, of course sample you have to take more. Okay, that definitely you have to consider in sampling. Why? To know actual frauds are where. See, so nature of, based on the evidence got, whenever there is deviation or misstatement, if there is deviation or misstatement in purchase, we will do more sampling of that. Why? Because there can be actual mistakes also more. So nature of evidence sought, wherever there is deviation and misstatement, it helps in deciding what population to use for sampling. Example, in February month there are a lot of deviations and misstatement, so I will check maybe all the transactions of Feb. Okay, second, specific purpose to be achieved and combination of audit procedure likely to achieve that purpose. What purpose you want to achieve? I want to check sales cutoff, that April sales are not recorded in March. How to check? I will ask someone inquiry. Okay, then I will check documents inspection. So specific purpose to be achieved and combination of procedure likely to achieve that purpose. And last, expected rate of deviation in case of TOC. I will see the rate of deviation. Is rate of deviation is more, okay, then my checking will also be more to know actual deviations are this much or even more. Understood? Okay. So in sample design, three things to be kept in mind. MSD, Mahendra Singh Dhoni. Okay, number one. M, nature of evidence sought and possible. M, deviation or misstatement condition. Deviation or misstatement condition which help in deciding what population to use for sampling. Second, specific purpose to be achieved and combination of audit procedures likely to achieve that purpose. Expected rate of deviation in case of TOC. One more time. Whenever I make a sample design, I have to keep in mind what? MSD. What do you mean by M? Nature of evidence sought and possible deviation or misstatement condition which help in deciding what population to use for sampling. S, specific purpose to be achieved, sales cutoff and combination of procedure likely to achieve that purpose. D, expected rate of deviation in case of TOC. So whenever I make sample design, no need to learn, but if you can learn, amazing. MSD, nature of evidence sought and possible deviation or misstatement condition which help in deciding what population to use for sampling. Wherever there is deviation and misstatement, I will do more checking. Come to S, specific purpose to be achieved and combination of audit procedure likely to achieve that purpose. D, expected rate of deviation in case of test of control. Learn nicely. Small break, 10 seconds. Chalo. While designing audit sample, what we have to keep in mind? MSD. M, nature of evidence sought and possible deviation or misstatement condition which help in designing what population to use for sampling. S, specific purpose to be achieved and combination of audit procedure likely to achieve that purpose. D, expected rate of deviation in case of TOC. Clear? Okay. Next, this you have to understand. Factors influencing sample size for TOC. In TOC, shall you take, usually we check 25 sample, but shall we check 25, 50, 75, 100? Okay, be it TOC or TOD, answer is same. This is more of an understanding question, no need to learn. Example of factors which help in deciding sample size for TOC or TOD. If you are checking control or you are checking test of detail, sample size should be more or less, depends on this many factors. Last time, Example of factors which help in deciding whether we need to do more checking or less. Sample size for TOC or TOD. Number one, auditor's risk assessment of relevant control. If risk is more, checking will be more. If risk is less, checking will be less. So in whichever area ROMM is more, checking will be more. Okay. Increase in tolerable rate of deviation. If I can tolerate lot of deviations, okay, I can tolerate the mistake, my materiality level is high, then checking will be less. Why? Because I can tolerate deviations. Control are good, right? Okay. Next, increase in expected rate of deviation. If your expected rate of deviation is more, then more checking will be done. Why? To know actual rate of deviation is this much or even more. So if increase in expected rate of deviation is there, more checking to know actual rate of deviation is this much or more. Increase in desired level of assurance. If you want more assurance, more checking will be done. Are you clear? Okay. Why? To get actual comfort. Last point. In case of large population, okay, actual sample size. Population has little effect on sample size. See, in large population has little effect on sample size. Why? Because we are using statistical sample. If they are similar item in little size also, we can get lot of comfort. For small population, sampling is not best method. Why? If 12 transactions are there in a year, what the hell you will do sampling? You only tell me. Only 12, I will check all. Bank reconciliation statement. Over. One more time we will see. Okay. If risk is more checking. If I can tolerate lot of deviation, less checking. Increase in expected rate of deviation means control expected rate of deviation. More checking to know actual rate of deviation is this much or even more. If I want more assurance, more checking. In case of large population, similar item, okay, sample has little effect. Actual size of sample doesn't have much effect. Small population, sampling is not the best method. Might as well check everything. Okay, come here. Now we did sample size, okay, factors influencing sample design, we did sample size, we did. Now sample selection methods. We need to select the sample. How many methods exist in India? Very simple, very easy. Okay, how many sample selection methods are there? Extremely simple. Number one, random sampling. What is random? In this we have two: simple random, stratified random. What is simple random? It is used when there are large number of similar items. In this, we will select the sample from software. In our days, we used to have EY random number generator. So I will enter all the samples in EY random number. EY is Ernst and Young random number generator. I will enter all sample. It will give me check this. Okay. Good method because statistical rules of probability it will use. More scientific, more objective. Okay. But it is to be used when there are large number of similar items. Or we can also take a drum. Okay. Take this. In this, put all cheats, okay, and select the cheat whichever you want, or you can select a drum. So here all sample have equal chance of getting selected. There is no bias. It uses statistical rule of probability over. See here. In this, we'll choose number from computer or pick number from drum. Very simple, very easy. It is to be used when we have similar items. So simple. Come here. Stratified sampling. When our population has different characteristics, okay, then we divide whole population into small stratum which are known as group. Select the sample from each stratum and then you can project it with population. Each stratum is a different set of population. Here I cannot take common sample. From each group which is called a stratum, I will select a sample and then conclude how our population will be. Okay. When it is to be used, when population has different characteristic. Example, I am doing sales in 4 countries: Germany, Australia, France, Mexico. Then this is the best method because it will cover characteristics of all 4. Let me read. In this, population is divided into group called stratum. Each stratum is treated as a different population and proportionate of items are selected from each stratum. How many groups you have to make, that depends on auditor's judgment. How many stratums depends. Okay, from each group I will pick the samples and project it to population. Here I cannot pick common sample and project. I need to, each stratum is a separate set of population from which I will select the sample and then project it to population. So 2. If similar items are there, random sampling. If different characteristics are there of sample, okay, sample are of different types, then I will follow stratified sampling. Come to interval sampling. What is interval? Here every interval I will check. What's the formula for this? Total population upon total sample size. Check it out. See here. Example, 10,000 are total number of sales item. Total number of sales voucher in a year are 10,000. Okay. Okay. And how many I want to check? I want to check 1,000. Out of 10,000, I want to check 1,000. So every 10th I will check. Okay. If I check first, then 11, then 21, then 31, then 41, then 50. Every 10th. What is the formula? Total population upon sample size. 10,000 item I want to check 1,000, so every 10th I will check. Okay, but here there is one problem. See, if I check every 10th, then I will check 10, 20, 30, 40, 50, 60. If population is arranged in a certain way, then this is not the best method. Let me take an example. 1 to 5 voucher are of Chennai, 6 to 10 are of Coimbatore. 1 to 5 Chennai, 6 to 10 Coimbatore. 11 to 15 Chennai, 15 to 20 Coimbatore. 21 to 25 Chennai, 26 to 30 Coimbatore. Now I am 10, 20, 30 means by mistake or by default, I am checking Coimbatore only again and again. So whenever population is arranged in certain way, what we do? We pass entry 1 to 5 Chennai, 6 to 10 Coimbatore, okay, then 11 to 15 Chennai, 16 to 20 Coimbatore, okay, 21 to 25 Chennai, 26 to 30 Coimbatore. By default, I am checking again and again only one thing: Coimbatore, 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 Coimbatore. Are you clear? So if population is arranged in certain way, this is not the best method. But what's the solution for this? Okay, every month you can have different starting point. This month I will start from 6, next month I will start from 4, next to next month I will start from 3. Then this problem can be solved. Easy? Okay, read. In this, number of sampling units is divided by sample size. Although starting point is haphazard, sample is random if we use random number table. This method is effective only when population is not structured in a proper way. If it's structured, then this is not nice method. But solution I gave for that also. What I gave? I told you very simple. Every month have different starting point. Okay, next, monetary unit sampling. Here I will arrange all the samples amount wise. Okay, so higher to lower value. Arrange all sample higher to lower value. Okay, so check first 20% sample. If we take 20% sample, it might have 80% value. 20% sample will have how much? 80% value. Good, no? If you're checking 20 and getting 80, amazing, mind blowing, excellent. Okay, see here in this sample selection, their results are in monetary amount. Okay, so I will select monetary. Arrange all samples amount wise. Okay, check first 20% sample. If they cover 80% value, amazing. Haphazard sampling. What is haphazard? It is not statistical sampling. Your auditor will apply his mind. Okay, that check first 10 voucher of March. Okay, check last 10 voucher of April. He will tell. Okay, check all entries after 10 p.m. Check all entries passed other than PC number 6, because from PC number 6 we pass entry. Okay, random rules I will use, just my brain. Your huge bias is there. We cannot say that sample will match with population. Why? Because we are using our bias, we are using our judgment. In this, auditor selects without any technique. Sample is selected without any bias. All items have equal chance of selection. It is not appropriate when we use with sampling, statistical sampling. Come here. Last is block of sample. What do you mean by block sampling? Here, entire population is divided into block of 50, 50, 50, 50. So 1 to 50 is one block, 51 to 100 another block, 100 to 150 third block, 150 to 200 another block, 200 to 250, 250 to 300. So entire population is divided into block, 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 block. So I will check a few blocks. Okay, let me check 100 to 150. Then I will check what? 250 to 300. Block means that block. Okay, then I will check 300 to 350. But what's the problem here? All population in block or all samples will have similar characteristics. From 150 to 200 will have similar characteristics. Okay, so I am checking the same item again and again. I cannot say in block that sample matches with population. That's the problem. See here, if we have I don't think we have. Okay. I hope you understood. Block, nothing great is there. Okay. Here, block of items are there. 1 to 50, 50 to 100, 100 to 150, 200 to 250. Block, 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 block. I will check a few blocks. It is good in only one situation. When seasonal business is there. Example, mango, umbrella. Here, if we check the block of what? For example, mango season. April to July block we check, almost 90% covered. Okay, so your block, entire population is structured in block of 50 or 100. I will check a few blocks, but the problem here is block will have similar characteristic. From 50 to 100, sample will be similar only. That's the problem. Selection of block, it is not effective because items in block have similar characteristics compared to as well. What if the mistakes are in December and you check the February block? Okay, it is not effective when we want to draw conclusion about entire population. So how many methods we learned in sample selection? Number one, random, simple random, stratified random, simple random, stratified random. Second is what? Interval sampling. Third is what? Monetary unit sampling. Fourth is what? Haphazard sampling. Fifth is block sampling. One last time shall we speak? Okay, 1, 2, 3, 4, get on the dance floor. Okay, number one, come on. Which? Random has two methods: simple random, stratified random. Simple random, stratified random. Then interval sampling. Third, monetary unit sampling, haphazard and block. Come here now. Very simple. Okay, last two in 5 minutes we shall complete. Perform audit procedure. Now we will do audit procedure. On whichever item we selected as a sample, I will do the audit procedure. Okay, if I cannot do on that, I will do it on replacement item. Let me take an example. I am checking bank payment. By mistake, cancel check came. I will check another bank payment. Simple, no? Another example. I am checking sale. By mistake, scrap sale came. I will check another sale. So I will do audit procedure on selected item. If not possible, I will do it on replacement item. If I cannot do the audit procedure on that item, I will do on replacement item. If I cannot do that procedure, I will do alternative procedure. Alternative. If I cannot do alternative also, then it is deviation if we are checking TOC, test of control. And it is misstatement if we are checking test of detail. Very, 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 very important. One last time. If auditor is not able to do one selected item, I selected payments, okay, cancel check came, I will check another. We will do it on replacement item. I am checking sale, scrap sale came, replacement. If auditor is unable to apply procedure, we will do alternative procedure. If I cannot check sale, I will confirm from customer, has he received? We will check alternative procedure. If we cannot do that also, it is deviation if we are checking control. If we are checking misstatement, sorry, TOD, test of detail, it is a misstatement. Last time, come here. Very simple, very good, amazing summary. Okay, I will do it on selected item. If I cannot do, I will do it on which item? Replacement item. If I cannot do designed audit procedure, I will do alternative procedure. Okay, if I cannot do that also, if we are checking control, it is deviation. If we are checking test of detail, it is misstatement. I hope you are clear. Super clear, sir. Go ahead. Okay, come here now. I will analyze the nature and cause of deviation and misstatement. When is it a deviation? If it is TOC. When it is a misstatement? If it is test of detail. Okay. I will analyze the cause of deviation and misstatement and see, does it have a common feature? While I analyze the deviation, while I analyze the misstatement, I will see, does it have a common feature? What is the meaning of common feature? If there are mistakes, okay, does it have common feature? Like the mistake has happened in purchases. It has happened whenever I do purchase from Baroda. It has happened whenever we purchase from Rameshwar Corporation. So Rameshwar Corporation, Baroda mistake in the month of February. Then I will check all the items that have similar characteristic. We will check all items of the February month for Rameshwar or full year Rameshwar to know whether it is a fraud. Whether it is a fraud. Read English. In analyzing deviation or misstatement, I will see whether it has a common feature. Example, type of transaction, location, product line, purchase transaction is there. In Baroda, okay, C product. In such circumstances, I will check all items that have similar characteristic to know whether it is a fraud. Okay. In addition, we will also check it is a fraud. In case deviation or misstatement has happened only once, then we call it anomaly. Anomaly. By mistake only once. Example, you were checking withdrawals and in one withdrawal of 7 lakh rupees, there was no sign. So you said these controls are broken, deviation is there. While checking withdrawal, in one small withdrawal, there was no signature. So you directly went, sir, no signature is there. What is this? What is this? No signature. This is deviation, fully deviation. Sir, understand, Mr. Rajesh is there. How you know? You did fraud together. Okay, 7 lakh withdrawal, no signature, deviation. Sir, that day he had his his mother had COVID. So suddenly we had to give him 7 lakh. He is our employee since 23 years. Mr. Rajesh is production head. At that time, we will not take sign of CFO. CFO himself gave the money. He is CEO's favorite. If Mr. Rajesh is not there, whole factory can come to hold. At that time, we don't follow all procedure. Forget control. Mom is more important for Mr. Rajesh. Okay. So at that time, if you want, we can take sign right now. It's one of a mistake. Try to excuse us. Okay. In case misstatement is an anomaly. What is anomaly? One of a time. Okay, we will obtain high degree of certainty that it doesn't affect entire population, and it is really anomaly. What is anomaly? Exception has happened only one time. So one last time, whenever we find deviation misstatement, divide into two parts. Okay, if it has common characteristics, check everything that has such characteristics. Check all the transactions to know whether it is a fraud. If it is an anomaly, okay, do sufficient and appropriate work to establish that it has happened only once. Clear? Very good. Now I will project it. Listen very nicely, okay? Come here. I don't think this all is a part of book now what we are discussing for 5 minutes, but it's very important to conclude the topic nicely. It was given in old syllabus. If you study full topic and don't conclude, what's the use? Come here. I have to project the misstatement. Okay. First, let me take the easy part. Test of controls. In test of control, if control are not followed, what do we call? Sir, in English, we call it deviation. What do we call? Deviation. There is no projected rate of deviation. Sample deviation rate is only projected deviation rate. Are you clear? There is no explicit projected rate of deviation here. Okay. See, example, I checked how many sample? 10. If 2 did not have controls, so 20% is what? Projected rate of deviation. That is only sample deviation rate is 20%. That is projected rate of deviation. One more time. I have to project the mistake. Okay. I check 10 transaction. In that, in 2 controls were not followed. So sample deviation rate is how much? 20%. 20% samples deviated. We did not follow control. That is projected rate of deviation because it's control. If control are not followed for 2, take 10,000 voucher. It will remain same. There is no projected rate of deviation. Sample deviation rate is only projected deviation rate. Clear? Come here. Now we are checking TOD. Now you will ask me, what is TOD? Test of details. What is TOD? Test of details. Are you clear? In test of details, divide into two parts. There is misstatement. Whenever we follow test of details is not followed, it's a misstatement. Divide into how many parts? Two. Anomaly, non-anomalous. Anomalous, non-anomalous. Anomalous, non-anomalous. Okay. Come here. What do you mean by non-anomalous? Regular mistakes. Okay. Projection of misstatement in sample to that of entire population. I will project the misstatement in sample to entire. Listen very nicely. Sample. First of all, TOC is done. TOC you understood. Come here. Sample deviation rate is projected deviation rate. Ultra attention required for 10 minutes or 5 minutes. TOC. Out of 10, 2 sample not followed. Sample deviation rate 20%. That is projected deviation rate. Understood, sir. Now come here. We are talking about test of detail. TOD. One more time. Test of detail. TOD. In TOD, what will come? Misstatements. Divide into two parts. Okay. Is the misstatement one of a misstatement? It's anomalous. If it's not one of regular, it's non-anomalous. Okay. So, regular. Project the misstatement in sample to that of population. How to project? Come here. Out of 10 lakh, there is a mistake of 10,000. So, in 100 crore, it will be how much? Non-anomalous means regular. Project the mistakes in sample to that of population. When we check 10 lakh, we found mistake of 10,000. In 100 crore, it will be this much. One last time, in 10 lakh, it was 10,000. In 100 crore, it will be this much. Okay. We will project the misstatement in sample to entire population. Come here. If anomalous are there, one of a time, tell them to correct it first of all. Management, please correct this mistake has happened, take a sign. If they don't correct, I will add it to projected non-anomalous misstatement. Okay, understood? Yes, sir. So total misstatement will be what? Projected non-anomalous misstatement plus uncorrected anomalous misstatement. Anomalous is one of a mistake. We will tell them to correct. If they don't correct, I will add that also. Clear? Projected misstatement is what? Projected non-anomalous misstatement plus anomalous uncorrected misstatement. Clear? Yes, sir. Okay. Now last point. I will evaluate the result. I will evaluate the result. Okay. 1, 2, 3, start. Almost the last question and we are done. Okay. So this is over. Nothing to read here. Don't worry at all. Okay. Come here. Now, finally result. TOC, test of control. Very simple. If there is high sample deviation rate, means in lot of sample, control are not followed. High sample deviation rate means what? In lot of samples, control are not followed. Control risk is high. See, high sample deviation rate means what? In lot of samples, control are not followed. Control risk is high. If control risk is high, ROMM is high. You will tell me how? IR into CR is ROMM. So if control risk is high, ROMM is high, I will do more substantive procedure. Very simple. If ROMM is high, more substantive. In those substantive, TOD more. One last time. If there is a high sample deviation rate, means in lot of samples, control are not followed. Yeah, understood. Okay. If control are not followed, control risk is high. If control risk is high, IR into CR is ROMM. Okay, increase in risk of material misstatement. If risk of material misstatement is high, substantive will be more. Come here. In TOD, little tough. Listen nicely. Projected misstatement are two things. Projected non-anomalous misstatement plus uncorrected anomalous misstatements here. Projected misstatement plus anomalous uncorrected. If it's greater than or equal to tolerable misstatement, this much I could have tolerated. But if I feel projected misstatement plus anomalous uncorrected misstatement are more than my tolerable misstatement, there is a sampling risk. There is a sampling risk and actual misstatement can also be more than tolerable misstatement. There is a sampling risk that actual mistake can also be more than tolerable. Okay, we will request the management to investigate for further misstatement. Management, please tell us, are there further misstatements? Or and also change nature, timing and extent of audit procedure. We will do more audit procedure to see actual misstatements are this much or even more One last time, see, whenever projected misstatement, it has two things. Projected non-anomalous misstatement plus anomalous uncorrected is greater than tolerable misstatement. We tolerated this much, but it's greater. Projections are coming greater. There is a sampling risk. Actual misstatement can also be more than tolerable misstatement. Okay. Second, we will request management to investigate for further misstatement and change nature, timing, and extent of audit procedure. Do more substantive to find out exact misstatements. Are you clear? Perfect. Last portion may not be there, but no problem. We should know full knowledge. I hope you are clear. Till now, 3 essays are over. Essay 500, audit evidence. Essay 520, analytical procedure. Essay 530, audit sampling. Now, small essays are pending. Be rest assured. Can we start? Yes, sir. Come to next. Essay 501. Audit evidence, specific consideration for selected item. Okay. In audit evidence, what are specific things for selected items? There are a few selected items. Okay. Whenever, see, audit evidence, normally we follow which essay, you will tell me? Essay 500, the best one. In audit evidence, the best essay is essay 500. Okay. But when there are complications in certain areas, I don't know how to get evidence. Okay. I feel, can you guide me a little? Normal areas are there, essay 500. But if I have little doubt, I don't know how to get evidence in this area, these are special items, then essay 501 will come. Audit evidence, specific consideration for certain items. Okay. 3 items are there. Existence and condition of inventory. I want to know inventory exists or not. How to know? Physical verification. Sir, why condition of inventory is important? For valuation of inventory. Okay. So based on that, we will find value. If condition is bad, we will downgrade the inventory. Value it at NRV. That is why. Okay. Second, completeness of litigation and claim. Company is showing 8 cases are there on company. Are there only 8 or even more? Last, presentation and disclosure of segment information. Reliance has several segments, okay? Geo Finance, Refinery Business, okay? Geo Mart is there, okay? Agio is there. So they have to see, are all segment information properly presented as per AS 17. So here, okay, objective is to get sufficient and appropriate evidence for 3 areas: existence and condition of inventory, okay, a completeness of litigation and claim, presentation and disclosure of segment information. All super easy, be rest assured. Number 1, existence and condition of inventory. Can we start? Yes. When inventory is material to the financial statement, auditors shall obtain sufficient and appropriate evidence. See, whenever inventory is material and you want to see whether it exists or not, okay, inventory is very much material, you want to see whether that exists or not. Attendance at physical inventory counting, you will do the attendance. Management will count. Go there, attend the attendance. If you are able to see all inventory is there, existence will be superb comfort. Attendance is observation, okay. Whenever inventory is material to the financial statement, what you will do in real life, okay, you will do attendance at physical inventory counting. There will be physical inventory counting at year end. What you will do that? Ask management. Management will count. You have to see. Number 1, as soon as you meet management, okay, they will tell, evaluate management instructions and procedure for recording and controlling physical inventory counting. Management will give you lot of instructions, lot of procedure, what to do and what not to do, okay. Example, management will tell you, sir, today specially we have done 5 things for you. I said, sir, what 5 things? Number 1, we have kept the production facility closed today, so there is no confusion. Second, we have kept the dispatch facility also closed today, okay. Third, we have not called one shift today, the second shift, because you will be counting the inventory. Plus, we have made this extra arrangement. So whenever you go there, number 1, evaluate the management instructions and procedure for recording and controlling physical inventory count. Has management given any instructions and procedure for controlling? Second, observe the count procedure. They will count, okay. You just have to observe. Third, inspect the inventory. What is inspect? Floor to sheet or sheet to floor. What is floor to sheet? Many times, what you have to do, sir, where is this inventory? Verify with the sheet. Or you can also go from sheet to floor. Sir, this 7th page, this inventory is there. Please show me. Sir, this is here. Okay, okay, okay. Inspect the inventory. Perform test count. You also count sometimes, so you get more comfort. So whenever inventory is material, 4 points are there to check existence and condition. Number 1, attendance at physical inventory counting. Okay, what you have to do that? Number 1, as soon as you go, management will give you instructions. Okay, that we have stopped production, we have stopped sale. Evaluate the management instructions and procedure for recording and controlling physical inventory counting. Evaluate the instructions and procedure for recording and controlling the count. Second, observe the performance of count. They will count. You have to observe. Third, inspect the inventory. Check the inventory either from sheet to floor. Floor means wherever inventory is kept. Or reverse also you can do from floor to sheet. And perform test count. You do some test count. In the end, see, the records are matching with entities record. Whatever in physical verification you have done or you were just there, is it matching with the books or not? In physical verification, this much inventory. In books, different. Have you adjusted the same? Read nicely. Simple. Attendance at physical inventory counting, 4 point. Number 1, as soon as you go there, evaluate management instructions and procedure for recording and controlling physical inventory counting. Second, observe the performance of count procedure. Third, inspect the inventory. Fourth, perform test count. Small break, 5 seconds. Done. Tell me, whenever inventory is material to the financial statement, what we will do? Okay, attendance at physical inventory counting. In that, number 1, as soon as you go there, evaluate management instructions and procedure for recording and controlling physical inventory counting. Now observe the performance of count procedure. Perform. Third, inspect the inventory. You can check it from sheet to floor or floor to sheet. And last, perform test count. In the end, see the results are matching with the books of accounts. If not, do the adjustment. Come here. Nice question. Two question here, only this question we have to learn. Rest questions are okay. If by mistake this standard comes, this can come. Rest are understanding based question. Matters relevant in planning attendance at physical inventory counting. Whenever you want to plan attendance, see, when you went there, 4 points are there. But before going there, okay, there will be a manager who will give you instructions. Okay, before going anywhere, there will be a manager who will give instruction. These things you have to check. Matter relevant in planning attendance at physical inventory counting. You have not done counting that. Planning, okay. Planning is done, tell me, at the time of going or before? Before. Matters relevant in planning attendance at physical inventory counting. You want to do physical inventory counting, agreed. But before that, what is required? Planning. What are the matters relevant in planning attendance at physical inventory counting? Can we start? Yes. Number one, location at which inventory is kept, including materiality of the location. Number one, see what will manager do? He will see how many locations are there. Total 12 locations are there, but 3 locations only contribute 90%. So we will decide we will go to only 3. Okay. So plan. See, before going there, we need to do plan. Number one, what we see? Manager will see locations at which inventory is kept, including materiality. If 3 locations cover 90%, why the hell should I check all? Second, whether procedures are to be issued for physical inventory count. What procedure? Go in the morning only. Finish before 3 o'clock, because after that flight is not available. Okay, or conditions will be very hot after that. Okay, so whether procedures are to be issued. 2 points are over. Third, nature of inventory. See, nature means 3 type of inventory is there: RM, WIP, FG. RM and FG, though no tension, you can easily count. This is raw material, this is finished good. WIP, you are not a champion. Why? How much work is done? How you will know? See, raw material, finished good, we can know, we can easily count. But how you will know how much work in progress is done? Okay, example, you are checking windmill. 30% windmill is done. You will never know because you are not champion. So WIP is tough. So that is why it is given stage of completion of WIP. Okay, nature of inventory, in that only one is tough. Okay, stage of completion of WIP. Next, nature of internal control related to inventory, ROMM related to inventory. If internal control is weak, ROMM is more. Nature of internal control related to inventory, risk of material misstatement relevant to inventory. Timing of performance of count procedure, during the day, during the night, during the afternoon. If you have to cover 2 locations, you need to plan very nicely. Okay, in one day. Why, sir? Articles are not that much. Plus, we need to count on 31st March or 1st April morning. Only 2 options are available. So we need to plan everything. Timing of performance. Whether you maintain perpetual inventory system. What is perpetual inventory? On the spot update. As soon as sale is done, update. Sale is done, update. Purchase, update. Then some people maintain at the end of the day system. They will update at the end of the day, end of the week. In perpetual, automatic updation is there. Assistance of expert is needed. Is it a gas inventory? Then we need expert. Okay. Is it a different kind of inventory? Okay. Coal mines is there. We need an expert. Okay. So expert is needed or not. Why? We need to tell expert before only. Okay. So learn nicely. Matters relevant in planning attendance at physical inventory counting. Whenever you do physical inventory counting, what factors you need to keep in mind? This many. Very, very simple. First 2 points remember. Location at which inventory is kept, including materiality of inventory. You have to see locations at which inventory is kept, including materiality. Whether any instructions and procedure are to be issued for physical inventory counting. 2 points done. Location at which inventory is kept, including materiality of inventory. Number 2, okay, whether any instructions and procedure are to be issued for physical inventory counting. 2-second break. Then come to next. Nature of inventory. In that RM and FG, no tension. Stage of completion of WIP. WIP tension. Read. 2 points. Done. Okay, next. Nature of internal control related to inventory. If that is weak, ROMM related to inventory. Both are related. Nature of internal control related to inventory. ROMM related to inventory. Over. Done. Now last 3. Timing of performance of physical count. Timing of performance of physical count. Okay, last two, whether entity maintains perpetual inventory system, assistance of expert is needed or not. Very simple. Timing of performance of physical inventory counting, whether entity maintains perpetual inventory system, assistance of expert is needed or not. Very simple. Timing of performance of physical inventory counting, whether entity maintains perpetual inventory system, assistance of expert is needed or not. Learn last 3 points. Done? Now, nicely we will speak and you will tell me you are able to remember 5-6 points enough. Okay, matters relevant in planning. See, when we go there, 4 points, but before that, planning is done. Okay, matters relevant in planning, the attendance. Very simple. If you were the manager, you will check all location at which inventory is kept, including materiality of location. Before going to location, whether any instructions and procedure are to be issued for physical inventory counting. Second, when you look at the sheet, nature of inventory. In that very important stage of completion of WIP. Okay. Now, two more points. Nature of internal control related to inventory. If they are weak, risk of material misstatement relevant to inventory. Timing of performance of count procedure. Okay. Whether entity maintains perpetual inventory system. Whether assistance of expert is needed or not. So simple. One more break, 10 seconds. Learn nicely. Done. One, two, three, start. Okay, let us start. Okay, can we start? Matters relevant in planning, attendance at physical inventory counting. Number one, location at which inventory is kept, including materiality of location. Whether adequate procedure and instructions are to be issued for physical inventory counting. Nature of inventory. In that, what's hard? Stage of completion of WIP. Okay. Nature of internal control related to inventory. If they are weak, okay. Risk of material misstatement relevant to inventory. Timing of performance of count procedure. Okay. Then, whether entity maintains perpetual inventory system, assistance of expert is needed or not. Come here. Physical inventory counting is done at a date other than the date of the financial statements. Okay. So if you do inventory counting on some other day, example 31st March, you had a lot of assignments or you cannot go on that particular day. If you go on any other day, then what to do? Auditors shall obtain sufficient evidence that the difference between the count date and the date of financial statement is properly recorded. Very simple. See, if you cannot go on 31st March, you went on 3rd April. Any reason, COVID was there, flight got cancelled, you had other assignment, okay, then what you will do? As soon as you went on 4th April, you have to go just reverse. Usually what we do, opening stock plus purchase minus closing stock. Okay, reverse you go. Here you did, okay, do purchase minus sales plus purchase minus sales plus, you will get 31st March. Okay, so 4th April you do stock count minus purchase plus sale, you will get of 31st March. Difference between count date and date of financial statement. If that 31st March is matching, still comfort is at high level only. That is what is written. Auditor shall perform procedure to see difference between count date and date of financial statement is properly recorded. Come here. Auditor is unable to go only. If you are unable to go, he shall do it on alternative day and perform audit procedure on other transactions. Okay. If you are unable to go, okay, then take any other date. Take in May, take in 15th April, anytime you can do and do alternative procedure. Same what we explained. Come here. If it's impracticable to go, then we will do alternative process. Impracticable, you cannot go only Naxalite area, client is not allowing. Any reason can be there, we don't know. Naxalite area, client is not allowing, strike is there. Okay, auditor shall perform alternative procedure to get sufficient and appropriate evidence. What is alternative procedure? Last year you did stock take. Okay, so that was the opening stock. In opening stock, add all purchases minus all sale. If it is matching with closing stock plus sales of that closing stock is done in the month of April and May. Sufficient evidence is that it's perfect. Okay. So last year's stock you had taken, add to it purchase minus sale, matching with closing stock. Plus that stock is sold in the month of May, okay, June, then good. Okay, auditor shall perform alternate procedure to get sufficient and appropriate evidence. If you cannot go only, alternate procedure. If not possible, modify the opinion. Modify the opinion. If inventory is with third party, some are saying if inventory is kept with third party, auditor shall request confirmation. If you have kept in friends, go down. Auditor shall request confirmation from third party regarding existence and condition of inventory. Perform inspection and other procedure. If your friend can go there, okay, or if you can arrange some staff there, go there. Perform inspection and other procedure. I hope it's easy. If inventory is kept with third party, auditor shall request confirmation from third party regarding quantity and condition, perform inspection and other procedure. So I hope you are clear. Number one, proper checking. Number two, if you cannot go on the balance sheet date, difference between count date and the date is properly recorded. Okay. If you cannot go only, try to do alternative procedure, otherwise modify the report. Or if it's third party, say. Now come to second point, litigation and claim. To know all the court cases are properly shown or not. Okay, auditor shall perform audit procedure to identify litigation and claim that give rise to material misstatement. Okay, how to know completeness of litigation and claim? You tell me without saying. You want to know total number of cases are perfect or not. How to know whether company has shown all cases in contingent liability or in provision. Okay, to know about litigation and claim completeness. Number one, inquire with management and in-house legal team. Ask management, sir, 7 cases are there. Are there really 7? Legal counsel, in-house legal team. Inquire with management, in-house legal counsel. Second, review legal expense account. Ledger account is their legal expense. In case any new fees you have paid, sir, these fees you have paid to Kapil Sibal. Where is the case? That case to we lost. Then show it, sir. Who will show provision? Okay, sorry, sir. We will show. Number one, inquiry with management, in-house legal counsel. Second, review legal expense account. Third, review the minutes of those charged with governance. Okay, big people minutes you see. Okay, and correspondence between entity and external legal team. If any talk is there, you will try to find out this case was new. Then why are you not showing in contingent liability? Very simple. In order to know completeness of litigation and claim, only 3 points. Inquire with management and in-house legal team. Second, review legal expense account. Okay, read the minutes of meeting of TCWG and communication between entity and external legal counsel. Simple. Learn nicely. IRR method is there, no? FM, IRR. Very simple. Inquire with management and in-house legal team. Okay. Second, review legal expense account. Third, review the minutes of those charged with governance and communication between, okay, entity and external legal counsel. Simple. Okay. Come here now. If auditor assesses there is ROMM regarding litigation and claim, there is risk of material misstatement. It means either more cases are there, management is hiding something, or we feel they are showing the case as contingent liability, but it should be provision. Now you will tell me when it will be provision. If more than 50% chance is there of losing, we show it as provision. If less than 50% chance is there, means we can win. Losing chances less than 50%, we show in notes to accounts as contingent liability. If you don't know, I am telling you. If there is ROMM or audit procedure indicate litigation or claim exists, if you feel there is risk of material misstatement, management is hiding anything, there could be more case, or maybe we can lose the case, we can also communicate with external legal team. Okay, directly communicate with legal team. If law, regulation, or their body, see, their bar council tells not to communicate because of confidentiality, the bar council of lawyer will tell not to communicate, then auditor shall perform alternative procedure. If their bar council doesn't let us communicate, what's alternative? Maybe take confirmation from them, written confirmation. Okay, if auditor is unable to communicate, he can also modify the opinion. Obtain, in the last, obtain WR from management. Okay, that all legal cases are disclosed. This anyways we will obtain. Okay, So very simple. See, if there is ROMM, what we will do? Okay, try to communicate with external legal counsel through letter of inquiry. If we are unable to communicate, we may also modify the opinion. Last, take WR from management regarding completeness of litigation and claim. We can also meet the legal counsel in three situations. When we can meet? When it's a significant risk. This is a very important going concern. Maggie, lead was found in Maggie. Maggie was done lead. It could affect the brain. Maybe Maggie company would be closed. Okay. Auditor determines it's a significant risk. Two, the matter is complex. There is disagreement between management and legal counsel. Management is saying we'll win the case. Legal counsel is saying we'll lose the case. Whose side you have to take? You have to be unbiased. Okay, maybe support legal counsel more. He knows law better. Okay, so when we will meet in three situations, it's a significant risk. Matter is complex. There is disagreement between management and legal counsel. But whenever you meet, such meetings are with management permission and are held with representative of management. Okay, so you have to remember this also. Okay. In three situations, we'll meet the legal counsel. One, two, three, start. Come on, everyone. Let us rock. Number one, there is disagreement between management and legal counsel. S. Auditor determines it's a significant risk. Okay. The matter is complex. Matter is complex. Three cases. D, S, C. In three cases, we have to meet also. There is disagreement between management and external legal counsel. Okay. The matter is a significant risk. Matter is complex. Matter is complex. Very simple. Mostly when going concern is affected, you have to show true picture to shareholder. So you need to meet also at that time. Okay. Very simple. Tell me. The auditor has to meet legal counsel in three situations. D, S, C. D. There is disagreement between management and legal counsel. Okay. The matter is a significant risk. Matter is complex. Matter is complex. Such meeting require attendance of management. Okay. One person of management should be there. Last. Segment information. What is segment? Reliance has several businesses. Okay. So we need to show all the business. AS17. I hope you know. Auditor has to obtain sufficient information that presentation and disclosure of segment is as per financial reporting framework. What you will see. Number one, understand the method management uses in segment information. Ask management, sir, how you have done segment reporting? Can you please guide us? Please tell me no. How you have done segment reporting? They are like, sir, we have followed. These two girls are there. They identify how segment reporting is done. Okay, understood. Second, do analytical procedure. Roughly, you also know Reliance business. See, they are showing 70% revenue is coming from a refinery. Okay, 10% is coming from Ajio. Okay, analytical. Okay, number one, understand the method the management uses in segment information. Second, perform analytical. Okay, so you have to see segment information is as per FRF. Two simple points. Number one, understand from management procedure it uses for doing segment reporting. Second, you do analytical. Are the procedure good or not? Very simple. SF 501 over. What is the meaning? Okay, three condition it covers: existence and condition of inventory, completeness of litigation and claim, presentation and disclosure of segment information. Now we are moving on to the next essay, which is essay 510. Initial audit engagement. How to remember this? First of all, essay 510. Initial audit engagement. Very easy, very simple essay, 10 minutes only. What is the initial audit engagement? First time we are doing the audit, okay? Or two situations. If last year audit was not done by us, or last year audit was not done only, okay? Initial audit engagement are those engagement in which last year audit was not done or it was done by another auditor. So for us, it is the first time. Initial audit engagement, we have to check opening balance also. Why? Because opening plus during the year is closing. Though you are giving the opinion at the end of the year, but how is end of the year formed? Opening plus during the year is closing. So I need to check the opening also. Of course, if it's an initial audit engagement, what is the initial audit engagement? Last year audit was not done, or it was done by another auditor. The fees will of course be higher. Why? Because I am checking the opening balance also. Last year audit was not done, or if it was done by another auditor, my friend only, but still I need to check. So fees will be higher because we are not only checking current year, we are checking opening balance also. Understood? Yes, sir. Initial audit engagement. How to remember? SA 510. Initial audit engagement. 10 engagement. 10 N is there. SA 510. Initial audit engagement. This silly logic only will help you to remember the name of SA. SA 510. Initial audit engagement. Are those essays in which last year audit was not done? Are those engagements or those client in which last year audit was not done, or it was done by any other auditor? Here we have to check two things. Number one, okay, objective of auditor regarding initial audit engagement, whether opening balances contain misstatement that materially affect the current period financial statement. First thing you have to check, are there misstatement in the opening balance? Second thing, appropriate accounting policies are there in opening balance. Okay, and appropriate accounting policies means as compared to last year, accounting policies are consistent. That is the method of depreciation, method of inventory. If you have done any change in the method, if there is any change, effect is properly accounted, presented, disclosed. Accounted, presented, disclosed. Clear? Okay, come here. Audit procedure regarding opening balances. First of all is what? First, you have to check. See here, we have to check two things. Number one, opening balance and accounting policies are consistently carried from last year. If there is any change, the effect is properly accounted, presented, disclosed as per what is written in AS. Example, there is change in method of depreciation. Effect is properly accounted, presented, disclosed. So here two things. Number one, opening balance and accounting policy. Of course, only opening balance can come. Accounting policy, nothing much is there, so it won't come. Come to opening balance. Audit procedure regarding opening balance. Auditor shall read the most recent financial statement, if any. Read the most recent financial statement or predecessor auditor report, means last auditor report regarding opening balance. So you have to read the most recent financial statement or last auditor report. First point, determine whether prior period closing balance is correctly brought forward as opening, last year closing is correctly brought forward as opening. If not, adjustment is shown in prior period item. If not, adjustments are shown as prior period item. So first point, determine whether prior period closing balances have been correctly brought forward as opening balances. Okay, and any adjustment is shown as prior period item. If not brought forward, adjustment is shown as prior period item. 2, determine whether opening balance reflects true application of accounting policies. In opening balances, all the accounting policies are perfect, same as last year. Third, perform one or more of the following. Where last year audit is done, take the copy of audited financial statement. If last year audit is done, take copy of audited financial statement. Evaluate whether procedures performed in current year give evidence about the opening balance. See the procedures which are done in current year. Sir, you will ask me what are the procedures done in current year, give evidence. See, if debtor balance is there, you are receiving the money from debtor, it means the balance is true. If you are making the payment to creditor after balance sheet date, means creditor balance is true. See the procedures performed in current year, give evidence about opening balance. If they don't give, perform specific procedure. Third point, perform specific procedure to get evidence about opening balance. You will ask me what is a specific procedure? Very nice, very amazing. As soon as you are appointed on 1st June, let's take an example. On 1st June, you'd have to do stock count. Do the stock counting on 1st June. You did stock counting. Okay, go little reverse. On 1st June you did stock counting, go little reverse. 1st June stock count minus purchase plus sale, is it matching with 31st March? Perfect. Okay, specific procedure, do stock count when you were appointed, minus purchase plus sale, if it is matching with 31st March, you have wonderful support about opening balance. Okay, if auditor feels opening balance is a misstatement, auditor will perform additional procedure to find out exact misstatement. If you feel opening balance is mistake, do more procedure to find out exact amount. If auditor concludes misstatement exists in the current period financial statement, we will tell management to correct. If they don't correct, tell TCWG to correct those charged with governance. What if they still don't correct? We will see later. Understood? Very simple. This question is the only question which can come in this standard. Audit procedure regarding opening balance. 3 points. Number 1, determine whether last year closing balance have correctly been brought forward as opening balance. If not, effect is shown as prior period item. 2, determine whether opening balance show true reflection of accounting policy. Determine whether opening balance reflect true application of accounting policies. Third, perform one or more of following. Okay, where prior year financial statements audit was done, take copy of audited statement. Second, perform, see whether any procedures done in current year give evidence about opening balance. If they don't give, perform specific procedure regarding opening balance. After that, if you find misstatement, do additional procedure to know exact amount of misstatement. Tell management to correct. If they don't correct, tell their dad, those charged with governance, to correct. Very simple. Last time we are learning. Number 1, determine whether prior period closing balance is correctly brought forward as the opening balance or not. If not brought, any adjustment is shown as prior period item. Determine whether opening balance show true application of accounting principles. Third, perform one or more of the following. Number 1, if last year audit is done, take copy of audited financial statement. Okay, evaluate whether audit procedures done in current year give evidence about opening balance. If you are receiving amount from debtor, if you are paying to creditor, means they are true. Or perform specific procedure regarding opening balance. If the auditor feels there are misstatement, you have to do additional procedure. You have to do what? Additional procedure. Okay, if you feel there are misstatements, do additional procedure to know exact amount of misstatement. Tell management to correct. If they don't, TCWG. Over. Come here. Consistency of accounting policies. Accounting policies in opening balances are correctly reflected. If any change is done in method of depreciation, effect is properly accounted, presented, disclosed as per AS accounting standard. Very simple. Opening balances show true application of accounting policies. Okay, if accounting policies are changed last year, SLM method, WDV, then the effect is properly accounted, presented, disclosed. Last. Very simple. If you don't get evidence about opening balances, one or two balances you don't get evidence, means it's material. Which report will come? Qualified. If you don't get evidence about any opening balance, disclaimer, because the effect is material and pervasive. Simple. If you don't get evidence, either qualified or disclaimer. But if you get evidence and you feel mistakes are material, you tell management to correct, TCWG to correct. Both are not correcting. If you feel there are misstatements, you tell them to correct and they don't correct. But the mistakes are only material but not pervasive. Qualified. Material and pervasive, adverse. Understood? If auditor concludes opening balance have mistakes and the effect is not properly accounted, presented, disclosed, then we will issue adverse or qualified as per SA 705. I hope you are clear. Okay. Very simple. SA 510, initial audit engagement. Okay, come to next essay. SA 505. Very simple. Very simple. Okay, SA 505. How do we remember this? Okay, I said, Mr. Mohan, your balance in my books is 5. Oh, Mr. Mohan is saying, sir, your balance in my book is also 5. 505, external confirmation. How to remember? Cheap logic of remembering. Mr. Mohan, your balance in my book is 5. Oh, Mr. Shyam, Mohan is saying now. Mr. Shyam, your balance is also 5. 505. 505. External confirmation. Last time. Mr. Mohan, your balance in my book is 5. Oh, Mr. Shyam, your balance also 5. 505. 505 is external confirmation. First of all, why external confirmation is so good? Number 1, it's obtained from third party. Number 2, it's in original form. Okay. Number 3, it's obtained from those people who are responsible, directly received from the client. Number 1, it's external. Number 2, it's written. Number 3, it's original. Number 4 is directly obtained from client. So that is why it is way more reliable. Okay. External evidence is a direct written response to the auditor. External evidence is direct written response to auditor from third party in paper form, electronic form, any other form. One last time. External confirmation is a direct written response. To whom? Auditor. From whom? Third party in paper form, electronic form, any other form. Very simple. External confirmation is a direct written response. To whom? Auditor. From third party in paper form, electronic form, any other form. Here we have four children: positive, negative, exception. What's positive? Positive means confirming party has to respond, whether it agrees or disagrees with the information in the request or give requested information. What is the meaning of positive confirmation? Desperately reply. If the balance matches or not, you have to reply. In 1 minute, I will explain all four. Okay, listen nicely. What is positive? If the balance match or doesn't match, you still have to reply. If it matches, you have to write yes, it matches. Doesn't, then reply or give the requested information. Sometimes we will not ask balance, we will also ask confirm transactions, then confirm that. Positive, when is positive used? When you feel debtor is very material, when risk of material misstatement is high. See, when you love some girl a lot, desperately you want reply. Please reply whether you love me or not. Okay, positive. If the balance is 90% of debtor, there is high risk of material misstatement. We want desperate reply. In positive, okay, a request that confirming party has to respond if it agrees or disagrees. Desperately reply. Negative, only reply if balance doesn't match. A confirming party has to respond only if the balance doesn't match. If it matches, nothing to do, don't reply. If the balance doesn't match, please reply. A request that the confirming party will reply only if it doesn't match. If you don't get any reply, means it matching, means it is matching. Sometimes what you tell, I love you, you propose to someone. She will just smile, means it's accept, she's not replying. Negative confirmation. In positive, you have to reply is it matches or not. In negative, you will reply only if it doesn't match. If you don't get reply, it means it is matching. So shall we send positive or negative? That we have to decide. Okay, auditor will decide. Okay. Third, non-response. Sometimes they don't respond. A failure of the party to respond or fully respond to positive confirmation. Failure of the party, they don't reply only. In negative, of course, if they don't reply, it's not non-response. It means it is matching. But in positive, a failure of the party to reply or fully reply. Fully reply means sometimes they will confirm balance, but they will not confirm transaction. Still, it is non-response. Okay, a failure of the party to respond or fully respond. What is exception? Difference between entities record and confirmed by third party. You said balance is 80, they are saying 60. Then you need to see what is the difference. That is exception. In 1 minute, we will finish this. Positive. What do you mean by positive? Confirming party has to respond whether it agrees or disagrees. Agree or disagree, reply. What is negative? Only reply if you disagree. Okay, only you have to reply if it disagrees. If it agrees, then not to reply. Only reply if you disagree. In negative, if it is matching, don't reply. What is non-response? Failure of the party to respond. If they don't respond only. Or you tell confirm transactions and balance. They only confirm balance, not transaction. Non-response. Exception. It indicates difference between entities record and third party record. Entities record 80, they are showing 60. We need to assess why the difference has come. Understood? Very simple. Positive, desperately reply. Negative, when we send, they will only reply if it doesn't match. If no reply is there, we are assuming it is matching. Non-response, okay, they don't respond, only exception, they respond but balance is not matching. Okay. External confirmation procedure. Auditor shall maintain control over external confirmation procedure. 4 points are there. Whenever the auditor follow external confirmation, whenever auditor will send external confirmation to debtor, it will send to creditor, it will send for bank balance. 4 things are there. See, external confirmation are usually used for what? Debtor balance, creditor balance, bank balance. 4 things. Number 1, determine the information to be confirmed or requested. What you want to confirm? Do you want to confirm only the account balance, or you want to confirm transactions also, or you want to confirm any other things? Okay. Second, select the appropriate confirming party, means whom you will send. Okay, I want to confirm my debtor is Reliance. I will not send to Mukesh Ambani. I have to send to CFO of Reliance. Determine the a person to whom, or select the appropriate confirming party. Third, design the request including they are properly addressed and contain written information to be sent to auditor. See, design the request properly and also give return address, in which address they have to send it back. Okay, otherwise what will happen? We will not understand only where to send it back. Design the request properly and it should contain written information. Many times we will tell them, sir, please confirm this. They want to confirm, but where they will send it back, to whom they will confirm. So also write the written address where it should come back. Last, send the request including follow up request. Very simple. Okay, now inside this, usually third point can come in detail. Okay, only the third point. But let's understand again. External auditor shall maintain control over external confirmation procedure. Whenever you send external confirmation procedure, 4 points are there. Number one, determine the information to be confirmed or requested. What you want to confirm? You want to confirm only balance or transactions also. Second, select the appropriate confirming party whom you will send. That is also very important. Third, design the confirmation request. They are properly addressed and contain written information to be sent to auditor. Proper address should be there, also written. Third, send the request including follow-up request. 4 times we do follow-up, usually in Big Four. 4 times we will send again. Last time, okay, auditor shall maintain auditor shall maintain control over external confirmation procedure, including number one, determine the information to be confirmed or requested. Second, select the appropriate confirming party. Third, design the confirmation request. They are properly addressed and contain written information to be sent to the auditor. Last, send the request including follow-up request. Clear? Now all four will come in detail. Number one, come here. Determine the information to be confirmed or requested. What you want to confirm? Do you want to confirm only the balance or elements also, means transactions? External confirmation are used to confirm account balance and their elements. But we can also confirm terms of transaction. Sir, why are you selling at such a low rate to this party? Why are you selling at this rate? Any other things also we can confirm. Okay. Second, design the request. See, select the appropriate confirming parties. So very simple, with whom you will confirm, who is in charge of accounts department. We will not send it to Pune, confirm the balance. No, accounts department. Okay, come here, design the request. Whenever you send the request, following things are to be kept in mind. Factors to be kept in mind which will directly affect the confirmation rate. See, if the request is properly designed, if the letter is properly designed, there is a high chance debtor, creditor will confirm. Are you clear? Factors to be kept in mind which will affect the confirmation request. First, I will explain all points. Learning is pretty simple. Okay. Management authorization or encouragement to third party to respond. See, management authorization should be there. See, he is not your relative. He is management relative. If management will tell, not management relative, but management gives them business. If management will tell, there is a high chance they will confirm. Management authorization or encouragement to the third party to respond. Method of communication. Are you using paper or electronic? Third, assertion being addressed. Tell me, if we get debtor confirmation, it will address which assertion? Sir, valuation, it will adjust. Okay, it will show us valuation. Second, it will also show us existence, that debtor existed, that debtor valuation is proper. Okay, tell me, completeness of debtor will be there. We also feel balance is this much. They also feel. So assertions, it's used for which assertion? Valuation, completeness, existence. Okay, ability of the party to respond. See, some people, they will never ever confirm transaction. Balance also they might not confirm. So then don't send them transactions. Only tell them confirm balance. Look at the ability. If you feel he will respond to everything, might as well ask about transaction. Otherwise, only ask about balance. Specified risk of material misstatement, including fraud risk. Wherever you feel ROMM is higher, risk of material misstatement, compulsory send positive. You won't reply in any case, okay? Because there is a high chance balance will not match, okay? Prior experience on audit or similar engagement. This party never confirms. Then send them follow-up request again and again. Layout and presentation of confirmation request. That also you have to see. Proper layout and presentation should be there. Now, factors to be kept in mind which will affect the confirmation request. Factors to be kept in mind which will affect the confirmation request. Mass presentation, mass presentation, mass presentation. Very easy to learn. Management's authorization or encouragement to third party to respond. Management authorization or encouragement to third party to respond. Method of communication, paper or electronic. 2M are done. One more time. Management authorization or encouragement to third party to respond. Method of communication, okay, physical or electronic. A, assertion being addressed, assertion being addressed. Okay, one more. A, ability of the party to respond, ability of the party to respond, ability of the party to respond. If he is going to respond, then compulsory send positive. Okay, ability of the party to respond. Double S, specified risk of material misstatement, specified risk of material misstatement. One more S, prior experience on audit or similar engagement, prior experience on audit or similar engagement. Shall we speak one more time? Okay, double M, double A, double S. Management's authorization or encouragement to the third party to respond. Method of communication. Double A, assertion being addressed, ability of the intended party to respond. Double S, specified risk of material misstatement, prior experience on audit or S, similar engagement. So 2M, 2A, 2S, mass, and last, presentation and layout of confirmation request. Mass presentation, presentation and layout of confirmation request. One more time, we will speak very slowly, very nicely. Double M, management's authorization or encouragement to third party to respond. Method of communication, paper or electronic. Double A, ability of the intended party to respond, assertion being addressed, ability of the intended party to respond, assertion being addressed. Specified risk of material misstatement, specified risk of material misstatement, prior experience on audit or similar engagement, prior experience on audit or similar engagement. Layout and presentation of confirmation request, layout and presentation of confirmation request. Nicely learn. 40, 10, 20 seconds break. Learn nicely. Done. 1, 2, 3, start. Tell me factors to be kept in mind which will affect the confirmation request. Mass presentation, mass presentation. Management's authorization or encouragement to the third party to respond. Method of communication. Double A, assertion being addressed, ability of the intended party to respond, specified risk of material misstatement, prior experience on audit or similar engagement, presentation and layout of confirmation request. Okay, very simple. So 4 points are there, all 4 are done. Okay, determine the information to be confirmed or requested, whom to confirm, select the appropriate confirming party. Okay, design the request, they are properly addressed, contain written information. Last, send the request including follow up request. Clear? Okay, so third one can come as I told you. Very simple. Last 2 questions. Management refusal to send confirmation request. Sometime management will tell, don't send to this party, don't send to Hanson. You are like, why? I will send. Array, very important data. Sir, try to understand. Then what you have to do? Evaluate the reason of management refusal and see the reason is reasonable or not. Sometimes what reason they will give? Sir, you told that write off bad debts we have written off. Okay, we wrote off the bad debts as you told, but I think that party is reviving. Okay, that party will pay off the entire amount. If you tell them we have already written off bad debts because that we have not received the money for 5 years, then if they are paying also they will not pay. So please don't send confirmation request. Sir, on your request we wrote off the bad debts. Okay, but we feel this party will revive and definitely they will pay the money next year. Okay, now their situation is way better, they are doing well, but please don't send confirmation request. Otherwise, if they know we have written off bad debts, even if they wish to pay, they will not pay. Very simple. So number 1, evaluate the reason for refusal and see the validity and reasonableness of the reason. This seems a reasonable reason. Okay, second, evaluate the implication of the refusal on ROMM and nature, timing and extent of audit procedure. See, due to this risk will increase, can we do some alternative procedure, like we can take the opening balance plus sale minus whatever amount received closing last year we received plus the sale of this year minus if we received closing, if it matching. Okay, perform alternative procedure to obtain evidence. If management refuses, we will tell to TCWG also. If it's desperate to send, you tell management. If they refuse, tell TCWG. If they also don't respond, then audit opinion. We will do something in our audit opinion. If we feel mistakes are material but not pervasive, qualified, they are material and pervasive both, then what will come? Adverse report. I hope you are Clear? Very simple. Last, listen very logically this point. Okay, management is telling don't ask. If management refuses to send confirmation, okay, inquire the management reason for refusal and see the validity and reasonableness. Inquire the reason for refusal, see validity and reasonableness. Okay, second, see the effect of this on ROMM and nature, timing and extent of alternate procedure of audit procedure. Do some alternate procedure, like last year you had already taken. Okay, last year opening plus whatever sales are there minus received closing should match. Alternate procedure. If management refuse, we'll also tell TCWG. If they also don't, then we will have audit opinion. We will do in our audit opinion whatever we feel we will do. Okay, very simple. Similar question to this is this one, exactly similar. Okay, reliability of the response. Okay, if you feel the response is not correct, they have replied, but if you feel it's not correct, audit opinion. If the auditor has doubt about reliability of response, same point, auditor will obtain further evidence. If the auditor feels response is not reliable, it will increase our ROMM, and maybe we have to do other procedure, risk of material misstatement. Non-response, if they don't respond only, we will do other procedures. Okay, when positive confirmation is sent and reply is not received, you sent positive but you did not get reply, determine the implication on audit and auditor's opinion. We will do whatever we want in our auditor's opinion. Exception means difference is coming between our record and then their record. What we will do, we will investigate the exceptions. Last question here. Okay, where is it? Come here. When to send negative confirmation request? When should you send negative confirmation? Okay, what do you mean by negative? Positive, if you don't remember, again I will tell. In positive, desperately reply if the balance match or not. In negative, only reply if the balance doesn't match. When will you send negative? When you feel they are going to respond, when there are strong controls and ROMM, risk of material misstatement, is low, when the balance is very small and similar balances are there, small balance. Okay, or when you feel they are 99.99 or 100% going to respond. When will you send negative? Very simple, high chance party will respond. High chance party will respond. A very low exception rate is expected. You know there are not going to be any exceptions, everything will match. Population includes large number of small and homogeneous account balance. Account balance is small and homogeneous. Last, low risk of material misstatement and strong control. ROMM is low of that account, low risk of material misstatement and strong control. Last time, tell me when we will send negative confirmation. Okay, real. The technique is real. High chance party will respond. R, high chance party will respond. E, a very low exception rate is expected, means there are not going to be any exceptions. A very low exception rate is going to be expected. Okay, population consists of large number of small and homogeneous. Small and similar account balances are there. Small balances are there of data. Population consists of large number of small and homogeneous account balances. Okay, low risk of material misstatement and strong control at assertion level. Low risk of material misstatement and strong control at assertion level. Tell me very fast, when do we send negative confirmation? Real. When do we send negative confirmation? Real. High chance that the parties will respond. R, high chance parties will respond. E, a very low exception rate is expected. Very low exception rate is expected. A, population consists of large number of small and homogeneous account balances, low risk of material misstatement and strong control at assertion level. Learn nicely. Your time starts now. 5-second break. Then tell me, when do we send negative confirmation? Real. High chance that the parties will respond. What is E? A very low exception rate is expected. What is A? Population consists of large number of small and homogeneous account balances. Okay. The last, low risk of material misstatement and strong control at assertion level. Clear? Okay. With this we are done, guys. Okay. Oh, one last essay is pending. Related party. I am phi, you are phi. Oh my god, we are related. I am 5, you are 5. Oh my God, we are related. I am 5, you are 5. Oh my God, we are related. See, whenever there is a related party, okay, it means the party is related to us in some way. We will always do some favors. We have to be extra cautious. Do audit with lot of care because there is a high chance fraud will happen. See, 4 are significant risk in life. Number 1, fraud, related party, non-routine, judgmental. So related party is one of them. Okay, in related party, there is always an inherent limitation that we might not catch all related party because sometimes management themselves don't know how many related parties there, what favors are going on. If they don't know, how we will know? Indigo Airlines, okay, the partners fought. Okay, why? Because one partner was favoring the related party. Even the other partner did not know. When the partners in Indigo Airlines did not know, how the hell will auditor know? So related party is a crucial area. We need to be extra cautious. Lot of disclosures we need to do. If you don't know, whenever there is a related party transaction, separate recording required as per AS 18. Okay, board resolution has to be passed. Okay, a separate it should be recorded properly. Okay, so just brief idea I am giving you. Now let's start. First, what is a related party? As defined in the applicable FRF. If financial reporting framework tells, follow that definition. Companies Act definition, AS 18. But if framework gives no definition, then you have to catch this definition. So related party is defined in applicable FRF. But if FRF gives no definition, then this definition we have to catch. Can we start? Yes. Okay. Person or entity has control or significant influence through one or more intermediary over the reporting entity. See, we are reporting entity. If any company controls us, okay, come here. See here. Very simple. Okay. If any company has control or significant influence over me, they are my related party. Your reporting entity is me. Okay, very simple. If ABC owns more than 50% of mine, they have control. If they own more than 20 but less than 50, it's significant influence. See, your husband or wife has control over each other. But boyfriend, girlfriend doesn't have full control, but they do have significant influence. Okay, so when any company, person or entity, when any entity or person has control or significant influence over reporting entity, they are related party. So ABC or Shahrukh, one more time, ABC or Shahrukh, if they are holding more than 50% share or 20 to 50 significant influence, then ABC is related to me. Clear? Okay. Very simple. A person or entity that has control, that is more than 50%, significant influence 20 to 50% over reporting entity, then that is related party. Point number 2. Reporting entity has control or significant influence over another entity. Okay, so if I own, okay, control means more than 50 or 20 to 50% of PQR, then I am also related to PQR. Very good. Why? I will explain. If I own 20 to 50% of PQR or more than 50, then I am also related, or PQR is related to me because I can influence their decision. Very simple. If any person or entity has control or significant influence over reporting entity. Point number 2, reporting entity has control or significant influence over another entity. Both are related. Means my dad is related to me because he has control or significant influence. My son is also related to me. Why? Because I have control or significant influence. Understood, sir? Continue. Third, another entity that is under common control with the reporting entity. Common control. Why? Common ownership. If Reliance is the owner of, okay, Reliance is the owner of Agio and Reliance is owner of Money Control, then Agio and Money Control are also related because owner is Reliance. Oh, understood. Can you take some example here? See, if my owner is ABC, but ABC is also owner of XYZ, okay, ABC, then XYZ and me are also related. Why? Because owners are same, they can influence decision. Okay, entities that are under common control. First point, common controlling ownership. Second, owners are close family member. Very simple. Mukesh Ambani is owner of my company. Nita Ambani is owner of Mumbai Indians. I and Mumbai Indians are related because Mukesh and Nika are related. Understood, sir. Owners are close family member. Last point, common key management. Mr. Jayesh is a CFO of my company and also CFO of Ashok Leland. Then me and Ashok Leland are also related. Why? Because Jayesh is a common key management. Jayesh can influence decision of both. Understood, fully understood. Okay. So I hope it's easy definition, nothing great in 1 second over. Person or entity has control or significant influence over reporting entity. Take it reverse. Reporting entity has control or significant influence over another entity. Entities that are under common control. 3 point. Common controlling ownership. Owners are close family member. Common key management. Common key management. Very simple. I don't think we have to learn, but still if you want. Person or entity has control or significant influence over reporting entity. Reporting entity has control or significant influence over another entity. Entities that are under common control, common controlling ownership. Owners are close family member, common key management. But. All entities under central and state government are not related. See, government company, all owner is government only. NTPC, SAIL, BHEL, BPCL, HPCL, all owner government. They all are not related. Okay, otherwise, so how many related party transaction will be there? 20,000 page report will be there. Okay, unless they enter into significant transactions. See, government has a lot of companies. All companies cannot be related to each other. Okay, unless they do significant transaction with each other, then they are related. Clear? Okay. Now, here what we have to do? Very simple. See, you have to take care whenever related party is there. Are we able to achieve true and fair view? Are disclosures proper? Normal brain you apply. See here. To obtain understanding of related party. To recognize the fraud from such transaction. To conclude whether such transaction help in achieving true and fair view. They should not be misleading. There is no harm in doing related party. Do it, but show proper disclosure. Board resolution, AS 18 requirement to obtain evidence whether related party transactions are accounted, presented, disclosed properly. Okay, simple. Number one, we need to identify the previously unidentified or undisclosed related party. See, whenever you are doing audit, be professional. Skepticism you have to do. What is that? Questioning mind. Being alert to circumstances, there can be more related party. Identify undisclosed or unidentified related party. Auditor shall determine whether the underlying transaction confirm the such transaction. We have to see whether there is any existence of related party transaction. If you find unidentified or undisclosed related party, communicate with team. Request them to identify newly identified. Request them to identify all transaction with such related party. If you found out new related party, do more procedure. Reconsider the risk of related party. ROMM will be more. If non-disclosure is intentional, see whether it's intentional. Then what will be the implication on audit? What will be the implication on audit? Do we need to modify the report? Have they shown all disclosure? If not, we will modify. Very simple. Number one, auditors will see whether there is existence of any related party transaction. Can you find any related party? Undisclosed, unidentified related party. As soon as you find, communicate with team. Sir, please see. Mr. Rajan, have we done all the transactions, Mr. Rajan? Show separately. Okay. Perform more procedure. ROMM will be higher. If you feel it is intentionally they have hidden the transaction, then you can also have implication on audit report. If they don't correct, of course. Same is written here. Requirements. You have to do risk assessment procedure. Understand related party transaction. Being alert for related party same. Share the information with team. Identify and assess ROMM. Okay. And respond to the risk. Very simple. You have to be extra cautious. Okay. Last. In the end, we will do WR. What's WR? Written representation of all related party and related party transactions. All transactions are properly accounted or not. Clear? Okay. In the end, what we have to do? Take WR from management. Have you shown all related party? Have all transactions been properly accounted, presented, disclosed? Almost everything is over. Internal audit part is pending. That also we will do from PPT. Come here. What do you mean by internal auditor? Briefly, I will explain because now all this is not part of syllabus, only little portion is there. See, external auditor comes once in a year. but internal auditor will check everything. Okay, see, big companies, let me tell you, today in big companies, okay, management don't work. Okay, the owners don't work. What will owners do? They set up SAP, standard operating procedure. In all the big company, management will set up SAP is SOP, standard operating procedure. This is how production work will be done. This is how finance work will be done. This is how marketing work will be done. This is how HR work will be done. Okay, who will do the work, when they will do, how they will do. There are SOP everywhere. These days we have SOP. What's the full form? Let's say it was standard operating procedure. Everywhere we do what? Standard operating procedure. Everywhere we have SOP these days. Okay, for all the department, management has set up SOP. Owners have set up SOP, standard operating procedure. Production will be done like this. Finance will be done. Marketing will be done. HR will be done like this. As an internal auditor, we have to check whether the SOPs are followed, standard procedure are followed. Is the company working properly? If not, report to management. Stat auditor will report to shareholders. Okay, so basically internal auditor does three things: activities relating to governance, risk management, internal control. What is governance? He will check governance of the company is proper. Okay, governance means management of the company. Is the TCWG separate from management? Okay, is those charged with governance powerful enough? Can they take decision on their own? If complaints of management are there, okay, TCWG and management are working together, or are they independent? In TCWG we have excellent directors, okay, trustees who can manage the company properly. They are independent from management. Their stature is proper. Okay, many times what happens, if management does fraud, we can never tell to those charged with governance, because they are also involved in fraud. So is the board really independent? Okay, is the board working nicely? Okay, or they are only taking the benefits? Okay, in big company fraud happens because management and those charged with governance are together. So you have to see governance is proper. Is those charged with governance proper? Are they qualified enough? Are they independent directors? Are they different from management? What actions they take when complaint is received of management? Second, you have to check risk management. Does company have a proper policy of identifying and assessing the risk? Okay, as internal auditor, we will check risk management is proper. Then we will see activities relating to internal control. In that, 4 points are there. Laws and regulation. Okay, does the company have proper policy of compliance with laws and regulation? Operating activity, check all department, production, finance, marketing are operating effectively and efficiently. Then we'll see financial activities are proper. If any balances are not proper, anywhere, any account, we can test in detail also if we want. And last, internal control. Are internal controls designed and operate properly? Okay. Number one, control should exist and whether it operates or not. Only watching lecture is not important, but studying properly is also important. Only giving exam is not important, passing is also important. Whether control exists and is operating effectively. So internal auditor is basically concerned with what? Activities relating to governance, risk management, internal control. One last time: governance, risk management, internal control. Internal auditor is concerned with what? Governance, risk management, internal control. In internal control, what? Coffee. He will have coffee. Okay. C, review of compliance with laws, rules and regulation. O, review of operating activity. F, review of financing activity. I, review of internal control. Very simple. Okay. What does internal auditor do? GRM, activities relating to governance, activities relating to risk management, activities relating to internal control. Okay. In internal control, coffee. C, review of compliance with laws and regulation, review of operating activity, review of financial activity, review of internal control, review of internal control. Read nicely. Small break, 20 seconds. Done. Tell me, what does internal auditor do? Activities relating to governance, risk management, internal control. Internal control, coffee. Review of compliance with laws and regulation, review of operating activity, review of financial activity, review of internal control. Now, last question. Okay, come here. SA 610 using the work of internal auditor. Okay, can stat auditor use the work of internal auditor? Here we have two things in the standard. Okay, can stat auditor, statutory auditor use the work of internal auditor? SA 610. Two parts. Use the work of internal audit function. We are using their function. Okay, one of the work. Let's take example compliance. Their compliance work is excellent. So rather than we working separately, okay, we are asking them, can we use your compliance work using the internal audit function during the working? Can we use internal audit function? Example, their compliance work is excellent. Can we use your compliance work? Two, using internal auditor to give direct assistance to using the internal auditor under direct assistant to provide direct assistance under okay direction, supervision and review of external auditor. Directly using internal Ramesh, work under us, work under us. Okay, so two things are there in this standard. Number one, using the internal audit function, using directly internal auditor to work under direction, supervision and review of external auditor. Number one, using internal audit function, their one work, their example. Let's check compliance is good. Can we take their compliance work? Second, using the work of internal auditor, using directly internal auditor under direction, supervision and review of external auditor. If you want to use, okay, there are three conditions. Okay, number one, cost. Whenever external auditor will use the work of internal audit function or directly internal auditor, he has to check three things. Number one, they should be competent enough. Okay, always remember, are they competent enough? Okay, only then you can use your work. If they are not competent enough, you cannot use. Example, ask who is doing internal audit. There is a BCom person doing, you cannot use. They are not competent. They don't have knowledge of compliance itself, Companies Act, FRF, Schedule 3. They don't know how the hell you can use their work. Okay. Number one, they should be COS, competent enough. Number two, objectivity. Are they unbiased? Okay. You have to see the internal audit function and see, are they objective by seeing their policies and procedure. Okay. Every day they directly report to management. How the hell they can be objective? Are they different from management? Okay, you talked with them, they told to management. External auditor asking so many questions. You cannot use their work because they are not objective. Are they objective by seeing their policies, procedure? Do they directly report to management? Are they independent from management? If they are independent, I can use the work. If they report every small thing to management, then they are not independent. It's only internal audit on paper. Actual real life, there is no internal audit. Okay, so objective. Third, do they have systematic and disciplined approach? Okay, do they have proper approach to documentation, materiality? Okay, proper policies, systems. If it is there, we can use the work, otherwise no. Whenever external auditor uses the work of internal auditor, it is given in detail, you can read. I briefly explained the meaning. Whenever external auditor uses work of internal auditor, he will see cost. See, competent, objectivity, systematic and disciplined approach. Competence, objectivity, systematic and disciplined approach. Competence, objectivity, systematic and disciplined approach. Whenever external auditor uses the work of internal auditor, he will check cost. Competence, objectivity, systematic and disciplined approach. Competence, objectivity, systematic and disciplined approach. Come here. In following situation, we will never use the work of internal audit. In such situation, never ever use. Okay. In fourth situations, you are not allowed to use. Higher ROMM at assertion level. Whenever risk of material misstatement is high at any level, for any area, if risk of material misstatement is high, means controls are weak, then we cannot use. We have to work on our own. Second, if internal auditors are not objective by seeing their policies and procedure, they are not unbiased. Every small thing they talk with management, I cannot use your work. Next, if internal auditors are not competent, they are not qualified enough. Okay. Last, judgment. More judgment is involved in planning and performing audit and evaluation of evidence gathered. Means impairment loss is there. Okay. Revenue recognition, percentage completion method we are following. More judgment is involved in planning and performing audit procedure and gathering audit evidence. In those cases, we cannot use. I hope you understood. Okay. Start. In following situation, we cannot use the work of internal auditor. Okay, not at all allowed. ROC judgment. Higher risk of material misstatement at assertion level. If internal auditors are not objective, If internal auditors are not competent, okay, more judgment is required in planning and performing audit procedure and gathering the evidence. Easy. Okay, in four situation, never ever use the verb. Okay, ROC judgment, higher ROMM at assertion level. If internal auditors are not objective by seeing their policies and procedure, if internal auditors are less competent, last, more judgment is involved in planning and performing the audit and evaluation of evidence gathered. Small break, 5 seconds. Done? Chalo. In following situations, we cannot use the work of internal auditor. Okay. Higher ROMM. Okay. ROC judgment. ROC judgment. ROC judgment. Higher ROMM at assertion level. If internal auditors are less objective. Okay. If internal auditors are not competent, more judgment is involved in planning and performing the audit and evaluation of evidence gathered. With this, we finish all essays and the biggest chapter as well. Yes, guys, we have finished lots of essay. You can keep counting. Essay 500 audit evidence. Then we discussed essay 520 analytical procedure. Essay 530 audit sampling. Essay 501 audit evidence specific consideration for selected item. Essay 510 initial audit engagement. I said 5. Oh. You also said 5. 505 external confirmation. Then we discussed one more. 510 initial audit engagement. 5 and 5. Oh my God. You are related. 610 using the work of internal auditor. This was a very lengthy chapter. We have worked very hard. Okay, if you like our hard work, you don't have to pay any money. All you have to do is just press a like button. It will give us much more motivation, much more enthusiasm, and share this video so others can also see same positivity, same hard work, and excellent result will come. Thank you so much. Take care. See you until next video. Thank you. Keeping record of everything is documentation. Audit documentation is a very beautiful, the smallest chapter of our syllabus. It tells us only one thing: whatever work you have done, keep a record so in future it is useful. Like whatever you learn in class, you make a notes, right? You make notes of it, every single thing you write. So when you want to revise, it's easy. In the same way, whatever work an article has done, whatever work a CA has done, he has to document from top to bottom every single thing. So in future, if the work is reviewed by someone, if the work is reviewed by regulators, if there is a CBI case, it's very easy if we have documented everything. Whatever opinion you have given, unqualified, qualified, disclaimer, adverse, if you have written everything, things will be very easy. I hope you are clear. Okay. I used to remember in my initial days, okay, in Big Four, I used to work for EY, Ernst and Young, okay. So I used to do every single work, but I never wrote that we have checked power fuel, we have checked stationery expense, I have checked rent. So my senior would scold me like hell. Why you have not written? I said, but I've done the work. He says, every time I'm not going to stay with you. We know you have done the work, agreed, but you need to write. Then I understood after a while that in Big Four, you don't have to work that much, but we have to write every single thing. Okay. So everything we have to write except going for washroom, that is allowed. Okay. Rest every single thing. Okay. Work not documented is not done is the biggest line for all Big Fours. With this, I think the chapter should be very easy. Be rest assured. It's essay 230 audit documentation. Okay. Start. Let me read now. Only one chart we have in this very cute chapter. Okay. What is audit documentation? It is record of audit procedures performed, audit evidence obtained, and the conclusion reached. Very simple. If you want to see this diagram. See, documentation is nothing. It's a record of what? Audit procedure you have performed, what evidence you have gathered, and based on that, what report you have reached. Unqualified, qualified, disclaimer, adverse. So documentation is record of everything. One last time. Audit documentation is nothing but record of audit procedures performed. Out of those procedures, what evidence you have gathered and what conclusion you have reached. See, what's my ultimate objective? Audit report. How I will get audit report? Based on evidence. How I will get evidence? By doing audit procedure. Sir, how many procedure are there? Two. RAP, FAP, risk assessment procedure. Further audit procedure. Record of everything is nothing but audit documentation. Over. One more time. Audit documentation is nothing but record of audit procedures performed, audit evidence gathered, and the conclusion reached. Okay, very simple. Read nicely once. Small break, 2 seconds. Done. Audit documentation. It's a record of audit procedures performed, audit evidence gathered, and the conclusions reached. Are you clear? That's documentation, also called working paper. First question. What's the purpose of doing documentation? Helps the team to plan and perform the audit. See, whenever I want to do planning, who will do payroll, who will do cash and bank area, who will do this area? If I have documented everything, work will be easy. Sir, I want to ask one question. Where are you doing this revision from? We are doing it from the best book of India, people tell. It's a summary book, that is the magic book. In 80 to 85 pages, we have covered entire audit in chart form, okay, which you are able to see. So we are doing revision from that. No, only soft copy is not available, only hard copy is available, because we believe only hard copy can bring hard result, and all we want is hard results. Okay, so if you wish, you can buy it from website, otherwise it's completely fine. Okay, start. Okay, purpose of documentation. Documentation helps to plan and perform the audit. Okay, so if documentation is done, I will know who will do cash area, who will do payroll area, who will check inventory area. Are you clear? Plan and perform the audit. Second, enable team to be accountable for the work. Now tomorrow, if my name is written in cash and bank, anything wrong happens, through documentation they will catch me. Sir, you have done wrong. I said, how? Are you are accountable, your name is written. Third, helps the team member to direct and supervise the work and discharge the review responsibility. Now, whenever I audit any area, cash and bank, it will be written prepared by Mrugesh Madlani. Next, what will be written? Reviewed by whom? Manish Gupta. So it helps the team to direct and supervise work and discharge their review. So if tomorrow query comes, okay, not only I am responsible, even he is responsible who has checked my work. So with the help of documentation, I can direct and supervise the work and do the review without that person being present. Why? Because he has documented everything. Okay. So first do the audit. Second, direct and supervise the work and discharge the review responsibility. Second, retaining significant matter will help me in a future audit. Bigger audit I want to do in a future. Okay, it will help me in future audits. Tomorrow again I want to audit this client. Okay, and I did very nice working of power and fuel. Next time I will copy the working. I know this is how. See, I will not remain in that firm forever. I will go to another firm. But if my colleague comes, he wants to know how to do audit of power and fuel. In 1 second, he will check the documentation. Okay, understood. Retaining significant matter will help me in future audit or help team member in future audit. Last, enabling conduct of quality control inspection and review. Enabling conduct of external inspection as per legal and regulatory requirement. Two inspections are there: internal, external. Sometimes EY US, Ernst and Young, that's a big four, EY US will audit EY India. Why? Peer review it is called. What is peer review? Okay, our CAs in India, one CA checks the work of another CA to ensure quality is maintained of ICI or not. Same way, ENY, Ernst and Young India, work is reviewed by EY US. So if they come, they will check whether I have done audit of Suzlon properly or not. Okay. If I have documented, it will be very easy. They will know that we have seen every single thing, we have followed, we have collected evidence in all area. So it will help in conducting inspection and review if it is done by another CA or done by EY US, because they have to maintain Big Four standard. Second, enabling conduct of external inspection as per legal and regulatory requirement. Now you will ask me, what is external inspection? As per SEBI, sometimes SEBI can tell check this, Companies Act can tell check this. Okay, ED can check. ED will tell that has audit been done properly or not. Okay, if I have done documentation, I will be saved. So what's the purpose of documentation? Enabling conduct of quality control inspection and review by our own firm. One partner can check the work of another. If you have documented, it's easy. enabling conduct of external inspection as per legal and regulatory requirements. Understood? Yes, sir. Okay, external is SEBI will tell, ED will tell, Enforcement Directorate can tell. Okay, any law, as per any law, if they want to check again, it's very easy because I've documented everything. Okay, so we have to learn this. According to me, it's super easy. Don't worry, nothing is given inside in the module also, so it's easy one. What's the purpose of documentation? Helps the team member to plan and perform the audit. I will know who will do which work. When I write my name, I have done work. Okay, helps the team member to be accountable for the work. I am accountable to my work. Third, okay, documentation helps the team member to direct and supervise work and discharge the review responsibility. Very simple. Learn 3 points. Done. Okay. Helps the team member to plan and perform the audit. Second, helps the team member to be accountable for the work. Okay. Second, helps the team member to direct and supervise the work and discharge their review responsibility. Okay. Very simple. 2-second break again. Done. Okay. Helps the team member to plan and perform the work. Helps the team member to be accountable for the work. Okay. Helps the team member to direct and supervise the work and discharge their review responsibility. Very simple. Last 3 points. Retaining significant matter will help me in future audit. Will help me in future audit. Now, two types of inspection: enabling conduct of quality control inspection and review, enabling conduct of external inspection as per legal and regulatory requirement. Very simple. Retaining significant matter will help me in future audit. Okay, enabling conduct of quality control inspection and review, enabling conduct of external inspection as per legal and regulatory requirement. So simple. Learn nicely. Your time starts now. Last time. Then 1, 2, 3, start. What's the purpose of documentation? Documentation helps the team member to plan and perform the audit, enable them to be accountable for the work. Okay, helps the team member to direct. Someone has done the work. Okay, direct and supervise the work and discharge their review responsibility. Retaining significant matter helps in a future audit, enabling conduct of quality control inspection and review, enabling conduct of external inspection as per legal and regulatory requirement. Simple. Next, form, content and extent of documentation. What do you mean by this? What should be the format of documentation? Form means format. Content means what should be there, what should not be there. Form, content. Extent, how much to document? Shall I document too much? Shall I document too less? How much in detail? More documentation or less? Depends on this many points. One last time. Form, content and extent. One more time. What's the format? Content, what is inside, and how much to document depends on this many factors. But before learning this factor, they have given some theory. In documentation, I will write which area work I have done, who has done the work, who has reviewed the work. Okay, are we following rely on control strategy or not rely on control? Are we relying on controls or not relying? Simple. Okay, what area we are auditing, who has done the work, okay, who has approved the work, that all we need to document. So tomorrow any problem, I will catch him or her. Why to catch the whole staff? Why to blame everyone? I will just call, hello Mr. Rajesh, payroll, I have one query, please tell. How you know I have done the work? Documentation. Okay, understood. So form, content and extent of documentation depends on this many factors. Number one, size and complexity of audit. Is the size of the company big or small? Is it listed or unlisted? If it's a listed entity, then documentation will be detailed because crores of shareholders are impacted. Unlisted, then okay, it will be detailed, but not that much. Complexity of audit. Company has one business or several? We have only one business, FMSM and Audit, India's number one lecture. Okay, but Reliance has multiple business. They have GeoMart, they have GeoMall, they have Agio, God knows how many business. So more documentation will be done by Reliance, less by me. Size and complexity of audit. Identified risk of material misstatement. Whichever area we are auditing has more ROMM or less. If risk of material misstatement is more, documentation will be more. Otherwise, yes. Second, based on ROMM only, nature of audit procedure to be performed. If I do more audit procedure, RAP, if I do more procedure, then more documentation, less procedure, less documentation. Significance of audit evidence obtained. After doing audit procedure, I will get evidence. Is the evidence significant or not significant? Important evidence, then more documentation. Less important, less documentation. Okay. Nature and extent of exceptions identified. What's exception? Difference. Okay. How much difference you have identified? As per entities record this much and you have identified this much fraud. How much exceptions are identified? If exceptions are too much, documentation more. If no exception, why to document? Everything perfect, no need to document. Okay. Need to document a conclusion or basis of conclusion not determinable from documentation of work done, okay, or work performed. See, sometimes need to document conclusion or basis of conclusion not determinable from documentation of work performed. Sometimes I have done a brilliant working, okay, of payroll is what? Salary. Brilliant analysis I have done worker salary, but I am not able to understand that. Okay, if I show to someone as no, he will not understand. Then I need to do more documentation. Okay, see what is given. Need to document a conclusion. You have formed a conclusion or basis of conclusion not determinable from documentation of work done. I am not able to prove something from the work, from the documentation done. Then I will do more documentation to prove. Sometime what happens is you write the answer, but you realize, oh my god, I have not written in the nicest way this answer. Then you write even more to explain that whether what I want to explain as opposite person understood or not. So need to document the conclusion or basis of conclusion not determinable from documentation of work done. Then I will do more documentation so I can understand it. Simple. Okay. Audit methodology and tool use. Which method are you using? Rely on control or not rely? Because if you rely on control, substantive will be less. If you don't rely, substantive will be more. Simple. In 1 second, I will make you learn. Form, content and extent of documentation depends on how many factors. Lot of factor, but very easy. Number one, size and complexity of audit. In that audit, how much ROMM, identified risk of material misstatement. Okay. Out of whenever there is misstatement, what I will do? I will do audit procedure. Simple it is. Size and complexity of audit. It's too complex audit. Identified risk of material misstatement. Whenever there are more misstatement, nature of audit procedures to be performed. Out of audit procedure, what I will get? Significance of audit evidence obtained. In that evidence, what is there? Lot of exceptions. Nature and extent of exceptions identified. You need to learn only last 2 points. Okay. One more time we will speak. Only first, size and complexity of audit. It's too complex audit. Identified risk of material misstatement. More ROMM, more audit procedure, nature of audit procedure to be performed. What you got out of procedure? Audit evidence, significance of audit evidence obtained. In that evidence, what is there? Exceptions, nature and extent of exceptions identified. Okay. Last 2 points. Need to document a conclusion or basis of conclusion not determinable from documentation done. I cannot prove the conclusion from this much documentation, so I will do more documentation. Last, need to document a conclusion or basis of conclusion not determinable from documentation of work done. Last, audit methodology and tools used. Clear? Okay, learn nicely. Then 1, 2, 3, start. Size and complexity of audit. Okay, identified risk of material misstatement. In those ROMM risk of material misstatement, what you got? sir, in ROMM, okay, if ROMM is more, my audit procedures will be more. Nature of audit procedures to be performed. From procedure, what you will get? Okay, evidence, significance of audit evidence obtained. In that evidence, what is there? Nature and extent of exceptions identified. Last two. I am not able to understand exceptions. Need to document a conclusion or basis of conclusion not determinable from documentation of work performed. And last, audit methodology and tools used. It's very logical. Okay. See, more complex audit, more ROMM. ROMM, more audit procedure. In audit procedure, audit evidence. In evidence, exception. Not able to understand exception. Methodology and tool used. Okay. One last break, 3 seconds. Done? Okay. Form, content and extent of documentation depends on size and complexity of audit, identified risk of material misstatement, nature and extent of, okay, identified nature and extent of audit procedures to be performed, significance of audit evidence obtained. In evidence, what you will get? Exceptions, nature and extent of exceptions identified, need to document a conclusion or basis of conclusion not determinable from documentation of work done, and last, audit methodology and tools used. Perfect? Yes sir. Moving on. Now all points are easy, super duper easy. Okay, come to next. Completion memorandum. Many times you complete a audit, you can prepare audit documentation summary. What will be there in summary? What significant matters were there in audit? Okay, doing audit of fixed asset and inventory took lot of time because we had lot of issues there. It took lot of difficulty in doing audit procedure. So this can be significant matter. Okay, you can identify what significant matters were there, how they were addressed. Okay, so in the end, auditor can prepare audit documentation summary or completion memorandum summary. In that, what he will write? What were significant matters identified during audit, which took your maximum time, and how did you address them? So what is the benefit? In the future, if someone wants to review, he can read only this much and form a conclusion that these were important matter. This is how they addressed. Simple. Auditor may consider to keep audit documentation summary. In summary, two things are there. Significant matters identified during audit, how these were addressed, which were important matter, how did you address, what are the benefits of this. It helps in effective and efficient review and inspection. With the help of this, review and inspection will be very easy. If someone is checking, he will not check whole documentation, only significant matter. Second, it helps auditor in understanding significant matter. Third, helps auditor to see if any essay objective is not achieved. Any standard on auditing objective is not achieved, which will prevent auditor from achieving overall objectives. Is he not able to achieve overall objective also due to that? That is reasonable assurance. Okay, simple. So it will help in three things. Effective and efficient review. It will help in effective and efficient review of documentation. Second, helps the auditor in knowing significant matter. Any other from the team can know significant matter. Third, helps auditor to see any individual standard on auditing objective is not achieved, which will help him, not from, which will also tell him that overall objectives are achieved or not. Okay, which will prevent auditor from achieving overall objectives. Simple, read once. Then tell me, what are the benefits of audit documentation? It helps in effective and efficient review of the audit. Third, helps the auditor in knowing significant matter. Okay, last one, helps auditor to see any particular essay objective is not achieved, which will prevent auditor from achieving overall objectives of audit. Simple. Now, audit documentation or audit file. What is audit file? It is one or more folders, okay, or paper, one or more folders or paper in physical form, electronic form that contain documentation of specific engagement. Whenever you do the work, okay, we do area wise: payroll, fixed asset, current liability, borrowings, share capital. What is audit documentation? Either filing those papers, okay, checking each one and preparing paper, or these days what you do in computer, there will be folders of all. Okay, fixed asset, this work you have done; current asset, this you have done; inventory, this you have done; current liability, this you have done. Entire file is audit file. Audit file is nothing but one or more folders. Okay, audit file is nothing but one or more folders in storage media or storage media in paper form, electronic form, or any other form that contain documentation of specific engagement. What is engagement? Reliance is one work. Tata's documentation is preparing one file, one big folder which has subfolders of all area, or preparing a big file. Okay, auditors shall do documentation after auditor's report. Okay, so you have to finish documentation after balance sheet date, that is auditor's report, within 60 days of auditor's report. Come here, come here, come here. See here, 31st March is there. 31st March is the balance sheet date, 31st March 2025. Within 60 days. Now don't tell 60 exact, we have to count, I know. So from after 31st March, 60 days we have to count, but rough take 1st June I have to prepare audit file. Audit file should be prepared within 60 days after the date of, okay, within 60 days, sorry, within 60 days of auditor's report. So 31st March is there. 1st June, let's assume, is auditor's report. Auditor report on which day? 1st June. So from 1st June, 60 days, that is 1st August. Okay. Don't tell exact 60, we can calculate, but forget it. I hope you understood. So what is audit file? One or more folders in paper form, electronic form, or any other form that contain documentation of specific engagement. Within how much time we need to prepare? 60 days from the date of auditor's report. So balance sheet is 31st March. Auditor report was signed on 1st June. So from there 60 days, 1st August we have to keep. And for how many years? How many years? For how many feras are there in marriage? Okay, they say no, in marriage 7 feras. So for 7 years. Okay, how many time our birth and death are there? 7 times. Some people tell like that. Forget it. Within 7 years from the date of auditor's report. Okay, so not from the date of documentation. Audit file should be prepared in how many years? 60 days. Okay, 60 days you have to prepare the audit file after the date of auditor report. We can prepare together also. Excellent, excellent. Okay, but they've given 60 days. Why? Because you need to compile everything. See, documentation, I will not do more procedure. Why? Audit is to over. I will not do one penny of extra procedure. It's an admin work. I'm just gathering everything. Yeah, brief summary of everything. It's just an admin work. Okay, whatever I have done, I will arrange it in a nice way. Audit documentation after auditor's report is not new procedures, right? Because report is given. It's just documenting everything. But for how many years you have to keep documentation? 7 years from the date of auditor's report. So auditor's report which date? 1st June. From there 7 years. So 1st June 2032 or maybe 30th May 2032. 7 years. Okay, I hope you are clear. Now let me read everything. Audit file is one or more folders or storage media in paper form, electronic form that comprise documentation for specific engagement. Auditor shall assemble audit documentation on timely basis after auditor's report. So you have to prepare on timely basis. What timely basis? SQC1, Standard on Quality Control 1, gives us time limit of 60 days after date of auditor report for preparing audit file, for completing documentation. Completion of file is admin work and doesn't involve new audit procedure or drawing of new conclusion. Work is over. You just have to assemble. Okay, changes can be made in file if they are administrative. But for how many years? Okay, documentation has to be kept for 7 years. You prepare within 60 days. But for how many years? Keep 7 years from the date of auditor's report. So auditor report on 1st June. Within 60 days, 1st August, prepare the file. Okay, but you have to keep till 1st June 2025 to 7 years. Okay, not 7 years from documentation, 7 years from auditor's report. Over. Last question. Okay, audit documentation is whose property? Okay, tomorrow client will come. Sir, you have done brilliant working in power and fuel. Can you share it with me? Because I have paid you the fees. Okay, so you have to share it with me. Okay, 20 lakh is our fees and you are not sharing. What is this rubbish? Share fast. directly tell him as per SQC1, Standard on Quality Control 1, audit documentation is the property of auditor. If he wishes, he may share some extract or portion of documentation, but that should not undermine the validity of work done or compromise his independence. Okay, sir, the way you are talking is absolutely wrong. First of all, this is my property. Had you requested, I would have still given 20 lakh. You have given me for report, not for my documentation. This book is my documentation. How dare? Okay, is the property of auditor. I have worked for my comfort, for giving audit report. You did not appoint me to do power and fuel working. I did on my own voluntarily. Okay, don't tell me like this that give me this, give me. I want, I will give. My main work, you have given money for audit report, not for documentation. Documentation is my property. If I want, I can share the working if you ask in a nicer tone. But it doesn't mean, it doesn't reduce the validity of work done. Okay? Or it should not affect my independence. I am not your servant. I am independent person. Nowhere related to you. So always remember, first of all, talk very nicely to me. Understood? Sorry, sir. Sorry, sir. Okay. He may, at his portion, make extracts or extracts available to the client, but that should in no way undermine, means reduce the importance of work done or compromise his independence. I am different from you. I am just sharing you in good faith. Okay, don't think that I am your employee. I am the auditor. I am an independent person. See, audit documentation is property of auditor. He may at his discretion make portion or extract of documentation available, but that should not affect the independence or reduce the validity of work done. Are you clear? Yes, sir, fully clear. Okay. Can branch officer has done some work? If stat auditor tells, give me the working, will he give? No, again, same. It's his. He just has to share the main report. Branch audit report he has to share to stat auditor. But documentation is not his property. Though state auditor is the main statutory auditor, branch auditor can say this is my property. If I want, I can share. Whatever work you do, documentation is your property. These are your rough working, these are your way of analysis. If you want, you can share, but in no way it should mean you are their employee, or it should reduce the importance of work done, or it should compromise your independence, that every time they will assume give us your working. No, if I want, I will share. Okay, I hope you understood. Very easy, very cute, very super simple chapter. What is the name? Chapter 6, audit documentation. I hope you liked the video. If you did like the video, give it a like button. Okay, so this video will reach to maximum people. There's only one intention of like. Okay, maximum people can feel same positivity, same hard work, same enthusiasm, same dedication. And if you are new to this channel, without subscribing, it is not allowed to go. Okay, thank you so much. Good night. Bye bye. Take care. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Hope you guys are doing good. Continuing with mega marathon revision series of CA Inter Audit. We have completed till now many chapters. We have done chapter number 1, 2 is strategy planning program, 3 identifying risky areas. Chapter number 4 is what audit evidence. Chapter number 6 we did audit documentation. Chapter number 7 we are just completing the audit, completion and review. And after completion and review we will give audit report, and then almost entire core audit will be over. Core means the main audit. So today's chapter is all about completion and review. Let's start right away. Those of you who don't know, these are audit revision lectures in only English. Yes, Hindi ones are already uploaded. These lectures are in no way substitute to the regular or fast track lecture. Of course, you have to do them. After that, if you do this, your confidence will be skyrocketing very high. For those of you who are asking from where this revision is done, this is done from the magic book. It covers almost entire subject in around 85 odd pages. Okay, so this is the magic book. Can we start, guys? Yes. Completion and review means all the essays which are relevant in completing the audit. Can we start? Yes. Starting with number 1 essay is essay 580. We have 6 essays here. What is SFIAT? Written representation from management. Okay. Always remember why this is a nice essay. This is a nice standard. Why? Written representations come in original form. So they always say original is better than photocopy. Number two, they are given by those who are responsible for preparation and presentation of financial statements. Okay. So they are coming from authorized people and it's directly coming to auditor, so it's more reliable than coming indirectly. Third, it is in original form. Fourth, these are written is always more reliable than oral. So these are few reasons that written representation is very good. What we generally tell management to write, okay, we tell them, see, written representations are written statement given by management to auditor to support certain matter or confirm certain matters. Here, written representations are written statement by management to the auditor to confirm certain matter or support other evidence. Let's take example. Okay, for example, financial statements are prepared as per FRF. You know, but when management writes, your evidence will be little more. So they will write, we have prepared financial statement as per FRF. Two, there are no frauds in the company. You know, but when they write, it is always little better. Third, all subsequent events are disclosed. Subsequent events means events occurring after balance sheet date. All related party transactions are properly shown. Okay. There is no impairment loss in the company. All the legal cases are properly disclosed to the best of knowledge and belief. We know all these things, but when someone tells, the assurance is even more. Many times, let's take a parallel example. Okay, you want to join a class, okay, that this sir is good, this teacher is good, this class is good. You ask your friend, so you have decided you will do it from here only, but when your friend also tells, your assurance will be even more. So written representations are written statement by management to auditor to confirm certain matter or support other evidence. What is confirm certain matter? You know, there is no impairment loss, but when management will write, okay, the assurance will increase. Support other evidence. You want evidence about related party completeness, that related party are complete. You know it, but when management will write, it will support your evidence about completeness of related party. Anything you can tell them, please write that changes in accounting policy if it is done, change in method of depreciation is done, effect is properly classified, described, disclosed. They will write, the assurance will be much more. I hope you are able to understand. Written representations are written statement by management given to auditor to confirm certain matter or support other evidence. Okay, and when they confirm, the assurance is much higher because it's coming from those who are responsible for preparation and presentation. One more thing here, they should in no way affect what? Our audit procedure. Remember, written representations are never primary evidence. They are always secondary evidence. Okay, means it will in no way affect the audit procedure to be done. I still have to do the audit procedure, but this will give me that extra cushion, extra comfort. Very easy. Understood till here? Now everything is super simple. Come here. If you want to see few written representations here, we will read 5. Financial statements are prepared as per FRF. I told you. All subsequent events are disclosed. All legal cases are disclosed. All related party transactions are shown. All the frauds are properly shown. Okay, same. Okay, there is no doubt about going concern. We know these things, but when someone will give assurance, our assurance will be even more. Okay, let us read. Come here. Written representations are written statement given by the management to auditor to support certain matter or confirm other evidence. 2. Audit evidence is all the information used by auditor in arriving at a conclusion based on which his opinion is based. What is audit evidence? All information arrived by auditor. One such evidence can also be written representation. 2. Written representations should come from those who are responsible for preparation and presentation of financial statement, that is the management, the CFO. Written representation do not give sufficient and appropriate evidence on their own. That is why I said it is always a secondary evidence. It can never be primary evidence. They will not give sufficient and appropriate evidence. I should collect evidence. They can act as a supportive evidence. They are never ever primary. Okay, and it doesn't affect nature, timing, and extent of audit evidence to be obtained or audit procedure to be performed. We have to do our normal procedure, get our evidence. This is an additional thing. Okay, this is the extra thing. This will give you extra cushion, extra comfort. Okay, come here. First question which can come. Very simple standard, very easy standard, be rest assured. objective of auditor regarding WR. Why should I take written representation? Okay, number one, to respond appropriately. Respond appropriately to two cases: to written representation given by management, not given by management. If they give, tell me what will happen. My assurance will increase. But if they don't give, tell me my risk of material misstatement will be high or low. Of course, high. Okay, I need to collect more evidence. Okay, different ways. My risk will be little high. I will feel is there any fraud or not, about which we will learn later. Number one objective of WR is to respond appropriately to two situations: to WR given by management, to written representation not given by management. Read nicely. To written representation given by management, or if management doesn't give written representation, in both cases I have to respond. To obtain WR, tell me if I get WR, what will happen? It means management has fulfilled their responsibility for preparation of financial statement and completeness of information given to auditor. It means management has fulfilled two responsibility. Number one, financial statements are properly prepared as per FRF and they have given all the information. So I will get more assurance. Third, to support other evidence relevant to financial statement or specific assertion in the financial statement. Okay, support other evidence. Let's take example relevant to financial statement. All AS are followed. All accounting standard are followed. You have given written representation. It's related to financial statement. Specific assertion means what? Related party are complete. There is nothing hidden in related party. All related party are shown properly. Related party completeness. I got comfort. Okay. So very simple. Tell me, why do I need WR? Rows. Objective of auditor regarding written representation are to respond appropriately to ROSE. Rows is there? No, rows. Why should, or what's the objective of auditor for WR? Rows are to obtain to respond appropriately, okay, to WR given by management or not given by management. What is O? To obtain written representation. What is SE? To support other evidence. I hope you are clear. Very simple. Tell me, what are objectives of auditor regarding WR? Rows. Number one, R, to respond appropriately. O, to obtain written representation, okay, and SE, to support other evidence. I hope you are clear. Read nicely. 5-second break. What are objectives of auditor regarding WR? Rows are to respond appropriately, to obtain written representation, to support other evidence. Read nicely. Over. Tell me, what are objectives of auditor regarding WR? To respond appropriately. O, to obtain written representation that management has fulfilled its responsibility for preparation of financial statement and completeness of information, to support other evidence, okay, related to financial statement or specific assertion in the financial statement. Easy? Come here. Can we ask WR from others? Management will ask. See, in certain fields, management don't have complete knowledge. So they will ask from expert who are expert in that field, given in English. Management may ask others who have specialized knowledge about that field. Number one, internal counsel regarding legal cases. See, if you want to know completeness of legal, you can ask the legal team. Internal counsel, you can take WR. Okay, management can take WR from internal legal team regarding legal case. Actuary, you know what's actuary? Okay, a provident fund will be how much? Gratuity provision will be how much? See, gratuity, PF is given at the time of retirement. Okay, but every year we need to book certain expense. Okay, because we are getting the benefit every year. So as per the matching principle, we need to book how much, that actuary will tell. So I will ask actuary. Third, staff engineer about environmental liability. Any environmental liability, staff engineer. Can we use this? Of course. Okay, management may ask others who are expert in their field, whom they will ask. IAS, internal counsel, actuary, staff engineer. Internal counsel, actuary, staff engineer. Internal counsel, actuary, staff engineer. Clear? Okay. Can management use the language to the best of knowledge and belief? To the best of knowledge and belief. All related party transactions are complete. To the best of knowledge and belief. Okay. Subsequent events are disclosed. To the best of knowledge and belief. There are no frauds done by the company or on the company. Yes. Anyways, you are giving reasonable assurance. If you are not giving complete assurance, absolute assurance, how can you expect from management? When you do, it's okay. If they do, it's not okay. Not fair. Okay. Allowed. They can write qualifying language to the best of knowledge and belief. Why? Because we are also giving what assurance? Reasonable assurance. So they will write best of knowledge and belief. Most important MCQ. Date of return representation should be as near to the date of financial statement as possible. Okay, don't keep it very far. It should be as near to the date of financial statement as possible. Return representation can never come after auditor's report. Okay, you have made report based on return representation based on this facts, so it should be before the date of auditor's report. That is what date of return representation should be as near to or as near to or as practicable to the date of auditor's report, but not after. Why? Because your report is based on return representation. Okay, simple. Now two more questions. Doubt regarding reliability of return representation. If there is doubt regarding reliability of return representation, they are saying there is no impairment loss. But you found impairment loss. What you will do? We will do other audit procedures to find out the actual impairment loss. Okay, and tell them to correct. But if they don't correct, we will re-evaluate. We will tell them, please show impairment loss. This entry has come. But if they don't correct, we will re-evaluate the dice of management. Dice, you understand? We play dice. Okay, we will understand the diligence, integrity, competence, and ethical values of the management. Okay, read here. If written representations are inconsistent with the evidence, they are saying there is no impairment loss. They are saying there is no fraud, but there is a fraud. Auditor will do more audit procedure to resolve the matter, do more procedure to find out exact amount of fraud, to find out exact impairment loss, so we can make a journal entry, and the matter is still unsolved. They are not solving it. We will re-evaluate, reconsider the dice of management. What is dice? Diligence, integrity, competence, ethical value. Underline. We will again reconsider dice, diligence, integrity, competence, ethical value of the management. If the auditor concludes WR are not reliable, after that, if you feel WR are not reliable only, they've given everything, but nothing is reliable, everything what they've told is false, okay, then appropriate action as per SS 705. Okay, if you feel mistakes are material, then qualified, material and pervasive adverse report will come. One last time. Okay, if you have any doubt regarding WR written representation, then we will do other audit procedures to find out the exact amount. If the matter is still not solved, we'll tell them, correct it, sir. You told there is no impairment loss. You told there is no fraud. Please correct it. If they don't correct, matter is still unsolved, we will re-evaluate the dice of management, diligence, integrity, honesty, competence, ethical values of the management. Okay, if auditor concludes in the end WR are not at all reliable, we will consider the impact on audit opinion as per SS 705. Understood? Okay. What if they don't give only WR? You go to management, Mr. Harish, please write WR of Reliance, okay, written representations. They are saying, but anyways, you will do the work. Why do you need? It's an additional evidence. Our standard is told, SFI 80 is told, okay. But if they don't allow only, then number one, A, discuss the matter with management. We will talk with management. Why are you not giving WR? Two, re-evaluate the integrity of management and effect it will have on WR, oral or written or audit evidence in general. Okay, if they are not giving, re-evaluate the integrity of the management and effect this will have on audit evidence. Tell them ROMM will be very high. Are you clear? And if I don't get evidence, I can also give disclaimer report. Take appropriate action, including possible effect in auditor's report as per SS 705. If you don't get audit evidence by other means also, you can give disclaimer report. Why? Because all the accounts you are not getting evidence. Not one. You feel mistakes could be material and pervasive because they are not writing only anything. Understood? So tell me here. If they don't give, what's the first thing? Discuss the matter with management. Okay, after discussing, re-evaluate the integrity of management and effect this will have on audit evidence. Okay, and third, take appropriate action, including giving disclaimer report. Why? Because all accounts you are not getting evidence. Okay, why are they not giving any evidence? It's not for one account. The effect could be material and pervasive because they are not writing only. Here they have written, it is wrong. Here they are not writing only. Very simple. So tell me, if management doesn't give WR, then what we will do? Discuss the matter with management, re-evaluate the integrity of management and effect this will have on written representations. Okay, and last, take appropriate action, including giving disclaimer report as per SS 705. Very easy standard, nothing great. Come to second standard, little nice. Okay, subsequent events. Next in the list is SA 560 subsequent events. What do you mean by the word subsequent events? All the events occurring after the balance sheet date but before the date on which audit report is prepared. So it basically means, okay, all the events after the balance sheet date but before the date on which financial statements are signed by auditor. All the events usually, okay. First of all, how to remember this standard? See, assume 5 is a balance sheet date. So after 5, what will come? 6. So after balance sheet, what will come? Subsequent events. Usually, let's take an example here. 31st March 2024 is the balance sheet date of which year? 23-24. 23-24. Tell me anything which will happen after that, after 31st March will come in which year? Not 23-24 but 24-25. Yes or no? Yes or no? Absolutely wrong. Okay, some events though they happen in 24-25 after 31st March but they will still come in 23-24. That is what this standard tells us. That is what is AS4 in your syllabus. Contingencies and events occurring after balance sheet date. Okay, so 31st March 2024 is which date? Balance sheet date. Okay, then come 20th June is the signing date of audit report. Is the signing date of audit report. Okay, then 15th July financial statements are published. Okay, financial statements are published on which date? 15th July. Okay, to whom? Shareholders. Okay, approval forget. 31st March balance sheet date. 20th July is the date on which signing is done of the audit report. Okay, 15th July they are published to the shareholders. It should be done before 30th September if you don't know, because that is the date of AGM, annual general meeting. Okay, but forget. One more time, let us remember the dates. Okay, see, before explaining this standard or this essay, that is essay 560, how to remember? 5 is balance sheet. After 5, what will come? 6. After balance sheet will come subsequent event. Before understanding this standard on auditing in detail, we should know AS4. What is AS4? Contingencies and events occurring after which date? Balance sheet date. So come here, balance sheet date is 31st March. After that, audit report is signed on 20th June. Okay, 15th July it's published to shareholder. It should ideally be done before 30th September. Okay, AGM should be held before 30th September. This much is clear. In between all date forget. Okay, come here now. What do you mean by contingencies and events occurring after balance sheet date? AS4. AS4 deals with all events which occur after the balance sheet date but before the date on which financial statements are signed by auditor. Okay, any event which occurs after the balance sheet date will come in next year. No, absolutely wrong. Some events though they occur after the balance sheet date but they have to be shown on the balance sheet date. Why? These are known as adjusting event. Okay, AS4 tells whatever are subsequent event divide into two parts: adjusting, non-adjusting. Adjusting, non-adjusting. Come to adjusting. Adjusting events though they occur after the balance sheet date but they have to be shown on the balance sheet date. Okay, non-adjusting, of course, if they occur after, they are not to be adjusted. They will be shown in next year only. One last time, what do you mean by adjusting event? Though they occur after the balance sheet date but they are to be shown on the balance sheet date, means though they occur in 24-25 but they are to be shown in 23-24. You will ask me why. Stay tuned. Okay, though these occur after balance sheet date but these are to be shown on balance sheet date. Number one, okay, required by law proposed dividend. Okay, first item is proposed dividend. Proposed dividend is declared in June, July, August, but you have to show it of last year. Why? Because it is actually of last year, so you cannot show in 24-25. It is the dividend of 23-24, so it should be shown in 23-24. Two, require going concern. Okay, if it affects going concern, what's the use of showing next year? Next year company will only not remain, so anything which affects the going concern should be shown in last year. Okay, third, very important, provide further evidence of conditions existing on balance sheet date. On balance sheet date, there were some conditions, okay, in balance sheet date. Now you got further evidence of those conditions. Then you have to show it on balance sheet date. Why? Because it is giving you further evidence of conditions existing on balance sheet date. On balance sheet date, there were some conditions, okay. Now you got further evidence. Let's take two examples, okay. Number one, Debtor, there was a doubt, so we did provision for bad and doubtful debts on balance sheet date. Balance sheet date, you did provision for bad and doubtful debts because there was a doubt on debtor. Now in July he became insolvent. Okay, before signing the audit report, we have to show it last year only. Entire amount bad debts, entire loss you have to book. Why? Because it is giving you further evidence of condition existing on balance sheet date. On balance sheet date there was a condition that debtor could become insolvent, and finally he became. Okay, let's take example number 2. Okay, you will understand a legal case. Okay, we knew we might lose this case or win this case, so we did some provision, because what if we lose? Okay, so on balance sheet, and finally the verdict of the case came in July and we lost the case. We had to pay compensation of 20 lakh. We have to book it last year. Why? Because it is giving you further evidence of condition existing on balance sheet date. Okay, so in 3 situations, though they happen next year, they had to be shown last year. It is all taught in AS4. I am just doing revision. Number 1, required by law. Example, proposed dividend. Number 2, affects the going concern. Number 3, provides further evidence of conditions existing on balance sheet date. On balance sheet date there was condition and we got further evidence of those conditions. Come here, come here, come here. All events except adjusting are non-adjusting. Whichever are not adjusting are non-adjusting. Divide into 2 parts. Okay, material, immaterial. Whichever are not adjusting are non-adjusting. Material, show in board of director report. Immaterial, ignore. Let's take an example. There happened fire in the month of May. Okay, but fire is not so big that it will affect the going concern. Okay, so it's a material thing. I will disclose in board of directors report. But anything, sale is done, purchase is done, those are immaterial things. Just ignore, just ignore. So till now we have not started SA 560. All I was doing was revising AS4, accounting standard 4, contingencies and events occurring after balance sheet date. One last time. Okay, so AS4, what? Contingencies and events occurring after balance sheet date are those events that occur after balance sheet date, but they are to be adjusted on balance sheet. Okay, start. Divide into 2 parts. Adjusting, non-adjusting. Adjusting, though they occur after balance sheet date, but they are to be adjusted on balance sheet date. Number 1, required by law, proposed dividend. Number 2, affects going concern. Number 3, provides further evidence of condition existing on which date? Balance sheet date. Okay, so required by law, going concern, further evidence of condition existing on balance sheet date. Okay, example, debtor turn insolvent. Okay, or legal case lost. All the events which are not adjusting will be shown next year. But if it's material thing, disclose in board of directors report for that year. Immaterial, ignore. Clear? This is AS4. You have to remember mainly this point only. Now, in this essay, now we are studying standard on auditing. If your AS is clear, you can also start from here. This standard basically deals with 2 things. Okay, all the events that occur after the balance sheet date but before the date of auditor's report, and after the date of auditor's report. Understood? One more time. See, all events occurring between 31st March to 20th June, the signing date. After 31st March but before 20th June, the signing date. Or all events occurring after the sign is done by what? Auditor. Okay, after the signing date. Okay, so come here, come here, come here. Now let us read what is given. Events occurring, SF 560, subsequent event. Welcome back. Events occurring after the balance sheet date and before the date of auditor's report, and facts which come known to the auditor after the date of auditor's report. After the date of auditor's report also, if we come to know of any event. Objective: to obtain sufficient and appropriate evidence that all the events that occur after the balance sheet date and before the date of auditor's report that require adjustment or disclosure. Tell me which will require adjustment. Adjusting event which will require only disclosure. Non-adjusting material is appropriately done. What do you have to see? Obtain sufficient and appropriate evidence that all the events which require adjustment are adjusted. or which are material only require disclosure are disclosed. Okay. 2. Respond appropriately to facts that come known to the auditor after the date of auditor's report. If we come to know of anything after the date of auditor's report, had we known before, we would have changed the report. How to deal with that? Okay. Second, forget as of now. As of now, you consider we have only one thing in this standard, that is all events occurring after balance sheet date, before date of auditor's report here. Okay. 31st March and signing date by partner is 20th June. All events in between that. Let us consider only this much. Okay. Come here. So first question what they can ask is, what are audit procedure regarding subsequent event? What are audit procedure regarding events occurring after the balance sheet date but before the date of auditor's report? Okay, very simple. First question, what are audit procedure regarding events occurring after the balance sheet date before the date of auditor's report? 4 points are there. Number 1, obtain understanding from management. Do you have any procedure for identifying subsequent event? Ask the management of TCS, sir, do you have any procedure for subsequent event? What they will reply, sir, we have two girls, okay, one is Kamna, one is Shefali. These both girls identify subsequent event in a diary, okay. So this procedure we have. Number 1, obtain understanding from management. Do you have any procedure to identify subsequent event? Number 2, okay, if they tell we have this procedure, ask them, have you identified any subsequent event for the current year and how it is adjusted? Please show. See, inquire with management where appropriate TCWG whether any subsequent event are identified which will materially affect the financial statement. Okay, has any subsequent, you are saying this Kamna and Shefali are there, have they identified any subsequent event till now? Third, read the minutes of meeting of, okay, owner TCWG after the balance sheet date. Read the minutes of meeting of owner TCWG after the balance sheet date and inquire about the matter for which minutes are not available. Okay, any minutes not available, ask them, can this become subsequent event? Okay, ask about the matter for which minutes are not available. Fourth and last, read the entity's latest interim financial statement. Many things you will come to know in quarter 1 report. You know, every quarter listed company have to report. So read quarter 1 report. Okay. Audit report is of course signed later in July, August. Quarter 1 report is from 1st April to 30th June. Read the entity's latest interim financial statement and see any things which require adjustment or disclosure. In that it is shown that a bad debts loss is booked. You tell them, sir, we knew about this condition in balance sheet only. You have booked in first quarter, wrong. It should be booked last year only because it is giving you further evidence of condition existing on balance sheet date. Number 2, any case, sir, this case was going on balance sheet date. How dare you show in quarter 1? Okay, please show it last year only. And you're like, okay, sir, we will do it. Okay, read the entity's latest interim financial statement report, quarter 1 report, and see anything which require adjustment that is made in the financial statement. Very simple. First question, if it comes, super simple. What are audit procedure regarding subsequent event? 4 points. Number 1, obtain understanding from management whether they have any procedure for subsequent event. Point number 2, inquire with management where appropriate TCWG whether any subsequent events are identified by you. Third, read the minutes of owner TCWG after the date of the balance sheet and inquire about matter for which minutes are not available. Last, read the entity's latest interim financial statement and see any matter that require adjustment or disclosure is appropriately done in the financial statement. Very simple. You have to learn at any cost. What are audit procedure regarding subsequent event? Very simple. Number 1, see, you want to know subsequent event by doing audit. Number 1, inquire with management where appropriate TCWG whether you have any procedure for identifying subsequent event. Okay, they say that we have these two girls who will identify subsequent event. Point number 2, inquire with management where appropriate TCWG whether any subsequent event are identified. You are saying this procedure is there, agreed, but have you identified any subsequent event till now or not? Okay, Third. Read the minutes of the meeting. Crucial things are discussed. From there you can know subsequent event. Read the minutes of the meeting of, okay, owner and TCWG after the balance sheet date. After the balance sheet date, and inquire about the matter for which minutes are not available. Last, read the entity's latest interim financial statement report and see anything which require adjustment or disclosure that is properly done or not. Small break, 40 seconds, learn nice, not 40, 20 seconds, learn nicely. Done. 1, 2, 3, 4, 5, 6. What are audit procedure regarding events occurring after balance sheet date, before date of auditor's report? Number 1, inquire from management and TCWG whether they have any procedure for subsequent event. If they tell this procedure is there, inquire with management and TCWG whether they have identified any subsequent event and how they are adjusted. Okay. Third, read the minutes of the meeting of owner TCWG after the date of balance sheet and inquire about a matter for which minutes are not available. Fourth, read the entity's latest interim financial statement and see any matter that require adjustment or disclosure it is properly done. I hope it's easy. Now come to the second part. Facts which come known to the auditor after a date of auditor's report. What if we come to know certain thing after date of auditor's report? Had we known before, we would have changed the report. Okay, here basically two things are there. Come here. See, facts which come known to the auditor after the date of auditor's report, but before the report is published, okay, before the report is given to shareholder, or facts which come known to the auditor after it is given to shareholder. One more time, two situations are there. Facts which come known to the auditor after date of auditor's report. Report is already prepared, but it is not circulated to shareholder. Usually after 15 days it is circulated. So 20th June to 15th July. 20th June to 15th July. Okay. Or things which come known to the auditor after the report is given. After the report is given to all the members. Okay. So after 15th July, if we come to know about anything, what to do? One last time. Okay. Things which we come to know after the date of auditor's report, but before the report is circulated to member, or things we come to know after the report is circulated to member. Had we known it before, we would have amended the report. So two situations. Number 1, last time I am saying all the things which we come to know after the date of auditor's report, but before the report is circulated to the members. Okay, so this we have to see before circulated, but had we known before, we would have changed the report. 2, all the things which we come to know after the report is circulated to member. After circulated, had we known before, we would have changed the report. What to do? Okay, start. Facts which come known to the auditor after date of auditor's report, but before the report is circulated to members. Okay, but had we known before, we would have changed the report. Number 1, let's take an example. Okay, Patanjali audit you are doing, Baba Ramdev Patanjali. Suddenly you come to know that, okay, audit report is signed, you are enjoying in Goa, 5-star hostel, hospital, sorry, what hostel? A 5-star hotel you are there, enjoying with friends. Okay, Goa. Okay, as soon as you are enjoying there, suddenly newspaper comes. Okay, Patanjali is not given relief by court. All the medicines of Patanjali are false. Okay, they are saying it is Ayurvedic, but even fever is not cured. Forget about corona with this medicine. Okay, so inventory is valued at cost or NRV, whichever is lower. Everyone knows AS2, but here NRV of medicine is 0. Why? Because it will not be used anywhere. And Baba Ramdev had 200 crore of inventory. So 200 crore of loss you have to book. Why? Because this stock is of no use. This medicine he had told will be working for COVID, but it will no longer work. What will do? Now we have to evaluate cost for NRV. NRV is 0, net realizable value, because court has said these medicines are unconstitutional. Very, very simple. Tell me what to do, what to do, what to do, what to do. Very simple. Facts which come known to the auditor after the date of auditor's report, but before circulated to member. Okay, number one, discuss the matter with management. As soon as news is there, hello, Baba Ramdev, what to do? I am also seeing on TV, sir. You tell what to do. Discuss the matter with management. See whether financial statement needs amendment. Are you going to change the financial statement? Inquire how management will address this in financial statement. Okay, they are saying, sir, whatever you do, we will tell. Okay, for example, if you want that we should book the loss, we will book it. Okay, very simple. As soon as you come to know of any such thing, discuss the matter with management. See whether financial statement needs amendment. Do we need to change? Third, inquire with management how they will address this in financial statement. If they change, then two parts. If the management amends the financial statement, auditor will perform the audit procedure on new financial statement and give new report. Very simple. Auditor will do audit procedure on. Okay. New financial statement. We will do audit procedure on new financial statement. Give new audit report. Game over. Very simple. Come here. But they are saying we are not changing entire financial statement. We are only changing to the extent of subsequent event. Okay, we are saying original financial statement same, only to the extent of subsequent event we are checking. Okay, changing, sorry. Then we will amend the auditor's report to include extra date. You will add one more date in auditor's report. That okay, in this date, between this date and between this date, new date, we have only checked subsequent event. Okay, if the amendment is made only to the extent of subsequent event, then amend the auditor's report to include extra date, that is dual auditor report. In that extra date, what you will write? We have only checked subsequent event, rest was already checked. Okay. Or some people don't write dual date audit report. It will spoil auditor's reputation. They will feel shareholder will be confused. Provide new auditor's report, but write their EOM paragraph, emphasis of matter paragraph, that indicates that we have performed work on subsequent event. Okay, provide new auditor's report. Okay, or second way, if you don't want dual dated, you provide new auditor's report, but in that new write in emphasis of matter paragraph, which we will learn in next chapter. Emphasis of matter paragraph, what you will write? That we have done work on subsequent event. Okay, in emphasis of matter paragraph, right, we have specially worked on this subsequent event. Rest report is same, but we have worked on this subsequent event. I hope it is easy. Okay, but last time, if you want, we can do. As soon as you come to know of anything, had you known it before, you would have changed your audit report. Number one, discuss the matter with management. Two, see whether financial statement needs amendment. Inquire how management will address this in financial statement. If management changes financial statement, okay, you will do the audit procedure on the new financial statement and issue new report. You will do audit procedure on new financial statement and issue new audit report. But if amendment is made only to the extent of subsequent event, they are not changing full financial statement, only changing subsequent event, then what shall I do? Very simple. Come here. Amend the auditor's report to include extra date. Amend the report to include one more date. Restricted to that amendment. Make a new report and only write one extra date. Nothing else to do. Amend the report to include one extra date. Okay. Restricted to that amendment. Or provide new report. Provide new report with EOM or OM. Okay. Emphasis of matter paragraph or new matter paragraph that tell us. Emphasis of matter paragraph will tell us what? We have done work on subsequent event. One last time, if they change financial statement, do new audit procedures on the financial statement, issue new report. But if changes only to the extent of subsequent event, changes only, then what we'll do? Provide dual dated audit report. Provide an audit report with an extra date that between this date and this date, we have only checked subsequent event. Or provide new auditor's report with EOM paragraph, emphasis of matter, about which we will learn in the next standard, next chapter, emphasis of matter paragraph, that we have checked subsequent event. Understood? Either ways, it's okay. Come here. If management does not change financial statement, they are saying we will not change. What we will do? Inform management not to issue report. Management, if you are not changing, don't issue report because you are misleading shareholder. If they still issue, okay, we will take action to prevent reliance on a report. What action we will take? We will issue public notice that management did not listen to us. Okay, we will issue public notice in newspaper. Don't rely on the report. Don't rely on the report. It is not our report. Number one, if management, see, audit report is signed by us, but it's not issued to member. We will tell, don't issue. Inform management not to issue. If they still issue, take legal action to prevent reliance on report. You can give a public notice. Don't rely on this report. Don't rely on this report. There could be changes. No need to write more. Understood? Come here. Sir, oh sir, what if I come to know after the report is issued to member? Had I known before, I would have changed the report. After the report is issued, first line in both you have to write one thing. Usually there is no obligation for anything which happens after the report is issued to member. But, had I known it before, we would have amended the report. Then again, same 3 point. Discuss the matter with management. See, financial statement needs amendment. Inquire how management will address this in financial statement. If they change financial statement after the report is issued to member, still changing the financial statement, I will issue new audit report. I will issue new audit report. If they don't change, they are saying will not change, it's already circulated. Ensure every recipient is informed about the change. Whoever has got financial statement is informed through a letter that this change has happened. Inventory should be down valued by 200 crore. Ensure every recipient is informed. If they don't inform, take legal action to prevent reliance on report. You can give a public notice. Don't rely on report. Understood? Okay. What if after it is circulated? First line what you write? Okay. Usually auditor has no obligation to do anything after the report is circulated to member. But had he known before, he would have amended the report. Then, number one, okay, inquire with management how they will address this in the financial statement. Same 3 point. Discuss the matter with management. See, financial statement needs amendment. Inquire how management will address this in financial statement. If they change, we will issue new auditor report. What if they don't change? So if they don't change, then ensure that every recipient is informed about the change. Tell them you are not changing, inform everyone about the change. If they don't inform, then what to do? Take legal action to prevent reliance on the report. Okay. So your 3 situations are there. Wonderful essay, tricky essay, but I have explained in the best way. Number one, events occurring after balance sheet date, but before date of auditor's report. After auditor report, but before circulated to member. Okay, after date of auditor's report, but after the report is circulated to the member. I hope it is clear. Come here, one more essay is there, very interesting, very mind blowing. That's auditor and going concern assumption. Okay, auditor and going concern. How do we remember? See, management, WR from management is 580. After 5, what will come? 6 will come. After balance sheet, subsequent event, 560. If you don't do after 5, 6, 5, after 5 directly 7 will happen. Auditor and going concern assumption. Auditor and going concern assumption. Auditor and going concern assumption. Very nice essay, very amazing essay. Concentrate here. First, little basic knowledge is required. See here. 1, 2, 3, start. Basic thing, okay? Before starting this essay, going concern is always, see, one day everything will be closed, okay? First of all, why going concern is a big thing in life that you need to understand. What is going concern? Business will continue for unlimited years. But someday every business is going to get closed, be it Reliance, be it Tata, be it any damn business, TCS, okay? They are going to get closed. But what's the problem if they get closed? Means going concern is not valid. Okay, and whenever going concern is not valid, assets and liabilities are valued on liquidation basis, that is net realizable value. They are no longer valued at cost. Why? Because going concern is not valid. Very simple. Okay, understand, going concern is the most important essay, because whenever going concern is not valid, okay, you need to tell shareholder company is getting closed so they can get their funds back. Okay, they can take the action. They should know in between or before, well in advance. That is what is the work of auditor. This all brief background I am giving. Now tell me, when can I say there is doubt on going concern? You will say, sir, company is in loss. Paytm is in loss since years. Can we say going concern affected? No. Okay, Zomato was in loss since years. Can we say going concern affected? No. Amazon was in loss for 17 long years. Can we say going concern affected? No. Okay, we have to. Now listen, now I am starting the essay. We have to check going concern for foreseeable future. Now your next question will be, what is foreseeable future? 12 months from balance sheet date. Any company audit you do, you have to see on balance sheet date, will it work for 12 months? Answer is 2, either yes or no. If it is a yes, don't do anything, okay, going concern is valid. If it doesn't work for 12 months also, then we will do something. A going concern is always checked for foreseeable future. What is foreseeable future? 12 months from balance sheet date. So anytime, remember, you go to do audit of any damn company, just check one thing, company will work for 12 months or no from balance sheet date. If answer is yes, going concern is valid, don't do anything. In 99.99% case, going concern is valid. But if it doesn't work for 12 months also, then we will say going concern is invalid or material uncertainty exists. Either of the two options which we'll study. Come here. When going concern is not valid, okay, assets and liabilities are shown on liquidation basis. That is the big thing. We need to tell shareholders the true worth of company. Come here. So when will I have doubt? Whenever there are indicators. See, there are financial, operating, other. Whenever you find there are indicators, okay, there can be a doubt on going concern. So number one, while doing audit, certain indicators are given by standard: financial, operating, other. Let me name one, okay. What's financial? Adverse ratio. Current ratio is adverse, you don't have money to pay, okay. Negative operating cash flow, financial. What's operating? Loss of raw material, okay, loss of major customer, lot of competition is there. Other, legal cases are there on company. If there are indicators, then what we'll check? Mitigating factors, okay, we will check mitigating factors. Come here. Whenever indicators exist, we will check mitigating factors, okay. What is mitigating factors? Does management have a good plan? Okay, we feel going concern is not valid, but is the plan strong enough? Whenever there are indicators, we will do additional procedure, that is check the mitigating factor. After checking, three conclusion can come. Going concern is valid, don't do anything. Going concern is invalid, of course assets and liabilities have to be shown at net realizable value. Last, going concern is valid, but material uncertainty exists. See, sometimes what happens? You are in love. Sometimes you are not in love. Sometimes it's complicated. So this is that complicated third one. Going concern is valid. Okay, we feel company will work for 12 months, but there is little doubt. Little, but we cannot say it's invalid. We cannot say it's invalid. It doesn't mean I don't love him. But I don't love him that way. Understood, sir. Fully understood. Going concern valid. I love you. Going concern invalid. Oh, I thought you are my brother, baby. Okay, you are thinking I love you. Are you mad? Look at yourself. Look at me. Invalid. Okay, going concern is valid, but material uncertainty exists. It's valid, but there's a little doubt. There's a little doubt. So after checking mitigating factors, three things will come: going concern valid, going concern invalid, going concern valid, but it's complicated. Material uncertainty is there. I hope you understood this much. If not, you will still understand. Be rest assured. Come here. Now I am starting the standard. This was a background. Auditor has to obtain sufficient and appropriate evidence regarding going concern. However, there are limitations on going concern. Why? Because it's for future. Who can predict future? You are saying going concern is valid. Doesn't mean it will be valid. What if COVID comes again? Okay. People again, Jet Airways. You look at Jet Airways. Who would have thought Jet would be closed? Who would have thought Indian cricket team sponsor Sahara would be closed? Who would have thought Satyam, top three company, would be closed? Okay. So if we don't say anything about going concern, doesn't mean going concern is valid, because no one can predict the future. Auditor cannot predict future condition. So absence of anything about going concern cannot be a guarantee that going concern is valid. As of now, it's valid, but anything can happen. There is an inherent limitation in going concern because future is in no one's hand. Are you clear? Okay. So tell me, when can doubt come? When there are indicators. How many indicators are there? Three: financial, operating, other. Come here. What is financial indicator? Net liability or net current liability. When liability is greater than asset, it's an indicator. Negative operating cash flows are negative. Fixed term borrowing approaching maturity without realistic chance of repayment. Fixed term borrowings are there. You have to repay EMI, interest, principal. You don't have money. indication of financial support by creditor. Creditor are not giving you goods on credit. Okay, adverse current ratio, adverse quick ratio, adverse super quick ratio. Are you clear? So very simple. Tell me what are financial? Net liability, net current liability, negative operating cash flow, withdrawal of financial support by creditor. Okay, fixed term borrowing approaching maturity without realistic chance of payment, adverse key ratios. I hope you understood. I hope you understood. I hope you understood. Okay. One last time. Net liability or net current liability. You don't have to learn. Roughly also you can learn. Net liability, net current liability, adverse ratios, negative operating cash flow, fixed term borrowing approaching maturity without realistic chance of payment. What are operating indicator? Here remember three words: raw material, work in progress, finished good, customer. Raw material, work in progress, finished good, customer. Raw material point will be what? You only tell me. Okay, raw material point is very simple. Okay, withdrawal of major supplier, loss of major supplier who was supplying material is no longer there. Of course, going concern affected. Okay, loss of major supplier. Okay, there is lot of competition. Okay, in WIP, what we'll say, labor difficulties are there, so we are not able to produce. Okay, finished good, loss of major customer, loss of major customer, there is lot of competition. Anything you can write. Okay, see here, management intention to liquidate entity, loss of key management, loss of major market supplier, labor difficulty. Okay, highly successful competitor, loss of major customer. Very simple. Okay, see, if you want to remember, again same: raw material, work in progress, finished good. Raw material, loss of major supplier. Okay, labor difficulty, you cannot produce only work in progress, you cannot produce only work in progress. Okay, now come to FG, finished good, loss of major customer. Okay, your major customer is no longer there, loss of major customer, labor difficulties are there. Okay, management intention to liquidate the entity. Okay, emergence of highly successful competitor. Very simple. What are other indicator? Tell me. Okay, lot of cases are there on company. If those cases have become true, we will lose the case and company will be closed. Okay, non-compliance with capital adequacy or other ratios. In banks, usually they have to maintain ratio. Non-compliance with capital, regulatory, other ratio. Pending legal cases, if successful, pending legal case, if successful, we cannot satisfy. Changes in law, regulation. Okay, we have gaming business, government has increased GST on gaming, our business will be closed. Plastic business, plastic is going to be banned by government in future. Okay, we have liquor business in Bihar, it is banned in Bihar, liquor, we are gone. Changes in law. Uninsured or underinsured catastrophe, if they occur. What is catastrophe? Major disaster. Any disaster, we have not done insurance, or insurance is of 10 lakh but building value 2 crore. Okay, so if catastrophe will occur, we will go. What is catastrophe? Major disaster. Simple. So tell me, what are other indicators? Non-compliance with capital adequacy, other ratios. Okay, uninsured, underinsured catastrophe, pending legal cases, changes in government laws, rules, regulations. Simple. Okay, tell me other indicator. Okay, lot of pending legal cases. If they happen, company will close down. Okay, changes in law, regulation, or government policy. Okay, uninsured or underinsured catastrophe. Catastrophe means major disaster. So whenever there are these indicator, three: financial, operating, other, financial, operating, other, we will check mitigating factors. Okay, come here. These additional procedures are done only when there are indicators. One last time, these additional procedures are done only when there are indicators. Whenever there are indicators, we will do additional procedure. Come here. Auditor shall perform the following procedure. Okay. Tell me additional procedures. When are these done? Additional procedures are done when events or conditions are identified. Whenever there are event, whenever there is a condition, we will do additional procedure. Auditor shall perform additional procedure only when events or conditions are there. Number one, when management has not yet made an assessment, tell management to make an assessment of going concern. Okay, that time we will call management. Management, please make going concern assessment. They will tell what? Sir, going concern valid only. Why are you worrying? Okay, or you only make assessment. Sir, in our standard it is written, you have to make assessment. I cannot make assessment. It's your company. You live 365 days in this company. Okay, how can I make your assessment? Okay, our standard is told management will make assessment. Okay, when management has not yet made assessment, tell management to make assessment. After they make, they will give you report. Sir, oh sir, oh sir, this is the report. Sir, this is the report. See, going concern report. I will tell, okay, understood. Evaluate the management plan for future action in relation to going concern. Do you feel it will be valid? Okay, in this much competition, management plan is feasible. Evaluate the future plan of management in relation to going concern. In that plan, what is there? Cash flow is there. See the assumptions used in the cash flow. At what rate they will grow. Okay, third point is what? Where entity has prepared cash flow forecast. See the assumptions used in forecast are reasonable or not. Okay. 4. Okay, call again management. Management, is there any additional facts or situations that are available since the time you made assessment? You made assessment before 10 days. In 10 days, have you seen any other change? Consider any additional facts or information that are available since management has made assessment. Last point, okay. If you feel plan is good, request WR from management, written representation from management regarding the plan and future feasibility of the plan. Regarding future plan and feasibility of the plan. Understood? 100% you have to remember this. Okay, we will try our best. Okay, tell me, when are these procedures done? Whenever there are financial operating other indicator, we have to check, is there a additional procedure we have to do? Is there a strong mitigating plan? Point number 1, where management has not yet made assessment, tell them please make assessment of going concern. They will say you make, we will tell no, you have to make. Okay, number 1, when management has not yet made assessment, tell management to make a assessment. Evaluate the management plan for future action in relation to going concern. Check the plan is good or not. Okay, in relation to going concern. Third, okay, in plan what is there? When entity has prepared cash flow forecast, see assumptions in the forecast. Okay. Fourth, consider whether additional facts or situations are available since the time management has made assessment. Consider any additional facts, additional situations are available. Okay, additional facts or information are available since the time management has made assessment. Last, request WR from management, written representation from management regarding the plans and regarding feasibility of the plan and future plan. Regarding future plan and feasibility of the plan. Very simple. We have to learn anyhow. Last time I am speaking. Very simple. Imagine you are auditor, only then you can learn. If you try to learn, not possible. Okay. Number 1, when management has not yet made assessment, additional procedure, tell them please make assessment. Then they will give you assessment. Okay. Evaluate the management plan for future action in relation to going concern. Is the plan good or not? You have to see. Inside plan, what is there? Cash flow forecast. When management has prepared cash flow forecast, see the assumptions used in the forecast are appropriate. Okay, then okay, ask management, is there any additional conditions or information that are available since the time management has made assessment? In this 10 days, has the plan changed? Okay, additional facts or information is available. Last, okay, request written representation from management regarding future plan and feasibility of the plan. Okay, request WR from management regarding future plan and feasibility of the plan. Learn nicely. Small break, 30 seconds. Done. Chalo, 1, 2, 3, 4. Come on, number 1. Whenever there are indicators, we will check mitigating factor. Whenever there are indicators, we will check mitigating factor. In that, what we will check? 5 point. Where management has not yet made additional procedures to be done. When indicators are there. So, what are additional procedure? 5. Number 1. When management has not yet made assessment, tell management to make a assessment. 2. Evaluate the management plan in relation to the future, in relation to going concern. See whether the plan is feasible or not. What is there in the plan? Okay, cash flow. Where management has prepared cash flow forecast. See assumptions used in the forecast. Fourth point, okay, see whether any additional facts or information is available since the time management has made the assessment. Okay, last, request written representation from management regarding future plan and feasibility of the plan. Regarding future plan and feasibility. After that, after checking this entire plan, three conclusion can come. Number one, going concern is valid. Okay, number one, you feel everything is perfect, plan is super perfect, I think they will be fine. Two, you might feel that plan is third class, nothing is good in the plan, absolutely horrible, company is going to fail, going concern invalid. Or you might feel it's valid, but still I have my own concerns. I cannot say it's invalid. I cannot say that it will close down, but I cannot say it is good also. In between, it's complicated. Going concern is valid, but material uncertainty exists. What material uncertainty exists? Clear? Okay. Come here now. Last slide. Okay. Number one, going concern is not valid. Going concern is not valid according to you. Okay. So number one, okay, if management has prepared financial statement, if it's invalid, you have to show assets and liabilities at NRV. If management has prepared financial statement on NRV basis, liquidation basis only, we will give unmodified opinion, clean opinion. Why? Because they have given whatever was required. You had to prepare financial statements on NRV. They prepared on NRV only. We will give unmodified opinion, but in emphasis of matter paragraph, which will come in next chapter, we will write we have followed alternate method of accounting. Usually financial statements are valued at cost, but we have valued them at NRV. Come here. Okay, we will write in EOM paragraph that we have followed alternative method of accounting. Come here, come here, come here. Management has said we will not change financial statement. We will still show them at cost only. If management has prepared financial statement as per the going concern is valid, but actually going concern is not valid, they have prepared on cost, then what we'll do? We will give adverse report because everything is wrong. Assets, liability, income, expense, everything is wrong. Okay, because it will affect all accounts. Very simple. Okay. Last time, if you want, we can speak. If going concern is not valid, but management has prepared financial statement on liquidation basis, give unmodified opinion, but in emphasis of matter paragraph, right, emphasize that alternate method of accounting is followed. But okay, if it's invalid, but they have still shown or prepared financial statements at cost, which is wrong, then which will give? We will give an adverse report because assets, liabilities, everything is wrong. I hope it's clear. Come here, come here, come here. Going concern is valid, but there is material uncertainty. Going concern valid, but there is what? Material uncertainty. If adequate disclosure about material uncertainty is made in financial statement, they will write in financial statement that material uncertainty is there. We will give unqualified opinion, but in auditor's report, what we will write? Separate heading we will write under going concern. Material uncertainty is there relating to going concern. Okay. So if going concern is valid, but there's material uncertainty, if they write in financial statements, see this financial statement will be valued at cost. But if they write in financial statement that material uncertainty is there, it's written in notes to accounts, then what will give? Unqualified report. But in auditor's report, we will write under going concern valid, but material uncertainty exists. But what if they don't write in notes to accounts? If the disclosure is not made in the financial statement, if they don't write about material, they are like, no, 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 shareholder will feel bad, shareholder will not invest in my company, I will not write all this. Then I will give qualified or adverse opinion, qualified or adverse. If I feel little it will be affected, then qualified. If I feel that everything is affected, then adverse report. In basis of opinion, I will write material uncertainty exists, but same is not disclosed in financial statement. There is a doubt about going concern, but they have not written the same. Clear? Last time, if valid, to no tension. If valid, then to they will write only valid. Okay. If going concern is valid, but material uncertainty exists, if they write in notes to accounts, no problem, unqualified report. But I will write in my auditor's report, separate heading, material uncertainty is there relating to going concern. Understood? Come here, come here, come here, come here, come here. If adequate disclosure is not made in financial statement, no disclosure is made, auditor shall express qualified or adverse report. If they don't write in notes to accounts about material uncertainty, I will give qualified or adverse report. In basis of opinion, I will write. Why have I given qualified or adverse? In basis of opinion, because material uncertainty is there and same is not written in notes to accounts. Clear? I hope it's clear. So two complicated standards are done. Now we have new standards, brand new three standards, but all three are very easy. Okay. So one more time. Till now we are done with three standard. SA 580 written representation from management. SA 560 after 56 will come balance sheet event. SA 570 going concern. Okay, so now how to remember all three in one go? After 56 will come after balance sheet subsequent event. If you don't do after 56, okay, your after 57 will happen going concern. Your going concern will be in doubt. SA 570. Whenever going concern is in doubt, you have to take WR from management. SA 580. How to remember? After balance sheet, what will come? After 56 will come subsequent event. Okay. But if you don't show subsequent event and do lot of fraud, SA 570 going concern will be in doubt. Whenever going concern is in doubt, you have to take WR from management, written representation from management, SA 580. Come here. Three new standards, but all three very easy. 5 5 10 10 minute standard, super easy. Concentrate. Significance of communication with those charged with governance. This standard purely tells us why auditor needs to communicate with those charged with governance. What's the meaning of communication? Why should you communicate at all with TCWG? Okay. First of all, understand thing number one. Who is those charged with governance? Every company has their own management. Tata Steel, Tata Motor, okay, TCS, Tetley, okay, Taj Hotels, okay. Then we have what Tata Salt, we have Tata Communication, Tata Consumer. Every company has their own management. But people who give direction above management, there are certain non-executive, non-independent directors. Okay, there are certain top level people who give direction to the company, who set the vision, the mission, who oversee the financial reporting process. Above management, there are certain people who manage all companies. They give direction to the company. They are responsible for financial reporting. They communicate with auditor. They are in a trust type of position. They will ensure nothing wrong happens to shareholder. Management doesn't misuse company for their own benefit. Okay, the shareholders' interest is protected. Those are those charged with governance. They are above the management. They are responsible for financial reporting process. Nothing wrong should happen. Auditors' interest should be protected. Shareholders' interest should be protected. Usually we have independent directors there. So. Okay, directors or management doesn't misuse their power, doesn't abuse the office of power. Understood? Okay. So now, why should you communicate significance? See, what's the meaning of SA 260? Significance of communication with those charged with governance. Okay. Basically, here in this standard, two, three words. Okay. Why is this standard there, first of all? Okay. Number one, it will tell what all you need to tell to those charged with governance. What are responsibilities of auditor? What are responsibilities of those charged with governance? Why it is important to communicate with those charged with governance? Okay, so there is transparency. So there is a trust between both. So audit can be done in a nicer way. Okay, so this basically is not a average standard. This basically tells that why should you communicate with those charged with governance, or how to communicate with those charged with governance, what to talk to them, what not to talk to them. Why? So there is clear picture. Roles of auditor are clear. Roles of those charged with governance are clear. Okay, very simple. I will just read time pass standard. It is communicate clearly with those charged with governance. Responsibilities of auditor. We will tell those charged with governance, these are our responsibility, these are your responsibility. Obtain. Why is this standard there? So we can obtain from those charged with governance information relevant to audit. What you have to obtain. To communicate with those charged with governance, what are their roles and responsibility for financial reporting process? Sir, these things you have to do. Okay, if this standard is there, it will promote two-way communication between auditor and those charged with governance. If communication is good, there will be better trust. Okay, if better trust is there, audit can be done in nicer way. Nothing good till here. Only one question can come from here. This is this. Why should you communicate with TCWG? More than why? What will you communicate? Matters to be communicated to. Those charged with governance. Four matter. Number one, plan, scope, and timing of audit. What do you mean by scope? These things I will check. I will check everything relevant to financial statement. I am not concerned with production, marketing, HR. I am only concerned with financial statement. So number one, what I will tell to them, okay, matters to be communicated to those charged with governance. Number one, plan, scope, and timing of audit. This is our scope of audit. We will check these things. Timing, this is when we will give you report. Okay, these are the dates when audit report will be ready. If it's a quarterly audit, every 3 months we will do the audit. So number one, what will you tell with them? Plan, scope, and timing of audit, including communicating significant risk in the entity. This you remember, always four are significant risk we have learned. Okay, related party, fraud, non-routine, judgmental. Related party, fraud, non-routine, judgmental. If you remember, judgmental matters. Second, independence requirement. In case of listed companies, we have to tell them we and our team are independent. We are nowhere related to the company. So audit will be done in unbiased way. Okay, we will communicate whether partner, team, and all our network firms. You know what's network firm? Okay, many times we have 10 firms under me. All these are also independent. They have also not purchased shares of company. Like Ernst and Young, I used to work there. We had 10 associate company, SR Bartley Boy, SV Ghatalia and company, etc. Me, my team and network firm are independent, and if there are any threats to independence, they are removed. If there are any threats to independence, we have removed them. Means there is no threat to independence. So in case of listed company, we need to tell them we are independent. Three people, partner, firm, and network firms are independent. If there is any threat, if anyone had shares of company, we have sold the shares. Okay, we have sold the shares. Okay, if any threat exists, we have safeguards to eliminate them. This thing should be in writing. Okay, independence requirement you need to give in writing to those charged with governance. Fourth, they will tell you only prepare financial statement. We will clearly tell them, sir, our responsibility is to give an opinion on the financial statement, not prepare. Like mom will prepare the food, my work is to eat the food. Same way, my opinion is to give. My responsibility is to form an opinion, not prepare a financial statement. That is the work of your management, sir. Please tell your management. Responsibility is to form an opinion. Clearly tell them our responsibility is to give an opinion. Okay. Fourth, what you will tell to them? Tell me why to tell. So there is more transparency. Roles are clear. Communication is better. See, the only work of this standard is what to tell to those charged with governance. Why to tell to them? So roles are clear, responsibility are clear, transparency is there, work is done in better way. Now, last what we'll tell, significant findings from audit. In their 5 points are there. Significant qualitative aspect of clients accounting policies, practices, and estimate. Qualitative aspect means why this accounting policy is followed, okay, or why this policy could be better. Example, many times we will book sales, okay, whenever order is received, we will tell them this is a wrong policy. We should book the sale when delivery is done. Significant qualitative aspect of clients' accounting policies, practices, and estimate. Usually, we should never book sale when order is received because there are sales return also. Then you have to do a lot of sales return. Always book when it is delivered or when goods go out of. That we'll discuss, of course, when goods go out of, go down. Second, significant difficulties found during audit. Okay, significant matters that were discussed with the management. This we can tell to them. Any other significant matter that in auditor's judgment are necessary for the oversight of financial reporting process. I think I should tell you all these things. Okay, here. Oversight in financial reporting process. There is no proper process. You don't have any qualified charter accountant. Such things. Okay, any other matter which you feel is necessary. Oversight means taking care of financial reporting process. If you feel anything, you can tell them. Circumstances which may change the form and content of report. See, whenever there is adverse report, disclaimer report, form and content of report will change. That is, form means format, content means what is inside the report will change. Okay, whenever there is qualified, disclaimer or adverse report, this also we will tell to them. Tell me what we will tell in significant findings. 5 points. Try to remember. If you can, you are amazing. Significant qualitative aspect of clients' accounting policies, practices, estimate. Okay. Significant difficulties encountered during audit. Significant matters that were discussed with management. Any other significant matter that in auditor's judgment is necessary for oversight of financial reporting process. Last, circumstances that will change form and content of auditor's report. Clear? Try to remember if you can. Significant findings from audit last time. Significant qualitative aspect of client accounting policy, practices, estimate. Significant difficulties encountered during audit. Okay. Significant matters during audit that were discussed with management. Any other significant matter that in auditor's judgment is relevant for financial reporting process. Okay, that is necessary for oversight of financial reporting process. And last point, circumstances that will change form and content of auditor's report. Learn nicely. Your time starts now. Try learning, because only this one question can come, nothing else can come. This standard is of 5 minutes. Okay, one, two, three. Significant findings from audit. What you'll write there? Significant qualitative aspect of client's accounting policy, practices, estimate. Significant difficulties encountered during audit. Any other significant matters that were discussed with management. Any other significant matter that in auditor's judgment is necessary for oversight of financial reporting process. Circumstances which will change form and content of auditor's report. Come here. So 4 things I will tell to TCWG. Very good. How many things? 4. Sirf itna sa ख्वाब hai. There is one song. You just have to remember sirf. Sirf means only this much. Sirf. S. Plan, scope and timing of audit. I. Independence requirement. R. Our responsibility is to form an opinion on financial statement. F. Significant findings from audit. Significant findings from audit. Tell me, what will I tell to TCWG? 4 things. Sirf. Plan, scope and timing of audit. I. Independence requirement. R. Our responsibility is to form an opinion on the financial statement. F. Significant findings from audit. Tell me, what will I tell to TC? Very simple. Communication. Significance of communication with TCWG. First question. What auditor will communicate with those charged with governance? Independent directors. What will you tell them? Sirf. Number 1. Plan, scope and timing of audit. In that I will tell all the significant risk. Okay. I. Independence requirement. R. Our responsibility is to form an opinion on the financial statement. F. Significant findings from audit. Learn nicely. Small break, 10 seconds. Clear? 1, 2, 3, start. Tell me, what will I tell to TCWG? Sirf. Plan, scope and timing of audit. I. Independence requirement. R. Our responsibility is to form an opinion on the financial statement. Significant findings from audit. Come here. Auditor shall communicate with TCWG general expected timing and content of communication. 2 things I will communicate in writing. Remember, number 1, independence requirement, bracket listed company. In listed company, independence is very, very important, and significant findings from audit. Significant findings from audit. These 2 things in writing. Other things I can discuss orally, but I have to maintain documentation. I have to maintain documentation that I have discussed orally. Whenever you discuss, same day you have to write that we had discussed these things. Okay, but 2 things compulsory in writing: significant findings from audit and independence requirement listed company. Tell me, what if they don't talk to you? They are saying, what we will talk. You are saying, TCWG, please come here. We want to discuss SIRF, plan, scope, and timing of audit, independence requirement. Our responsibility is to form opinion. If they don't talk only then ROMM will be higher. Risk of material misstatement will be higher. You cannot issue qualified report for this, but risk of material misstatement will be higher. You need to gather more evidence. Okay. If communication is not adequate, ROMM will be higher, and we will take appropriate action, maybe gather more evidence. Documentation over. The auditor shall communicate to TCWG orally or in writing. Audit documentation. Okay. We will communicate whatever we have told to TCWG. We have to maintain documentation orally, then write, written. To very simple. Clear? What can come here? What matters you have told to TCWG? Second MCQ can come. What we need to communicate in writing. Rest the thing can come. Only two things confirm in writing. Independence requirement and significant findings from audit. I hope it is clear. Super duper clear. Rest assured. Okay. So significance of communication with whom? Those charged with governance. Come to essay 265. Communicating deficiencies in internal control to management and TCWG. Deficiency in internal control. I will tell to two people, management and those charged with governance. Before starting this standard, some basic question will come. Come here. Deficiency and all we will understand. Communicating very easy standard. 265. That was hard, okay, or easy. This is super duper multiply by 10 easy. What is deficiency? Before understanding all this, I will ask you basic question. Who is responsible for preparing financial statement? Your answer will come management. Very good. Come to second question. Management will also implement internal control, so there is nothing wrong done in financial statement. Management will implement internal control, so there are no misstatements. Okay, but when internal controls cannot prevent or detect and correct material misstatement, we call it deficiency. One more time. When internal control cannot prevent or detect and correct material misstatement, it's called deficiency. One more time. One last time I want to ask one question. Who is responsible for preparing financial statement? In India, management. But management will do strong control so that there are no mistakes. Okay. We do strong control. But when the controls are not strong enough, when internal control cannot prevent means stop, or detect and correct material misstatement. If mistakes still happen, we will call it deficiency in internal control. Our work is not to identify deficiency, but it's to do audit. But while doing audit, if I find deficiency means what? Control is unable to prevent or detect and correct material misstatement. I will report to management. I will report to management or TCWG. Come here. Auditor's work is not to identify deficiency, but to do audit. But if during audit we find deficiency, we will report. We will report. What is significant deficiency? These are those deficiencies which are of utmost importance in the judgment of auditor. See, now two deficiencies are the normal and significant. What's the difference? See, significant deficiency simply means probability and impact is high. Okay, what do you mean by probability? Chance of that thing happening, impact is the loss. If probability and impact is high, we call it the significant deficiency. Otherwise, it's a normal. See, it's very difficult to differentiate between normal and significant. Okay, for example, you are not studying for 10 days. Is it bad? Yes. Okay, weakness in control. Okay, you are not studying for 5-10 days. It's a normal deficiency. It happens to students. They don't study. Mood is not good. But what if you leave the house? It's a significant deficiency. Your parents have to find out what happened exactly. Okay, so deficiency. The significant deficiencies are those deficiencies whose probability and impact is high, or which are of utmost importance in the judgment of auditor. So if auditor feels this is significant, it's significant. If auditor feels this is normal, it's normal. You as auditor have to decide. It is the judgment of auditor. Those deficiencies which are of utmost importance, they are significant deficiency. Clear? One last time. Till now I have not explained you anything. I will just want to explain again. Communicating deficiency in internal control. See, who is responsible for preparing financial statement? Management. Question number 2 I want to ask you. Management will also implement internal control, so there are no misstatement. But But when controls cannot prevent or detect and correct material misstatement, or even after having control, if wrong things happen, if misstatement happen, we call it deficiency. Two deficiencies are there: normal, significant. If there is a normal deficiency, means probability and impact not that much. Okay, probability means chance of wrong happening, impact means the amount. If it is not that much normal, if probability and impact is high, significant. Okay, but book has not given. Book has given what? Those deficiencies that in the judgment of auditor are of utmost importance. Utmost importance, then those are significant deficiency. Clear? Read. Auditor is required to obtain understanding of internal control while doing ROMM. You know what's ROMM? Risk of material misstatement, IR into CR. Whenever we find control risk, we will assess controls are strong or weak. If control are weak, that's a deficiency. Okay, so number one, our work is not to identify deficiencies, but while finding risk of material misstatement, we may find out deficiencies. Okay. Objective of auditor is what? Communicate deficiencies in internal control that are of utmost importance. That's significant deficiency. Difference between deficiency and significant deficiency. Deficiency is what? Exists when control is missing or control is unable to prevent or detect and correct material misstatement. What's significant deficiency? Significant deficiencies are those deficiencies that in the judgment of auditor are of utmost importance. That in the judgment of auditor are utmost importance, or whose probability and impact is high. Probability and impact. Let me name a few significant deficiencies. Okay. There are no qualified people in accounts department. They don't have knowledge of accounting standards. They don't have knowledge of financial reporting framework. Okay, there is no proper period and financial reporting process. Okay, there is no financial reporting process to prepare financial statement. All the people are unqualified. Management is not serious about internal controls. Okay, these are significant deficiencies. Everything will be wrong. They don't have knowledge of accounting standards. They are not qualified people. These can be significant deficiency. Few example I told you. How to identify significant deficiency? We shall determine whether there are one or more deficiencies. See, sometimes one deficiency is not there, but when they combine, they can become significant deficiency. We shall identify there are one or more deficiencies in internal control. Based on that, auditor will determine whether individually or in combination, can they become significant deficiency. Understood? See, we shall see whether one or more deficiencies in internal control. Based on that, auditor will determine whether individually or in combination can they become significant deficiency. These are those deficiencies that are of utmost importance in judgment of auditor. If auditor feels it significant, over. Very simple. I will tell to whom? See, significant deficiency, I will tell to both management and those charged with governance. Normal deficiency, I will tell to management. Example, if you don't study for 3 days, mom you will tell. Mom will scold you. But if you leave the home, we need to tell dad also. At that time, only mom is not allowed. Okay. Example, you go to birthday party. Okay. Deficiency in internal control. Your work is to study. But only mom comes to know that we are going during the day. You tell, don't tell to dad, he will scold. No, dad, no. But if you leave the house, it's a significant thing. Mom, dad, family, everything will be told. Even uncle, auntie will be told. Okay, auditor will communicate in writing significant deficiencies in internal control to those charged with governance. See, in writing, I have to write significant deficiency to TCWG. Auditor will communicate with management. Which deficiency? In writing, significant deficiency. To management also I will give, provided it is not the deficiency of management. If management only has done mistake, I will not tell them their own mistake. Okay. Other deficiencies also I will tell to management that require management attention. So remember, normal deficiency, management. Significant deficiency, management and TCWG. But most important, in writing. But if it's management deficiency, don't tell to management only. Dad's bad thing, we will not tell to dad, dad, this is bad in you. Dad will say, get out. Are you clear? The last, normal deficiency, management, significant deficiency, management and TCWG in writing. Come here. Auditor will give written communication of significant deficiency. Two things we will write: description of deficiency and their effect. Description of deficiency and their effect. and sufficient information to enable the auditor to understand context of communication. One last time, auditor will write written communication of significant deficiency, okay, description of deficiency and their effect. This is the weakness. We don't have qualified people in accounts department. Due to this will happen due to that. A description of deficiency and their possible effect. Sufficient information to enable TCWG to understand context of communication. Sufficient information so those charged with governance can understand what's the context of communication. Clear? Our aim, in the last we will write, our aim is to do audit, not to find out deficiencies. But while doing the audit, while finding risk of material misstatement, we found them. Okay, very simple. So tell me in significant deficiency what we will write. Only this question can come. Mostly this is a MCQ. Okay, a description of deficiency and their possible effect. Okay, description of deficiency, their possible effect, and sufficient information to enable TCWG to understand the context, how this deficiency has occurred. Okay, nothing great. Now, last thing we can read here is this. It will make you more proper. See, 265 is what? Okay, communicating to both TCWG and management. 260 is only communicating to TCWG. 265 is only deficiency in internal control. Any other matter I want to tell to TCWG, 260 is there, other than internal control. Your letter of weakness is there. For significant deficiency, I will write description of deficiency, their effect, and seek sufficient information to enable TCWG to understand the context. Letter of weakness is written. For significant deficiency, 1 mark MCQ. Which letter is there? Letter of weakness. Here no such letter is there. Simple. In one line, concentrate. Whenever I want to talk with TCWG, 260. If I want to talk about deficiency in internal control, 265 TCWG and management. What will I talk in 260? बस सिर्फ planned scope and timing of audit. Independence requirement. Our responsibility is to form an opinion on the financial statement. Significant finding from audit. Here what I will tell, only significant deficiency in writing, okay, through letter of weakness, Here all things except significant deficiency. Very simple. 260, communication with TCWG. 265, communicating deficiencies and internal control to management and TCWG. Last point. Last standard, guys, then we are done. We are done. Yeah. 450, evaluation of misstatements identified during the audit. Okay. Last, very easy, very chill, very amazing standard. Okay, this also, all three I told you, very easy. New 8 standards are there, but they are super easy. Okay, SF 450, evaluation of misstatements identified during audit. For those of you who don't know misstatement, I explained in revision of chapter number 1. Misstatement is difference between CAP, classification, amount, presentation and disclosure of a reported financial statement item, and one more CAP, classification, amount, presentation and disclosure required as per financial reporting framework. What do you mean by this? See, financial statement, this should be the correct treatment, but you have given that, so any mistake is there. Example, I will take 2. Repair and maintenance was 1 crore, you wrote 10 crore, so misstatement is there 9 crore. Okay, sales were 100 crore, you wrote 10 more, 1000 crore. Okay, so inflated by 990 crores. Okay, these are misstatements. Okay, continue. Now let's start evaluation of, what if you identify misstatement, what to do? That's the standard. Objective of auditor is, number 1, effect of misstatement identified on audit, effect of uncorrected misstatement. See, listen, these are total misstatement. Out of them, some you will correct. What about uncorrected misstatement? So this standard deals with 2 things. Effect of misstatement identified during audit. Out of that, some you will correct. Effect of uncorrected misstatement. Then identify uncorrected. Okay, start. Number 1. Auditor will accumulate all misstatements identified during audit. First, identify all the mistakes which you have found during audit. Auditor will decide whether we need to change overall audit strategy, overall audit plan. When will it change? When misstatements are more than materiality. Means there are material misstatements. See, auditor will decide whether to change overall audit strategy, overall audit plan, if circumstances indicate other misstatement exist and aggregate of misstatements identified could be material. See, in 2 changes we will decide to change strategy and plan. Number one, if circumstances indicate other misstatement exists, or and okay, aggregate of the all the misstatements could be material. Okay, then if it could be material, will request management, auditor will request management to identify all the misstatements, okay, to know actual amount of misstatement, so we can make an entry in the financial statement. See, when there are a lot of misstatements, we'll tell management to identify more misstatement in particular class of transaction, P&L, account balance, balance sheet, disclosures, to know actual amount of misstatement, so we can pass a journal entry. Okay, next, as soon as you know actual amount, tell management to correct the misstatement. Management, please correct this. They will correct some they will not correct. If they refuse, then see whether the financial statement are free from material misstatement. Very simple. Again, we will do till here. Come here. Auditor will accumulate all misstatements identified during audit. Auditor may also change audit strategy and audit plan in two situations: when they believe there could be more misstatement, or total of all the misstatement could be material. Whenever such thing is there, we will tell management to identify. Management, please identify more misstatements, so we can know the actual amount of misstatement and we can correct the same. Okay, tell management to correct. If they correct, very good. What if they don't correct? See the effect whether financial statement are free from material mistakes. Small mistakes they don't correct, okay, are they free from material misstatement? If they don't correct, also tell to those charged with governance, TCWG, those charged with governance. Okay, the auditor shall communicate with those charged with governance uncorrected mistake and their effect and request them to be corrected. We will tell to TCWG these are uncorrected, some they have corrected. Okay, request that please correct them and effect of uncorrected misstatement of prior period. These are of prior period. See, management doesn't correct. Whom we will tell? TCWG. TCWG, these are uncorrected misstatements. You are dead of management and their effect and request that please correct this. Effect of uncorrected misstatement related to prior period also we will tell. Very simple. Management corrects, very good. If they don't correct, we'll tell TCWG. Okay, the uncorrected misstatement and their effect and request please correct them. Or uncorrected misstatement related to prior period also we will tell. Come here now. Find out the effect of uncorrected misstatement. Okay, see, prior to evaluating effect of uncorrected, auditor will again calculate materiality. Prior to finding the effect of uncorrected, again see, why materiality? Many times they have corrected the misstatements. After correcting, sales figure will change, expense figure will change, profit figure will change. If they change, okay, then again recalculate materiality, because materiality is usually 0.5 to 1% of sale. If sale has changed, materiality has changed. Materiality is 5 to 10% of profit. Okay, prior to evaluating the effect, see, some they have corrected. Now we are seeing the effect of uncorrected. Whenever you see uncorrected misstatements, what do you mean by uncorrected? Sir, those which are not corrected. Very good. Prior to evaluating the effect of uncorrected, because some are corrected, we will again calculate materiality, because profit must have changed, sales must have changed. While seeing the effect of uncorrected, what we will see? Size and nature of material misstatement. You have to see the size. Size means what? Okay, amount we have to see. Nature means in which area it is. Size and nature of misstatement in relation to particular class of transaction, account balance, disclosure, and financial statement as a whole. See, sometimes for particular account it will be material to consider performance materiality, but in terms of whole financial statements it's immaterial. Whenever you see uncorrected misstatement, you have to see the size and nature of misstatement in relation to particular class of transaction, account balance, disclosure, or financial statement as a whole. An effect of uncorrected misstatement related to prior period. Prior period also see. Last, take WR from management. WR you have to take from management or TCWG that they believe. See, majority they will correct. If they don't correct, okay, then take written representation that misstatements are immaterial according to them. If material, they will correct. Otherwise, what will happen? Qualified report. If they don't correct, qualified report. When will qualified report come? When financial statements have material misstatement but they are not pervasive. Okay, so they will always correct. But if they don't correct, take WR from management, where appropriate TCWG, that they believe that misstatements are, usually they will correct. Okay, but if they don't correct, they are immaterial. They are immaterial. Auditors shall request management, where applicable TCWG, where they believe, okay, that misstatements are immaterial individually and in relation to financial statement as a whole. Last, will document. What will document? Amount below which misstatements are immaterial. All misstatements identified during audit. Auditor conclusion whether uncorrected misstatements are material or immaterial. Okay. Over. Time pass standard, 5 minute standard. Again, I will summarize. Okay. Evaluation of misstatements identified during audit. What is misstatement? Mistake. Okay. So number one, as soon as you identify all misstatement, see whether we need to change audit strategy and plan. In two situations, when there is a scope for further misstatements. Second, when all the misstatements could be, total of all misstatement could be material. We will request management to identify more misstatements, okay, and find out the total amount so we can correct the same. If they correct, very good. If they don't correct, see whether the total of misstatements, okay, uncorrected misstatements is material or not. If they don't correct, we'll go to TCWG. Please, 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 these are total misstatements, correct the same. Okay, or this is the effect of prior period misstatement, correct this also. If they correct, very good. If they don't correct, then what I will see? Evaluate the effect of uncorrected misstatement. Before seeing the uncorrected misstatement, I will again calculate materiality. Why? Because profit must have changed, sales must have changed. Whenever I see uncorrected misstatement, I have to see size and nature of misstatement in relation to financial statement as a whole and particular class of transaction account balance disclosure. I will also see the effect of prior period misstatement in relation to financial statement as a whole and particular class of transaction account balance disclosure. Last, I will take WR from management, that the WR from management or TCWG that they believe misstatements are immaterial, because if they are material, they will always correct because they don't want qualified report. Shareholder will never invest. Okay. Last, I will document amount below which misstatements are immaterial. Okay. That's 5% of materiality. Below that, all is immaterial. All misstatements identified during audit. The effect of uncorrected misstatement, whether that's material or immaterial according to the auditor. Okay. I hope it's clear. With this, we are done with 6 standards beautifully, amazingly. WR from management, 580. After 5, 6 will come. Subsequent event. After 5, 6, if you don't do, 7 will happen. Going concern, 570. Okay. Asset 260, communication with TCWG. Asset 265, deficiencies in internal control to TCWG and management. 450, evaluation of misstatements identified during audit. Hope this standard was super easy. This was little complicated chapter, but we tried our best to make it super easy, super fun, and super interesting for you. If you like the lecture, do give a like button. Without subscribing, it's not allowed to go. Okay, if you put a nice comment, we will be very, very happy. Thank you so much. See you until then. Until next video. Bye bye. Good night. Take care. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Continuing with Audit Mega Marathon Revision Series till now, we have completed chapter number 1, Nature, Objective, Scope of Audit, chapter 2, Strategy, Planning, Programming, chapter 3, Identifying the Risky Areas, chapter number 4, Gathering lots and lots of evidence, chapter number 6, Audit Documentation, just completing the audit, okay, completion and review. Today, it's the time for chapter number 8, finally giving the audit report. The time for which we were waiting in life is to give an audit report, right? We were doing all this fun just for giving an audit report. So finally, this chapter, we are going to talk about audit report. Mind you, these lectures are in no way substitute to the regular or fast track lecture. You have to do them. After this will be super booster dose for you, okay? These revision lectures are in only English. Of course, the Hindi ones are already uploaded, yeah? For those of you who are asking from where are you doing revision. We are doing it from our magic book. It is a roughly 85-page book which covers all chapters in a superb way. So it's a 85-page book. Okay, if you wish, you can order it from website mrugeshmadlani.com. We don't have soft copy because only hard copy brings hard result, and we work only for hard results. Let us start right away. SS 700, forming an opinion and reporting on the financial statement. Tell me, two things are there. Do we have to form an opinion or report? Sir, do both. If we only form the opinion but don't report, what is the use? Are you clear? So number one is forming an opinion. Number two, reporting on the financial statements. Okay, let's start. Why this essay came? If you don't understand why this essay came, let me tell you. Okay, earlier everyone used to use different formats for reporting. So someone will use this format, someone will use different format, someone will use third type of format as per their wish they used to use. SS 700 said close this masti, we want to do grand masti, and they introduced one common format for all. Now everyone has to follow same format. Okay, you are anywhere, these are international standard, US, UK, France, China. Okay, everywhere, not only in India but in the world, same format should be used. So it will bring what? Consistency and comparability, and I can do comparison very easily. I can compare with my firm or other firm, both. I can also compare with my firm. Last year my reporting was different, before that last year different, so I could not compare. Now every time same format will be there, so I can compare with myself. I can also compare with my peer company. Example, Tata Motors is there, okay, Hero Honda is there, Bajaj is there, okay, now MG Hector is there. All these people can compare because everyone has same format of audit report. I hope you are understanding. Okay, so this will bring number one. What is the objective of SS 700? To form an opinion on the financial statement based on evaluation of conclusion drawn from evidence obtained. Tell me one brief order. First of all, what is there? You perform lot of audit procedures. On audit procedure you get what? Audit evidence. Based on audit evidence you draw conclusion. So what is this? To form an opinion based on evaluation of conclusion drawn from evidence obtained. So this will do what? This will help us in forming an opinion on the financial statement based on evaluation of conclusion drawn from evidence obtained, and to express that opinion clearly through a written report. We don't only have to make an opinion. You are going to see a girl, okay, you went to see that girl, you are like, no, but I will not tell whether girl is good looking or not. Dad, I don't know whether shall we get married or not. Then why the hell are you doing? You are just going to see the girl but not giving report. So same way we have to get, first of all, get a evidence, okay, and then express that opinion clearly through a written report. So two objectives are there of this essay: to form an opinion on the financial statement, okay, based on evaluation of conclusion drawn from the evidence obtained, and to express that opinion clearly through a written report. I hope you are clear. Very clear, sir. What is the purpose of this essay? It is aimed at bringing consistency in comparability and consistency in audit reporting. Earlier, there was no consistency. Why? I only used to follow different formats, or everyone used to follow different. So I cannot compare with maybe Bajaj Auto. I cannot compare with Hero Honda. I cannot compare with what any other Mercedes. Now I can compare with everyone. I am Tata Motors, I can compare. It will aim at bringing number one, consistency, number two, comparability in audit reporting globally. Two, it will increase the value of auditor's report by making it more relevant to the user, because user also knows this is the format we have to follow. Every time this format will be there, he will understand better. It will increase the value of auditor's report by making it more relevant to the user. Clear? It is aimed at bringing consistency and comparability in the audit reporting, and helps in increasing the value of auditor's report by making it more relevant to the user. Start. Now, in this, there is a format, basic element of auditor's report. In every auditor report, this 13 points should come. We have to understand this point, of course. Also learn this point, of course. Okay. So all 13 elements should come. In every auditor's report, 13 points should be there. Can we start? Yes, sir. So this in this nothing is there, only this much is there. Yes. This essay is only the format of audit report. Everyone has to follow these 13 points. Compulsory. You are anywhere in India or abroad, you have to follow these 13 points. Are you clear? These are of course Indian essays, little bit may change, but basic thing of formatting would be same. Okay, number one should be title. It should state it is the report of an independent auditor. Okay, because if title is not there, hello Mahesh, hello Kirtika, hello Suresh, hello Kamal Gant, are you clear? If your name is only not there, how we will call you? So first of all, name should be there. Anushri, are you watching it? Are you clear? So same way, title. 4 or 5 children are there. We cannot tell, please come. Which child will come? So title should be there. Tell me in title what should be there. Report of an independent auditor. Shall we continue? Second, addressee. It is required by circumstances of engagement. Addressee, to whom to address depends on the engagement. Example, sometimes the report is only prepared for board of directors. Sometimes the report is, for example, normally the report is only for what? Shareholder. I hope you are able to understand. So, addressee will be decided by circumstances of engagement. Sometimes fraud report is there. SEBI has told you have to prepare a fraud report, do investigation audit. Then this report is only addressed to one person. Tell me who? Regulators. Are you clear? But normally statutory audit report is always towards the shareholder. So you have to say that it is addressed for whom. Number one, title. For whom? Okay, usually it is for shareholder, but sometimes it can be only for board of directors. Some report can be only for regulator. Some government has told you to do audit, so it can be for government. Title and to whom we are addressing. Third, auditor's opinion. It should say, see, no beating around the bush. Earlier, what was given? First, basis of opinion. On this basis, we have given the opinion. Close. We don't want time pass. We directly want what is the opinion. Are you clear? Because 99% people are not interested in reading rubbish things. They only want to know which opinion is there. There are 4 opinions: unqualified, qualified, adverse, disclaimer. Unqualified, qualified, adverse, disclaimer. Okay. Opinion. So I will write opinion and then write identify whose financial statements have been audited. State that the financial statements have been audited. Okay. Number one, identify entity. So I will write we have audited the financial statements of Reliance. Second, state that the audit has been done. Okay. Identify title of each statement comprising financial statement. You have to write title of each statement. We have audited balance sheet. Okay. P&L. Then we have audited cash flow statement. Statement of changes in equity. Notes to accounts. 5 things are there. Okay, P&L, balance sheet, notes to account, statement of changes in equity and cash flow statement. Refer to notes also give reference to notes. And last, specify the date or period covered by each statement comprising financial statement. Example, P&L is for the year, balance sheet is as at. Are you clear? P&L is over a period of time, balance sheet is as a point of time. Okay, so you have to write the period covered. So in balance sheet we will write as at 31st March 2023. In P&L we will write from 1st April 2022 to 31st March 2023. Very simple. In opinion you have to write which opinion it is. Then identify the entity whose financial statement are audited. State the fact that the financial statement are audited. Identify title of each statement comprising the financial statement. Also give reference to notes. Also give the period covered by each statement comprising financial statement. Nothing great. Basis of opinion. On what basis you have given this opinion? You have to write this also. Audit was conducted as per essay. Second, refers to section of auditor's responsibility that states auditor's responsibilities under essay. We have also followed this responsibility. Number one, audit was done as per essay. And give a reference to a section which specifies auditor's responsibility under essay, which we will learn. Continue. State that auditor is independent and it has followed relevant ethical requirement and code of ethics issued by ICI. Very important. Auditor is independent and has followed all the ethical requirement and code of ethics issued by ICI. So auditor is independent and ethical requirements are followed. Ethical requirements already discussed in chapter 1. ICOP. Integrity, confidentiality, objectivity, professional competence and due care, professional behavior. If you don't remember, okay. Auditor also believes that we have obtained sufficient and appropriate audit evidence for purpose of forming audit opinion. Simple? Yes, sir. Excuse me. Start. What is basis of opinion? Audit was conducted as per essay. Section. Refer to section of auditor's responsibility that states auditor's responsibility under essay. Auditor is independent and has followed relevant ethical requirement and code of ethics. Whether auditor believes he has obtained sufficient and appropriate audit evidence. Very simple. As per essay. Section of auditor's responsibility. Auditor is independent and is following the relevant ethical requirement. And auditor believes he has obtained sufficient and appropriate audit evidence. Simple? Yes, sir. Now, till now, how many points are done? Very simple. 4 point. Title, addressee, opinion, basis of opinion as 4 point. Okay, you don't have to learn, but briefly understand. See what 4 points are there. Audit was conducted as per essay. Auditor is independent and has followed ethical requirement. Auditor's responsibility and whether he has obtained sufficient and appropriate audit evidence. Going concern. Auditor has to state that going concern is valid or not valid. He has done going concern testing as per SA 570, about which we have already learned in chapter number 3. So going concern. Till now, how many points are there? 5. Title, addressee, opinion. On what basis you have made? Basis of opinion. Going concern. Then key audit matters. Key audit matters separate essay is there 701. We will learn in this chapter only. But briefly, I will explain. Key audit matters are those matters that in auditor's judgment are most significant for audit of financial statement and users should have knowledge of that. Okay. Those matters which took most of our time, which are most significant, top 5 matters, these are written in key audit matters. Okay. As of now, did not understand, forget it. Key audit matter. Then responsibilities of management. Tell me, 7th point is what are management responsibility? Number 1, to prepare financial statement. Number 2, internal control. Number 3, assess that entity will continue as going concern. 3 responsibility management has. Number 1, preparing financial statements as per FRF. Okay, you have to prepare as per schedule 3. Okay, prepare financial statements as per FRF. Second, internal control as is needed for preparation of financial statement. We have followed all internal controls in preparing financial statement, so they are free from what is not mrugeshmadlani, material misstatement. Okay, assess the entity's ability to continue as going concern. Entity will continue as going concern, they have to assess. This auditor will not assess, first they will assess, then I will check. Okay, understood. Tell me. 3 point. Prepare the financial statement as per FRF. Second, internal controls as necessary to ensure that financial statements are free from material misstatement and entity's ability to continue as going concern. 3 responsibilities of management: preparation of financial statement, internal control, assess the entity's ability to continue as going concern. Till now, 7 points are done. All are easy. Title, to whom you are addressing, opinion, basis of opinion, going concern, key audit matter, responsibilities of management. Now, a bigger point, responsibilities of auditor. Auditor's responsibility for audit of financial statement. Sir, management responsibility to given. Hey auditor, what is your responsibility? Yeah. I will tell her. Okay. In this, there are 3 points. Auditor's responsibility shall. Then they have given shall, further. Here they have given also shall. Understood? 3 parts it is divided. Shall further, also shall. Oh, too much fun. Yes. Auditor's responsibility shall ensure that auditors have obtained. State, objective of auditor is to obtain reasonable assurance that the financial statement are free from material misstatement. Unlimited times this word has come. Now, issue a report that includes. Now they will explain reasonable. See, what is our main objective? They are just reminding the section of auditor's responsibility shall state that the objective of auditor is to obtain reasonable assurance that the financial statement are free from material misstatement. Now, reasonable assurance is high level of assurance but not a complete assurance, because complete assurance we can never give. Why? Inherent limitation of audit, already studied multiple number of times. Okay, there are limitations of audit discussed in chapter 1. Reasonable is a high degree of assurance but not a complete assurance that auditor will always detect material misstatement. Misstatement can arise from fraud or error. They can be considered material if they influence the economic decision of user. Nothing is there. The auditor's responsibility shall include that auditor will give reasonable assurance. Nothing. They have just given the objective of auditor is to give reasonable assurance that the financial statement are free from material misstatement. Then they explain reasonable assurance. Reasonable assurance is a high degree of assurance but not a complete assurance that the financial statement are free from material misstatement. Simple. Misstatement can arise from error or fraud. This they explain. But we have to identify all misstatement or material. Material. Nothing is there. Simple, I want to tell you. They have explained 2 words. See, first, objective of auditor is to get reasonable assurance that financial statement are free from material misstatement. What is reasonable assurance? Reasonable assurance is a high degree of assurance but not a complete assurance. In English we call it reasonable assurance. Okay. Now come to material misstatement. Misstatement can arise from error or fraud, but we have to identify all misstatement. No, 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 no. Only material misstatement. Simple. So they explain two words: reasonable assurance, material misstatement. This we just have to read. Okay. Auditor's responsibility for audit of financial statement shall understood, shall further, what further shall? State that the audit was done as per SA. Auditor has exercised professional judgment and professional skepticism. Audit was, here audit process we have to write. Very simple. Audit was done as per SA. Auditor has followed professional judgment and professional skepticism. What is professional judgment? Everywhere there is a professional judgment involved by evaluating all the estimates. Okay. What is skepticism? Okay, you have to stay alert, being alert to circumstances that there can be possible misstatement due to fraud or error. Are you clear? You should have a questioning mind that fraud can happen. Or it was done as per SA, and auditor has exercised professional judgment and professional skepticism. Now, describe an audit by stating auditor's responsibility. Now, they are describing what all we do in audit. Already done everything in audit, we just have to read. Our work is to identify and assess risk of material misstatement and perform audit procedure for the risk. Already understood. Wherever risk of material misstatement is high, audit procedure would be high. Second, obtain understanding of internal control relevant to audit. Not only obtain understanding, but we also have to comment on those internal control, IFC, if you remember, internal financial control. Auditor will not only obtain understanding but also report on internal financial control as per section 143.3. I have to report on two things, okay? Whether controls exist and operating effectiveness of control. But not all control, internal financial control. That is what they have given. Evaluate on appropriateness of accounting policy and accounting estimate. You have to see accounting policy, accounting estimates are normal. We also have to see management's assessment of going concern is appropriate or not. They have told going concern is valid, but if not valid, you have to check. You are auditor. Next, whether financial statements are prepared as per FRF. Are you clear? Financial reporting framework. To evaluate overall structure and context. Using the work of another auditor, indicating the extent to which we are using another auditor's work. Understood? Okay. Nothing great. Very simple. See, audit was conducted as per SA and auditor has exercised professional judgment and professional skepticism. Then they have just described we have to find out ROMM. We have to obtain understanding of internal control to make an opinion on internal control. We not only understand, but we also have to report as per IFC, internal financial control. Appropriateness of accounting policy. Management assessment of going concern. Are you clear? And financial statements are prepared as per FRF using the work of another auditor. Next is what? Auditor's responsibility. Oh, shall further. See, shall further, also shall. In this point, we have to understand only one TCWG, those charged with governance. Tell me, we tell everything to TCWG? No, we have to tell them significant deficiencies in internal control. Normal deficiencies then in internal control. Few controls are not working. I can tell to management. But if the probability and impact is high, it is a significant deficiency in chapter 6 it had come. I have to tell to whom? TCWG. State that the auditor communicates with TCWG regarding scope and timing of audit, significant audit finding and any significant deficiency in internal control. State, auditor has provided TCWG, it has complied with all ethical requirements. Okay, I will tell TCWG I have complied with all ethical requirements. And key audit matters also I will communicate with TCWG. Clear? So three things I will tell to TCWG. Number one, significant deficiency in internal control. I have followed all ethical requirements. Are you clear? And independence requirement. And third, key audit matter. So I will tell with TCWG. What I also shall, number one, tell TCWG about all significant deficiencies in internal control. Whereas I have complied with all independence and ethical requirement and key audit matter, about which we are yet to study. So till now 8 points are done. Inside these three were there. Shall further, also shall. In shall only two words. Reasonable assurance, material misstatement. Shall further, professional judgment, professional skepticism and then process. And then also shall TCWG. In that TCWG 3 points were there. Tell me what was the first point in TCWG? I will tell TCWG about significant deficiency. What was the second point? I will tell to TCWG. I have complied with relevant ethical requirement. And what is the third point? Key audit matter. Layout of description of auditor's responsibility. Okay, auditor's responsibility for audit of financial statement as required shall be included. See, auditor's responsibility are too bulky, very big it is actually, 4 pages it can go on to. So where to write? You can write in auditor's report line wise only 1 to 8 points, so 8 point in the body. Second, appendix to auditor's report, you can say in the end. Appendix means in the end page you can write. Okay, in 8th point you can write refer to this appendix, appendix 1, and then people can read that within appendix of auditor's report, in which we have to give reference to the appendix. Okay, and third, by specific reference within auditor's report, by specific reference, location of description of website of appropriate authority. You can also write in company's website that auditor's responsibility are these. Okay, so at 3 place, number 1, within the body of auditor's report. I don't like within the body. You can write in appendix to auditor's report or website of appropriate authority where law or regulation permits. So if it permits, then we can write in the company's website also. Why? Because many people are not interested in reading all this. Why to make the report bulky? Why to make the report boring? Understood? Okay. So at 3 place. Number 1, I can write in independent auditor's report. I can write where? If I don't like independent auditor's report, I can write in appendix to the report. Or third, website of appropriate authority where law or regulation permits. Understood? Now, other reporting responsibility. Many times in every country, main reporting responsibility understood, but we have to report as per the law. Example, in India, CARO is there. Okay, for banks, long form audit report is there. Several other compliance requirements are there. So, if there are any other reporting responsibility other than SA required by law or otherwise, it will be mentioned here. And what heading we will give? Reporting on other legal and regulatory requirements. You can check all these things in Reliance report also. We do it live. Are you clear? So all these points are there. Number 1. Okay, if there are other reporting responsibilities like in India are there required by law or regulation, we will write reporting on other legal and regulatory requirements. So for example, in India we have to report as per CARO. We have to give for bank long form audit report. All this will also come. Very simple. Other reporting responsibility. Now last 3 are very simple. Signature, place, date. Signature, place, date. Signature, place, date. What is signature? You have to sign. If you are signing report in your own name, you will write your name, your registration number or your membership number and sign. 3 things. If you are signing in your personal name, you have to write your name, your membership number and signature. If you are writing in the signing in the firm's name, then you also have to write, okay, firm registration number. What you have to write? Firm registration number. Okay, report is signed personal name where firm is appointed, personal name of auditor and name of firm. Okay, so if you are appointed in your personal name, only 2 things: your name, your membership number, sign. If you are signing in firm's name, ABC Associates, ABC is signing, then ABC Associate, firm registration number, your name, your membership number. In case of firm, membership number is not there, FRN is there, firm registration number. You have to mention. Very simple. If you are signing in your name, membership number, firm registration number, member and membership name, members number. Are you clear? Membership number and sign. Place of signature: Mumbai, Ahmedabad. Where are you signing? Chennai. Audit report shall be signed. Specific location, city in which report is signed. Signature, date, signature, place and last date. Date on which report is signed. Okay. But remember, we have obtained management representation should be obtained before signing the report. If you are getting management representation after signing the report, what is the use? Understood? Okay. Simple. 3 points. Signature, place, date. If you want, I can show you. And which page it is, we have to check it out. Here they will give. $297. See, all points are given. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Are you clear? Just showing you. Now see here. This is joint audit. So what they've given? Number one, form, chartered accountant, firm registration number, then partner name, partner, membership number. UDIN is digital signature these days. Digital signature. Place, date. Simple. Okay. Now we'll learn this. Very simple. Okay. In 1 second we will learn. Start. So 13 points are there. We will learn how much? 7, 8. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Till here clear. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Learn till here. Done. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Very simple. Responsibility of management, responsibility of auditor. Responsibility of management, responsibility of auditor. Auditor responsibility is too big. So you can also write somewhere as layout of description of auditor's responsibility for audit of financial statement. Layout. You can write in body of auditor's report or appendix to auditor's report or website of appropriate authority, law or regulation permits. Simple. Layout of description of auditor's responsibilities of management, responsibilities of auditor, layout of description of auditor's responsibility. Next, other reporting responsibility if required. In every country this is different. In India we have other reporting responsibility. Okay. Last three are simple. Okay. Very simple. Signature of auditor, place, date. Signature of auditor, place, date. Signature of auditor, place, date. Very simple. So now remember balance. After 6, 7 to 13 you have to remember. Done. Chalo, one last time. Title, addressee, opinion. Title, addressee, opinion. Basis of opinion. Going concern. Kem cho? Majama. Key audit matter. After key audit matter, tell me what will happen. Responsibilities of management, responsibilities of auditor. As they are too big, layout of description of auditor's responsibility for audit of financial statement. Other reporting responsibilities. Okay, last three are very simple. Okay, 1, 2, 3. Tell me what is one? Signature of auditor, place of signature, date. Signature of auditor, place of signature, date. Very simple. Now come to second essay. In this lot of essay are there. 700 we are going to discuss. 701, 705, 706, 710. Enjoyment. This was the most boring one. Now all are interesting. Start. Modification to opinion in independent auditor's report. Very easy essay. Before we start this, if you understand this, majority essay is over. Now, there are 4 types of report. Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. What do you mean by unqualified, qualified, disclaimer, adverse? Everything is perfect. No mistake is there. Financial statements are prepared as per FRF. Mistakes are there also, but they are not material. Unqualified or clean report. When misstatements are there, but they are in 1-2 areas only. Effect is not pervasive. It is not spread across different account and different assertions. Okay. Mistake is there in debtors. Mistake is there in fixed asset. Mistake is that the depreciation is not charged little. Okay. These misstatements are material, I know, but they are not pervasive. So qualified report will come. See what is written. Financial statements are materially misstated. Qualified. Why? Because effect is not pervasive. Okay. Now come here. If effect is spread everywhere, okay. For example, one branch trial balance is only not included. Means tell me one branch trial balance is not included. It will affect asset, liability, income, expense. Everything. Adverse report will come. Are you clear? Or second example. Mistakes are in cash and bank, land and building, plant and machinery, furniture and fixture. Okay. Also in inventory valuation. Also in repairs and maintenance are wrongly capitalized. Lot of mistakes are there. Effect is spread everywhere. Okay, all account, all assertion. Fraud is there. Effect is everywhere. Very nice example I will take. You will understand in 1 second. Going concern is not valid. Still, financial statements are valued at cost. If going concern is not valid, financial statements should be valued at NRV, but they are still valued at cost. So, effect is not material, it's pervasive also, adverse. Material and pervasive. What is pervasive? Effect is spread across multiple account and multiple assertions. If going concern is not valid, financial statement should be valued at NRV. But every account is valued at cost. So, effect is in all account, everything. Okay, so adverse. Now, when you don't obtain evidence, they are saying you can check everything, but you cannot check one debtor. One debtor, except that debtor all is good. That effect is material, but it's not pervasive that affects all account. Qualified opinion. Whether you get evidence or don't get evidence. Okay. If you feel misstatements are material but not pervasive, qualified. Get evidence, then also qualified. Not get, then also qualified. But if material misstatements are there, effect is not pervasive. Okay. Disclaimer: accounting records are only not there. Are you clear? They are saying records are burnt. They are saying that records are with income tax authority. They are saying records are with GST. I was only engaged to do audit. I could not do audit. So disclaimer opinion. Why? I am disclaiming my opinion. I cannot form an opinion. But I feel misstatements can be material and pervasive. Why? Because I have not audited only. So I feel it can be material and pervasive. So if you have not got evidence but only in one area, if effect of that is material but not pervasive, qualified. If you have not got evidence in all area and you feel effect can be material and pervasive, can be, disclaimer. I hope you understood. One last time, everything perfect, unqualified. Mistakes are there, but they are material but not pervasive, not spread to different account, different assertions, qualified. Effect is material and pervasive, adverse. Okay, we have not got evidence but only in one area, otherwise all is good, qualified. We have not got evidence in any area because records only they don't have, disclaimer. I hope you are clear. If you understand this, essay is easy. Modification to opinion in independent auditors report. There are 4 reports: unqualified, qualified, disclaimer, adverse. What is modification? Modification is very simple. When you don't issue clean report, so you will issue 3 reports: qualified, disclaimer, adverse. Very simple. Let us read. Qualified is issued when auditor, after obtaining evidence, concludes there are misstatements without seeing tell. There are misstatements which are material but not pervasive. Second, auditor is unable to obtain evidence but concludes misstatement could be material in debtors. Are you clear? Because main debtor information not obtained but not pervasive. Still qualified. So in qualified, 2 things are there: evidence got or not got. Material is there but not pervasive. Understood? Okay. Adverse. Auditor issues adverse when having obtained sufficient and appropriate audit evidence. You know that there are misstatements, they are material and pervasive. See, I forgot to tell one thing. If you tell them to correct misstatement and they correct, then clean will only come because they have corrected it. If they don't correct only, then these reports will come. Okay. Misstatements are material and pervasive. Adverse will come. Material, yes. Pervasive, yes. Disclaimer. Auditor is unable to obtain sufficient and appropriate evidence to form an opinion, and he concludes there can be misstatements which are material and pervasive. Why can be? Because he has not audited. Okay. So this. Other consideration when you give adverse or disclaimer opinion. Okay. Whenever, very important MCQ. Whenever you give adverse or disclaimer opinion, you cannot give separate opinion on any one set of financial statements. See, inside financial statements, 5 things are there: balance sheet, P&L, notes to accounts, cash flow statement, statement of changes in equity. You are saying adverse means entire financial statements are showing wrong view. You are saying disclaimer means you have not audited only, you could not form opinion. Then you cannot say that P&L is good. Are you clear? If you say this person is bad, then you cannot say his attitude is good. Baby, bad is bad only. First you insulted, now you are correcting. Too much fun. English. When auditor issues adverse or disclaimer opinion on financial statement as a whole, auditor's report shall not include unmodified opinion with respect to same financial reporting framework on single financial statement or one or more element of financial statement. Means if you have given adverse or disclaimer report on financial statement as a whole, you cannot give separate report on what? On on single set of financial statement or one or more specific elements. You cannot say that in holding subsidiary, holding company is bad, but this subsidiary is good. Are you clear? No. You are auditing CFS, consolidated financial statement. Or better example, 5 things are there. You are saying it is adverse report, but P&L is good. Wrong. Are you clear? Now, consequence of inability to obtain sufficient and appropriate evidence due to management imposed limitation. Sometimes what happens, due to management limitation, we are unable to get sufficient and appropriate audit evidence. Due to management limitation, then what you will tell? For example, you are telling, okay, management, I want to go to Australia to check this plant. I want to go to Australia to check this plant. Are you clear? Or please tell me, get me debtor confirmation of Hansen. Okay. Now, one party, B party, give me debtor confirmation of B. Management is saying that that confirmation will not come because that debtor very busy. He doesn't send. He's busy. Okay. Are they busy for auditor also? Yes, yes. Okay. So if the auditor is unable to obtain sufficient and appropriate evidence due to management imposed limitation, we will tell management, Mahesh Kumar, please tell them to send debtor confirmation, please. If management is not agreeing, we will go to the dad of management, TCWG, those charged with governance. If management refuse, auditor shall communicate to TCWG and see whether we can perform alternate procedure. Example, debtor confirmation you are not getting. You can see credit sale, or you can check with inventory if that inventory is already sold. Okay, anything. So number one, if management limitation is that, request management. If they don't agree, ask TCWG, baby, will you help me? No, I will also not help. After that also, if auditor is unable to obtain sufficient and appropriate evidence, he asked management did not respond. TCWG, they also did not respond. Alternate procedure also I cannot do. Then what I will do? I will see effect of that misstatement is material but not pervasive, then qualified report. Material but not pervasive. If I feel effect is material and pervasive, effect could be material and pervasive, then I will resign from the audit if not prohibited by law. If prohibited, then I will have to stay in the audit and issue disclaimer report. Understood? Sir, not understood. English. Only 4 steps and over. Whenever management will impose a limitation on you, tell me, what will you tell? Management impose limitation. I am auditor. I am very famous. I understood. Okay, management is imposing limitation on you. Tell me what you will tell. Tell management to remove the limitation. After management did not remove, you talk to TCWG. Hey, please, you remove the limitation, please. TCWG is also not cooperating. Then we will see whether we can perform alternate procedure. That also we cannot do. And we feel misstatements are material but not pervasive. Qualified report. We feel the effect can be material and pervasive. Resign from audit if allowed by law. If not allowed, issue disclaimer report. Means they want 99% you should not issue disclaimer report. But still, if nothing is in our hand, we will issue. If it is too late, we have to issue. Okay. In early stages of engagement, maybe you can withdraw. Otherwise, you cannot. Nice question. Display of material misstatement on the basis of nature of material misstatement. Okay. How to display material misstatement? You have to write specific amount in the financial statement. Whatever misstatement is there, example, land and building is overvalued by 50 crore. Okay. Second, depreciation is undercharged by 30 crore. Okay. In inventory valuation, there seems to be overvaluation to the extent of 80 crore. Include description and quantification in the financial statement unless impracticable. If it is not practicable, auditor shall write in basis of opinion paragraph, it is not practicable to find out exact amount. So number one, write specific amount. Narrative disclosure. In basis of opinion, you have to write how disclosures are misstated. Example, they have written net worth is eroded, but actually net worth is eroded 4 times. Means they have misstated. It has not eroded. You have to write that it is eroded 4 times. Where? In basis of opinion. Number one, specific amount in the financial statement. Number two, narrative disclosure. Non-disclosure. Non-disclosure also you have to write in basis of opinion that this related party are non-disclosed. These are new cases on the company, they have not disclosed. Disclose non-disclosure with TCWG. Describe. If they disclose it, very good. If they don't write, I will write in basis of opinion paragraph nature of omitted information. So 3 things. How many things, guys? 3. Display of material misstatement on the basis of nature of material misstatement. 3. Specific amount in the financial statement. Narrative disclosure, non-disclosure. Specific amount in the financial statement. Narrative disclosure, non-disclosure. Explain or understood. Understood. Three things. Display of material misstatement 3. Number 1, specific amount in the financial statement. Narrative disclosure, non-disclosure. Specific amount in the financial statement. Narrative disclosure, non-disclosure. With this, essay 705 is also over. Now we'll move on to another essay. Very easy. Easy is there. 700. Forming an opinion and reporting on the financial statement. 705. Modification in independent auditors report. 706. EOM and OM in independent auditors report. What do you mean by EOM and OM? I am unable to understand. Can you please tell? Emphasis of matter paragraph and other matter paragraph in independent auditors report. See, why did this essay come? Three reasons. Audit report earlier were very boring. They were very mundane. 99% people felt that auditor only issues clean report. Whatever happens, they don't work only. So there was a huge pressure on auditors report, auditing profession. That is why they were telling that remove only audit, because auditor does nothing. Every time he issues clean report, people stopped reading the report. Audit reports were boring. Okay, no one liked doing audit, or no one read audit's report. Finally, just to show people, increase the transparency, make reports more communicative. Okay, interact with shareholders, tell them auditing how much hard work is done. These all new set of essays have come, which we will discuss now. Okay, so it is there to increase the value of auditor report, to make communication more better. What are these essay? 706 EOM and OM in independent auditors report. Why did this essay come? So we can make the audit report more interactive. We can communicate in a better way. We can talk in a nicer way. I hope you are clear. Objective of auditor: to draw attention by way of clear communication to matter, although appropriately presented or disclosed, is of such importance that it is fundamental to users' understanding of financial statement. As appropriate, any other matter that is relevant to users' understanding of audit, auditor's report, or auditor's responsibility. In 1 minute over, very easy. Come here. I will speak definition of both and you will understand very easy. What is EOM and OM? Emphasis of matter paragraph is a paragraph in independent auditor's report. This too I know. About a matter that is appropriately presented or disclosed in the financial statement, but is necessary for users' understanding of financial statement. Okay. See, EOM is any part which is already there. Emphasis of matter paragraph is we are emphasizing on one thing in the financial statement which is appropriately presented or disclosed, but in auditor's judgment this is necessary for users' understanding. I want to tell user, please look at this, please. Please, I want to emphasize on that part. It doesn't mean that I am issuing qualified report, but I just want to emphasize. Example: anything, any aspect of financial statement, be it balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. If anything is there, I want to highlight that. I will write in EOM paragraph, which comes after basis of opinion and before key audit matter. But that is not in syllabus. Now read definition. A paragraph in independent auditor's report that refers to a matter which is appropriately presented or disclosed in financial statement that in auditor's judgment is necessary for users' understanding of financial statement. This thing is already written here, but user, I still want to tell you. Are you clear? It is a thing which is already mentioned in independent auditor's report, but that in auditor's judgment is necessary for users' understanding of financials. I still want to tell you. Can you give 5 examples? Why not? Number 1, new legal cases are there on the company. Already given in notes to accounts, okay? But still, please read. I want you to tell that 4 new cases are filed on the company. Second, asset, liability, income, expense have increased due to acquisition of company. This year we acquired 2 big companies due to which it has increased. So although all this is there, but I want user to emphasize and understand that we have done audit in nice way. You emphasize everything has not increased because company has improved operations. It has increased because of acquisition. Turnover has decreased, okay, everything, asset, liability, income, expense decreased. Why? We have sold the entity, okay, we have sold a major division. So this all is in EOM paragraph. What is EOM? Emphasis of matter paragraph refers to a matter that is appropriately presented or disclosed in the financial statement that in auditor's judgment is necessary for users' understanding of financial statement. Very simple. EOM, emphasize. I want to emphasize. Emphasis of matter paragraph is a paragraph in independent auditor's report that refers to a matter that is presented. Presented means first four. Disclosed, notes to accounts, presented or disclosed, that in auditor's judgment is necessary for users' understanding of financial statement. Lots and lots of examples are there. I already took many. Sales have reduced due to COVID. Change in accounting policy. Change in inventory method. Simple. Okay. What is other matter paragraph? Other matter paragraph refers to a paragraph, okay, which refers to a matter not presented or disclosed in the financial statement. Other matter paragraph is a paragraph in independent auditor's report that refers to a matter not presented or disclosed in financial statement, but that in auditor's judgment is necessary for users' understanding of three things: audit, auditor's responsibility, auditor's report. This paragraph is not given, okay, it doesn't refer to any matter which is there in the financial statement. It is a other matter, but still I want to tell you so you understand audit better, auditor's responsibility better, auditor's report better. Without any matter of financial statement, what is such thing? Example: last year audit was done by another auditor. It has no relation with financial statement, but I want to tell you, in last year if any fraud is there, I am not responsible. Last year audit was not done. I am appointed this year only. Okay. Audit of few branches is done by another auditor. Audit of 5 branches we could not do this year. This doesn't refer to the thing which is presented or disclosed, but still I need to tell. So they understand the audit better, auditor's report better, auditor's responsibility better. Come here. However, auditor's opinion is not. A paragraph included in auditor's report that refers to a matter not appropriately presented or disclosed in financial statement, but according to auditor's judgment is necessary for users' understanding of audit, auditor's responsibility, auditor's report. I hope you understood. Audit, auditor's responsibility, auditor's report. With this, I can understand audit better, auditor's responsibility better, and auditor's report better. I took example, few branches not audited, last year not audited, last year audited by another auditor, few branches audited by another auditor, 8 subsidiaries audited by another auditor. Okay, reporting on more than one set of financial statements. I am reporting on both AS and IFRS. This report is only for board of directors. All such things are there. Over. When auditor include emphasis of matter paragraph, auditor shall include the paragraph in separate section after basis of opinion it comes. That is not in our syllabus. Maybe in final we'll have. Okay, with appropriate heading EOM. So where you have to show after basis of opinion, emphasis of matter. I am emphasizing on this matter. This matter is already there in financial statement. But baby, I want you to look at it better. Better. It should give clear reference to the matter being emphasized and where that will be found in financial statement. This matter is in page number this. Are you clear? Clear emphasis should be there. And also indicate I am not modifying opinion. I am not giving qualified report. But I just want you to see this. Because this is a significant matter that has occurred and as user you should know. When auditor includes other matter paragraph, okay, where does that come? It should include separate heading other matter paragraph. It comes after reporting on other legal and regulatory requirements. Just for your knowledge. Not required actually. Before reporting on other legal requirements. So in that is the title, addressee, opinion, basis of opinion, going concern, key audit matter, responsibility of management, responsibility of auditor. Now after that other matter will come. Responsibility of auditor, after that other matter, and then reporting, other reporting responsibility. Not relevant. Okay, forget. Very simple. If you did not understand in 1 minute over, if there is any 5 things in the financial statement, what 5 things? Balance sheet, P&L, cash flow statement, statement of changes in equity, notes to accounts. I want to emphasize in any of the 5 things. Are you clear? I will issue what? EOM, full form. Emphasis of matter paragraph. Any 5 thing I want to emphasize on any one matter, EOM paragraph. Anything outside the 5 things, are you clear? If I want to emphasize that last year audit was not done by me, I am reporting only to board of directors. Are you clear? A subsidiary audit is not done by me. Last year unqualified report was there. Forget. I want to refer to any other matter outside these 5 things. Other matter paragraph. So one last time. Any out of the 5 things I want to emphasize, EOM paragraph. Anything which is not in these 5 things, but I want to emphasize on that. Are you clear? Other matter paragraph, which helps the user to understand audit better, auditor's responsibility better, auditor's audit better, auditor's responsibility better, and auditor's report better. I hope you understood. Till now 3 essays are done. Hope you enjoyed. Oh, get up guys. If you like the lecture, please give a like button and comment it. Okay, it will motivate us to make even better content in future. Okay, if you are new to this channel, do consider subscribing. I know chapter is still left. We will continue with 2 more easy essay. Till now 3 are done. Forming an opinion and reporting on the financial statement. 705 modification to independent auditors report. 706 emphasis of matter and other matter paragraph in independent auditors report. Now it's time for 2 more essays. Yes guys. Next in the list is Kem Cho Majama Kem communicating key audit matters in independent auditors report. Same explanation as was given to essay 706. Okay, EOM and OM in independent auditors report. Audit report were very boring. 99% of the time we only had one report, clean report. Then why the hell I'm doing auditing? I was unable to understand. In 99% of the cases, auditor gave a clean report. He himself did not understand why the hell is he doing audit. Second, audit report were very boring. People felt ultimately result is fixed only. They will give unqualified report. This is just time pass which auditors are doing. So SS 701 came. In 701, what we will communicate? Key audit matters. Sir, what are key audit matters? Key audit matters are those matters that are most significant in the audit of financial statements. Are you clear? Those are known as key audit matter. Very nice essay, very interesting essay, very simple essay also. Let's read why did it come. Number 1, to enhance the report of the auditor's report to increase the value. Second, provide additional information to users of financial statement which help in understanding the matters that were most significant in the audit of financial statement. Sir, what do you mean by most significant? Matters which took maximum time of ours. We invested heavily. We want to tell to users. We did not do time pass shareholders. We spent a lot of time on these methods. So we can communicate the audit report better. We can communicate our work better. We can increase the value of reporting, make it more transparent, make it more communicative. And third, communicating matter may help in understanding the entity and areas of management judgment in audited financial statement. I hope you understood what is key audit matters. See, how to find out key audit matter is a very interesting task. Once you understand that, 99% game is over. See here. This is the best possible diagram you can see. Number 1, matters that are communicated to TCWG. I will tell those charged with governance 100 matters. Out of which matters that are significant, that require significant auditor's attention, in which lot of time was there. Significant attention. Out of 100, maybe 20 required significant attention. Out of that, only 5 which are most significant will be key audit matters. Separate heading is also given. Do you remember format of SS 700? Title, addressee, opinion, basis of opinion, going concern, came cho, majama, key audit matter came, same key audit matter is there. And matters which are most significant. Are you clear? How to identify? Matters communicated to CCWG. Matters that require significant auditor's attention. In that also matters that are most significant. Are you clear? What do you mean by the word most significant? That take maximum time of hours are known as what? Most significant. One last time, matters told to TCWG are 100. Matters which require significant auditor's attention. Significant means maybe EOM. Significant is emphasis of matter paragraph. But matters that are most significant. Are you clear? Maybe 5 matters which are most significant. Those are known as key audit matters. Usually, there is a EY report which says out of more than 150 audit report analyzed, these 5 are always key audit matters, or they can be key audit matter. Impairment of tax. Why? Because it's subjective. Impairment involves lot of assumptions. Okay, lot of fair value we have to calculate. Tax, goodwill impairment, management himself overriding control, fraud in revenue recognition. These are few key audit matters. I hope you are able to understand. Yes, sir. This can be, not are few, this can be few key audit matter. Come here now. Key audit matter is not a substitute to following disclosure. Whenever, These things are given. Separate disclosure is necessary. You cannot just write key audit matter. You can write key audit matter, agreed, but it is not a substitute for disclosure. These disclosures are compulsory required. Which disclosure? Oh my god, memory technique. See, separate opinion is required on individual matters. Example, Caro. All companies have to give Caro. You cannot say that Caro is a key audit matter and you did not do reporting as per Caro. We have to do separate reporting. You can tell that Caro took significant time of ours. Okay, agreed. Second example. Okay, long form audit report which bank have to prepare. Every bank has to prepare LFAR. It cannot be key audit. It can be key audit matter, but we still have to report. It is not a substitute to following disclosure. Following disclosures are compulsory. They can be key audit matter if you want. Understood? Yes. Second, when we have to express a modified opinion, you cannot just write key audit matter. Are you clear? It is a key audit matter, but we are not modifying the report. Modification is compulsory. That issue due to which modification came. Okay. For example, lot of time was taken in fixed asset valuation, inventory valuation. It can become key audit matter, but it is not a substitute to modified report as per SA 705. Third, a substitute for reporting on SA 570 when a material uncertainty exists regarding going concern. When you feel there is a material uncertainty regarding going concern, you have to compulsory write. Are point number 5. Okay, title, addressee, opinion, basis of opinion, going concern assessment. You remember, compulsory we have to write. You cannot write. It is a you cannot write it as key audit matter. Okay, you can if you want, but going concern compulsory disclosure is required. So it is not a substitute for following disclosures. Oh my god, separate opinion is required on matters. Okay, it will lead to a modified opinion as per SS 705. And what is the G? Oh my god, G. When a material uncertainty exists regarding going concern as per SA 570. Very simple. Oh my god, separate opinion is required. When we want to express a modified opinion, when a material uncertainty exists regarding going concern, then it is not a substitute. One more time, shall I explain or understood? Key audit matter is not a substitute to 3 disclosure. Oh my god, what is O? Separate opinion is required on these matters. M, when we want to express a modified opinion as per SS 705, when a material uncertainty exists regarding going concern, then we cannot just write key audit matter. You can write, but these disclosures are compulsory. Tell me which 3 disclosures are compulsory. Break. 5 seconds. Separate opinion is required on these matters. M, when we want to express modified opinion as per SS 705, or when there is material uncertainty as per SA 570 regarding going concern assessment. Are you clear? Just read 5-second break. Sir, done. Separate opinion is required on individual matters. Okay, we have to issue a modified opinion as per SS 705 when there is a material uncertainty regarding going concern assessment. Applicability. To whom it is applicable? Very simple. Listed company. Okay. Circumstances when auditor wants to communicate key audit matters when required by law or regulation. See, simple. Listed company. Required by law or regulation. SEBI will tell for this class of company it is compulsory. Telecom Regulatory Authority of India says that all telecom company have to give key audit matters. Okay. Number 1. Listed company, everything applicable when required by law or regulation. Third, circumstances in which auditor wants to communicate. When auditor will communicate, maybe in which there is a lot of public interest. Okay, insurance company, banking company, telecom company, charitable organization, public trust. In that, lot of people have public interest. Auditor may decide to communicate. Tell me in 3 situations it is applicable. Listed company, very simple. Second, required by law or regulation. Third, circumstances in which auditor wants to communicate key audit matter. Very simple. When auditor will communicate? When there is public interest. When you disclaim an opinion, you cannot use key audit matter. How nicely. Few lines are too good. Love you, ICI. See, whenever we are issuing disclaimer report means we were engaged to do audit, but we could not do audit. And then you are saying this was key audit matter in audit. Too much fun you are having. On one side you are saying that you could not do audit. On another side you found out key audit matter also. Understood? Okay. Determining key audit matters. We should take into consideration following things while determining key audit matter. Whenever you want to find out key audit matter, 3 things you need to keep in mind. Oh wow, yeah. Number 1, areas of higher risk of material misstatement or significant risk as per SA 315. Whenever there is higher risk of material misstatement or it is a significant risk, it is always a key audit matter. Following points need to be kept in mind while determining key audit matter. Areas of higher risk of material misstatement or significant risk as per SA 315. As per SA 315, wherever there is higher risk of material misstatement or significant risk is a key audit matter. Auditor's judgment relating to areas that involve management judgment, including accounting estimates with high degree of uncertainty. Okay, auditor's judgment that involves manager's judgment, including accounting estimates with high degree of uncertainty. Example, impairment is there, fair value of asset is there, depreciation is there. Are you clear? Sale and lease back. All the transaction which involve, okay, auditor's judgment, which involves manager's judgment, that can be key audit matter. Or any significant event or transaction that has occurred during the period. We have acquired a company, we have sold off a company. Are you clear? This can be key audit matter. Following things need to be kept in mind while identifying key audit matter. Areas of significant risk or where there is higher risk of material misstatement as per SA 315. Auditor's judgment that involve areas which involve manager's judgment, okay, significant including accounting estimates with high degree of uncertainty. And third and last, significant event or transaction occurred during the period. Very simple. Following things need to be kept in mind while identifying key audit matter. Significant risk as per SA 315 or where there is higher risk of material misstatement. Auditor's judgment that involve manager's judgment, including accounting estimates with high degree of uncertainty. And third, significant event or transaction occurred during the period. Communicating key audit matters. Key audit matters are those matters that are most significant in the audit of financial statement. These matters are addressed in the context of financial statement as a whole and informing opinion. Auditor doesn't provide separate opinion on this matter. This I did not understand. Second point. Can you please explain, sir? Why not? Why not? Why not? Why not? Listen. See, they are saying that we did not want to express opinion on this only. While doing the audit, we found out this matters. But our opinion is on the whole report and not only on this. But these are those matters which took our most significant time. Are you clear? How do we identify key audit matter? Matters communicated to TCWG. Matters that require significant attention. Matters that are most significant. Are you clear? So those are second point. Key audit matters are matters that are most significant. Second, this came when we were auditing financial statement as a whole and we don't want to express separate opinion only on these things. There are 100 things, okay? But these are those which are most significant. Understood, sir? So till now all are done. Now last one we have, okay, but quick recap. 700, forming an opinion and reporting on financial statement. 705, modification in independent auditors report. 706, EOM and OM in independent auditors report. 701, કેમ છો? મજામાં? Communicating key audit matter in independent auditors report. 710, comparative information, corresponding figure and comparative financial statement. Wow, what a essay. What a essay. Lovely. Okay. Corresponding comparative information, corresponding figures and comparative financial statement. Let me take an example. This year profit is 1000 crore. Good or bad? 1000 crore in such a inflation, tremendous profit. Wrong. Last time it was 2000 crore. Are you clear? You have to compare with last year only, then you can say. Someone passed in inter, but in foundation he had got a rank, means it is bad. Someone in inter, okay, failed in one, passed in one group. Very good. In foundation he had taken 8 attempts to pass. At least inter one group to clear. So we cannot say anything unless we compare with last year. Okay. Comparative information. In this there are two approaches. Corresponding figure, comparative financial statement. Corresponding figure, comparative. Comparative information. See, any figure we can say it is good or bad when we compare with last year. So there are two approaches here. Comparative information, corresponding figure, comparative financial statement. Listen to me 30 seconds very nicely. What is corresponding figure? Year, I give opinion on current year only. Last year figures are just for reference. One more time. I give report on current year only. Last year figures are just for reference. In comparative financial statement, I give report on all the financial statements which are presented. I am giving my opinion on all the financial statement and not only last year. Able to understand? Yes or no? Yes, sir. Well, let's take example. Schedule 3. Schedule 3 only tells us you have to report on this year. Last year figures are just for reference. In Schedule 3, we are giving, see, which to follow. Tell me. In comparative information, this is little hard, so you have to concentrate, but very small, 15 minutes, but hard. Okay. Corresponding figure we shall follow comparative financial statement. That law will define, regulation will define, terms of engagement will define. Let's take example. Okay. For example, Schedule 3 tells you have to report on this year figure only. Last year is just for reference. But whenever you want to file IPO, okay, while filing IPO, okay, we have to give 5 years figures. Last 5 years figures. But we are doing audit on last 5 years figures. We are not only submitting this year. In this, our auditor's report is on, or our report is on all the past years for which we are submitting, and not only current year. I hope you did not understand. One last time I will explain. Comparative information has two things: corresponding figure, comparative financial statement. What is corresponding figure? We are giving opinion on this year only. Last year is just for reference. What is comparative financial statement? We are giving opinion on all the past years for which financial statements are presented. This year and all the past year. Which to follow? Sir, comparative only follow. That law will tell. Schedule 3 has told that you have to report on this year only. Last year is just for reference. But whenever we file IPO, we have to give last 5 year financial statement. In that, we have to give audited financial statement of last 5 year. That is comparative financial statements. But every time I will follow comparative financial statement only. Why? Who will give you money? Your dad will give. Understand, your dad will not give money. Regulation will specify, law will specify, terms of engagement will specify. If they want corresponding figure, we will do audit as per that. If they want comparative, we will do audit as per that. Fully understood. There are two approaches for comparative: corresponding figure, comparative financial statement. Which approach to follow is specified by law, regulation, terms of engagement. For corresponding figure, auditor's report is on current year only, but last year is just for reference. For comparative, auditor's opinion refers to each period for which financial statements are presented. Here we give opinion on all the previous years. Now, three questions will come. Audit procedure regarding comparative information. Comparative information means first approach or second? Heading. Neither of the approach. Seen, heading is there. Okay. Understood, 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 understood. Fully understood. Oh, okay. Auditor shall... Auditor shall see financial statement include comparative information as per applicable FRF. What is FRF? Schedule 3 will tell that you have to give on current year only. So we have to see comparative information is as per FRF. For this purpose, we will evaluate. Comparative information agrees with the amount and other disclosure presented in prior period. Whatever amount and disclosures are then in prior period, same consistency is followed. Accounting policies are consistently carried out, or if any changes are there, they are properly accounted, classified, disclosed. Properly accounted, presented, disclosed. Very simple. Comparative information. Whenever you are checking, you have to see it is as per applicable FRF. Comparative information agrees with the amount and other disclosures for prior period. Whenever there is changes in accounting policy, effect is properly classified, presented, disclosed. Classified, presented, disclosed. Accounted, presented, disclosed. Now, two approaches are there. Audit reporting regarding corresponding figures. In corresponding figure, remember, we are giving opinion for current year only. Last year is just given for reference. Yes, sir. When corresponding figures are there, audit opinion refers to current period only, except in three situations. In three situations, we will also comment on last year. Right now, you told not to comment now again. That is why essay is there. If everything was normal, why will be essay? Okay, understood. When corresponding figures are presented, audit opinion refers to current period only. Last year is just given for reference, except three situations. If in the previous year there was qualified disclaimer or adverse report and matter which gave rise to modification is still not corrected, then I will write a reference. Last year our report was qualified adverse disclaimer. This year also this matter is not corrected, so I am giving the same report. Are you clear? We usually in corresponding figure don't give reference to last year, except three situation. Number one, last year report was qualified disclaimer adverse, and this year this mistake is not corrected. Then we will say last year mistake is not corrected this year, and we are writing that due to this only we are giving modified report this year also. Second, if the auditor obtains evidence that material misstatement exists on the prior period on which unmodified opinion was issued. If last year you had given a clean report, but there were material misstatement, then what you will do? Auditor will see issue is solved or not. If not solved, express qualified or adverse opinion in current period financial statement and also write. Last year also these misstatements were there, but we by mistake gave which report? Clean report. It will come. Third, prior period financial statements are not audited. If they were not audited, auditor will write the same in other matter paragraph. Already learned. Tell me in corresponding figure, will I give reference to last year? No, 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 except three situations. Last year we had issued qualified disclaimer adverse report, and this year also the mistake is not yet corrected. Then I will write due to this reason this year also we are issuing same report. If auditor obtains evidence that material misstatement exists in prior period in which unmodified opinion was issued, then if this year it is not corrected, we will issue what? Qualified disclaimer or adverse. Qualified or adverse report. Of course, material misstatement are there, then disclaimer will not come. We will issue qualified or adverse report and also write this is prior period misstatement which is not yet corrected, in which unmodified opinion was issued. Prior period financial statements were not audited. We will just write a reference in other matter paragraph. Last year financial statements are not audited. Okay. In comparative, in this amount and disclosure for prior period are included for comparison with current period. But if audited, we will write. In this, auditor's opinion refers to each period for which financial statements are presented. When reporting on prior period in connection with current year, auditor's opinion differs from the one that was previously expressed. Auditor should write the reason in other matter paragraph. In this, only one point is nice. See, if we gave clean report last year or qualified report, but we feel there was a mistake, are you clear? Clean should not come. Then we will write that last year we had issued clean, but qualified report should come. Or last year, okay, qualified we had issued, but clean should come. Then we will write. Otherwise, nothing. So in comparative financial statement, our report is on each period for which financial statements are presented. Only one point. When reporting on prior period along with current year, if auditor opinions differed, we have to write in other matter paragraph that our opinion is different and these are the reasons. Understood? Very simple. Let's summarize this. Only two questions are good. Number one question. It has already come, so less chance, but again can come. Tell me, in case of corresponding figure, our opinion is on current year except three situations. Number one, last year we had issued qualified adverse or disclaimer report and misstatement is still not corrected or issue is still not corrected, I will write. Last year we had issued unmodified opinion, but there is material misstatement in prior period. If it is still not corrected, I will issue qualified or adverse report and also write that last year we had issued unmodified report. If prior period financial statement are not audited, I will write a note. In comparative, I give report on this year only. Last year, baby. No. I give report on all the years and not only this year. Okay. In this only in one reason. If last year I had issued some opinion which is changed now, then I will write the reason. That last year we had issued this opinion, but according to me, misstatement was there. So qualified or adverse should come. Understood? Over. With this, all essays are over. I hope this chapter was super fun, super easy for you. Okay, very quickly. Name all essays. Forming an opinion and reporting on financial statements, 700. Came cho Majama 701. Communicating key audit matter in independent auditors report 705. Modification to opinion in independent auditors report 706. EOM and OM in independent auditors report 710. Comparative information, corresponding figure and comparative financial statement. Okay, so this is the extra portion which is added in this chapter. Okay, duties of the auditor. Okay, earlier we had powers and duties of auditor in audit report chapter, but of course that audit report chapter is deleted. So duties have come here. Can we start? Yes, sir. Number one duty to inquire on certain matter. Okay, auditor will inquire on this matter. If the answer is negative, only then he has to write. If answer is normal, then nothing he will do. One more time I want to ask you, auditor will inquire on this matter. If the answer is automatically good, then nothing to do. If the answer is negative, only then auditor needs to comment. Okay, number one, whether loans and advances given by the company are properly secured and terms are not prejudicial to the interest of company. What is prejudicial, harmful. All the loans and all advances should be properly secured. See, terms of repayment should be proper. Proper security should be taken. It should not be for 50 years loan. Okay, very low rate of interest loan. So proper loans and advances should be there, and terms should not be harmful. Same, don't give loan of 20 years, don't give without security, don't give at very low rate of interest. Okay, if you give to related party also, ensure it should be beneficial to the company. So number one, loans and advances are properly secured, there is a security, and terms are not harmful to the interest of company. Two, whether book entry transactions are compromising to the interest of company. If you have done any book entry transaction, what's a book entry? Just doing sale, writing the name of party, nimit to sale. Now who is nimit? Okay, just a party, okay, fake party to sale, increasing just sales by doing book entry, not doing the actual sale. Whether book entry transactions are prejudicial, means harmful to the interest of company. Any investment is done in shares, debentures, security, are they sold below cost price? Except investment and banking company. See, investment and banking company can do this. Why? Because they every day purchase, sell, share, sell, purchase, sell, share, purchase, sell. They do of shares. But if you are not an investment and banking company, if you are doing any such thing, okay, investment is done in shares, debentures, security, are you selling them below cost price? It's very, very bad. Okay, then we will mention it here. Fourth, loans and advances are shown as deposit. See, what is a loan? It's given to related party, given to director, given to other people. Okay. What are advance? Advance is for business operation. Example, you want a raw material, you give a advance. Okay. You want certain service, you have to give advance. So it's for business. Loans and advance are shown as deposit. What is deposit? It's a surety for future. Example, in library, I will pay deposit. So as soon as I withdraw from library or cancel my subscription, I will get deposit back. While taking a flat on rent, I have to pay deposit. So as soon as my flat term is over, I will get my money back. Are you clear? Okay, so if loans and advances, deposit is a surety for the future. Deposit is a surety for the future. Okay, so in deposit, we don't check much. You will ask me, why don't we check much? What a nice question you have asked. Amazing. Okay, because we know we are going to receive it back. See, flat deposit, you will receive it back. Library deposit, you will receive it back. School deposit, you will receive it back. So what you have done? Have you shown loan and advances deposit? Many times, if it's a suspicious loan, suspicious advance, we show it as deposit, so people will not check much, means auditor will not check much. Have you done such cheap thing? Okay, continue. Personal expenses are charged to revenue. Any of your wife expenses you have charged to P&L. Okay, her go down is there, rent you are charging to company's P&L. Very bad, very bad. Whether shares are allotted for cash, adequate cash has been received. If not received, position is shown in books of accounts. Understood? Very simple. How to remember? What are duties of auditor? A, B, C, D, E, F. One more time. A, B, C, D, E, F. What is A? Loans and advances made by the company are properly secured. Terms are not harmful to the interest of company. B, whether book entry transactions are not compromising to the interest of company. C, whether investment is in shares, debentures, security, are they sold below cost price? Okay, are they sold below cost price? Okay. D, whether loans and advances are shown as deposits. E, okay, personal expenses are charged to revenue, whether shares are allotted for cash, adequate cash is received. If not received, position is shown in books of accounts. See, I will tell you how to remember. A, B, C, D, E, F. A, loans and advances. B, book entry transaction. C, okay, shares, debentures are purchased at cost price. Okay, are they sold below cost price? D, loans and advances are shown as deposit. E, personal expenses are charged to revenue. And last, F, whether shares are allotted F for cash, adequate cash is received. If not, position is shown in books of accounts. Easy. A, B, C, D, E, F. Just remember the starting word. It is in law also this. See, every auditor has to inquire on this matter. If the answer is normal, positive, don't write anything. If it's negative, you need to mention A, B, C, D, E, F. A, whether loans and advances are, okay, properly secured, whether loans and advances are properly secured and terms are not harmful to interest of company. A, over. B, whether book entry transactions are harmful to the interest of company, are compromising to the interest of company. C, whether shares, debentures, securities are purchased, are sold below cost price. Okay, shares, debenture, whether investment is done in shares, debentures, security, they are sold below cost price except investment and banking company. C is for cost price. D, whether loans and advances are shown as D for deposits. Okay. E, whether personal expenses are charged to revenue. Personal expenses are charged to revenue. D is what? Personal expenses. Sorry, F. Personal expenses charged to F. Whether shares are allotted for cash. Adequate cash is received. If not received, we have shown calls in arrears. Very simple. Last time in law also it is there. A, loans and advances. B, book entry transaction. E, whether A, B, C, sorry, C, sold below cost price. D, loans and advances are shown as deposit. E, personal expenses for cash, for cash, for cash. Clear? Learn nicely. Your time starts now. Very nicely learn. Learn one word English you can easily write. Okay, I know that. Then duty of auditor to inquire on this many matters. On what matter we will inquire? A, B, C, D, E, F. A. Okay. Whether loans and advances are properly secured. Terms are not prejudicial to the interest of company. B, whether book entry transactions are compromising to the interest of company. C, whether investment is in shares, debentures, security, are they sold below the cost price? Okay. Except investment banking company. Loans and advances are shown as deposit. Whether personal expenses are charged to revenue. A. F, whether shares are allotted for cash. Adequate cash is received. If not received, position is shown in books of accounts. Very simple. One last time. Okay. A, B, C, D, E, F, whether loans and advances are properly secured. Terms are not harmful to the interest of company. B, whether book entry transactions are compromising to the interest of company. C, whether investment is in shares, debentures, security, are they sold below cost price except investment and banking company. D, whether loans and advances are shown as deposit. E, whether personal expenses are charged to revenue account. Okay, whether shares are allotted for cash. Personal expenses, E for expenses, whether shares are allotted for cash. Adequate cash is received. If not received, position is shown in books of accounts. Come to next. Duty to sign audit report. What do I tell every auditor? Why do we do? It's a duty to sign. See, with great power comes great responsibility. These are our duties. Okay, these are our duties. Okay, against this we have been given unlimited power. We have been given unlimited power. So I can sign audit report. Every listed company has to compulsory do audit from a CA. So that is our duty. Duty to comply with accounting standards. What do I tell? You know it. Duty to audit a report as per section 143.3. These are compulsory things we have to check. Answer positive or negative we have to write. In duty to inquire, what was there? I will only inquire. Write on those matter if answer is negative. Here compulsory we have to write. Positive, negative, please write. Okay. Whether he has obtained, whether auditor has obtained all the information and explanation, okay, which is required for the purpose of audit. Whether you have obtained all the information and explanation required for the purpose of audit. Okay, you just have to write whether you have received all the information, explanation, company has cooperated, whether proper books of accounts are maintained, and returns are received from branch office. In case branch audit is done by someone else, proper books of accounts are maintained, returns are maintained by branch office. Any qualification or adverse remark regarding maintenance of account, anything negative in accounts, that also you have to point out. Okay, in case branch audit report is not done by him. Okay, in case branch audit report is not done by him, then has he received the report of branch audit? If it's done by another auditor, has he received the report or not? Whether company's balance sheet and P&L are in agreement with books of accounts. Balance sheet and P&L are matching with books of accounts. Whether financial statement comply with accounting standard. Very simple. Observation or comment on financial transaction having adverse effect on functioning of company. Anything adverse is there in a company. Any director is disqualified for appointment as a director, that also we have to write. Okay. Next, whether company has important, whether company has adequate internal financial control and operating effectiveness of control. See, earlier I only had to give a audit report, I only had to sign, but after the fraud of Satyam, after the fraud of Sahara, auditor's responsibility have increased. Okay, auditor is also responsible for operating, okay, whether there are strong internal financial control and they are operating effectively. Two things are there, having a control and operating. Tell me what's more important, having a control or operating? In fact, both. Okay, so whether company has adequate internal financial control and operating effectiveness of control. What do you mean by internal financial control? Today I will explain you three words: internal control, internal financial control, internal control over financial reporting. Listen nicely, what is internal control? Company has control for all department: production, finance, marketing, HR, logistics. These are internal control. What are internal financial control? Only finance department control, that we will have qualified people in finance department. Audit will be done, review will be done, maker checker will be there, budgets will be there, segregation of duty will be there. These are financial control. But when these are checked by auditor, auditor tells it what? Internal control over financial reporting. Tell me, when same control company will implement, it is IFC, internal financial control. But when checked by auditor, we call what? Internal control over financial reporting. One last time, internal control over financial reporting. Okay, so company has to check whether there are strong, adequate internal financial control and operating effectiveness of control. We have to check two things: whether control exists and it's operating effectively. But this is, see, audit report every company has to give, but internal financial control not every company, only a few. Come here, such companies are not applicable for internal financial control. See, internal financial control is a big thing, fees will be more, you need to check more, so it's applicable only to bigger companies. Okay, it's not applicable to following private company. Public company of course applicable, private company, this private company not applicable. One person company, small company, one person company, small company, not applicable. Or company which has turnover of less than 50 crore as per the latest audited financial statement, and borrowings less than 25 crore from any bank, financial institution or any other company should be less than 25 crore at any point of time, even if one condition is fulfilled. Okay, example, you have borrowing of 26 crore, still IFC is applicable to you. I hope you are clear, I hope you are clear, I hope you are clear. One last time. Okay, IFC is not applicable to which company? Tell me. Sir, it's not applicable to private company. But following private company, it's applicable. Which private company? One person company, small company, company which has a one person small. And last, company which is truly small private. When you are truly small, when your turnover is less than 50 crore and borrowings are less than 25 crore at any point of time from bank, financial institution or any company. Sir, if my turnover is 52 crore but borrowing is less, one condition not fulfilled, you are a big company, IFC will be applicable. IFC is not applicable to following private company: one person company, small company, companies with turnover less than 50 crore and borrowing less than 25 crore at any point of time. At all point of time you should have less. I hope it's clear, super amazing. Yes sir, yes sir, yes sir, yes sir, yes sir. Okay, so with this we are done. Such requirements of IFC are not applicable to the following companies. I hope it is super clear. Okay, so here 2-3 points you can easily add duty to: whether you have obtained all information and explanation, whether books of accounts are as per accounting standard, any adverse remark on functioning of company. Okay, whether the balance sheet and P&L are in agreement with books of accounts. Okay, very simple. Any director is disqualified, whether company has adequate internal financial control and operating effectiveness of control. But IFC is not applicable to following companies. Tell me to whom it is not applicable: one person company, number two, small company, companies with borrowing less than borrowings less than 25 crore and turnover less than 50 crore. Come here, last point: duty to report on fraud. Earlier we had a full long chapter on this. Now only this much is given. As per section 143.12. 143 is I love you section. 1 is I. Okay, love is a 4-letter word, so 4, and you is a 3-letter word, so I love you. Okay, 143.12 rule 13. 143.12 rule 13. As per section 143.12 of Companies Act and rule 13 of Companies Rules 2014, if auditor during performance of duties as a statutory auditor, okay, while you are doing the audit of a statutory auditor, okay, if you have reason to believe which involves or is expected to involve individually there is a fraud of 1 crore or more, individually there is a fraud of 1 crore, is being means it's going on or has been, is being means going on or has been committed by officer or employee of the company, we have to report to central government. Very simple. As per section 143.12 read with rule 13, if statutory auditor during performance of duties as an auditor has a reason to believe there is a fraud individually or in there is a fraud individually means one fraud. Okay, see here, has reason to believe individually the amount is 1 crore or more, is being means is going on or has been, future fraud not allowed. See, word by word catch. Okay, when you are doing duties as an auditor, you believe there is individually a fraud of 1 crore or above, 1 crore or above, is being or has been, already happened or is going on by officer or employee, I will report to central government. Report to which government? Central government. Below 1 crore, below, we will report to audit committee or board. Audit committee or board. Very simple. As per section 143.12 read with rule 13, if the auditor during performance of duties as statutory auditor has reason to believe individually there is a fraud of 1 crore or more, is being or has been, if future fraud not allowed, committed on the company by officer or employee, if done by third party not allowed, committed on company by officer or employee, definitely MCQ will come. We will report to central government. Below 1 crore, report to board or audit committee. So 2-3 things are important. If the fraud is of 50 lakh, board or audit committee. 1 crore. Sir, 3 fraud are there, 30 lakh, 40 lakh, 30 lakh, 1 crore above. No, then we will not report to CG, central government. We will not disturb. We will report to audit committee or board. Individually, it should be 1 crore and above. Understood. What about future fraud? No, not allowed. Okay. One last time, as per section 143.12, read with rule 13, if during performance of duties as auditor, any auditor has reason to believe there is a fraud individually of 1 crore or above, is being or has been committed on the company by officer or employee, then will report to central government. Below 1 crore, okay, audit committee or board. Clear? Okay. With this is over. So what are duties of auditor? I don't think they will ask all. Duty to inquire on certain matters, duty to audit report, duty to comply with AS, duty to report on fraud. I hope you are clear. Very easy. Okay, now we will come here. Caro, most important and new addition is Caro. Of course, it was there earlier also, it is there now also, but now it is a part of this chapter. Caro, we will go little more detail. So I am revising from main book. Let's come here. Caro. What is the meaning of Caro? First of all, understand the meaning. Central government in consultation with NAFRA. One more time. Central government in consultation with National Financial Reporting Authority. One more time, listen. Central government together with NAFRA, they came that lot of frauds are done these days. Okay, and due to the frauds, shareholders are suffering losses. Be it Satyam, be it Sahara, be it ICICI Bank, be it Axis Bank, all losses have been there. And who suffers? Shareholder. So let's give additional reporting. Okay, central government in consultation with National Financial Reporting Authority has said, let's try to give additional requirement, additional reporting. By reading this additional reporting, I think shareholder can be very cautious. He can catch if there is a fraud anywhere and he will not invest in such company. Very good. Okay, so tell me, this Caro is formed why? First of all, so that frauds, if they happen, public can catch the fraud by reading the points of Caro. So in Caro, what they have included? It is company's auditor report order. Whenever company's audit is done, additional reporting point. What points are included in Caro? all possible areas where fraud can be done, all possible areas where scam can be done. They have tried to give an indication to shareholder by reading this only. Don't invest in such company where the points are negative. So they have included almost all points. Brilliant Caro they have prepared. If you read Caro 2020 nicely, why 2020? It came in 2020. It has 21 points. It covers almost all areas. Almost all areas. Okay. By reading this, you will get a fair idea. Okay. That if you follow these points also, never ever you will be caught in a fraud in a company. Never ever. Okay. Always your money will be safe. You will never invest in such company where points are negative. One more time. Central government in consultation with National Financial Reporting Authority has given additional requirement for company. Additional requirement. Okay. For companies after 1st April 2021. Of course, it was implemented 1 year late, but we are not concerned. So central government in consultation with NAFRA has given additional requirement for company so we can catch all the possible fraud before they occur by seeing the points of Caro. I hope you are clear. Come here. Caro will apply to all company including a foreign company. Okay, all company including a foreign company. But following companies are not eligible. Number one person company. Okay. Number two, small company. I will tell you the reason also. Why one person company not allowed? They are truly small. One person. Why Caro applicable? What fraud they will do? They don't have shareholders. You will never do fraud with yourself. Small company. Why to do fraud? Okay, small. Section 8, non-profit company. Array, you are not doing profit only. Why to do additional requirement? You don't have shareholder. Okay, so one person company, small. See, this is to protect the interest of shareholder, that their money should not be lost. But here there is no such fear. One person company, small company, section 8 non-profit company, insurance company, okay, they have their dead IRDA. They have given double requirement in IRDA. Why Caro applicable? They will be mad. They will follow IRDA or Caro. Okay. Private banking company, they also have their dad RBI. Are you clear? The RBI has given lot of requirement. Caro, they will die. So very simple. One person company, small company, section 8 company, non-profit, insurance banking. Private company also not applicable. But for that, additional conditions are there. See, we want Caro to be applicable to truly big companies. Okay, truly big. Okay, why? Because we want to protect shareholder. In small company, why to do so much reporting? They will be tired. Ease of doing business will not be there. Okay, so not applicable to one person company, small company, section 8 not for profit company, insurance company, banking company. Private company not applicable provided these conditions are fulfilled. Number one, it is not holding or subsidiary of public. Listen nicely. If your holding is public or your subsidiary is public, it's applicable. Example, I am private company, but I am subsidiary of Reliance. Applicable. Why? Because I will listen to Reliance. Okay, so Reliance might do fraud through their subsidiary company. Caro applicable. Okay, sir, I am not a subsidiary of Reliance. Okay, but I have one subsidiary which is public company. I am holding company. My subsidiary is listed in stock exchange. Then I will do fraud through my subsidiary company, or I will do fraud through holding company. So not applicable. Okay, so always remember, Caro is applicable to me if my holding or subsidiary is public. Then Caro applicable. Why? Because I have some relation with public. In order for Caro to be not applicable, I should be truly private. Neither my dad should be public nor my child should be public. One last time. If I have holding as public, Caro will be applicable. If I have subsidiary as public, Caro will be applicable. If my holding is private, subsidiary is private, then Caro is not applicable provided other conditions are fulfilled. This is the main condition. What's the main? Holding or subsidiary should not be public. Understood? Okay. Come here. What are the conditions? Paid up share capital and reserve more than 1 crore, then applicable. If I have holding private, subsidiary private, but my paid up share capital is more than 1 crore, applicable. Total borrowing from bank or financial institution are more than 1 crore. Caro applicable means I am big. See, any big person, Caro is applicable. Why? Because only big people do fraud. Small will never do fraud. Small are innocent people in life. Big people are very bad in life. Understood? So, okay. Paid up share capital and reserve more than 1 crore. Total borrowing from bank or financial institution more than 1 crore. Total revenue more than 10 crore as per the latest financial statement. If any one condition also fulfilled, then Caro applicable. How to remember? PBT 1110. PBT 1110. One last time. PBT 1110. Paid up share capital and reserves are more than 1 crore. Borrowings are more borrowings from bank or financial institution. Unsecured borrowings from bank or financial institution are more than 1 crore, or turnover is more than 10 crore as per latest audited financial statement. Okay, turnover is more than 10 crore during the financial year. So PBT 1110. Listen nicely. Final conclusion. If my holding is private, subsidiary is private, I have to see three conditions. Even if one violated, I am big, Caro applicable. Okay, if my paid up share capital and reserve is less than 1 crore, if my borrowings are less than 1 crore, if my turnover is less than 10 crore, and my holding and subsidiary is also private, then Caro is not applicable. Clear? Yes, sir. Most important, Caro will never apply to consolidated financial statement. Listen, I have 10 subsidiary, then total 12 balance sheet will be prepared. Not understood. See, I have 10 subsidiary, one my balance sheet. Other 10 people are there? No. Now you will ask me, who are other 10 people? Other 10 are subsidiary company. They will also prepare their stand-alone balance sheet, my balance sheet. They have 10 stand-alone balance sheet and one consolidated. See, Caro will apply to me. Caro will apply to 10 subsidiary, but they will not apply to consolidated. Okay. Why? Because it's together. No need to apply Caro there because we have already applied in individual financial statements. MCQ can come. Okay. Come here. In paid up share capital and reserve, what we will include? Of course, include equity share, preference share, right share, bonus share. Call in advance don't include. It's not paid up. It's not paid up. It's advance. Call in area minus. Why? It's not paid up. It's not paid up. This will be minus. This don't include. Okay. Reserves, capital reserve, revaluation reserve, debenture redemption, all reserve. But don't include depreciation reserve and bad debt reserve. You will ask me why? Why no depreciation and bad debt? It is charge against profit, not appropriation of profit. What is appropriation of profit? Just dividing the profit. But charge against profit will reduce the profit, will reduce the profit, will reduce the profit. I hope you are clear. So these are what? Appropriation of profit, that will be included. But bad debts is charge against profit. Total borrowing, what to include? All include. Okay. Secured, unsecured, long term, short term, bank overdraft. But if your Sasurji has given you, if your relative has given, don't include because it only includes bank or financial institution. Relative borrowing are not included. Okay. Last, revenue, what to include? What? Only revenue. Don't include taxes. Okay. So revenue will include, don't include a total revenue. Total revenue means both revenue from operation and other income. Both you have to include, operation and other income, but don't include taxes. Don't include taxes. I hope you are clear. Okay. Last I want to say, okay, tell me, it doesn't apply to banking company. Foreign bank also doesn't apply because RBI will take care. NBFC it will apply because NBFC is not a banking company. Caro will apply to them. Insurance company it won't apply, general or life. I hope it's clear. So Caro doesn't apply to, in 1 second, one person company, small company, okay, section 8 non-profit company, insurance banking, clear? Private company. In private company, it doesn't apply. Two conditions fulfilled. If my holding or subsidiary is public, okay, then it is applicable. Holding subsidiary private, then I will check three more conditions. PBT 1110. Paid up share capital and reserve more than 1 crore. Applicable Caro. Okay. Borrowings more than 1 crore. Applicable Caro. Turnover more than 10 crore. Caro. Applicable. Are you clear? Borrowings at any point of time. Why turnover we don't check at any point of time? Turnover will be highest in year end only, no? Because turnover will keep on adding. Oh, yeah. Clear? So, when Caro will not be applicable, okay, if holding subsidiary private, but my borrowings, okay, paid up share capital, borrowing, turnover, all this is also less, and holding or subsidiary is also private, then Caro will not be applicable because I am truly small. Okay, so what is Caro? Additional requirements to be done by certain companies. Why required? Because there are a lot of frauds. Okay, come here. So a lot of requirements are there. We will go one by one, line by line, very easy. Okay, we will read the keywords, otherwise it will take lot of time. Okay, but I'll make you learn all. Sir, do we have to remember the points also? Of course, yes. Okay, there is no doubt. Of course, yes. I am not saying yes. Of course, yes. Okay, come here, come here, come here, come here, come here. Number one. Okay, so Carol is saying you have to report on this point, fixed asset. We have to see proper quantitative, proper record of fixed asset is there, including quantitative details and situation. Proper record of fixed asset is maintained. Quantitative detail means quantity, along with qualitative details, situation. Why situation is important? For valuation. If situation is not good, value has to be reduced, impairment loss. Okay, so we have to see this proper quantitative records of fixed asset, including quantitative details and situation. Second, you have to check in fixed asset whether they're physically verified at reasonable interval. What is reasonable interval? Once in 3 years. Okay, once in 3 years. Physically verified at reasonable interval. The physical verification is done almost every year or once in 3 years. Any material discrepancy is there. Now you'll tell me, what is material discrepancy? More than 10% difference. How they have dealt with in books of accounts. Okay, whether fixed assets are reasonably verified by management. Okay, physical verification is done at reasonable interval. If there is material discrepancy, in Caro 21 points are there. We are doing the first point. Stay tuned. Okay, quantitative details of fixed asset, whether physically verified by management at regular interval. Any material discrepancy is there, means more than 10% difference is there. How it is dealt in books of accounts. Whether title deeds of immovable property, all fixed assets are in the name of the company. If not in the name, you have to give the details. So very simple, in fixed asset we have 3 points. Number one, proper quantitative details of fixed asset are there. Okay, including situation of fixed asset. Two, okay, whether they are physically verified. Physical verification is done at reasonable interval. If there is material discrepancy, more than 10% difference, how it is dealt in books of accounts. Title deeds of immovable property are in the name of company. Clear? Second item we have to check is inventory. Physical verification of inventory is done at reasonable interval. Any material discrepancy is there, how it is dealt in books of accounts. Regular interval, once in 3 years, almost every year. Okay, what is material discrepancy? More than 10% difference, how it is dealt. Third point, loan. Whether loans are given to related party, secured or unsecured. Terms are not harmful. All the conditions are fulfilled. Okay, the terms are not prejudicial. What do you mean by prejudicial? Are not harmful. What can be harmful term? Given long-term loan without security, given at low rate of interest. Okay, terms of repayment are not proper. Second, see the schedule of principal and interest is proper. Are we receiving the amount of loan regularly? If amount is overdue for more than 90 days, see here, more than 90 days, adequate steps have been taken for recovery of principal and interest. Okay, very simple. 3 points are done till now. Easy. Okay, in respect of loan, investment guarantee given to director. If loans are given to director, section 185, 186 of Companies Act, which you have studied, is complied with. Okay, I hope this is also easy, nothing great here. Public deposit. In India, a lot of people are accepting deposits. They want funding, they will accept deposit and tell we will pay you this rate of interest. So if you are accepting the deposits, section 73 to 76 of RBI is complied with. Okay, if you are if there is any contravention done by you, if there is an order passed against you by tribunal, company law board, you have followed or complied with their order. If an order is passed by company law, national company law tribunal or RBI, whether same is complied with or not. Very simple. Okay, 5 points are done. Total 21 points are there in Caro. Okay, I will make you learn all, be rest assured. So first 5 points come here. 1, 2, 3, 4, 5. What are clauses covered by Caro? Number 1, fixed asset. Remember, biggest item of balance sheet is fixed asset. Second biggest item is inventory. How to remember? Fixed asset, inventory. Fixed asset, inventory. loan to related party, loan to director, loan to related party, loan to director, loan to related party, loan to director. Where are you getting money for loan? Public deposit, public deposit, public deposit. Remember 5 points. 21 clauses I will make you remember. Be rest assured. Number 1, fixed asset inventory, fixed asset inventory, loan to related party, loan to director, loan to related party, loan to any one clause can also come. Explain clause 7. Then you should know. Loan to related party, loan to director. Where are you getting money for loan? Public deposit, public deposit. One more time. Fixed asset inventory, fixed asset inventory, fixed asset inventory, loan to related party, loan to director, loan to related party, loan to director. Where are you getting money for loan? Public deposit, public deposit, public deposit. Learn nicely. Small break, 2 seconds. Done. Fixed asset inventory, loan to related party, loan to director. Where are you getting money for loan? Public deposit. Come to next point. Okay. Cost records. See, certain companies which are crucial sector of India like sugar, electronic, telecommunication, arms and ammunition, they have to maintain cost record. Why? Their cost cannot exceed a particular level, because if their cost increase, okay, common price of goods will increase, okay, inflation will increase in India, government may fall down. So for certain sectors which are the critical sector, which are the main sector, government will tell maintain your cost records. Why? You cannot earn extraordinary amount. Why? Because you are the crucial sector of India. So you have to maintain cost records and earn reasonable margin. So government can check their cost records anytime they want, when they want to regulate the price. Okay. So whether maintenance of cost records is done as per section 148 for sugar, electronic, telecommunication, okay, the critical sector of India, arms and ammunition, gas, okay, tire, tube, okay, all this is not in our syllabus. I'm just telling you whether maintenance of cost records is done as per section 148. Statutory dues, the most important point, whether we are regular in depositing the statutory dues, that is the TDS, excise duty, custom duty, GST, whether we are regular. If we are not regular, any dues are outstanding for more than 6 months on balance sheet date, you have to tell. Listen nicely. Do we have stat dues? Okay. If we have stat dues, I will show you. Come here. See, statutory dues, okay, you have to see divide into two parts: undisputed, disputed. Undisputed, undisputed means there is no dispute. Okay, okay, in undisputed two, paid, unpaid, paid, unpaid. Okay, if it is paid, ignore, ignore. If unpaid, then you have to see, is it outstanding for more than 6 months on balance sheet date, only then you have to write in Caro. If it is unpaid, example 1st January you have not paid statutory dues, till balance sheet date only 3 months have passed, it will not come. If the due is outstanding on balance sheet date for more than 6 months, only then it will come. If it is less than 6 months, it won't come. Very simple. So if the dues are outstanding on 1st July, okay, and still not paid on 31st March, then we will of course write, because it is more than 6 months. Okay, so outstanding for less than 6 months, ignore. More than 6 months, we'll write in Caro. Divide dues into two parts: undisputed, undisputed, paid, unpaid. Paid, ignore. Unpaid, okay, unpaid. Okay, see on balance sheet date, is it outstanding for more than 6 months? Okay, that unpaid amount is more than 6 months on balance sheet date on 31st March, then we have to show. Disputed, we have to write amount and forum. Amount and in which court the dispute is going on. Is it going on in High Court, Supreme Court, okay, local court? Okay, very simple. So statutory dues, okay, statutory dues, undisputed, disputed. Next, unrecorded income. Many times government tells, make your black income white income. Show it. Pay this much tax. We will not ask you anything. So see whether any unrecorded income is recorded in that year. Okay, in this year. Whether you have recorded any unrecorded income. You have shown as income as per Income Tax Act. Okay, then check that also. Okay. Repayment of dues. Company has taken lot of loan. See, usually this is the sign when fraud will begin. When company doesn't pay loan, remember it's the first indication that something wrong may happen in company. So repayment of dues, whether company has taken the loan, whether it is regularly in repaying the loan or borrowing. Okay, if not regular, you have to write, okay, amount of default, nature of borrowing, name of lender, amount not paid, principal, interest, okay, for how many days delay, lender wise detail have to be sought, that government this much dues are pending, this much dues are pending to private party, this much dues are pending to a bank, okay, whether company is declared a willful defaulter, are you declared insolvent person, that also you have to write by bank or willful defaulter, you have the money but you are not paying, by bank or financial institution, whether loans are applied for the purpose for which it was used, it was told we will use for this purpose, is it used for same purpose, whether funds borrowed for short term are used for long term, very bad, okay, whether company has taken any funds on account of subsidiary, associate, joint venture, write the details. If you have taken funds for your subsidiary, associate, joint venture, write the detail. If company has raised the loan by pledging the security of, pledging means putting the security in bank as a charge, okay, pledging the security of a subsidiary, associate, joint venture, that details also we have to write, because loan is usually the area after which fraud will begin in any company. I hope you are clear. So 3 4 points: repayment of dues, whether company has done any default in repayment of loans or borrowing, you have to write amount of default, how many days, lender wise detail we have to write. Second, whether company is declared a willful defaulter by bank or financial institution, whether loans are applied for the same purpose for which it was used, whether short term loan are used for long term, then how you will repay, okay, whether you have taken loans for subsidiary, associate, joint venture, write the detail, whether you have taken loan by pledging the security of subsidiary, associate, joint venture, that detail also we need to write. 10th point: application of money raised by public issue and preferential allotment. If you have done IPO or FPO, if we have raised money by IPO, FPO, initial public offer, further public offer, have you used it for same purpose? It was written in IPO for working capital, have you used it for working capital? What is preferential issue? See, when we order the money from few people, see, when you order from everyone, it's IPO. When you order from few people, you tell your friends, please give me money, I will give you shares at 10% discount. Okay, give me money, you can invest in my company. So if preferential allotment is done, okay, see the money is used for the same purpose or not. Okay, requirement of section 42 and 62 are complied, and money is used for same purpose or not. Very simple. Okay, so 10 points are done. How to remember? Come here. So first 5 we will again revise. Okay, fixed asset, second biggest item in balance sheet, inventory, loan to related party, loan to director, loan to related party, loan to director. Where are we getting money for the loan? Public deposit, public deposit. Then you have to remember one brilliant technique. CSURU, CSURU, company secretary URU, okay, cost record statutory due, cost record statutory due, unrecorded income, unrecorded income, repayment of loan, repayment of loan, usage of IPO, FPO, usage of IPO, FPO, usage of IPO, FPO. For me, it is super easy. CSURU. Learn nicely. Cost record statutory due, cost record statutory due, cost record statutory due. Okay, URU, unrecorded income, unrecorded income, repayment of loan, usage of IPO, FPO, usage of IPO, FPO. Learn nicely. Cost record statutory due, cost record statutory due. Okay, then unrecorded income, repayment of IPO, FPO, sorry, repayment of loan, usage of IPO, FPO, usage of, last time, CSURU, cost record statutory due, unrecorded income, repayment of loan, usage of IPO, FPO, IPO, FPO. Learn nicely. Small break, 10 seconds. Done? Tell me. CSURU, cost record statutory due, cost record statutory due, unrecorded income, repayment of loan, usage of IPO, FPO. Fraud. Next is fraud, already done. Okay, 143.12, which we learned before 5 minutes. Whether any fraud is here, also we have to write whether any fraud is done by the company or on the company. Company has done or on company someone has done, amount and nature has to be written. If any fraud under section 143.12, okay, it has to be submitted in form ADT4. It was in chapter 5 earlier, now removed. Section 143.12, any fraud is reported to central government in form ADT4. Okay, whether an auditor has received any whistleblower complaint, sometime whistleblower, okay, that this wrong is happening in the company, whether you have received such complaint during the year, that also you have to mention. Very simple, very easy. Nidhi company. Okay, what is Nidhi company? Those of you who don't know, it is for the people, by the people, of the people. Unofficial bank. People will come together, deposit the money. Whoever needs will take the money. Okay, we will give loan to the people. Okay, so for the member, by the member, of the member, unofficial bank type of thing is Nidhi company. Okay, people will deposit money whenever they need, they will take money. So it's for the member, by the member, of the member. Whether Nidhi company has maintained a ratio of net own fund to deposit of 1:20. See, whenever you are a Nidhi company, you have to keep your own funds 1, okay, against a deposit of 20. Against 20 rupees, you have to keep 1 rupees of your own. You can never keep 22 rupees of outside and 1 rupee of your own. That is not allowed. So if you are Nidhi company, you have maintained minimum ratio of 1:20. 1 own fund, 20 outside fund. 21:1 is not allowed. 28:1 is not allowed. 18:1 allowed. Okay. So against every 20 rupees of outside, you have to keep 1 rupee of your own to meet out liability. And whether it is maintaining 10% of unencumbered term deposit to meet out. See, whatever deposit you receive, 10% you have to set aside to meet liability. Meet liability. Whether you are maintaining 10% of unencumbered, means without any condition deposit to pay the liabilities. Clear? Okay. Nidhi company 2, whether MCQ can come, whether you have maintained a ratio of 1:20, 1 net owned funds against 20 of outside funds, and whether you are maintaining 10% of unencumbered term deposit, okay, without any condition, 10% of total deposit set aside to meet liability if any person needs the money. Related party transaction, whether any related party transactions are done, provisions of section 177, 188 of company law are complied. What does this say? Board resolution should be passed. Okay, separate recording should be done. Several things are there. Related party, 177 related, 88 related. Okay, so if transactions are done of related party, whether you have maintained compliance, section 177 and 188 are complied with. Internal audit, whether company has strong internal audit commensurate with the size and nature of business. Reliance is so big that internal audit cannot be small. Paytm is so big, whether you have good internal audit as per the size of your business. Not general internal audit not allowed. As per size of, if your business is this much, internal audit should be this much. Whether you have strong internal audit matching with the size and nature of business. Whether reports of internal auditor, how they are taken by statutory auditor. Has statutory auditor referred the reports or not? That also you have to write. Very simple. Let us learn till here. So 10 were done. Okay. From 11, very easy. Fraud. Two people are biggest fraud in this world. Nidhi company, related party. Nidhi company, related party. Nidhi company, related party. Fraud. Two people are biggest fraud on this earth. Nidhi company, related party. Nidhi company, related party. To protect from them, we have internal audit. We have internal audit. We have internal audit. Clear? Oh, I think we did only till here. Okay. So no problem. Let's remember till here. Fraud. Two people are biggest fraud in this world. Nidhi company, related party. Nidhi company, related party. To protect from this, we have internal audit. We have internal audit. Now we will do all the points together in one go. Okay. Non-cash transaction. Any non-cash transactions are done with director or other person. Provision of section 192 are complied. What is non-cash? Giving the assets to directors other company, or maybe giving ESOP. Any non-cash transactions are done. Provision of section 192 are complied with. These days, lot of people are doing finance business. Okay, they will lend the finance, take the interest. Okay, do financing. If you are financing, have you complied with provisions of NBFC? Are you non-banking finance company, or are you doing it illegally? Whether company is required to be registered under section 45 IA NBFC, registration is done. Whether company has conducted any banking or housing finance without a valid certificate of RBI. Are you doing financing without any certificate? Whether the company is a core investment company. See, these big companies are there. Tata is there, Reliance is there, Adani is there. Okay, they have an investment house. Okay, they have lot of companies, but when they have investment company who will just invest the assets, they have lot of money. This investment firm will only invest the asset. So if the company has a core investment company as per criteria of RBI, does it continue to fulfill the criteria that asset should be of 100 crore? There are a lot of criteria, not in our syllabus. In case the company is exempted or unregistered cash investment company, if you are exempted or unregistered, whether you continue to fulfill criteria. If you have more than one core investment company, then also you need to specify. Number one, whether you are doing any finance activity without taking normal finance or housing finance without certificate of RBI. If you are a core investment company, you continue to fulfill the criteria. If you are unregistered or exempted, you continue to fulfill criteria. If more than one core investment company is there, you have to mention. Next, cash losses. Biggest thing is cash. See, loss is allowed. Okay, loss can happen due to depreciation, due to amortization, due to employee stock option plan. But that is not a real loss. Nothing to worry. Today, Zomato is in loss. Why? Because ESOP are there. Depreciation is there. If you remove this, it is in profit. So are there any cash losses? How you will get cash loss? Normal loss, add non-cash expense like depreciation, add amortization, add ESOP. Okay, these are not real expense. These are book entry transaction. Okay, don't worry about them. Add them. If there is not a loss, company is good. You can invest. So you have to see, are there cash losses in the company? If there are cash losses, it's a high indicator something wrong will happen. Okay, company has incurred cash loss. If so, the amount of cash loss you have to specify. Okay, consideration of issues raised by outgoing auditor. Whether any issues are raised by outgoing auditor. Last year auditor has left. Has he raised any issues? Did we consider the issues? Because he is also a CA. No one will leave the work just like that. There will be problems, only then he will leave the income. Okay, we have to see the issues raised by outgoing auditor, whether we have considered those issues. Next, material uncertainty is there. See, we have learned about material uncertainty in going concern. Okay, whether there is material uncertainty on the company. If there is material uncertainty, never ever invest in such a company because it may be closed every moment, any moment. Okay, so material uncertainty based on that going concern. Okay, come to last point, almost second last. Transfer of unspent CSR amount, corporate social responsibility. Every company has to do CSR, corporate social. If other than ongoing project, see, there are two things: ongoing project, other than ongoing. I will tell you the requirement. I don't know whether you know, in company law it's there. For an ongoing project, example, I'm going to construct school, I'm going to construct hospital, it should be done in 3 years. If I don't do in 3 years, I have to transfer to PM care fund or any other fund. So let me read that. Any amount remaining unspent for an ongoing project, it's transferred to special account as per section 135. Okay, any amount unspent in an ongoing project is transferred as per section 135. Other than ongoing project, it has to be transferred 6 months from the end of the year. 6 months from the end of the year. Okay, so divide into two parts. CSR, corporate social responsibility, every company has to do. In respect of ongoing project, see, if any amount is not used within 3 years, okay, it has to be transferred as per section 135. For other than ongoing project, it has to be transferred within 6 months from the end of year. If you don't spend within 6 months, you have to transfer. Okay, next, last. Qualification or adverse remark in Caro report of group company. What do you mean by group company? See, I am Reliance. In Reliance, we have 20 subsidiary. In any 20 subsidiary, if any one subsidiary also, or two or three, has any bad point in 21 points of Caro, I have to write in mine also. Let me take an example. When marriage happens, okay, two people meet, okay, They don't meet, their family also meet. If your brother has done something wrong, that also you need to tell. Though sister is getting married, but still brother's point also, dad's point also we tell that this is wrong in our family. This is the problem. My brother is a divorcee. Okay, we have to tell. Okay, same way, if any of our concerns, subsidiary company has any point negative, that we need to write in our Caro also. See, whether there is any qualification or adverse remark in Caro report of group company, that also we need to say if any subsidiary has any point negative. Example, they have not maintained record of fixed asset. Okay, they have not taken NBFC license. We need to mention. We need to indicate the details and paragraph number. Details and paragraph number. Easy? Yes, sir. Come here. Now we will learn how to remember last 6 points. N double C M double C N double C M double C N double C M double C NCC MCC. Non-cash transaction by director. Okay, NBFC. Non-cash transaction by director. NBFC. Non-cash transaction by director. NBFC. Cash losses consideration of issue by outgoing auditor. Cash losses consideration of issue by outgoing auditor. M. Material uncertainty. Double C. Unspent CSR amount, Caro report of group company. Material uncertainty. Unspent CSR amount, Caro report of group company. Material uncertainty. Unspent CSR amount, Caro report of group company. How much ever time you want, we can speak. Okay. One last time. N double C M double C N double C M double C NBFC cash losses. NBFC cash losses. Consideration of issues by outgoing auditor. NBFC cash losses. Sorry. Non-cash transaction by director. NBFC cash losses consideration of issue by outgoing auditor. N double C M double C N non-cash transaction by director. NBFC cash losses, consideration of issue by outgoing auditor, material uncertainty, unspent CSR amount, Caro report of group company. Unspent CSR amount, Caro report of group company. Learn nicely. 15 to 21, very simple. Non-cash transaction by director, NBFC, cash losses, Caro report of group, non-cash transaction by director, NBFC, cash losses, consideration of issue by outgoing auditor, M, material uncertainty, last double C, okay, CSR, Caro report of group company, CSR, Caro report of group company. Small break, 10 seconds. Chalo, shall we try? 1, 2, 3, start. Okay, N double C, M double C. Okay, non-cash transaction by director, NBFC, cash losses. Okay, consideration of issue by outgoing auditor, material uncertainty. Okay, then last two is CSR, Caro report of group company. CSR, Caro report of group company. Absolutely clear. Let's speak the last time. N double C, M double C. Non-cash transaction by director, NBFC, cash losses, Caro report of cash losses, Caro cash losses, consideration of issue by outgoing auditor, material uncertainty, double C. Okay, CSR, Caro report of group company. Once I will speak the full, it should be very easy. In fact, twice I will speak, but slowly we will speak this time. Let's start. Number one biggest thing, fixed asset, small inventory, loan to related party, loan to director, loan to related party, loan to director. How are you getting so much money for the loan? Okay, public deposit, CSURU, CSURU, cost record, statutory due, cost record, statutory due. Okay, unrecorded income, repayment of loan, unrecorded income, repayment of loan, usage of IPO, FPO, IPO, FPO, IPO, FPO. Okay, fraud. Two people are biggest fraud in this world. Nidhi company related party, Nidhi company related party, Nidhi company related party. To protect from them, we have internal audit, internal. N double C, M double C. Okay, what's N? Non-cash transaction by director, NBFC, cash losses, consideration of issue by outgoing auditor, material uncertainty, double C, CSR, Caro report of group company, CSR, Caro report of group company. Learn nicely again. Done. 1, 2, 3. Let's hear it the last time. All 21 points of Caro revised very, very nicely. Number 1, fixed asset inventory. Fixed asset inventory. Okay. Loan to related party, loan to director. Loan to related party. When are you getting money for loan? Public deposit. CSURU, cost record, statutory due, okay, unrecorded income, repayment of loan, okay, then usage of IPO, FPO. Clear? Yes. Fraud. Two people are biggest fraud. Okay, Nidhi company related party to protect internal audit. NCC, MCC, non-cash transaction by director. NBFC, cash losses, consideration of issue by outgoing auditor, material uncertainty, CSR, Caro report of group company. Okay, almost over. Last topic is there, joint audit. Come here. What do you mean by joint audit? It means using the pooling the resources of two or more firms to do a job in a given time which one auditor cannot do. Very simple. Okay, two or more auditors coming together and doing the audit as per 299. How to remember? 9 and 9 came together to do the audit. That is joint audit. Okay, it means pooling together resources of two or more firms to do a particular job in a given time. Okay, which may be difficult to do individually. Let me take example. In France, whenever consolidation is done, joint audit is compulsory. In a country like France, whenever you do consolidation, compulsory you have to do joint audit, otherwise it's not allowed. Maybe in India also rule will come, because see, when two auditors are there is a chance one can do fraud. Both can never do it together. Okay, and whenever big work is there, responsibility will be divided. You will get expert opinion. Work will be done in nicer way. Less training will be required. Both will share knowledge of each other. Things will be good only. Okay, so for every big company, for every listed company in India, joint audit should be compulsory. It is not compulsory, but it should be. Are you clear? It means two or more firms coming together to do the work in a limited time, which is difficult to do individually. Advantages, very simple. Sharing of expertise. One small firm, one big firm, they can share expertise. Mutually, they can ask each other. Some are good in this area, some are good in this area. Better quality of performance will be there. Improved service to our client also happy. Okay. Lower workload. Why? Both are doing the work. Lower staff development cost. Once you teach one staff, they will automatically teach another one. Lower cost to carry out work. Of course, revenue will be shared. That's a disadvantage, but lower cost will be there. This is a little hard point. Displacement of auditor, taken over in a takeover, often prevented. What do you mean by this? A company took over B. A took over B. Now B's auditor is Salman Khan. A's auditor is Shah Rukh Khan. A auditor Shah Rukh Khan. B auditor Salman Khan. Who took over whom? A took over B. Okay. Now B's auditor will be unemployed. Why? Because B company is no longer there. But no, in joint audit, they can do together audit of A. So Shah Rukh and Salman will do joint audit of A. So displacement of auditor, that is removal of auditor, taken over in takeover, will be prevented, because both together will do audit of A. Okay. In respect of multinational firm, if you have branches in Australia, Singapore, Malaysia, the company has, you can give audit. You can, if your branch is in US, maybe you can take a US firm as joint auditor. Both will do audit together. In respect of multinational company, work can be given to local firm. And a sense of healthy competition will also be there. Okay, if two people are doing it together, healthy competition is there. I will feel good about him, he will feel good about me. Okay. So very simple. Advantage of joint audit. We will try to learn very easy. See, sharing of expertise. I will ask each other. Advantage of mutual consultation. Better quality of performance. Client also happy. Improved service to the client. Remember till here. Okay. Number one, sharing of expertise. Asking each other. Advantage of mutual consultation. Better quality of performance. Improved service to the client. 4 points are over. Learn. Okay, start. What are advantage of joint audit? Sharing of expertise, advantage of mutual consultation, better quality of performance, improved service to the client. Very simple. Sharing of expertise. I can ask each other advantage of mutual consultation, better quality of performance, improved service to the client. Now 3 lower workload, lower staff development cost, lower cost to carry out work, lower workload, lower staff development cost, lower cost to carry out work, lower workload, lower staff development cost, lower cost to carry out the work. Okay, very simple. Lower workload, lower staff development cost, lower cost to carry out work. Learn nicely. Then, okay, displacement of auditor taken over in takeover will be prevented. Displacement of auditor taken over in takeover will be prevented. Now, auditor will not be displaced. Displacement of auditor taken over in takeover often prevented. Last, in respect of multinational firm, displacement of auditor taken over in takeover prevented. In respect of multinational firm, work can be given to local firm. Sense of healthy competition. Sense of healthy competition. I think easily 5 points you can remember. Learn nicely, small break, 20 seconds. 5 points remember. One more is pending. Done. 1, 2, 3, start. What are advantage of joint audit? Sharing of expertise, advantage of mutual consultation, okay, better quality of performance, improved service to the client, lower workload, lower staff development cost, lower cost to carry out the work, displacement of auditor taken over in takeover often prevented. Okay, in respect of multinational firm, work can be given to local competition. Sense of healthy competition. Sense of healthy competition. Last time I will speak, 5 points should be super duper easy. Number 1, okay, sharing of expertise, advantage of mutual consultation, better quality of performance, improved service to the client, lower staff, lower workload, lower staff development cost, lower cost to carry out the work, displacement of auditor taken over in takeover often prevented. In respect of multinational firm, work can be given to local firm. Sense of healthy competition. What are bad things? Fees will be shared. Psychological problem. If some firms have higher knowledge, you will feel you don't have knowledge only. See, some areas, common areas might be neglected. They will tell that you have done. I will tell you have done. No one has done. Fees are shared. Psychological problem when firms are of different reputation. General superiority complex is there of some auditor. Coordination problem. Uncertainty about liability of the work. Uncertainty about common areas ignored and uncertainty about liability of the work. Very simple, I think you can write. Fees being shared, general psychological problem, superiority complex of some auditor, general areas ignored, okay, areas of common work ignored, uncertainty about liability of the work done. Hope it's clear. With this, almost entire chapter is over. We have done it in the nicest way. If you like these lectures, do give a like button. It gives us much more happiness, much more appreciation, and extra enthusiasm and motivation for working even more hard. See you until next video. Take care of yourselves. Bye bye. Thank you. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Continuing the mega marathon revision series of CA Inter Audit in only English. Yes, guys, till now we have completed chapter number 1, that's nature, objective, scope. 2, strategy, planning, program. 3rd, identify risky areas. 4th, gather lots of evidence. Okay. Then we did 6, document everything nicely. Okay. Then we did 7th chapter, completion and review. Then finally, it's the time to give audit report. But while doing entire audit, okay, we have to follow one thing, that is ethics. Okay, ethical requirements are there, fundamental principle of professional ethics are there, ethics and terms of engagement. These days we are not only a chartered accountant, but we have to be very ethical. We are living at the highest standard of society. They say a person, if he is a CA, he is the perfect person. So we don't should have only not financial knowledge, but we should also follow ethical requirements, fundamental principle of professional ethics. We should be completely independent from the client. There are a lot of ethical requirements you will learn in CA final also, but here also little bit of there is there, but it's a very easy chapter, it's a very small chapter. So be rest assured, let us start. We will not only make you understand, but also learn this entire chapter. It's a super easy chapter. Those of you who are asking from where is this revision done, it's done from this magic book. Okay, this is a 86-page book which covers almost entire syllabus in roughly 80 to 86 pages. So from this we'll do our revision. Be rest assured, it will be a 1 hour lecture. Okay, and everything will be covered in a super nice way. Let's start right away. If you want update of this channel, okay, update of all the lectures, we have Mrugesh Madlani Virtual. Okay, MRUGESH, Mrugesh Madlani Virtuals Telegram channel that you can join. So all the updates will keep on coming there. Okay, if you wish to purchase this book, it's www.mrugeshmadlani.com. Let's start. There are two approaches to ethics: principle approach and rule approach. One more time, principle approach and rule approach. Okay, ethics. What is principle approach? Here we'll follow fundamental principle of professional ethics. Those are what? Integrity, confidentiality, objectivity, professional competence and due care, professional behavior, which we'll study in the chapter. In short, we will follow the spirit of ethics. Okay, whatever is beneficial, not beneficial, we will not see. We will follow fundamental principle of ethics. Okay, anything against the ethics we will not do. Okay, so we'll follow the spirit of ethics here. Okay, while doing the audit, money and all will come secondary, client's interest will come secondary. We are at such a profession where the most important thing is we should be ethical, we should be independent, we should do all the things that is right, that is ethical. That is what is written. See here. Here we follow spirit of ethics, that is exercise professional judgment in every situation. We will follow fundamental principle of professional ethics, okay, which is given. Come to rule based. Here every firm will have their own rules. Okay, some rules will tell materiality should be this, some rules will say even if you don't document the things it is okay, some rule will say always do such thing which is beneficial to the client because client is your god. Okay, but here sometimes spirit of ethics can be compromised, but in above case it will never ever be compromised, because what is important is fundamental principle of ethics. So rules will keep on changing for every CA firm. Okay, it may be a little rigid approach also. Sometimes what you are doing is good for the client but not fundamentally good. That we will do where in a rule based, but in principle based we will never ever do such a thing. One last time I am telling, what do you mean by principle based? Here we'll follow spirit of ethics, fundamental principle of ethics. Okay, but rule based, every firm will have their own rule. This rule might support ethics, might not support ethics. Okay, it may compromise ethics also sometimes. Okay, but every firm has their own rule. So it's a very narrow approach because it changes from firm to firm. But what is principle based approach? It's a perfect approach where what is most important is fundamental principle of ethics. The spirit of ethics is important. Here what is important? The rules of the firm are important. I hope it is clear. MCQ can come. Okay. Now, what we are doing is the head topic, Essay 220, quality control for audit of financial statement. Whenever I do any audit of any engagement is you are going to Reliance, okay, auditing TCS, auditing Wipro, I audit any company in the world. Quality audit I will do. Okay, I want good quality audit or bad, you tell me. Good quality audit. How it will happen? When any firm follows system of quality control. Any firm means what? Let's take top 4 firms: ENY, KPMG, PwC, Deloitte. These are big 4 firms. If you don't know, I am an article of Ernst & Young. We want good quality audit or bad? Good quality. When will audit be of good quality? When firms follow system of quality control. Sir, when the firm will follow system? When they have standard policies and procedure in few area. Nicely listen. See, if you have standard policies, okay, every area, this policy, this policy, this policy, this policy. Your system has to be good. Firm will follow good system of quality control. And if you follow good system of quality control, audit will be superb. One last time, SA 220 forms the system of quality control. Tell me last time, you want good quality audit or bad quality audit? Sir, we want good quality audit. When will the audit be of good quality? When you follow the system of quality control. Now tell me, system of quality control means what? Okay, standard policies and procedure. Now go little reverse. If we follow standard policies and procedure, we are bound to follow greatest system of quality control. And once system of quality control is followed, of course audit has to be damn good. Are you clear? So we want good quality audit, so we will follow system of quality control. When can E&Y follow system? When they have standard policy, standard procedure. In how many areas? 6 areas. 6 areas. Can we start? Yes sir, let's start. So quality control for audit of financial statement. Let's start right away. Okay, 1, 2, 3. Very cute, very little, very small chapters. You'll love it. Okay. 11, ethics and terms of engagement, elements of system of quality control. Elements of system of quality control. So what is written here? Firm's system of quality control should include policies and procedure addressing this many elements. Okay. So firm will have policies and procedure for this many things. If they follow good policy and procedure, they will follow system of quality control. If their system of quality control is superb, good quality audit will be there. Simple. Read. How many points are there? 6. Leadership responsibility for quality within the firm. Number 1. Who is responsible for every audit engagement? You tell me. Leader. Okay. So number 1, leadership responsibility. Leader and his team will follow what? Ethical requirements. Will follow what? Ethical requirements. Okay. So 2 points done. Third, acceptance and continuance of client relationship and specific engagement. You tell me, will we accept any client? No, we will check a few things. But sir, we are getting money. Forget. Acceptance and continuance of client. Okay, continuance means next year shall I take his engagement or not? Okay, human resource, who we will recruit? Best people. Human resource, what they will do? Perform on the engagement and monitor. Last is monitoring entire system is perfect or not. It's super easy, super fun. Okay, one last time. Policies and procedure and how many areas? 6 areas. First 3 can come separately. Leadership responsibility for quality within the firm. Leader is responsible. Leader and his team will follow what? Ethical requirement. Will we accept any client? No, we will check a few things. Acceptance and continuance of client. Acceptance and continuance of client. Then human resource. What they will do? Perform on engagement and we will monitor entire system. One last time. Leadership responsibility for quality within the firm. Leader and his team will follow what? Ethical requirement. Acceptance and continuance of client relationship. Third, human resource. What they will do? Perform on engagement. We will monitor entire system is perfect or not. You don't need to remember these 6 points. Okay. We need to remember inside one question can come. Whole cannot come. But take a small break, 3 seconds. Done? Chalo, start. Leadership responsibility for quality within the firm. Leader and his team, ethical requirement, acceptance and continuance of client relationship. What will human resource do? Perform on engagement, monitoring. So simple. Come here now. Leadership responsibility. Who is the leader here? Who is the signing partner? In every assignment, there is one partner who will sign on behalf of the firm. So engagement partner is responsible for each audit engagement to which he is assigned. Example, Reliance, who is signing? Mr. Mahesh, he is responsible. TCS, who is signing? Mr. Arun, he is responsible. Engagement partner is responsible for each engagement to which he is assigned. Actions of the partner and team. Both partner and team shall emphasize. Okay, come here. Quality is essential in performing audit engagement. They should know that quality is important. We want to do excellent audit. Okay, so quality is essential in performing audit engagement. Come to the second point here. Importance to audit quality of. 4 things should be perfect. Importance to audit quality of. Perform the work as per professional standards and legal and regulatory requirement. First work, okay. Importance to quality of. Do the work as per standard on auditing and legal and regulatory requirement. Schedule 3, Companies Act, SEBI. Okay. Second, comply with firm's quality control policies and procedure. External we are following. Every firm has documentation policy, materiality policy, how to work in an engagement policy. We'll follow that also. Third, comply with firms. Second, comply with firms quality control policy and procedure. Issue the audit report that is appropriate in circumstance. I am not afraid of anyone. Okay, if it's an adverse report, I will issue that. I should never have a fear. What if they will remove me? Okay, I will get another audit. Issue the report that is appropriate. Qualified, then qualified. Okay, adverse, then adverse. Clean, then clean. And last, okay, ability to raise concern without fear of reprisal. They might remove me. Reprisal means they will remove me. No problem. I will still raise my doubts. I want to do superb audit, quality audit. Though next year you don't give me audit. Okay, but I will still follow fundamental principle. But in rule based, what will happen? We may compromise the fundamental principle because we will do what is right for the business. Okay, hope you understood. Chalo, very simple. 1, 2, 3. So, leadership responsibility. Engagement partner is responsible for each audit assignment to which he is assigned. Speak second point first. Quality is essential in performing engagement. Now come to second, importance to audit quality of 4 points. Perform work as per professional standards and legal and regulatory requirement. 2, comply with firms quality control policies and procedure. 3, issue the report that is appropriate as per the circumstances, right? Don't be afraid. 4, ability to raise concern without fear of removal. You remove me, no problem. I will still raise my doubt. Are you clear? Learn nicely. Small break, 10 seconds. Chalo, I think it is done. 1, 2, 3, 4. Okay, very easy. Engagement partner is responsible for each engagement to which he is assigned. The actions of partner and team shall emphasize. Come to second point first. Quality is essential in doing the audit. Okay. Importance to audit quality of 4 point. Perform work as per professional standard and legal and regulatory requirement. Now form. Comply with firm's quality control policies and procedure. Third, issue the audit report that is appropriate in circumstance. Fourth, ability to raise concern without fear of reprisal. Okay, come here now. Ethical requirement. Every chartered accountant, okay, code of ethics has given fundamental principle of professional ethics, that is spirit of ethics. Okay, fundamental principle of professional ethics to be followed by every CA. Every chartered accountant shall follow what? Fundamental principle of professional ethics, which are ICOP: integrity, confidentiality, objectivity, professional competence and due care, professional behavior. Slowly and nicely. Integrity means what? Honesty. Okay, I will always be honest. I will never certify anything which is wrong, or I will not associate with anything where I believe the facts are wrong. Means never ever I will sign on any document, any certificate, any report which is wrong. I will always be honest. That's the first principle. Money will come in due course of time, but never let your integrity compromise. I will be honest. I will never be associated with anything which is false, or never sign anything which is false. Come to see confidentiality. I will never pass data to third party. Okay, I will never call my friend, hello, Reliance profit is increasing, buy the share. He will buy the share. Next day, he and me both will go to jail. Confidentiality. Okay, I will never ever disclose information to third party. I will be confidential. Audit is a trust job. Audit is a assurance job. Okay. This objectivity, unbiased audit I will do. I will be objective. I will be unbiased. I will no way be associated with the client. I will not take money from client. I will not give loan to client. I will not have business dealing from client. I will be completely unbiased, and I will follow legal, professional and legal standards. Are you clear? I will follow professional and legal standards and standards on auditing. Are you clear? Okay. Professional competence and due care. Okay, I will be professionally competent, so client gets best level of service by following, again same thing. Okay, professional standards and legal and regulatory requirement. If I follow, my client will get the best level of service. See here, I will be unbiased and follow. This is from client perspective. If I follow professional standard and legal and regulatory requirement, tell me who will benefit? My client will benefit immensely. So I will follow professional competence, due care, so I can give best level of service to the client by following professional standards and legal and regulatory requirement. I will have professional behavior. Example, you have gone to US in Miami Beach for audit. Okay, there you are roaming with girls. Suddenly you are having wine at night. Okay, allowed, but morning reach to office. Okay, in the morning you are in police station. Why? Too much wine he has a drunk. By professional behavior. You will not do anything in life which will discredit the profession. ICAI, if you do such thing, whole India will be defamed. They will feel Indian CAs are like this only. Don't do anything which will discredit our profession. So tell me, what are fundamental? Code of ethics has given fundamental principle of professional ethics, which are ICOP, ICOP, ICOP. What's the technique? ICOP. Integrity, confidentiality, objectivity. One more time. Integrity, confidentiality, objectivity. One last time. Integrity, confidentiality, objectivity. Professional competence and due care. Professional behavior. One more time. Integrity, confidentiality, objectivity. Double P. Professional competence and due care. Professional behavior. Learn nicely. Small break. 10 seconds. Done. Tell me, code of ethics has given fundamental principle of professional ethics to be followed by every chartered accountant. ICOP: integrity, confidentiality, objectivity, professional competence and due care, professional behavior. Second, biggest principle is independent. I will be totally unrelated with the client. I will not hold any shares of the client. I will have no raw material or business transaction with client. My wife, my children will nowhere be associated with the client. I will not take any favors from the client. But because if you take favor, you will never ever be unbiased. In short, two independence are there: independence of mind, independence of appearance. Independence of mind, independence of appearance. First, let me tell independence of mind. State of mind which allows us to form an opinion without being affected by other. Your mind should be such that you can make independent opinion. Okay, though you are given audit by someone, he should not be able to tell you, sir, do audit like this. I will do the way I want. You are paying me money for doing audit. You are not doing obligation on me. Are you clear? I have done the hardest course of India. So let me be independent. If I feel it is wrong, I will show wrong. Next year you don't want to give audit? Okay. This year I will show you know what you have done. What wrong things are there? I will point out. I will not get sold for money. Independence of mind. What is independence of appearance? From appearance also, third party should not conclude. Auditor's integrity, objectivity, professional skepticism is compromised. Sometimes you are going in the morning, client is telling good morning, you are telling good morning, they are telling lunch. Oh, let us go, lunch very important. What is this? Clearly someone can make out this auditor is good for no use. Okay, from appearance you are not at all. You are different person. You are third party. You are coming there 20 days. Why are you behaving so weird? Okay, so independence of mind, independence of appearance. Independence of mind, independence of appearance. I hope you are clear. Let me take last example. You will understand the best way. Many times in class you are showing off as if you are able to understand. Sorry, understood? Yes. Fully, yes, fully. Yes, yes. From appearance you are showing you have understood, but inside what you are saying, worst teaching, nothing ever understood. What bakwas teaching is this? From mind you are not independent. Okay, so tell me, you want to be independent from mind or appearance? Both ways. Okay, some couples are just walking. If you see two people are walking, okay, but from appearance it seems that all is good, but they have had a fight. Okay, from mind maybe they are not together. So independence should be from mind or appearance. Both. Appearance is easy to see. You can make out he's no way related. He doesn't have any relative in company. He doesn't hold share. But mind is little difficult because only you know what is going on in your mind. Fully understood, sir. Continue. Now, tell me, whenever there are threats to independence, okay, so Code of Ethics has given 5 threats to independence. How many threats? 5 threats to independence. Number one, self-interest threat. See, self-interest is what? When your interest is there in the client, it's the biggest threat. Can occur in 3-4 ways. Number one, okay, you have some business dealing with the client. Example, your dad is purchasing or supplying raw material to the client. Okay, now your interest will be affected. By mistake, if you tell them, sir, we want to give qualified report, what they will tell? Shall we stop purchasing from your dad? Your dad referred, that is why we gave you audit. We never knew that you will become so intelligent and ditch us only one fine day. But sir, what is right? Shut up! Your interest is hampered. Third, what they will tell you, okay, potential employment with the client. Sir, what is your, how much you earn? You like 15 lakh. You should earn minimum 32 lakhs, but you will earn only if the company survives. So we will give you package of 32 lakhs next year, but give us unqualified report. Potential improvement, self-interest rate. When you have interest in the client, or your fees of audit are dependent on share price. They are like, if you give nice report, share price comes this much, your audit fees this much. Okay. So whenever you have occur, when partner will benefit from interest, you have interest in the client, then of course you will not do a unbiased audit, you will do biased. So number one threat is what? Self-interest threat. When does it occur? When we have business dealings with the client, when we have taken loan from the client, when we have given loan to the client. I hope you understood. Okay. Second, self-review threat. Last year you told everything is perfect and now you are pointing out same mistake. You feel mistake is too big. How will you point out your own mistake which last year was there? Last year you said it was perfect. Now how can you say you are only imperfect? Okay. Self-review. It occurs during any review or judgment which last year you told is perfect but now not perfect. Or earlier you were what? A partner, okay, partner of a company. Earlier you were partner in Reliance, now you came to audit firm, so you are doing audit. How can you say you only made mistakes? How can you? In this people we feel all are wrong, okay, so except us, we never find ourselves wrong. So self review. How can you review your mistake? Only last year you did audit, okay, how can you find out? Or you are maybe partner in Reliance, now you are auditor, you shifted and you started an audit firm, you are given the audit. How can you say that you only did mistake in Reliance? See here, review of any judgment or conclusion reached in previous audit which was wrong, but how will you say that I was wrong? Okay. Or then you have to change last year also. Or you were a partner but now you are an auditor, how can you find out your own mistake, your own fraud which you did? Okay. Third, advocacy threat. You are client's advocate, you are promoting client's opinion to an extent that client's integrity, objectivity, professional skepticism is compromised. Many times you become advocate of the client. Okay. So for example, the client are going to meet the lawyer. Okay. Lawyer is saying we will lose the case, please book a provision. More than 50% chance of losing, book provision. You are saying no, Mahesh Kumar can never lose a case, this my client will never use. How you know? Are you lawyer? He is a lawyer, how dare you challenge him? He is the lawyer in bar council, but you are telling lawyer no, they will win. Clearly it seems you are sold, you are not following fundamental principle. Okay, you are becoming advocate of client, we are promoting client's opinion to a extent client's integrity, objectivity, professional skepticism is compromised. Intimidation threat. You are intimidating. What is intimidate? Threat of replacement of auditor over disagreement with accounting principle or reduce the work. What do you mean by this? See, they are saying if you give any wrong report, we'll replace you. So due to which you give correct report, you have only 3 clients. Okay. If by mistake this client goes, your 4 lakh rupee loss will be there. So you are like, oh, no, correct report we will give. India, we will think later. First, let me think about myself. Okay. That is threat of replacement. It's a big threat to your independence. Okay. Or they will tell you what? If you try to be little over smart, we will appoint joint auditor. So your fees will become half. Okay. Your fees, no. Whatever you tell, I will do. Very good. Familiarity threat. You are too much familiar to the client. Since 14 years you are doing audit. Now if you ask for anything, what they will tell? Sir, more than us, so you know. What you are checking creditor. Okay. You are checking since 14 years. Okay. You take lot of gift from the client. Okay. You have a close relative is working with the client. Your close relative. Example, your girlfriend is there. Your girlfriend has only given you audit. And now you are telling your dad has done these 4 things wrong. Janu, understand, he's my dad. Try to adjust. You're like, but the audit I am doing, try to understand fundamental principle. In that, I also did CA inter audit. Then I failed. Okay. Till CA inter, I also cleared in final. Mrugesh sir not there, so I failed. In that familiarity point was there. No, it is a threat to independence. Janu, understand. If you try to ditch my dad, I will ditch you double. Okay. Get out. Okay. So you are too sympathetic to client's interest, because since years you are doing audit, every gift client is sending you, so you cannot do wrong in some situation. It's what threat to independence. Tell me how many threats are there? For Karina, who is the threat? Saifu. For Karina, who is the threat? Saif. For Karina, who is the threat? Saif. Okay, so Saif. Saif is the technique. Forget it, Karina, Barina all. Safe, remember. Self-interest threat, self-review threat, self-interest threat, self-review threat. A. Advocacy threat, intimidation threat, familiarity threat. One more time. Self-interest threat, self-review threat, self-interest threat, self-review threat. A. Advocacy threat, intimidation threat, familiarity threat. One last time. Self-interest threat, self-review threat, self-interest threat, self-review threat. A. Advocacy threat, intimidation threat, familiarity threat. One last time. Self-interest threat, self-review threat, self-interest threat, self-review threat. A. Advocacy threat, intimidation threat, familiarity threat. Learn nicely. Small break. Chalo, shall we speak last time? What are threats to independence? Self. Self-interest threat, self-review threat, advocacy threat, intimidation threat, familiarity threat. Come here. Tell me, whenever such threat exists, what you will do? What you will do? Put in place safeguards to eliminate them. Whenever such threat exists, I will put in place safeguards to eliminate them. Okay, any safeguard I can put. Okay, and if I cannot put controls, if I cannot put safeguard, I should not accept such an engagement. I should not ever accept. See, so whenever threat exists, first don't accept, or try to put in place safeguards. Okay, clearly tell your girlfriend our relation is separate, and with your dad relation is separate. Okay, you have given me audit just because I am your boyfriend, then don't give me such audit. I don't want. Okay, if you are independent, only then give. Try to put in. But if she's still not independent, she's like dad, then okay, don't accept such a audit. You will get work from somewhere. Be rest assured, you are doing the hardest course of India. Sorry, you have done the hardest course. Continue. Next point come acceptance and continuance of client relationship and specific engagement. Very simple. Accept the client or continue the client. Third point. Whether accept the client. First time accept is there, from next year continue is there. Acceptance and continuance of client relationship and specific engagement. Whenever you want to accept any client, 4 points are there. Okay. After checking 4 points, decide whether to accept the client or reject the client. Okay. See here. SQC1, Standard on Quality Control 1, requires that firms should check the following before accepting any client. Information such as the following helps the engagement partner in deciding whether to accept client or not. Number two, integrity of owner management TCWG. You look at the owners, look at the management, look at those charged with governance. Owner, you know, who are those charged with governance? Who give direction to the company, okay? They give vision, mission, okay? Oversee the financial reporting, okay? The independent directors, okay? Who manage all the company, who give guidance to the company, okay? So number, we have to see integrity. Are these owners, management and TCWG good or not good? Let's take the example. Okay, if they are from terrorist organization, if they have been in jail multiple number of times, don't accept such a audit. Others will accept. Okay, you don't do such a work. Okay, so number one, check integrity of owner, management, TCWG. Second point, see whether the firm is capable to do audit, has necessary capability including time and resource. Second, let me take my example. Can I do audit of Reliance? No. I should have 200 people with me because Reliance has 100 subsidiary. Whether the firm is capable to do audit, I am not capable because I don't have as necessary capability including time and resource. Do you have time? Do you have this many people? Okay. Third, whether the firm and team can comply with ethical requirements. What are ethical requirements? ICOP. Can you follow integrity, confidentiality, objectivity, professional competence, and professional behavior? Are you totally different from Reliance? Okay. If you have the team, can you comply with ethical requirements? Last, significant matters that have arisen during current or past audit and their implication on continuing engagement. Last year, what issues were there? Last year, two auditors had left. Last year, they had not filed the balance sheet with ROC. Last year, don't do such audit. Why you want to go? Okay, somewhere where you know you are going to die. Significant matters that have arisen during current or past audit. Two auditors have left. Why are you accepting? And their implication on continuing engagement. Simple. Tell me. Information such as the following help us in deciding whether to accept and continue client or not. As per SQC1, 4 point you have to learn. Simple. Integrity of owner, management, TCWG. See, owner, management, TCWG are good. Integrity of owner, management, TCWG. Second, whether the firm is capable to do audit, has necessary resources including time and resource. Whether the engagement team is capable to do audit, has sufficient resource including time and resource. Third, whether the firm and the team can comply with ethical requirement. Okay, whether you can follow ethical requirement. Last, significant matters that have arisen during current or past audit and their implication on continuing engagement. See, first point, though, integrity. Learn 3 points. Just learn 3 points. Done. One, two, three. Information such as the following helps us in deciding about acceptance and continuance of client. Whether the engagement team, okay, whether the team is number one, that's the integrity of owner, management, TCWG. Whether the team and whether the partner and his team can has necessary capability, including time and resource. Third, whether the firm and the team can comply with ethical requirement. So, significant matters that have arisen during current or past audit and their implication on continuing engagement. Clear? Let's speak one more time. Information such as the following helps us in deciding about acceptance and continuance of client. Number one, integrity of owner, management, TCWG. Second, whether the firm and their team can comply, has necessary capability, including time and resource. Whether the firm and the team can comply with ethical requirements. And last, significant matters that have arisen during current or last year audit and their implication on continuing engagement. Last time, whenever you want to accept a client or continue, integrity of owner, management, TCWG, whether the firm and the team has necessary capability, including time and resource, whether the firm and team can comply with ethical requirement. Significant matter that have arisen during current or past audit and their implication on continuing engagement. These three can come, rest all are very easy. Human resource, okay. Firms should have good policies and procedure. So we will select capable and competent people who will follow ethical requirement. Okay. Our HR policies should be excellent. Okay. We should have wonderful policies and procedure. So you can select capable and competent people who will follow which requirement? Ethical. So tell me, we should have policies and procedure in how many areas? Inside they have not given. Very simple. Recruitment. You will do recruitment. Policies should be there of recruitment, which they have not given. Recruitment we will do of which person who is capable and competent. 3 point done. If you don't learn also, it's okay. Recruitment. Whose recruitment we will do? Capable, competent. Capable, competent. Capable, competent. After you have recruited, what you will do? Promotion. What you will do? Career development, promotion. Okay. So very simple. Recruitment. Whose recruitment? Capable, competent. Capable, competent. Recruited. Now what we will do? Career development, promotion, promotion, promotion. After that, what do we do? Compensation, always paying more than what is required in the market, paying more. Okay, performance evaluate and whatever are his personal needs. Okay, after 5 years, no one wants money. After 10 years, they do want money, but personal needs also take care. Okay, if he wants promotion, okay, any other thing, okay, as personal needs. Okay. So we should have policies and procedure in how many areas? Just read once. Recruitment. Whose recruitment? Capable, competent. Capable, competent. You recruited. Career development, promotion. Career development, promotion. What is compensation? Always paying more Then others, compensation, okay, he will do work. And performance evaluation, estimation of personal need. Performance evaluation, estimation of personal need. Performance evaluation, estimation of personal need. Very simple. So tell me, we should have policies and procedure in how many areas? This many. Recruitment, who's capable, competent, capable, you recruited. Career development, promotion. Career development, promotion, pay him more. Okay, compensation, estimation of personal needs, performance evaluation. Estimation of personal need, performance evaluation. Read one small break, 5 seconds. 10 take 10 seconds. Done? Tell me, there should be policies and procedure addressing recruitment. Who's capable, competent, capable, competent, capable, competent. Career development, promotion, compensation, estimation of personal needs, performance evaluation. Come here. Now what we will do? Perform on engagement. Tell me, we should perform the work so we can follow professional standard and legal and regulatory requirement. Read once. Firm should establish policies and procedure. So engagements are performed as per same professional standard and legal and regulatory requirement. What are professional standard? SA. What is legal and regulatory requirement? Schedule 3, Companies Act, SEBI, and we issue the report that is appropriate. We are not afraid of anyone. Okay, we'll do work like that through policies and procedure. If how to do work, those policies and procedure are there. What will happen? I will bring consistency in engagement. My all engagements will be done in same manner. First risk assessment will done, then further procedure. Okay, so if I have policies and procedure, I will bring consistency. Consistency is brought through software tool, written manual, electronic manual. See this electronic manual. In EY, we had Gamex software. Okay, so it brought consistency. If everyone has to follow same steps given in software, it will bring consistency. Number one. Why do we want engagement performance? Number one, to bring consistency. Consistency is accomplished through written manual, electronic manual, software tool. Okay, what are the matters in the tool? How engagement teams are briefed before you going to the any audit. How are you briefed? Second, how to comply with standard. Third, engagement supervision, staff training, coaching. Simple. Nothing to learn, just read once. Okay, number one, tell me, firm wants to bring what? Consistency. How it can bring? Written manual, electronic manual, software tools. Matter will be, what matter will be there in this? How they are briefed. Okay, how supervision is done, review is done, how you comply with standards. Last, monitor. Entire system till now so many points are done. Number one, leadership responsibility. Leader and his team, ethical requirement, acceptance and continuance of client, human resource, engagement performance. Entire system should be monitored. So we follow ethical requirement and issue the report that is appropriate. Monitoring should be done. Sometimes you have set up a system, but you are not monitoring whether it's there or not. So proper monitoring mechanism should be there. Of course, firm will do all this. Auditor will just check. Okay, see here. Firm should establish policies and procedure to ensure system of quality control is relevant and operating effectively. Okay, see, only system is not important, it should operate also. Purpose of monitoring. Why should you do monitoring of quality control policies and procedure? Policies, procedure are there. Why to do monitoring? Adherence to legal standard and regulatory requirements. Same point. Professional standard and legal. Whether quality control system is designed and implemented properly. Many times it's designed but not implemented. Okay, you have to check that also. Once reading is not important, you need to watch this lecture again and again. Okay, monitoring to know whether you have retained all or not. Last, whether quality control policies and procedure are properly applied and reports are issued as per the circumstance. So tell me, why do we need monitoring? To see work is done as per professional standard and legal and regulatory requirement. Second, quality control system is designed and implemented properly. Only designing is not important, implemented properly. Third, reports are issued as per the circumstance. Okay, we should not be afraid of anyone. Hope it is clear. Same point. With this, entire SA 220 is over. What is SA 220? Forms a system of quality control. Quality control for independent financial statement, independent audit. Okay, 6 points. Leadership responsibility, leader and team, ethical requirement, acceptance and continuance of client. Okay, human resource. What they will do? Engagement, performance, and monitoring. Now listen very nicely. SQC1 and SA 220 are absolutely similar. One more time. SQC, that's standard on quality control 1. SA 220, quality control for audit of financial statements, are similar. Now come here. What's the main difference? Same points are there, you read once. Little change will be there. Same chart is given. SQC1, read once. Majority things are same. Okay, just go through it once. Okay. See here. What's the difference? SA 220 applies only to audit engagement. I hope you know in chapter 1 I told you we don't have audit, we have also assurance. Okay, we also have review. When you do it every 3 months, that is review. When you do on future financial statements, that's assurance. We also have related service. So SQC1 applies to all. It applies to audit, assurance, related service. But SA 220 applies only to audit. Okay. SQC1, entire CA firm. Okay, standard on quality control. Whenever CA firm does any work, whether it does the work of assurance, whether it does the work of review, whether it does the work of audit, whether it does the work of related service, they have to follow standard on quality control one. But whenever they go to do audit, particular audit engagement, whenever they go to do audit, they have to follow SA 220 plus SQC1. SQC1 they have to follow for everything. But for audit, what is there? SA 220. Okay, particular. Every engagement should be picture perfect. Engagement means every work. Every work of audit, we have to follow 6 things. That's SA 220. But every engagement, everything done by CA firm, SQC1, SQC1. Clear? So whenever I do audit, SA 220. Chapter 1 I told except audit is assurance, review, related service, everything, entire firm and everything. SQC1. But only for audit. Each audit should be perfect when we follow policies and procedure given in SA 220. So it's only for audit, particular audit only. But this is for everything. Now, moving on towards the last part of chapter, that is also super easy. SA 210, agreeing the terms of engagement. How to remember 210? Engagement. 10 meant 10. SA 210, initial audit engagement. That was there. SA 510, if you remember. Same year. SA 210, agreeing the terms of engagement. SA 210, agreeing the terms of engagement. SA 210, agreeing the terms of engagement. See, both should agree. It's like a marriage only, okay? It's a marriage of auditor and client. Okay, there should be clear what auditor will do, what client will do. Whenever boy and girl gets married, responsibilities are clear. Girl will tell, I want to do a job. If you allow only, then I will get married. Otherwise, I will not. I have also done CA. God knows what you have done, okay? But if you don't allow me to do a job, I want independence, okay? Later, if girl doesn't want to work, okay. Same SA 210, okay? Before accepting any audit, clear every single thing. Later, there should not be any problem. So, number 1 in SA 210 is preconditions for audit. What are precondition? If this condition is there, only then I will accept audit, otherwise I will not. One more time. SA 210, agreeing the terms of engagement. Preconditions are there. Auditor will say, if these conditions are there, only then I will work. What's the first condition? Okay, used by management of applicable FRF for preparation and presentation of financial statement. We will tell management, you have to follow schedule 3. Okay, are you preparing financial statement as per schedule 3? We are like, you only prepare, then we will not do audit. Our work is to do audit and not prepare. In small firm, auditor only prepares, he only checks. But wrong. In Big 4 it doesn't happen. This book is fully written as per real audit, Big 4 audit. Okay, so number 1. Okay, used by management of applicable FRF for preparation of financial statement and agreement by management and those charged with governance. Premise on which audit is done. Premise means we will do as per legal standards, regulatory requirements, what are there in India. Clear? So tell me, what are preconditions for audit? Number 1, okay, acceptance by management. Auditor will tell management, do you accept? Acceptance by management of applicable FRF in India. Schedule 3 you will follow for preparation of financial statement and agreement by management and their dad, those charged with governance. Premise on which audit is done, assumption on which audit is done. We will do audit like this. Number 1, in order to see precondition, auditor will check what? 2 points. Number 1, in order to see precondition, auditor will see. Number 1, determine whether FRF is acceptable. You are preparing financial statement, but as per schedule 3 we want. Okay, example, at your home, mom will tell, I will cook non-veg. Well, like, we are eating veg. You have to cook veg only, then I will eat. Understood? Same here. Okay, auditor will see whether FRF is acceptable. Will you prepare as per schedule 3? Second, obtain agreement from management that it acknowledges, make in writing, management acknowledges its responsibility for number 1, preparation of financial statement. 2, internal control, you are responsible. Third, okay, provide auditor with all information, additional information, unrestricted access to all person within the entity. You should give us all information, additional also, and unrestricted access we want of everyone. Every single person give us unrestricted access. Clear? Hope you are clear. Okay, come here. In order to see preconditions are present, what we will check? Okay, precondition, this should be there, only then accept audit. If this is not there, don't accept. Number 1, determine whether FRF is acceptable. Obtain agreement from management, it acknowledges its responsibility for preparation of financial statement. Internal control, provide auditor with all information, additional information, unrestricted access to people for obtaining the audit evidence. Learn nicely. What are 2 preconditions? FRF acceptable. Obtain agreement from management. It understands its responsibility for preparation of financial statement. Internal control. 3. Okay. 3. Obtain agree for preparation of financial statement. Internal control. 3. Provide auditor with all information. Additional information. Unrestricted access to people within the entity. I can ask CFO, CEO, anyone. If you tell me you cannot ask him, then I will not do such an audit. Read nicely. 10-second break. Then tell me, auditor before accepting the audit should see preconditions are present. What are preconditions? Number 1, determine whether FRF is acceptable. Second, obtain agreement from management. It acknowledges, understands its responsibility. Repetition. Okay. Number 1, for preparation of financial statement. 2, for internal control. 3, to provide auditor with all information, additional information, unrestricted access to any person within the entity. Come here now. In the last, engagement letter is prepared. What's written in engagement letter? What are your responsibility, management? What are my responsibility? When we will give report? What will be the form of report? Every single thing. Okay, fees of the client will be written. Okay, so later there is no problem. Number 1, MCQ. Who will prepare engagement letter? You will feel it is client. No, auditor will prepare, send it to the client. Who will sign? Both will sign. Okay, so auditor shall agree with terms of engagement with management or TCWG. Once you agree, you will prepare engagement letter and then give it to the client. What is there in engagement letter? Objective and scope of audit of financial statement. Why am I doing audit? And as per what scope? Objective and scope of audit of financial statement. 2, responsibilities of auditor, responsibilities of management. These are your responsibility. These are our responsibility. Clear? Third, identification of FRF for preparation of financial statement. What is the reporting framework in India Schedule 3? Identification of FRF for preparation of financial statement. Form and content of audit report. What's form? Format is what? Content is what? And circumstance in which form and content will change. When it will change? When it's adverse report, qualified report. Simple. 5 points in 1 second over. Okay. Number 1. What is there in engagement letter? 5. Objective and scope of audit of financial statement. Clear. Responsibility of auditor. Responsibility of management. Learn 3 points. Small break. 3 seconds. Then identification of FRF for preparation of financial statement. Okay. And form and content of audit report and circumstance in which form and content will change. Learn nicely. Then tell me, what is an engagement letter? Number 1, objective and scope of audit of financial statement, responsibility of auditor, responsibility of management, identification of reporting framework for preparation of financial statement, form and content of audit report, and circumstance in which form and content will change when you give qualified report, disclaimer report, adverse report. Come here. Limitation on the scope prior to accepting audit. Before signing the engagement letter, they are saying, don't check debtors. Debtor is 90% debtor, Suzlon, don't check. Don't do such audit. From the beginning only, if someone is telling you don't check, means if you cannot check, you will give disclaimer report. You were engaged to do audit. Why to do such a audit where you know you are going to give disclaimer report? Okay, see here. If management or TCWG puts scope, limitation on scope, such that auditor feels he will issue disclaimer report, auditor will not do such a engagement unless required by law. Very simple. If prior to signing report they say, sir, check everything but don't check debtor, okay, in that 90% debtor, or don't go to this factory, don't check this area. Prior to accepting audit, if you feel if there is any limitation on you due to which you will give disclaimer report, don't ever. Okay, if from starting only girl is telling I will not live with parents, why to accept such a girl? Okay, afterwards maybe it is okay, god knows some reason will be there, but from starting don't do such a marriage. Why? Because mom dad is more important at this stage of life, because they are there for 20 years. So I will never do such limited engagement. Okay, I will leave the audit if from beginning I feel it's a disclaimer report. Okay, understood? Oh, acceptance of change in engagement. Now, before come, you have started the work, but they are telling you to change the engagement. Listen to me very nicely, very nicely. Okay, acceptance of change in engagement. I will come here. Okay, start acceptance of change in engagement. What they are telling you? Listen nicely, sir. From stat audit, why don't you do accounting work? Why don't you do accounting work? Now you have to divide this into two parts. Is there reasonable justification or there is no reasonable justification? Come to first part. If there is reasonable justification, really you are not able to understand the work. It's justified. Okay. They thought you will know everything, but you are confused in audit. It's a mining business. You have never done mining audit. So they don't want to remove you. They are telling that do accounting work. If there is reasonable justification, I will prepare new engagement letter. Work as per the new letter. Do the accounting work. Take the fees. Never ever give reference to original engagement or anything about original engagement, any work I have done. Okay, very simple. But come here, come here, come here, come here. If there is no reasonable justification, just I am taking out lot of mistakes. I am exposing the management. I am finding out lot of misstatement. So they are saying that if he finds more, we are gone. They are saying, sir, do accounting work. Number one, if there is no reasonable justification, will request management, please, I want to continue. I will not change to accounting. If they don't agree, I will talk to TCWG, those charged with governance. If they also don't agree, okay, I will leave the audit, resign from the audit if required by law. If required by law, if allowed by law, sorry, if permissible by law. So when law will permit, okay. In the starting stage, I can resign. In the end, when just report has to be given, I cannot resign. Okay. So I will leave the audit and inform to whom? TCWG, regulators, management that I am leaving the audit. If there is no reasonable justification. Slowly we will read. Again, I will explain. Auditor before completion of engagement is required to change the engagement from statutory audit to internal audit or to accounting. If auditor concludes there is reasonable justification, he will prepare new engagement letter, issue report under new terms. Don't give any reference to original engagement or work done under original engagement. Clear? But come here. If there is no reasonable justification, we should not accept the change. Just because I am removing mistake, you are doing like this. Okay. If not permitted to continue, he will withdraw from the engagement. If still you tell to TCWG, they also don't agree, withdraw. No problem. Where possible under law or regulation, and inform to regulators, management, TCWG. Hope it is clear. Recurring audit. Every year I am doing the audit. Shall I send engagement letter every year? Okay. You are since years you are in marriage. Okay. Does your mom and dad tell I love you every year still to each other? But in following situation we have to tell. Okay. Every year no need to send engagement letter if it's the same client. But in these cases we need to send. Recurring audit. Auditor may decide not to send engagement letter every year. But in these cases he will send. Okay. Number one, shall we send recurring means same client we are auditing year on year. It's been 10 years. Now you will ask me, what about rotation? That is applicable to only some people. Forget it. Come here, come here. Auditor may decide not to send engagement letter every year. But in following cases, we have to send. Number one, though it's the same client. Any indication entity has misunderstood objective and scope of audit. As soon as you ask any data, what they will say, sir, you to know this now. You are auditing since 10 years. Then tell them, every year I have to give reasonable assurance. It is not that last year I gave, this year I don't need. You have to give me data. Any indication entity has misunderstood objective and scope, send them engagement letter. Second, any revised or special terms of audit engagement. Okay, your fees have increased, then you have to send engagement letter. Change in senior management, change in ownership, change in nature or size of company's business. Senior management has changed. Now you need to tell them who are the auditor. You have to cooperate. Okay, ownership has changed. Tell them audit fees again. Change in senior management, change in ownership, change in nature or size of company's business. You acquired 4 new companies. Of course, the audit fees will be more. You need to tell them. Okay. Change in legal requirements. Okay. Law. Example. You also have to report on internal financial control now. Tomorrow they will tell also report on admin control. Then fees will be more. Change in legal requirement. Change in what? Financial reporting framework change. Earlier schedule 6. Then revised schedule 6. Now schedule 3. Okay. Changes in other reporting requirement. From AS, Ind AS came reporting requirement. CARO came. Okay, understood. So tell me, do I need to send engagement letter every year? No, 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 no. But in following cases, yes, 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 yes. Two points learn. Any indication entity has misunderstood objective or scope of audit. Any revised or special terms of audit engagement, learn nicely. 2 points. Done. Any indication entity has misunderstood objective and scope of audit. Any revised or special terms of audit engagement. Now 3 points together. Change in senior management, change in ownership, change in nature or size of company's business. Change in senior management, change in ownership, change in nature or size of company's business. Done? Okay. Last three. Changes in legal or regulatory requirement, changes in financial reporting framework, changes in other reporting requirements. So simple. Changes in legal or regulatory requirement, changes in financial reporting framework, changes in other reporting requirements. So simple. Break 5 seconds. Done? Okay, 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 okay. Recurring audit. Every year, no need to send engagement letter, but in following cases, we need to send engagement letter. Any indication entity has misunderstood objective and scope of audit. Any revised or special terms of audit engagement. Change in senior management, changes in senior management, changes in ownership, change in nature or size of company's business. Learn till here. Okay. Last three. Changes in legal or regulatory requirement, changes in financial reporting framework, changes in other reporting requirement. Learn nicely. Done? Chalo. Last time we shall speak. Okay. 2 times we will speak. Do I need to send engagement letter every year? No, 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 no. But in following cases, I will send. Okay. 5 points if you remember, enough. Any indication entity has misunderstood objective and scope. Any revised or special terms of audit engagement. Change in senior management, change in ownership, change in nature or size of company's business. Law point. Changes in legal requirement, changes in financial reporting framework, changes in other reporting requirement. Learn nicely. Okay, over. Last time, do I need to send engagement letter every year? No. In this case is yes. Any indication entity has misunderstood objective and scope. Any revised or special terms of audit engagement. Change in senior management, change in ownership, change in nature or size of company's business. Okay. Changes in legal requirement, changes in FRF, changes in other reporting requirement. Hope you are clear. With this, we end this chapter also. Okay, a very, very simple, very, very cute, very, very awesome chapter. Okay, if you liked it, do give a like button. It will motivate us to make even better videos. Do share with your friends. If you are new to this channel, do subscribe. We are going to give you unlimited content, unlimited, valuable, pure gold, rich content. So stay tuned. Good night. Bye bye. See you until next video. Thank you. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Continuing with Audit Mega Marathon Revision Series in only English. Today, it's the time for chapter number 10, the Bank Audit. Yes, guys, after learning almost all the chapters, okay, we are here to discuss how audit is done in banks. Of course, nothing special, but in bank, special provisions are there, special things are there, okay. For a bank, checking advance is very important. That is the loans they have given. All that we are going to study in this chapter. Of course, it's a very easy chapter, so be rest assured. These revision lectures are in only English. If you are looking for Hindi ones, they are already uploaded. Sir, from where are you doing revision? We are doing it from this magic book. Those of you who don't know, this is a book which covers entire subject in roughly 85 odd pages. Okay, what you will get in this revision lecture: number one, understanding of all concepts. Okay, number two, we'll try to learn also wherever required. So we are going to make this chapter super easy, super fun for you. Stay tuned. Let's start bank audit. What do you mean by bank audit? See, bank basically does two work: acceptance of deposit, granting of advance. Jute do paise lo. It will take lot of money, give lot of loan. It will take money at what interest rate? Sir, 3 to 4% is the rate on deposit. And it will give loan at what rate? Sir, loan interest rate in India, if you don't know, it is 8 to 12%. So 12% it will charge from us, and it will give us 4% on our deposit. Okay, so whatever is the balance, 6 to 8%, that is profit for bank, that is markup for bank. For any bank, most important thing is loan book, checking advances. Are you clear? Once you understand that part, 50% chapter is over, and balance 50% is something else. Able to understand? Yes, sir. Come here now. In carrying out audit of advances, auditor is concerned about obtaining evidence about following things. Okay, whenever you are auditing the advances, you have to obtain evidence about following points. Auditor should obtain evidence about following primarily. Whenever I check advances, whenever I check loans, I have to obtain evidence regarding following points. Number one, amount included in the balance sheet, whatever loan book is there. Example, bank's loan book is 38,000 crore. It should be outstanding on balance sheet date. Okay, if out of which some portion is paid, I cannot include that. I will only include that amount that is outstanding on balance sheet date. Second, it should represent amount due to the bank. Listen, many times what will happen if a person is not going to pay loan? Example, Vijay Malia is not going to pay loan, but I must have taken securities from Vijay Malia. Yes, bank doesn't give loan like that. 1,000 crore loan is there, it will ask for 1,200 crore of securities. Now, if Vijay Malia is not going to pay, bank's work is not to sell off the securities. I cannot go and sell immovable property. Okay, any security given, I cannot sell immovable property. Who will manage bank? Understand? My work is to do banking business or sell immovable property. Sir, do banking business. Yes. So many times what do I do? If a person is not going to pay, I will sell the securities to asset reconstruction company. One more time, whom? Asset reconstruction company. Then they will not pay me full. 1,000 crore I have to receive from Vijay Malia. They will pay me 800 crore. Okay. But sir, 200 crore loss is there for bank law. Okay. My main work is not this. As soon as I will get 800 crore, I will give to some another lender. My work is to give loan and take money. Now, whatever they do, now, of course, they will sell the security. They might get 700 crore, they might get 900 crore. That is not our cup of tea. We are not concerned. So, it should represent amount due to bank and not asset reconstruction company. If you have sold certain loans, are you clear? Okay, and securities, that will not be included in balance sheet. So, 2 points. Amount should be outstanding on balance sheet date. Second, it should be amount due to bank. Now, if that Vijay Malia pays also, he will pay to asset reconstruction company and not me. Are you clear? It should represent amount due to the bank. there are no unrecorded advances. 99% time this problem will never come. Hey, why? Bank will always show more advance. If more advance they will show, their loan book will be more. If loan book is more, their interest will be more. Interest is more, their income is more. Their income is more, their profit is more. Bank manager will do dance. Are you clear? So this problem usually doesn't come. There are no unrecorded advances. Okay, all the amount are supported by loan document and other document. All the loans, there is loan document and other document. Basis of valuation of advance is appropriate and recoverability of advance is taken into consideration. Valuation means if I am not going to receive the money, I should do proper provision, so that is taken into consideration, about which we will study. Advances are properly classified, described, disclosed as per regulatory requirement. RBI has given requirement how to show advances, okay, for all banks, how to present financial, banking company financial statements, banking company chapter you have studied. Advances are properly classified, described, disclosed. Appropriate provisioning is made towards advances as per RBI norms, about which we will study. Okay. How many points are there? 6. In obtaining advances, auditor is concerned with how many points? 3, 4, 5, 6, 7. Let's learn 3. Amount should be outstanding on balance sheet date. It should represent amount due to the bank. There are no unrecorded advances. Able to learn? Yes or no? Yes, sir. Learn this much. Done? Okay. Amount should be outstanding on balance sheet date. It should be amount outstanding to the bank. There are no unrecorded advances. All advances are supported by sufficient and appropriate document. Then valuation disclosure, provisioning. Valuation disclosure, provisioning. Valuation disclosure, provisioning. Basis of valuation of advance is proper and recoverability is taken into consideration. Advance are properly classified, described, disclosed as per legal and regulatory requirements. Appropriate provisioning is made towards advances as per the RBI norms. Are you able to understand? See, this point, third last and the last one, you will not understand. You will understand after 5 minutes. Understood? Okay, sir. Now, read this 3 also. Valuation disclosure, provisioning. Valuation disclosure, provisioning. Valuation disclosure, provisioning. 5-second break. Seems good? Confirm? Okay. Chalo, we'll speak. While auditing advances, auditor has to obtain evidence about the following points. Number 1, it should be amount outstanding on the balance sheet date. Second, it should be the amount outstanding to the bank. Third, there are no unrecorded advances. All advances are supported by sufficient and appropriate document. Valuation, provisioning, disclosure. Valuation, disclosure, provisioning. Basis of valuation of advances is proper and recoverability is taken into consideration, about which we will study. Second, advances are properly classified, described, disclosed as per legal and regulatory requirement and policies. Okay, and last, appropriate provisioning is made towards advances as per RBI norms. What are this provisioning? We are yet to study. Come here now. In bank, remember, provisioning of advance is the most important thing today for any bank. The biggest thing is NPA. Who is NPA? It is non-performing asset. Tell me when it will become. What is non-performing? When you are not receiving the money of the loan or you are not receiving interest from the loan, it is a non-performing loan. When is the loan non-performing? That we are yet to study. If it is a NPA, you have to do provisioning. You cannot recognize the income of interest. Why? Because you are not receiving it. But when it will become NPA, for that we are yet to study. Can we start? Yes. See, what is NPA? NPA is non-performing asset. An asset becomes NPA when it ceases to generate income for a bank. When you are not getting the income from that asset, it will become non-performing asset. Tell me when you will not receive income. When the loan is dead, he is not repaying the amount. He is not repaying, even forget principal, not interest also is repaying. Then it is a NPA. Non-performing asset is an asset when it ceases to generate income for the bank. Okay, so in case of loans, bills receivable, when does it become NPA? In case of loans, bills receivable, okay, loans, bill receivable, if interest or installment or both, either interest or EMI amount or both, principal amount or interest or both remains overdue for more than 90 days in respect of term loan. Okay, you have taken a loan for 90 days. Let's take example Ramesh Kumar. Ramesh Kumar has taken certain loan of 1 crore. For 90 days, if he doesn't pay either interest or installment or both, it becomes NPA. Why? It is very bad. Ramesh Kumar is a NPA. You have to get angry. Hey, third class Ramesh Kumar, you are non-performing asset. For you, we gave you loan on trust. Now the hell you became non-performing asset. We don't trust you, Ramesh Kumar. You are third class person. You are cheap person. Are you clear? You have to get angry because he became non-performing asset. Now we have to do provisioning. How much? Stay tuned. Are you clear? Interest on installment remains overdue for more than 90 days. Okay, in respect of term loan. Let's take example. 1st January, you had to pay interest or EMI. Tell me, you have to pay on which January? 1st January, you had to pay interest or principal. If you did not pay, no problem, it is not NPA. See, 90 days we will wait. Now, we will not calculate exact 90 days, but let's assume 31st March. Okay, on 31st March, 90 days are over. 1st January to 31st March. It will become NPA on 31st March. Understood? Yes. Bills, in case of bills sold, you have to receive the amount from opposite person. If it doesn't pay, bills remain overdue for more than 90 days. In case of bills purchased and discounted for more than 90 days, if you're not receiving interest or EMI, it is a NPA. What is NPA? Non-performing asset. You have to do provision. How much? Stay tuned. Come here. No, please come here. Please come here. Please come here. Substandard asset would be the one which has remained NPA for a period of more than or equal to 12 months, less than or equal to 12 months. Listen nicely. What do you mean? In NPA also there are category. Okay, cheap, very cheap, third class, disaster, third class. Are you clear? Third class, 2 times you spoke. Ignore. Listen nicely. Substandard asset. What is substandard? Which is not standard. joke you are doing. Are substandard means the one which is not standard. Standard means you are receiving the money. Okay, no problem. Excellent, good asset. But for 90 days, if you don't receive interest or principal or both, okay, then it will become NPA. On 1st April, example, EMI was due on 1st January 2023. On 31st March or 1st April, let's calculate 90 days. 1st April 2023, it will become NPA. It will become NPA. Now, from 1st April 2023 to 1st April 2024, it is substandard asset. You have to do provision only 15%. Why? Because see, would be the one which has remained NPA for a period less than or equal to 12 months. So, if NPA is less than or equal to 12 months, first birthday of NPA is known as substandard. You have to do provision 15%. If we have given 1000 crore loan to Ramesh Kumar, provision will be 150 crore. Understood? Yes, sir. What is doubtful? Is the one which remains substandard for more than 12 months. After substandard, we have to increase the level of insult. Okay, 1st April 2023 to 1st April 2024, it is substandard. From 1st April 2024, it will become doubtful. D1, doubtful. Doubtful up to 1 year is known as D1. 1st April 2024 to 1st April 2025. On secured portion, provision is 25%, unsecured 100%. Secured 25, unsecured 100. Not able to understand. 1000 crore is there. Let's assume 50-50. So on 500 crore, you have to do provision 25%, another 500 unsecured 100%. So total 500. 25 into 5 is how much? 500 into 25, probably 125. Are you clear? So on secured you have to do 125, plus on unsecured you have to do how much? Full 500. Total 625. Above you have already done some, minus that. I hope you know all these sums you have done. Okay, so doubtful 25%. Now 1st April 2023 to 24, it was what? It was substandard. First birthday of doubtful is known as D1. 1st April 2024 to 2025 is D1. Then what is D2? If it is doubtful for 1 to 3 years, okay, 1 to 3 years, after that it will become 40 and 100. More than 3 years, 100%. More than 3 years, 100. Out of that, while doing this process, if auditor tell you, if RBI tell you, if you identify it is a loss asset, anyways we are not going to receive money. Mr. Z is Harami number one, Mr. Z is not going to pay. He's third class person. If RBI tell you, external auditor tell you, full 100% has to be written off. Understood? Don't play at that time substandard doubtful. Arey, third class. Understood? Okay. One last time. Tell me, when does it become NPA? If principal or interest or both is overdue for more than 90 days, it will become NPA. Okay. As soon as it becomes NPA, first birthday of NPA is known as what? Substandard. How much provision? 15. Secured, unsecured, both. Okay. Now, second birthday, still he doesn't pay. Doubtful for 1 year. Then it is 2500. 20 secured 25, unsecured 100. Doubtful 1 to 3 years. Okay. 1 to 3 years, 40, 100, 40, 100, 40, 100, more than 3 years, 100, 100, 100, 100. Are you clear? Okay. Loss asset is the one which is identified by bank or external auditor or RBI. Are you clear? Then 100 you have to write off. I hope you are clear. 15, 15, 25, 40, 100, 15, 25, 100, 15, 25, 40, 100, 15, 25, 40, 100, 15, 25, 40, 100. And unsecured is unclear. Okay. Now, come here. Come here. Come here. Only two things I have told you still. Okay. In case of term loan, in case of bills discounting, if the interest or principal or both remain overdue for more than 90 days, it will become NPA. First birthday of NPA is substandard provision is 15%. After that, it will become doubtful. If it is doubtful for 1 year, on secured 25, unsecured 100. Doubtful for 1 to 3 years, 40, 100. More than 3 years, 100. He is not going to pay. He is third class person. Now, little difficult. Are you ready for difficult? Fully ready, super ready. Don't worry, sir. In case of CC or OD, cash credit or overdraft, it is not. See, criteria is different. CCOD, you don't have to pay. What are you saying? Then I will take CCOD right now. No need to pay. See, it is not EMI type thing. CCOD is what? It is for working capital. It is given to you. See, when your money is stuck in working capital, they will give you CCOD. Till the time you use CCOD, they will charge interest to you. They will not ask for money because anyways they are getting interest. They know you are a businessman. You will not run away. CCOD is only given to current account holder, only to businessmen. Are you clear? So whenever in this you don't have to pay, they will keep on charging interest till the time you use CCOD because they know you are a businessman and this capital is given to you, this facility is given to you as current account holder, as your money is stuck in stock, your money is stuck in working capital. Understood? Fully understood. Okay. In case of CCOD, when it is out of order for more than 90 days, what is this new thing out of order? Listen nicely. When it will become out of order? When it will become out of order? When it will become out of order? When it will become? When the amount withdrawn is more than sanction limit or drawing power. But first of all, you have to understand sanction limit and drawing power. What do you mean by sanction limit? See, you have to submit the financials to the bank. Your account is in HDFC Bank. HDFC Bank knows you since 5 to 10 years only, then they will give CCOD. So based on your financial position, based on your account, based on your balance sheet, based on your PNL, they will calculate one sanction limit of 1 crore or 2 crore or 5 crore. Okay, sanction limit, let's assume is 5 crore. What is drawing power now? Sanction limit is calculated by bank based on financial statement, based on your past record, based on relationship with the bank, based on amount of balance you keep in the account. What is drawing power? See, every month you have to submit a stock statement. Why stock statement? Because you are saying this is for working capital, no, this loan. So your capital should be stuck in stock. Only then they will give you. So if you submit a stock statement, 70 or 80% of that is drawing power. Example, 6 crore is your stock. Okay, monthly stock is 6 crore. You submitted a statement. 80% of that, why full they will not give? I understand it's a bank. Don't be crazy, baby. Okay, 6 into 8, 4.8 crore is your drawing power. Let's assume they are taking 80%. So how much you can withdraw? Sanction limit or drawing power, whichever is less. So your sanction limit is 5 crore, but drawing power is 4.8 crore. They will do all that calculation. We are not concerned, but I am still explaining you. Okay. So if the amount withdrawn is more than sanction limit or drawing power, it is out of order. Okay. When it is out of order for more than 90 days, it will become NPA. Or though you have not withdrawn above the sanction limit or drawing power, but there are no credits only. Or credits are not enough to cover interest also. There are no credit. You took CCOD, but you are not depositing money only for 90 days. Or you are depositing money, but it is not enough to cover interest portion also. Means you are harami, means you are cheap person. Definitely, you are NPA Ramesh Kumar. Are you clear? Okay. Ramesh Kumar is your friend? No, just like that. Okay. So in case of CCOD, when it is out of order for more than 90 days, when it is out of order, three situations. Amount withdrawn is more than drawing power or sanction limit. When there are no credit or credit is not enough to cover interest also. So easy. One last time. When it is out of order, amount withdrawn is more than drawing power or sanction limit. When there are no credits, okay, you have taken loan but you are not crediting only, or you are crediting but so little, it is not covering interest also. You are trying to fool us, Ramesh. Okay. How is drawing power calculated? Not concerned. Account which exceeds the drawing power should be brought to notice of management. Drawing power is based on stock statement. I already told you. Large corporate borrowers may not send stock statement monthly, but every 3 months you have to send. Otherwise, account will become irregular. Okay, clear, understood, sir. So tell me here. When asset will become NPA? When it ceases to generate income. In case of term loan, when principal or interest is overdue for more than 90 days. In case of bills discounting or bills collected, if it is overdue for more than 90 days. In case of CCOD, cash credit or overdraft, when account is out of order for more than 90 days. When is it out of order? Amount withdrawn is more than drawing power. There are no credits. Credits are not enough to cover interest also. Okay. Now, come to second, agricultural advances. Remember, in agricultural advances, what is the criteria for NPA is different for other. If you understand loan part, no, 50% or more than 60% chapter is over. See, what is agricultural advance? First, you have to understand crop season. Crop season is the season from sowing to harvesting. Sowing to harvesting. From the time of sowing to time of getting fruit, that is known as crop season. Certain crop season is less than 1 year, it is known as short duration crop. If the crop season is more than 1 year, it is a long duration crop. Why are you explaining all this? Are you farmer? I am not farmer, but for booking NPA rules are different. Oh, so for those fruits or vegetable which are grown within 1 year only, okay, which are there? Rice, maize, are you clear? Short duration, which is long duration, maybe tobacco, teak, these are long duration crop, but forget that, okay, they will give all this. Crop season is less than 1 year, it is a season from sowing to harvesting, okay. If it is less than 1 year, when it will become NPA? If principal or interest is overdue for more than two crop season. Let's take example. Crop season is 4 months, okay, 4 months or 3 months we can take. 1st April 2023 you had to pay. You do not have money. Of course you don't have money. So we will wait till one crop season. One crop season will be over when? April, May, June. On 1st full April, full May, full June. On 1st July 2023, okay, what will happen? Will it become NPA? No, 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 no. More than two crop season. We'll still wait for one more crop season of 3 months, okay? July, August, September. On 1st October, it will become NPA. Are you clear? So if crop season is less than 1 year, in this case, 3 months we took. On 1st April you have to pay. We will wait for two crop season, that is 6 months. Are you clear? After that it will become NPA, and whenever it becomes NPA, then first we have to do substandard, then doubtful. Understood, sir? Long duration, those crops which take more than 1 year, tobacco, teak, in that we will not wait for one more. Now if the crop season is 1.5 years, then we will wait for 3 years. In 3 years farmer will run away. Government very smart, bank double smart, very chalak bro, bank is chalak bro. Okay, so it is NPA if interest or principal is overdue for more than one crop season. So in this we'll wait only one crop season. Example, 1st January 2023, okay, EMI is due. And if crop season is 1.5 years, we'll wait for 1.5 years. Okay, 1st January 2024, we will wait till 1st August. Are you clear? Not 1st August, 6. Okay. So we'll wait till 1/7, 1st July. 1st July, 1 January is there. So 1st January is there. We will wait for 1.5 years till 1st July. Okay. Till 1st July 2024 also. If we don't receive the money, baby, it will become NPA. cut short. Short duration crop, long duration crop. Short duration crop, when it will become NPA? If principal or interest or both remains overdue for more than 2 crop season. Long duration crop, we cannot wait because these crops take more than 1 year. So interest or principal remains overdue for more than 1 crop season. Erosion in the value of security. Erosion in the value of security. Are you clear? See, you have given some securities against the loan. Okay. Bank, you took loan from bank. You have given certain securities. Okay. If the value, for example, you gave your house. Now your house became haunted house. Okay. Because redevelopment work going on. Some whatever issue, forget. If the erosion in the value of security is value of security falls more than 50%, okay, if the value of security falls less than 50%, then directly doubtful, you don't need to do substandard. Directly doubtful, are you clear? It will be doubtful asset directly. If value of security falls even less than 10%, are you clear? More than 90% fall is there. Now securities are not worth 10% also because it was illegal land. Directly loss asset. Directly loss asset. Remember one last time. If there is erosion in the value of security, if value of security falls below 50%, what will you do? Directly classify it as what? Doubtful asset. It will not become substandard. Now come here. Value of security is less than 10%, baby. Too less. Nothing. Don't cry. It is loss asset for a bank. Now bank will not receive money and you are not going to pay because your securities are also gone. Oh, account regularized near balance sheet date. Many times these people are very smart. Bank manager will call Ramesh Kumar. Please say what happened. Will you deposit certain credits? Are you clear? So your account doesn't become NPA. We will give you one loan. Okay, take new loan. But don't use that new loan for business. Use that new loan so your principal or interest doesn't remain overdue for more than 90 days. Right now it is overdue for 70 days. No, okay, 10 more days you can wait. Then we will only give you loan. And in that, as soon as you receive the money, no, you deposit in old loan. So your principal or interest is not overdue for more than 90 days. We will not book NPA. Are you becoming too smart? If we realize that there are few credits recorded around balance sheet only and the sole purpose of this credit is just that account should not become NPA, it will be deemed NPA. It will be deemed NPA. We are auditors. We are taught everything by Mrugesmadlani. Okay. Who is Mrugesh? Okay. Central government advances. Are you clear? So if accounts are regularized near balance sheet date, near balance sheet, if you receive the advances, it will be deemed NPA, baby. Central government advances. See, central government advances are there. In that, if we are not receiving principal or interest for more than 90 days, will it become NPA? No, because the guarantee is recognized by central government. It will not become NPA, it will be standard asset. But income will be recognized on cash basis only. Income will be recognized on cash basis only. Remember, this exemption is only for asset classification, not income classification. One more thing. As soon as account becomes NPA, now I will not recognize accrual basis. See, till it is NPA, I will recognize interest on accrual basis. As soon as it becomes NPA, I will recognize on cash basis. Understood? Okay. But in central government advances, okay, if guarantee is given by central government and if still they are not paying, okay, no problem, it is still a standard asset because guarantee given by Narendra Modi, okay, but this guarantee is only for asset classification, but EMI, okay, if you are not receiving, you will recognize, it will not become NPA, but still income will be recognized on cash basis only. I hope you are clear. Advances against deposit, NSC, KVP, IVP. Advance against deposit, National Savings Certificate. What is KVP? Kisan Vikas Patra. What is IVP? Indira Vikas Patra. All these are very good. Are you clear? Certain times you take loan against Kisan Vikas, government schemes, Kisan Vikas Patra, Indira Vikas Patra, okay, National Savings Certificate. These are not NPA till the time adequate margin is available. Till the time surrender value margin is available, it will not become NPA. After that, it will become NPA. Example. For example, 1 crore you will receive in National Savings Certificate. Till now you have deposited 10 lakh. Till now you have deposited 10 lakh. You will receive 1 crore rupees. Okay. Now, today if you stop paying, they will say that we will pay you 8 lakh. You paid 10 lakh rupees. Okay. more you have to pay. After certain years, you'll receive 1 crore. These schemes are like that only. Kisan Vikas Patra, Indira Vikas Patra. In that, you pay EMIs, and after that, you receive a big amount in the end. Understood? Now you have paid total 10 lakh. Okay, still some portion to be paid. You will be receiving 1 crore. But today, if you don't pay the money, surrender value is 8 lakh. Surrender value is 8 lakh. They'll give you 8 lakh and over. Now, till the time, and every month we have to pay 1 lakh. Now, till the time 8 lakh is there, if you are not paying for 8 months, okay, because surrender value is available. Till the time our EMI reaches surrender value, it will not become NPA. After that, only NPA. Okay, so 1 lakh we have to pay. We will not pay for 8 months. No problem. Surrender value is there. After that, it will become NPA. Understood? Advance, now the all very easy. Advance against consortium. Consortium means what? Reliance has taken loan of 10,000 crore from SBI. 10,000 crore SBI. Now SBI alone cannot give the loan. 2,000 is given by HDFC Bank, 2,000 by ICICI Bank, 2,000 by Kotak Bank. So 2 to 6 and 4,000 by SBI. Understood? One last time. Reliance to SBI 10,000 crore. But SBI has sub outsourced 2,000 crore to HDFC, 2,000 to ICICI, 2,000 to Kotak. Now, Reliance is regularly paying EMI to SBI, but SBI has taken 6,000 crore from these banks, but it is not paying to this bank. HDFC has to pay certain EMI to this bank also. Why? Because they have taken 2 from them. Are you clear? Now, will it become NPA? In this bank book, HDFC, ICICI, Kotak, will it become NPA? Because Reliance is regularly paying to SBI. SBI is not paying. Yes, it will become, because we have to see our books and not SBI books. SBI should pay. If interest or principal remains overdue for more than 90 days, it will become NPA, because these banks cannot recover from Reliance. They have to recover from SBI. Okay, second, bank staff. See, in bank staff, 90 days criteria is not there. Why? Whenever bank staff will take the loan, their EMI is deducted from salary only. Listen nicely. Bank staff will take home loan of what? 2 crore. Every month 50,000, 50,000, 50,000 they have to pay. If they are receiving salary of 75, they will receive 25 only. 50,000 will be deducted. Now, if they give a mail that don't deduct my salary, okay, then it will become NPA from day one. Why? Because 90 days facility is not available. Anyways, money is deducted from their salary only. Understood? Fully understood. Classification of NPA is based on record of recovery. See, now Mukesh Ambani has 10,000 crore of wealth and he forgot to pay EMI of 1 crore for 90 days. 1 crore EMI forgot to pay, but his wealth is huge. Will Mukesh Ambani be treated NPA? Yes. We will not see net worth. Are you clear? If you are Mukesh Ambani, show something like Mukesh Ambani. Baby, pay, 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 pay. Are you clear? Availability or security or net worth is not a valid criteria for NPA. Asset classification should be borrower wise and not facility wise. Listen nicely. You have taken car loan, home loan, gold loan, okay? Car loan, home loan, gold loan, education loan. All EMIs you have paid. All EMIs from Kotak Bank you took car loan, home loan, gold loan, education loan. Car loan, home loan, gold pay. Education you have not paid the money. Education loan you forgot to pay interest or principal. Will you be NPA? Will you be NPA? Yeah. Why? Because you will be considered NPA in all the loans and not one. Why? Because it is the right. If you are not paying, all NPA for that bank. Of course, you have taken loan from Kotak Bank. There you will be standard asset. But in ICICI Bank, all the loans will be treated NPA. If you don't pay for one, it is borrower wise and not loan wise. Okay, for one bank. In another bank, you will still be treated standard asset. Okay. With this, I hope a lot of things are covered. Yeah. So basic part, I'm very happy we are done with that. Can we move ahead? Why not? Why not? Why not? Why not? Why not? Okay, sir. Bank audit basics. See, for any bank, they have to follow this many laws. Or so many laws are there. Yeah. What to do? For any bank, they have to follow these many laws. Can we start? Yes, sir. Please start. Number one, they have to follow Banking Regulation Act 1949. What shall I explain in this? They have to follow RBI Act 1934. RBI Bahubali. Every bank is a company. So they have to follow Companies Act 2013. These three I'm not making you learn. You anyways know. Banking Regulation Act 1949, RBI Act 1934, Companies Act 2013. Now, SBI Act 1955, SBI Subsidiaries Act 1959. Remember these two also. What shall I explain? Why are they telling me they have to follow these laws? You should have knowledge of these laws. You are auditor. Oh yeah, I forgot. Okay. Done. Banking Company Acquisition and Transfer of Undertaking Act 1970. Whenever banking company will acquire certain company, certain rules are given in this act, which we don't have to study, but we should know. Regional Rural Bank, Grameen banks are there, 1976. Okay, till you're clear. This four you have to learn. SBI 1955, SBI Subsidiaries Act 1959, Banking Company Acquisition and Transfer of Undertaking Act 1970, Regional Rural Bank 1976. Break of 4 seconds. Done. Okay. Now all new act are there which you know. IT Act 2000, Pamla Act, Prevention of Money Laundering Act 2002, सरफरोशी की तमन्ना अब हमारे दिल में है, जोड़ना है जोड़ कितना बाजुए कातिल में है. सर, what is this rubbish? अरे सरफासी एक्ट, सरफरोश मूवी इज देयर, हिंदी हिट मूवी, आमिर खान. ओके, सरफासी एक्ट, सिक्योरिटाइजेशन. सी, this is how you securitization and reconstruction of financial asset and enforcement of securities interest act. What is this? What is this act? Array, I told you no many times. Okay, we will sell our loan to asset reconstruction company. We are not going to receive the money, so asset reconstruction company will sell the securities, okay, and pay us. Okay, they will not pay us full, but certain less they will pay, but no problem. So how those rules are there, who can become asset reconstruction company, all that is there. So many times we sell, if we are not going to receive the money, we sell our securities to asset reconstruction company. Now they are responsible for selling the security and recovering the loan. For that, Sarfasi Act is there. Securitization and reconstruction of financial asset. Securitization and reconstruction of financial asset and enforcement of securities interest act. Learn nicely. Securitization and reconstruction of financial asset. Securitization, A for and, reconstruction of financial asset and enforcement of securities interest act. Understood? Then Credit Information Companies Regulation Act. Lot of credit rating agencies are there. ICRA, Credit Suisse. Okay, how they will give rating, who can become credit rating agency, all that is there. Credit Information Companies Regulation Act. Payment and Settlement Act, new act. Many payment bank are there. Paytm Payment Bank, Airtel Payment Bank. How can you become payment bank? What are settlement norms is given here. So new act are very easy actually. IT Act, Pamla Act, Prevention of Money Laundering Act, Sarfasi 2002. Okay, Securitization and Reconstruction of Financial Asset and Enforcement of Securities Interest Act. Last two act you know, Credit Information Companies Regulation Act, Payment and Settlement Act 2007. I hope you are clear. Yes sir, super clear, duper clear, clear. Okay, we will try to learn 5 till here. Okay, start. First three to everyone knows. Regulatory framework in bank. Okay, Banking Regulation Act 1949, RBI Act 1934, Companies Act 2013, SBI Act 1955, SBI Subsidiaries Act 1959, Banking Company Acquisition and Transfer of Undertaking Act 1970, Regional Rural Bank 1976. Learn till here. Fully done, sir. Are supremely done, excellently done, amazingly done. Okay. Now come here. These are the favorite. IT Act 2000. Okay. Then after IT Act with Pamla, Prevention of Money Laundering Act 2002. Are Sarfarosi ki tamanna, Securitization and Reconstruction of Financial Asset and Enforcement of Securities Interest Act. His spelling I don't know. Learn at home. 2002. Okay. Then Credit Information Companies Regulation Act 2005, Payment and Settlement Act 2007. Learn this. Fully done. Are not fully, even greater fully done. Wow. Too good. Banking Regulation Act 1949, RBI Act 1934, Companies Act 2013. Okay, then SBI Act 1955, SBI Subsidiaries Act 1950. SBI Act 1955, SBI Subsidiaries Act 1959, Banking Company Acquisition and Transfer of Undertaking Act 1970. Okay, after that, Banking Companies Transfer and Undertaking Act, Regional Rural Bank Act 1976, New Act, IT Act 2000, Pamla Act 2002, Sarfarosi ki Tamanna, Securitization and Reconstruction of Financial Asset, Enforcement of Securities Act 2002 again. Okay, Credit Information Companies Regulation Act, Credit Information Companies Regulation 2005, Payment and Settlement Act 2007. Simple. What are peculiarities involved in bank audit? Tell me, in bank audit, what is there? Widespread area of network is there in bank. Okay, so many branches are there. Variety of product and service are there. Large volume of transaction is there, and there is strict vigilance by banking regulator. Simple 2 mark question. If they ask it, is too easy. What are peculiarities in bank audit? Without seeing, you can tell. Widespread network is there. 10,000 branches are there. Second, huge volume and complexity of transaction. Crores of transactions take place. Large range of product and service. Home loan, car loan, deposit loan, FD loan. Okay. Extensive use of technology. Strict vigilance by banking regulator. Is it easy? No, because it is too easy. What are peculiarities involved in bank audit? Widespread geographical area of network. Large volume of transaction and complexity of transaction. Variety of product and service are there. Extensive use of technology. Strict vigilance by banking regulator. Arey sir, RBI is very strict. RBI is Bahubali. Are you clear? RBI is like Raja Mouli. Okay. Learn this exactly. Break 10 seconds. Done. What are peculiarity in bank audit? Can you tell me? Yes, I can tell you, because it is very easy. Widespread geographical area of network is there. Okay, large volume of transaction is there, and complexity of transaction is there. Large variety of product and service is there. Extensive use of technology. Strict vigilance by banking regulator. Type of audit report to be issued. Very simple. Every company has to issue statutory audit report as per 700, 701, 705, 706, 700, forming an opinion and reporting on financial statement. 701, chapter 11 we have learned. Came show, majama key audit matter. 705, modification in independent auditors report. How many report are there? 4. Qualified, unqualified, disclaimer, adverse. 706, EOM and OM in independent auditors report. So first, statutory audit report. Second, every bank has to issue tax audit report as per Income Tax Act 1961. Third is famous for bank, only applicable to bank. So only third you need to remember. Which one? LFAR, long form audit report. Long form audit report as per requirements of RBI. Simple, very easy. Okay. What are reports to be issued by bank? Tell me. Types of audit report to be issued. Number 1, stat audit report. Second, tax audit report. Every bank has to do. Third, long form audit report before 30th June as per instructions of RBI. Are you clear? So first two, so anyways you know, LFAR is the only new thing. Long form audit report. Long form audit report as per requirements of RBI. Next question is bank audit approach. Whenever we are checking controls in the bank, following things should be kept in mind. Understood? See, listen one more time. Bank audit approach while performing control activity. Whenever we are checking controls in bank, following things should be kept in mind. But why am I checking controls? So based on RAP, see, checking control is RAP, risk assessment procedure. I can design my FAP. What is FAP? Further audit procedure. If controls are strong, further procedure would be less. If controls are weak, further procedure would be more. I hope you are able to understand. So here I will basically, what is the bank audit approach while performing control activity? Whenever I check control, what is the bank audit approach? Why I need to know? So based on control only I will decide my further procedure. If controls are strong, my further procedure would be less. If controls are weak, my further procedure would be more. So based on nature and thrust of operation, nature of adverse feature, level of compliance, audit risk, audit plan should be kept in mind. Okay. Following questions need to be kept in mind while performing control activity. Whenever you are performing control, following things should be kept in mind: who, which, what, who, what, when, where, why, how. How many questions are there? Who, what, when, where, why, how. 6 questions need to be kept in mind. Whenever we are performing control activity, 6 questions: who, what, when, where, why, how. Who, what, when, where, why, how. Example: who performs the control? Second, does he have requisite authority to perform the control? Let's take an example. All loans are authorized by whom? Okay, assistant manager. Number one, who performs control? Assistant manager. Does he have requisite authority to perform the control? Yes, he's manager in a bank. He knows all the credit rules. Of course, he can approve. So in who two question, who performs the control? Does he have requisite authority to perform the control? What? What is the evidence that the control is performed? How can you say assistant manager has approved the loan? Okay, is there any signature of assistant manager in all the loan approved? Okay, does he make a sign, or in system does he write enter? Or in system sometimes sign are done in system also, left click, if you do, your initials are done. So what is the evidence that the control is performed? When and with what frequency is the control performed? Is the frequency enough to prevent or detect and correct material misstatement? Okay, with what frequency? Now the work of assistant manager is reviewed by who? Senior manager or main manager. Okay, now with what frequency is the work reviewed? Okay, is the frequency enough? Does he check every loan to prevent or detect and correct material misstatement? Otherwise assistant manager will do the fraud and we will not understand. So does he check every loan? When and with what frequency is the control performed? Is the frequency enough to prevent or detect and correct material misstatement? Are you clear till now? 3 questions are: who, what, when. Who, what, when. Who, what, when. Where is the evidence of control? How long it is retained? Is it available for audit or not? Okay, where is the evidence of control? Where is the evidence that the loan was approved? For how long it is retained? Is it available for auditor? So in case any fraud is there, auditor can know that this manager had approved. Okay, where is the evidence of control performed? For how long it is retained? Is it available for audit or not? Are you able to understand? Yes, sir. Next, why is the control performed? What type of errors are prevented or detected and corrected? Why is the control performed? See, many times loan are approved unauthorized. So that is why this control is there. Okay, will after assistant manager checking or manager checking, all errors are prevented or detected and corrected. First, I will try to prevent. If I cannot, detect and correct. Okay, why is the control performed? Okay, what type of errors are prevented or detected and corrected? How is the control performed? What are the control activities? Can this control be bypassed? Can the bypass be detected? Okay, so how is the control performed? What are activities while approving the loan? What all steps you keep in mind while approving a loan? That amount should not exceed as per the bank limit. Okay, can these activities be bypassed? Can the manager be bypassed? Okay, sometimes can wrong person also approve? If it happens, can the bypass be detected? Is there a senior manager who will always catch the fraud? How are deviations handled? If any deviation is there, deviation means exception, how is it handled, and what is the time frame for resolving the deviation? I hope you are able to understand little. If not, we'll again do it. Who, what, when, where, why, how. Who, what, when, where, why, how. Who, what, when, where, why, how. Okay, number one, who performs the control? Does he have requisite authority to perform the control? What is the evidence that the control is performed? Who, what, when is the control performed? Okay, is the frequency enough to prevent or detect and correct material misstatement? Who, what, when, where is the evidence of control? Okay, for how long it is retained? Is it available for auditor at the time of audit? Who, what, when, where? Why is the control performed? Okay, will it prevent or detect? What type of error it will prevent or detect and correct? Okay, what type of error? How is the control performed? What are the control activity? Can the control be bypassed? Can the bypass be detected? Okay, how are exceptions identified? What is the time frame for solving exceptions? I hope you understood little. Okay, very easy it is. So bank audit approach while checking control activity: whenever you want to check control, you have to ask 6 questions, and based on that we will decide. If answer of these 6 questions is strong, controls are too strong, my trust on bank audit will increase, my trust on that bank will increase, and substantive would be less. Who, what, when, where, why, how. One last time: who, what, when, where, why, how. One last time: who, what, when, where, why, how. I hope you are able to understand. Who performs the control? Does he have have requisite authority to perform the control. What is the evidence that the control is performed? Who, what, when? Where is the control performed? Okay, is the frequency enough to prevent or detect and correct material misstatement? Who, what, when, where? Where is the evidence of control performed? For how long it is retained? Is it available for audit? Why is the control performed? Can the control prevent or detect and correct material misstatement? What type of errors it will prevent or detect and correct? How is the control performed? What are the control activities? Can the control be bypassed? Can the bypass be detected? Okay. How are exceptions identified? What is the time frame for solving exceptions? Are you clear? Who, what, when, where, why, how? So bank audit approach in checking control, easy? No, too easy. Who, what, when, where, why, how? One last time. Who, what, when, where, why, how? Okay, sir. Now come here, even more easy. Appointment of auditor. Whenever you want to appoint the auditor, in case of banking company, same like normal company. Tell me, normal company auditor who will appoint? Sir, members in the AGM will appoint for 5 years. If he is appointed in first, he will remain auditor till sixth. Here also same, appointed by members in the meeting, appointed by members, appointed in the AGM by shareholder. But prior approval of Bahubali is needed. Who is Bahubali? RBI. Are you clear? Prior approval of RBI is needed for any banking company, HDFC Bank, Kotak Bank, okay, ICICI Bank, okay. A shareholder, auditor is appointed by shareholders in the AGM, but prior approval of RBI is needed. Nationalized bank, tell me, it is banked by me or government? It is a government bank, so appointed by board of directors of the bank. Board of director will appoint, but remember, prior approval of Bahubali is needed. Nationalized bank is what? Punjab National Bank, okay, Bank of Baroda, these are nationalized bank. Okay, so banking company or nationalized bank. SBI is government's bank. It is banked by government, so will appointed by CNAG. For our government company, who appoints auditor? CNAG. What is CNAG? Comptroller and Auditor General of India, in consultation with central government. So both will come together and appoint. In consult, see, approval means what? I will just ask. Okay, consultation means we both will come together and appoint. Okay, so appointed by CNAG in consultation with central government. Subsidiary of SBI, who will appoint, sir? SBI only will appoint. Oh, so easy. Subsidiary of SBI is my favorite. SBI only appoint. Yes. RRB, appointed by bank with prior approval of RBI. Okay, sorry, central government. Prior approval of central government. So this RRB is little weird. Okay, appointed by bank itself, but prior approval of central government. One last thing. Tell me, who will appoint auditor? Number one, banking company. It is appointed by shareholders in AGM, but prior approval of RBI is needed. Okay, all nationalized bank appointed by board of directors of bank, prior approval of RBI is needed. SBI, appointed by Comptroller and Auditor General of India, CNAG, in consultation with central government. Subsidiary of SBI, your favorite, who will appoint? SBI. And last, regional rural bank, appointed by bank, okay, but prior approval of central government. Read nicely. Break. 10 seconds. Done. Okay, shall we speak once? Yes, sir. Banking company appointed at AGM by shareholders, but prior approval of RBI is needed. Okay, nationalized bank appointed by board of directors of the bank, but prior approval of RBI is needed. SBI appointed by CNAG in consultation with central government. Subsidiary of SBI, of course, SBI. RRB appointed by bank, but with prior approval of central government. Okay. Remuneration, same like that. Are same to same. Control C, control V, in accordance with provisions of section 142. Three things were there: fees payable, expenses if any incurred in connection with audit, and any other facility given to him, same like that. Nationalized bank and SBI, who will fix? RBI in consultation with central government. For all nationalized bank and SBI, who will fix remuneration? RBI together with central government. LFAR. See, remember, okay, we have to submit statutory audit report along with stat audit report for certain class of companies. Central government in consultation with NAFRA, National Financial Reporting Authority, has also given CARO, company auditor report order. Oh yeah, I remember company auditor report. But for bank there is no CARO. CARO doesn't apply to banking company. For bank there is special requirement given by the Bahubali Raja Mauli. Okay, long form audit report, LFAR. Every bank has to submit long form audit report as per the requirements of RBI. Is it applicable to foreign bank also? Yes, every bank before 30th June. Before 30th June. Terms of appointment of public sector bank, private sector bank, foreign bank require auditor to furnish LFAR, long form audit report. Okay, matters to be included in LFAR. Who will give? The Bahubali himself, RBI. LFAR has to be submitted when? Before 30th June every year. Before 30th June you have to submit. Understood? Yes. Now, mode of creation of security. Bank will directly give you the loan. No. We have to give some security. Usually, bank gives only 80% of security as loan. One more time. Bank will directly never give loan. We have to give some security. Okay, directly no bank will give loan. We have to give some amount as security. Okay, understood, sir. Fully understood. There are several ways of creating security. Mortgage. Mortgage is usually immovable property against whom if you take a loan. In English we call it mortgage. There are two. Whenever immovable property is kept as a security, it is known as mortgage. There are two types of mortgage: registered and equitable. Registered, in this a deed is signed. Okay, in registered we will sign a deed that we are giving documents to the bank. Okay, because against that we are taking a loan. So a deed is signed, that documents are given to the bank against which we are obtaining loan against this house. Are you clear? Yes. So you cannot sell the property because you have registered the mortgage in the name of bank. Okay, you have signed a deed in the name of bank. What is equitable mortgage? No deed is signed. Okay, there is no deed prepared. Okay, only documents of your home are with the bank, so you cannot sell. You will only give documents to the bank. There is no deed signed, no registration is done. Okay, so stamp duty charges and all will not be there. Only you are giving your home ownership document to the bank, so you cannot sell your home. Okay, understand, sir? Then to which is better, registered or equitable for getting loan? That bank will tell you. Okay, of course registered is little expensive because you have to pay stamp duty, etc. In equitable we are only giving document. Every bank has different policy. Some will tell you that we need registered mortgage, some will tell you we need equitable mortgage. Just give documents. So whenever you take loan against immovable property, two parts: registered, equitable. Registered, in this ownership documents are, you have to sign a deed and give the documents to the bank. Okay, deed is signed in the name of bank. In equitable only documents are given. Pledge and hypothecation, remember very nicely, both are for movable property. Immovable property is known as what? Mortgage. Movable property, pledge, hypothecation. Whenever you give goods to the bank against which you take a loan, gold, against gold we take a loan, against stock we take a loan. But if the ownership was not ownership, if you keep the documents with bank, it is known as pledge. Okay, in this, delivery of goods is done by borrower to the bank. Okay, in hypothecation you only keep the goods. Movable property is with you only. You are acting as a trustee of the bank. Okay, you are acting on behalf of the bank. You are acting as a trustee of the bank. And okay, documents or goods are with you only. Example: Ola car, Uber car. Okay, in this what will happen? Many times it is written hypothecated. In truck it is written hypothecated to Canara Bank. Means this truck belongs to Canara Bank till I repay all EMI. Okay, right now Canara Bank has given me this truck to use, so I can pay their EMI. In this, okay, movable property is with the borrower only. It doesn't give to bank. Okay, borrower holds possession as trustee. Okay, borrower is nothing but creator of trust. So I hope you understood. Pledge and hypothecation is for movable goods. If ownership of the goods, sorry, not ownership, if the documents are with the bank, then it is pledge. If the documents are with you only and you are acting as a trustee, it is hypothecation. assignment. Transfer existing or future debt to another person. Transfer existing or future debt to another person. Many times we want the loan, okay, because our money is stuck in debtors. Our debtors are not paying, so we will transfer our debtors book to the bank. So we are telling the bank, okay, you have the right to recover the money from debtor. Now I will not recover, but you give me loan urgently right now. You recover the money from the debtor. So whenever we transfer our existing or future debt, it is known as assignment. Set off. Set off is a statutory right of the bank to set off two accounts provided they are in the same bank. Example, I have a loan of 80 crore and FD is there of 100 crore. I am not paying my loan only. Can bank set off the loan against FD? Yes, provided both are of same bank. ICICI Bank Mumbai branch, ICICI Bank Ahmedabad branch, you can set off. ICICI Bank Mumbai branch, Kotak Bank Ahmedabad branch, you cannot set off. Set off is a right given where we can set off the two accounts of the customer of different branches also, provided they are of the same bank. Lien gives a right to the borrower that he can sell the property. Okay, if you don't pay, bank has the right to sell the property. They can exercise lien and sell the property because you are not paying. Very fast. Immovable property, mortgage. Movable property, if you keep with what? Bank. Pledge. If you keep with yourself, hypothecation. Whenever you transfer your debtor book, assignment. Set off, you can set off two accounts, and lien also, you know. Then almost we are on the verge of ending the chapter. Now, audit approach for income account, audit approach for expense account. Very simple. Tell me, for bank, what is income? Bank. Bank the income is too much. There are four things in income and expense account. Total 16 schedules are there in bank. First 12 are of balance sheet. Last 4 are of P&L. For bank, biggest income is interest. They will receive interest on what? Maybe if they have done some investments in debentures, okay, they have done some investments in any other thing, okay, they will receive lot of interest. Second, they will receive interest basically from loan people. Whoever you have given the loan, you will receive a lot of interest. The main income of bank, schedule 13 interest on. Other income also, these days bank has lot of other income. I will not speak much, but I will tell 10 other income. Okay, fast. Number one, bills discounting is a income for bank. Locker charges, debit card charges, credit card charges, okay, checkbook charges, bank charges, passbook printing charges. Are you clear? AMC, annual maintenance charges there in bank. These so many expenses bank, okay, broking charges are there. Okay, bank acts as a broker also these days, share broker, broking charges are there. Okay, then internet banking facility charges there. That is other income for bank. Schedule 13 interest income, schedule 14 other income, schedule 15 interest expense. When expense will be there for bank of interest? Deposit. Whoever has deposited money, we need to pay them interest. Schedule number 15 is there for interest. Many times we take loan from other bank, okay, other branch also. Every branch is a profit center for the bank. Remember, every branch is treated as separate profit center. So if you take loan from some branch, you have to pay money, interest expense. If you take loan from other bank, you have to pay money. If you take loan from RBI, you need to pay. So interest expense. And 16 is other expense, printing, stationery, rent, okay, internet charges, okay, locker, etc. Understood? So income and expense, very simple. 13 interest income, 14 other income, 15 interest expense, 16 other expense. One last time. Array 13, 14, 15, 16, 13, 13, 13, 13, tell not 13. 13 is interest expense, 14 other income, 15, okay, sorry, interest, 13 is interest income, 14 other income, 15 interest expense, 16 other expense. Break. 3 seconds. Simple. Tell me, interest income 13, other income 14, interest expense 15, other expense or operating expense 16. Now, what is audit approach and procedure for income account? Number one, we should have reasonable assurance that all the income accounts are recorded with correct amount, correct account, correct period. Three words are important. Whenever you book any income of the bank, it is recorded with proper amount, recorded in proper period, and proper account. Three things: correct amount, correct account, correct period, correct account. correct amount and correct period. Are you clear? This is the basic thing. Accrual. Every time RBI has told bank you should have to recognize income on accrual basis only if it exceeds 1% of total income, if income is taken on gross basis. Let's take example, debit card charges. Are you clear? So debit card charges, okay, or passbook charges are to be taken, okay, if it is more than 1% of total income of the bank, it has to be taken on accrual only. Total income of the bank is, let's assume, what, 1000 crore, okay, so 1% of 1000 crore is how much? 1% of 1000 crore is 10 crore. Any income 10 crore or above compulsory has to be taken on accrual basis if you are taking matching income with income. Let's take example. Passbook charges are how much? Okay, passbook charges are 11 crore. Of course, it has to be taken on accrual basis. Why? Why? Because it is more than 1% income of the bank. Total income is 1000 crore. 1% of 1000 is 10 crore. Passbook is 11 crore. It has to be taken on accrual basis. What if it is below 1%? It can be taken on accrual or cash. Accrual is best if you cannot take on cash. But remember, 1% of net profit is income is taken net of cost. Now, if you are taking passbook charges minus deducting the paper cost, see, to print passbook also cost is required. Okay, so minus that, you are taking net income of passbook. Then you have to compare not with total income, you have to compare with net profit. Are you clear? If it is more than 1%, if you are taking net income, okay, then compare with net profit. If you are taking gross income, compare with gross profit. Fully understood, sir? Now, I told bank income is 1000 crore, but net profit is 100 crore. How much crore? 100. So 1 crore, if you are taking income net of cost, any income above 1 crore, okay, will be taken on accrual basis as per AS9. One last time. All income are to be taken on what basis? Sir, accrual basis, provided it is 1%, more than 1% of total income of bank if taken on gross basis, more than 1% of net income if taken on net basis. Any other income can be recognized on cash basis. Very, very important. NPA. NPA should not be recognized unless it is received. Remember, NPA should not be recognized unless it is received. Did you understand? In 1 minute over. See, whenever it becomes NPA, from now you have to recognize on cash basis only because the asset is non-performing. Okay, now no accrual basis. Okay. Reversal of income. When a credit facility becomes NPA for the first time, all interest credited for previous period should be reversed. Okay. See, whenever you become NPA for the first time, whatever interest is there, okay, which was not received, reverse it and charge it to PNL because that is not your actual income. Whenever any credit facility becomes NPA for the first time, the day it becomes NPA, all previous should be reversed and charged to PNL. This is done. Bills purchased, outstanding at the close of year, discount received should be apportioned between year. Remember, 10,000 bills is there. Okay, you paid 8,000, you will recover 10,000. 2,000 is profit for bank. Okay, but that bills will be received after 6 months. So on 31st December, you discounted the bills. You will receive the money on maybe 1st July. So now whatever 2000 is left, 31st March to 1st July should be apportioned in 6 months. 3 months in current year, 3 months in next year. So the 2000, 8,000 you receive, 2000 is profit. That 2000 apportion in 6 months because bills are of 6 months. Okay, that is what is written. Bills for commission. See, many times you tell bank, please collect these bills on my behalf. Okay, bank is only acting as a commission agent. Okay, so bank will collect the money on your behalf and pay you. Of course, earn some commission. That commission should be recognized when money is paid to you. Are you clear? Only commission should be booked after money is paid to customer because that is when the work of bank is over. Renegotiation. Many times you are unable to pay the money. You are saying I cannot pay the loan. Bank will try its best, okay, to enter into some renegotiation arrangement. Okay, of course they will charge few fees for renegotiation. That should be spread across the period. The negotiation fees should be spread across the period. For 1 year, if you are not going to pay, it should be spread over 1 year. Test check. Also test check the interest for various types of loan, whether interest is properly credited or not. Otherwise it will become loss to the bank. Partial recovery in NPA. Tell me, whenever we are receiving the NPA, we will recognize as per AS9 for past period amount not recognized. However, we need to ensure the credit is not okay. Whenever partial recovery are there, we will recognize as per AS9 for the past period. Okay, don't recognize current year for the past period. Okay. Tell me, when it becomes NPA, will we stop calculating the amount only because we don't have to book as income? If the account becomes NPA, will we not calculate only the interest? No. Memorandum means for rough working you need to calculate. What if he gets a lottery of 20 crore? I am here to pay the money. Oh, sorry, sir, we have not calculated your interest. So please go back. Don't pay because we thought you are NPA. Not like that. You still have to maintain the accounts. Memorandum, rough working should be there. Okay. So if he comes tomorrow, we can tell, sir, your 19 crore is pending. Audit approach for expense account, which is the biggest expense for bank. Okay, schedule 13, 14, 15, interest expense. In carrying out audit of interest, auditor should see overall reasonableness of interest by analyzing ratio of interest paid on various types of deposits and borrowing to average quantum of liability during the year. See, simple, you have to see various types of deposits are there, against them interest is there. You have to check average ratio. Okay, on one deposit it is coming 3.5, another 4, another 4.5, another kind of deposit 8, maybe fixed deposit. On one it is coming 11%. Be very shocked, what the hell is going on? Analytical procedure you have to do. Interest on deposit, interest deposit, interest. If approximately rate are matching, don't check them. Okay, but if not matching, we have to check. Analyze various types of deposit and then find out weighted average actual interest rate. Okay, various types of deposit you have to see and various types of interest you have to see. Calculate weighted average rate and then compare with actual rate. Compare with actual rate. So for various types of deposit rate as that, find out one weighted average rate and compare it with actual rate. Okay, and see what is the difference. Auditor can also compare the interest with previous years. Okay, and see deposits have increased by this much, approximately interest has increased by this much, then okay. Month wise also you can do interest. Oh, February month too much interest is coming. Oh, deposits have increased a lot. Understood, understood. Auditor can test check the interest. Okay, I hope you understood. Very simple. So first you have to see all deposits average interest rate is proper or not, then calculate weighted average rate, compare with actual rate, also compare with previous years to see. Month wise analysis also can be done. Auditor should test check. He will test check what interest is provided on all deposits or not. Interest rate are as per the regulations of RBI or not. In case of FD, interest rate is matching with FD certificate. Interest on saving account may be checked. Inter branch balances. Okay, if you have taken loan from branch, okay, or if they have taken the loan, interest is properly there. Interest on overdue or matured deposits is properly paid. So few things you have to check. Interest rate is as per RBI regulation. For saving account you need to check. Okay, inter branch balances, interest is properly paid or not if you have taken loan from these branches. Okay, overdue or matured deposit interest is paid. Okay, interest is as per the certificate of FD. Okay, very simple. We will check interest is provided on all deposits. Interest is as per the rate of RBI. Interest is as per the FD certificate. Interest on inter-branch balances is properly paid off. Okay, very simple. Interest on overdue or matured deposit is also paid. Operating expense, nothing to see. You can do month-wise analysis. You can compare with previous year. You can calculate several ratios to see if any adverse ratio is there. Auditor should see the internal control system to check nature, timing, and extent of further audit procedure. Auditor should see major trends in expenditure. Why this expenditure is so long? Okay, in March, huge expenses coming. What is the reason? Ask them. Expenses can be analyzed on month wise or year wise. Okay, with last year you can compare. Also compare. In case of major expenses, you can check voucher also and reasonableness of expense by comparing with previous year. Already told you. First, see internal control over expense. If that is strong, my further procedure will be very less. Month-wise expense I can see. I can compare with previous year. Major expense. See major trends of expense. For big expenses, I can also verify vouchers. In format of P&L of bank, there is no prior period item. Okay. But if needed, we can show it separately. In format of P&L, it doesn't provide for prior period item in current year P&L. Such disclosure should be done if needed. In bank, there is no format of prior period item. But if there is any prior period item, we have to show it separately. Too easy. Almost chapter is over. We are just finding out if any question is pending. This is pending. See, in carrying out audit of advances, auditors should obtain evidence about following. This is a nice question. This can also come. Auditors should examine efficiency of internal control over advances to determine. See, whenever they ask you internal control over advances, why I need to know internal control over advance? To determine nature, timing and extent of further audit procedure. If internal controls are strong, my checking would be less. Internal control are weak, checking would be more. Okay. What points in internal control? Advance is given after checking credit worthiness of borrower and sanction of appropriate authority. See, if we check credit worthiness and sanction is there, I will know that nothing wrong will happen. All the necessary documents are checked. Compliance with terms of sanction and use of funds. Sufficient margin is available by bank. Okay, they are not giving unlimited loan. Against margin only, they are giving the loan. Securities like share, debentures, if they've given, they are in the name of the bank. All securities requiring registered are registered in the name of bank. In case, okay, in case of pledge, if the goods are with the bank, we have to check the goods at regular interval, their condition is proper. If their value deteriorated and he is also not paying, you are gone. Drawing power should be updated based on value of securities hypothecated. So based on value of securities, DP will be updated based on stock statement, which I told you. Accounts should be within the drawing power and sanction limit. Understood? Simple. We will check internal control over advance to determine nature, timing and extent of further audit procedure. What do you check in internal control? Advance is given after credit worthiness of the borrower and appropriate authority. All necessary documents are there. Compliance are there with end use of the funds. Okay. Securities, if given to the bank, they are in the name of the bank. Okay. Or in case goods are in the possession of the bank, regular interval we need to check the goods. Drawing power is updated based on, okay, value of securities hypothecated. Account should be within drawing power and sanction limit. Over. Now this is there. Bank audit stages. Very simple. One time I will read, because this is nothing but repetition of all the chapters. It is just a repetition. Okay. Initial consideration. Whenever you do bank audit, these things you need to keep in mind. Okay. Initial consideration by statutory auditor. He has to declare his indebtedness, that is not indebted to the bank. Because if you are indebted, if you have to pay money to the bank or receive money from the bank, what will happen? You will become little biased. Okay. So you cannot do audit of those where you have purchased securities of the bank. Internal assignment by bank by statutory. You have not taken any internal audit. If you are internal auditor of that bank, you cannot take stat audit. Okay. Communicate with previous auditor that I am taking this assignment. You should have no objection. He is our fellow brother only. So initial consideration. Identifying and assessing risk of material misstatement, already studied. ROMM. Okay. IR into CR in chapter number 4 also studied, 3 also studied. Understand the bank and its environment, because based on environment only we will decide further audit procedure. All this is already learned. Understand the accounting process, understand the risk management process. Okay, how risks are identified by TCWG, how they monitor the risk, control activity, monitoring, etc. Discuss with engagement team how they are going to do. Then overall audit strategy, chapter 2. Overall audit plan is there. Materiality is calculated. Of course, all this is learned. We have to check going concern. Okay, see the fraud of money laundering is there. Specific risk, etc. I hope you are clear. Okay, stress testing we need to do in a bank. When there is too much load, we have to check how they will handle, whether systems can handle. Basel 3 framework and reliance. So this is nothing, you have to just read once. It is very easy. Entire process is there. Read once, it will be very easy. Initial consideration, ROMM you have to find, bank's accounting process, risk management, overall strategy, plan, chapter 2, strategy, plan, program. Okay, so materiality, then assess the risk, then respond to the risk. Very simple. I hope this chapter is super clear. We have tried our best to make you learn this chapter in the nicest possible way. At the same time, give you full clarity. If you like this video, do give a thumbs up. It will motivate us to make even better video. Put in a nice comment. Okay, if you can, it will motivate other students also. If you are new to this channel, do consider subscribing India's most positive YouTube channel, where we focus on only positive content. Good night. Bye-bye. Take care. Thank you so much. Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Today, we are going to revise chapter number 9, Audit of different types of entities in only English. Yes, guys, these are only English revision lectures. These are in no way substitute to the regular or fast track. Of course, you have to do them. After this, if you do, it will bring super confidence. Okay. This chapter, there are lots of entities, how to do audit of, okay, a cooperative society, government, club, cinema, okay, lot of things we are going to cover, okay, NGOs, okay, charitable institute, educational institute, every single thing we are going to cover in this chapter, okay. It's a little tricky chapter, but we'll of course make it super easy, super fun, super conceptual for you, that if you understand the crux of it, if you understand the real meaning of this chapter, let any entity come, it should be super easy for you. From where are you doing the revision, sir? We are doing it from this magic book. It's a 85-page book which covers entire syllabus in around 85 odd pages. If you wish, you can buy hard copy from website. Of course, we never keep soft copy because only hard copy brings hard result. So let the show begin. Let us start chapter number 9. Audit of different type of entity. Let us start. Okay. General things to be checked for all entity, okay, be it any entity. Remember, see, first few, okay, few or types of, for example, we are talking of educational institute, we are talking of hotel, we are talking of hospital, we are talking of clubs, we are talking of charitable organization, we are talking of NGO. In that entire discussion, we have to check 4 or 5 parts. Are you clear? We have to check 5 things. If you check 5 things, anything can be solved. So first 20 minutes of the chapter is important. No, it is very important. That will lay down the base of the chapter. Once that is clear, no, chapter will become very easy ball game for you. You will understand the entire chapter. Then we just need to understand the flow. Okay, so be it any entity, we have to check 5 things. Certain things in general, then we have to check receipt, then we have to check payment, then asset, then liability. So 5 things. Number 1, general, receipt, payment, asset, liability. How many things? 5 things. One last time. Number 1, general, receipt, payment, asset, liability. 5 things we have to check in everything. Okay, be it any organization, we have to check 5 things. If you understand this model, no, things will be very easy for you. How you know that we need to check 5? ICI module has given this. Basic structure is given by ICI module. Be it any entity, check 5 things. General, asset, liability, income, expense. General, asset, liability, receipt and expenditure. Understood? Yes, sir. In general, remember 5 points are there in general. For any entity, we have to check this 5 point. Number 1, obtain an understanding of legal status of the entity. Review the legal status of entity. Whether entity is sole proprietor, whether it is partnership, whether it is HUF, whether it is a company, whether it is a trust. Review the legal status of entity. Obtain and study their fundamental legal document. What is the fundamental legal document? For example, for proprietor, it can be shop act license. For partnership, it can be partnership deed. For trust, it can be trust deed. For HUF, it can be HUF deed. For cooperative society, different document. For company, AOA, MOA. Understood? Number 1, review fundamental legal status of entity. Obtain and study their fundamental legal document. Obtain understanding of internal control of entity. This is the most important thing. Why, sir? If internal controls are strong, okay, my reliance would be much higher. Okay, I will do less substantive. This is repeated from first chapter. But if internal controls are weak, I have to check in detail. Yes or no? Yes or no? Yes, sir. So third point is what? Obtain understanding of internal control system of the entity. Fourth, examine the powers of members of managing committee and other officer. Examine the powers of managing committee, members of managing committee and other officers, so we know what are their power. If the power is exceeded, we will report to the committee or to the board. Okay, we will know any decision taken by these members, is it authorized or not. So examine the powers of members of managing committee and board. Are you clear? Next, study the minutes of board meeting, managing committee or trustee meeting. Minutes of board meeting, governing body or managing committee. Why to study their minutes? To see all the major decisions taken. Okay. Second, who will operate the bank account? Third, how will the company function? What all big expenditure are sanctioned this year? Okay, so this all is necessary. This 5 points, if you understand, general is over. Remember, for every entity, we need to check 5 things. Number one, general. In general, 5 points are there. If you understand this 5, general is sorted. See, this is a long chapter. We need to understand the trend in the chapter. We need to understand the format of chapter. Fully understood, sir. Number one, obtain understanding of legal status of the entity. Okay, obtain and study their fundamental legal document. Okay, third, examine the internal control system of the entity. Third, fourth, okay, examine the powers of members of managing committee or board. Okay, fourth, examine the minutes of board meeting or management committee meeting. Okay, examine the minutes of board meeting or governing body or managing committee meeting. And last, examine accounting policies followed and accounting records maintained. Examine accounting policies followed and accounting records maintained. If you understand this 5 point, half things are sorted. Then what is written? Check receipts. Receipt, I will tell you what to check. Then check what expenditure like staff, payment, capital expenditure, asset liability. Very simple. Okay. Check receipt, check payment, asset liability. Receipt, payment, asset liability. I hope you are able to understand. You have to remember only 5 points. Don't focus too much, otherwise you will be fully confused. Okay. 5. Try. Number one, obtain understanding of legal status of entity. Obtain and study their fundamental legal documents. So these 2 points are over, fully over, sir. Understood? Now come here. Next 4. Review internal control system of the entity. Are you clear? What is the internal control system? This is also over. Examine the powers of members of managing committee or board. Examine the powers of management committee or board. Examine the board minutes of the board meeting or management committee meeting. Board meeting or management committee or governing. Examine the accounting policy followed and accounting records maintained. Very simple. I hope you are able to understand. Okay. So 5 points, if everyone has understood, then we can go ahead 5-6 points, because these are the basic points. Once this is clear, chapter will become super simple. Can we again start? Yes, sir. Why not? Number one, obtain understanding of legal status of the entity. Obtain and study the fundamental legal document. Okay, third, examine the internal control system of the entity. Examine the powers of members of managing committee or board. Examine the minutes of board meeting or management committee meeting or governing body meeting. And last, examine the accounting policies followed and accounting records maintained. Accounting policies followed and accounting records maintained. Then receipt, expenditure, asset liability. I hope general is clear. One last small break, 10 seconds. First 2 points you know. So read these 4 points. Clear? Chalo, start. 1, 2, 3, start. What is the first point? Okay. Obtain understanding of legal status of entity. Obtain and study their fundamental legal document. Examine the internal control system of the entity. Okay. Fourth point is what? Obtain understanding of fundamental legal. Okay. No. Internal control. Examine the powers of management committee or examine the powers of board members or management committee member, etc. Examine the minutes of board meeting, management committee meeting or governing body. Examine the accounting policies followed and accounting records maintained. Then check receipt, check expenditure, verification of asset and liability. Understood? Okay. So in every entity we have to check 5 things: general, income, expenditure, asset, liability. General, receipt, payment, asset, liability. General, receipt, payment, asset, liability. In some even less can be given, but maximum 5 things are there. So if you understand the format, they will ask anything, you can easily write. Let's start now. First, educational institution. What shall I explain? Any education institution. In that, what is there in general? Now we have to see, they have given only 2 points. We know 5 points. Good. If you don't remember anything, you can write our 5 points. If you remember, try to write this. Examine the trust deed or regulation in case of school and all provision affecting accounts. Examine the trust deed and see everything which affects the account. Why do we need to see trust deed? To see who will operate the bank account, what major expenditure are sanctioned, okay, what is the power of each member of managing committee. Okay, next, read the minutes of meeting of managing committee or governing body regarding operation of bank account, sanction of the major expenditure. Okay, who will sanction major expenditure, who will sign on the check, everything will be written in minutes of the meeting. Are you clear? So see, trust deed and minutes of meeting, this you already know. Receipt, remember which is the biggest receipt for them? School fees. Are you clear? Education institute, school fees, fees from student. Okay, check in the fee register and compare the same with attendance register. Check the fee register, compare with attendance register. In attendance some students are coming but their name is not in fee register. We have to ask them, sir, what is this, why the name is not in fee register? Then they will say these are concession students. See, if concession students are there, scholarship students are there, they are approved under proper authority only. Okay, next, okay, compare, check the fee in the cash book with counterfoils of receipt issued. Check the entry in cash book with counterfoil of receipt. Let me explain this point also. Whenever you make entry in cash book or whenever someone will deposit cash, you give one part of receipt to him and another xerox you keep. If you don't understand, I will tell you, as soon as you pay the fee, what will happen? They'll give you one part and one part they will keep. So that is counterfoil. Counterfoil means xerox of the receipt. So compare entries in cash book with xerox of the receipt kept. Okay, that is counterfoil. Again and again it will come. Fees paid in advance are correctly adjusted. Okay, if fees are pending, appropriate steps are taken for recovery of the fees. Okay, arrears that are irrecoverable are sanctioned, are written off with the sanction of appropriate authority. Admission fees are there. Many times in school, what fees are there? Admission fees are there. If you don't understand, let me explain. As soon as you deposit school fees, certain portion of that is what? It is not school fees, but these are liability. They are kept as deposit by the school. Okay, whenever you take admission, you know this. Are you clear? That is main school fee and advance fees. So those admission fees are credited to capital fund. Why the hell capital fund, sir? I am not able to understand. Reason is very simple. These are not school fees. Understand? These are not school fees. These are another fees. Okay. These are used for future purpose or not for future purpose, but this will be refunded later. So it is a capital fund. Admission fees are credited to capital fund. In all school it happens. Free student scholarship is done by fines or late payments are received. Hostel dues are cleared before they leave. Remember, hostel dues should be clear. Old heavy arrears are reported to management committee. Now, this is clear, very simple. Tell me in student fees, 5-6 points, you can easily write yes or no. Number one, see whether fees are charged from all the students. Confirm with the fee register with what? Attendance register to see that name of all students are included. In case any name are not included, they are scholarship student or discount student. The same is sanctioned or approved by appropriate authority. Okay, confirm that arrears of fees are written off by appropriate authority or approved by appropriate authority. Whenever student leaves, confirm his hostel dues are clear. Okay, next, admission fees are not taken to revenue. Admission fees had to be refunded, so they are to be taken to capital fund. Fees paid in advance are appropriately carried forward. Fines or late payments are properly received and entry is shown. Heavy arrears you have to report to managing committee. Clear? 100% clear? 100% yes, sir. Now, see, exact you cannot learn this chapter, but briefly if you have understood, our purpose is served. Okay, sir. Next, grade. Next is grade. GRID. Remember now, for everyone, one main thing should be there in receipt. If after that general points are there, same for all. So one main thing after that, if you don't remember, general points are same for all. We have made memory technique for their grade. What is G? Okay, government grant. What is R? Rent. What is I? Interest. What is D? Dividend, dividend and donation. Dividend and donation. Very simple. I will again tell you. What is G? Grant. What is R? Rent. What is I? Interest. What is D? Donation and dividend. Donation and dividend. Very simple. One last time. Grid full form you have to remember. What is G? Grant. What is R? Rent. What is I? Interest. What is the dividend and donation? Dividend and donation. Now let me speak. Grant. If grant are received, see whether it is used for the same purpose for which it is received. If government grants are there, see provision of AS12 is fulfilled. Understood? Very simple. If grant are for general purpose, see whether they are used for general purpose. If they are specific purpose grant, see they are used for specific purpose. If grant was given for school ground, see it is used for school ground only. Rent. See whether adequate rent has been received. Trace it with rent agreement. Okay. See, compare the rent agreement with what? passbook, okay, and see rent is properly received. What shall I explain in this? Okay, I, tell me I is for what? Interest. See, interest is properly received on the fixed deposit. See, interest is received on all the investments which are done. Compare with the investment register and see interest is received appropriately on all the investment made. So simple. What is the dividend? See, the dividend is appropriately credited, okay, and all the income of dividend has been correctly booked, okay. Then one more is that donation. If donations are given, if they are for specific purpose, see, the donation is used for same purpose. Grade, general points. What is the government grant? What is our rent? What is our interest? What is the dividend and donation? Let us read. Verify rental income with rent agreement. What shall I explain? Verify interest and dividend income from investment. Also inspect securities of investment held. So whatever investment are there, all the investment, either interest is received, dividend is received. Interest. So if it is fixed deposit, interest. If it is what? Shares, dividend. Verify any government or local authority grant, and if any expense is disallowed under the grant, they are told don't use for this purpose, whether you have used for same purpose. Whether donations are received, if any donation are for specific purpose, they are used for that purpose only. Grade, don't forget formula. See, one main thing, educational institution, remember one main thing, fees, okay, write 5 points, then grade will come. What is G? G is for government grant. R, rent. I, interest. D, donation, dividend. Donation, dividend. Now you can write on your own. You are that much intelligent at least. Okay. Liability, very simple. Caution money and deposit money is shown as liability in the balance sheet. I hope you are clear. Caution money and deposit money is shown as liability in the balance sheet. Clear? Yes, sir. So deposit money is shown as liability and not taken to revenue. Very simple. Payment. In payment, remember, see, 2-3 things I will tell you. All the payment are done, okay, with proper authority. In case increments are done, they are authorized by managing committee. Okay. Third, any capital expenditure is incurred, it is sanctioned by appropriate authority. Okay. All the establishment expenses like staff salary, okay, telephone expense, printing expense are properly authorized. Okay. Any heavy expenditure is there, it is sanctioned. Simple points. Let's read. Verify all the PF money has been invested in appropriate security. PF is deducted, it is invested. All the capital expenditure are sanctioned with appropriate committee. Establishment expense like telephone, printing, stationery. Inquire into what expenditure? Heavy expenditure. If the expenditure is more than budgeted, see, it is sanctioned by managing committee. Expenditure is more than budgeted, it is sanctioned by managing committee. Increase in the salary of staff has been sanctioned and minuted by the committee. Increase in the salary of staff has been sanctioned. Very simple. Expenditure is as per the sanction. All money deposited. Capital expenditure is proper, etc. Assets. Ascertain. System ordering, provision, food stuff, clothing is proper. Whenever you order any food stuff, if you are giving lunch or dinner in the school, okay, food stuff, uniform clothing is there, okay, provisions are there, okay, you many times you order racket, bat, etc. There is a proper system regarding this. Work of one is reviewed by another. Proper inventory, verify the inventory. Lot of inventory is there in school. Clothing, books, provision, equipment. Verify, do physical verification and compare with the actual records. Okay, compare, do physical verification and compare with the books to see proper is there, or if any adjustment is required, it is appropriately adjusted. Simple. Over. Educational institute is over. First one took time, now it will be done in rapid fire way. I hope you are understood briefly. Okay, so in every we have to check how many things. 5. General, receipt, payment, asset, liability. Now let's come to second. Very simple is next one. Hotel. Before I start, you have to take 10 seconds. What is there in a hotel? Just visualize. Done. Okay. So hotels, you have just visualized hotel. Now it will be very simple. Nothing great will be there. Number one, internal control. In this general, only one point is given. There are total 5 points. They have given only one. Internal control. Pilferage is the biggest problem in a hotel. So there should be strong control. See, hotel business, there is a lot of food stuff. So many maids at the time of going will do what? Little pilferage they will do. So you have to take care. In hotel, pilferage is the biggest thing. Pilferage means small theft they will do. Okay, take sometime curd, take bread sometimes, take wine sometimes. So proper control should be there. Now receipt. Tell me, for hotel, which is the biggest receipt? Very simple it is. Remember room sales. Are you clear? Hotel booking and restaurant is the two big thing. So if you understand room sale and restaurant booking and commission of travel agent, hotel is sorted. You don't have to take load. Let me tell you, room sales. See that entry for room sale. See the rate of room sale is correctly put by receptionist. But in case of big hotel, there is no receptionist. There is night auditor. In case of Taj Hotel, Oberoi Hotel, okay, 5-star hotel, there is no receptionist. Rates are put by night auditor. Auditor means a person who will put the rate in the bill. So there is no fraud. So number one. See, the rates in the invoice are put by proper authority, are matching with the rates in the system. Second, if the rates are put by night auditor in case of big hotel, it is appropriately put. See, the number of guests are correctly charged with entry register. In entry register, it is written 4 people are there, but in invoice only 3 are written. Why? You told them I will prepare invoice for 3, but one extra person you pay me, okay, extra person charge 1200, you pay me 600, 600 keep in pocket, too much fun. Are you clear? So 600 only they are paying and you are keeping that in your pocket. Okay, see, in the invoice number of guests are matching with entry register. Any difference between actual rate and standard rate should be properly authorized. We are charging less rate from someone. Ask the reason. In many hotel, housekeeper prepares daily occupancy report. Okay, now see how, if that, see with the entry for few days you have to see in the entry it is given 8 rooms were occupied. So in daily occupancy report 8 is written or less is written. Okay, why? Based on daily occupancy report multiply by average room rent, also you can calculate total sale. If you don't know, occupancy rate multiplied by average room rate, you can predict the sales. Okay, to see that average occupancy report is proper, daily occupancy report is proper records are maintained for booking of hall and other premises. Okay, and their money is recovered properly. Very simple. Room sales is very simple. See, the rate of room sales is properly put by authorized person or night auditor in case of big hotel. Okay, compare the number of guests in the bill with the entry register. Third, any difference between actual and standard rate should be investigated. In many hotel, housekeeper picks daily occupancy report. Compare with the register and see daily occupancy report is correct or not. Proper records are maintained for booking of hall and other premise and for special parties, and money is recovered as per the tariff. Restaurant bill. Compare restaurant bill with kitchen order ticket. These days in big restaurant, what is there? There is no waiter who comes for order. Okay, you have to place the order in tablet. So in tablet, as soon as you place the order, or even if waiter comes, there is a kitchen order ticket generated. In kitchen order ticket, it is written that customer needs 8 items: one paneer masala, one roti, one papad. Understood? Okay, kitchen order ticket. Compare restaurant bill with kitchen order ticket to see all the items are properly charged or no fraud is done. Are you clear? Taxes received are paid to government authority. Travel agent. These days, lot of booking takes place from Make My Trip. Go IBO. Now, what happens? You are paying to Make My Trip 100 rupees. Make My Trip will not pay full portion to the hotel. 30% is deducted. So, you are paying 100, 30% minus. Hotel will receive how much? 70 rupees. So, see the agreement with all the travel agent. Check their commission and see money is appropriately received from travel agents. Payment. So very clear, 3 things are there: room sales, okay, restaurant bill, room sales, restaurant bill, and travel agent. Payment. Cost of minor repair and redecoration is a revenue expenditure. Okay, minor repairs is revenue. Cost of any major expenditure done in hotel should be capitalized. Okay. Casual labor. Hotel depends a lot on casual labor. If there is a wedding, we will not keep 100 people in the hotel. Remember, it is wrong. What do we do at the time of wedding, sir? At the time of wedding, we take lot of casual labor. Mr. X come, Mr. Y come, Mr. P come, Mr. Q come. Are you clear? Lot of casual labor you hire. See, there is a proper system for casual labor. Entry is properly made. Otherwise, what will happen? We will tell that we hired 100 people. Actually, we hired 80 only, and 20 manager put in the pocket. Commission should be, see, commission should be paid to travel agent. You were saying the travel agent will pay us. Many times it is paid hotel also. Okay, pay at hotel. So he will come to your hotel and pay you 100 rupees. Now out of that 100 you have to give 20 to the agent. Okay, so this is also commission paid to travel agent is proper. Okay, so now whenever payment has to be made, assets are there. So nothing great is there here. Casual labor, minor repair, etc. Asset. See, inventories like silver, cutlery are. See, many hotel they give you in what proper silver plate. You have to have the food. So now that plate is usually inventory or shall it be capitalized? If the plate is very expensive and life of the plate is more, it can even be capitalized. Otherwise, we charge to inventory only. So that depends on accounting treatment by the hotel, whether silver, cutlery, plate are capitalized or charged to P&L, and nature of the treatment followed by client. Are you clear? Yes, sir. Nothing great. Over. Got over also. Array, hotel over. In general, nothing is there. Receipt to you understood. Payment asset. No liability is there. They have not given liability in hotel. Wow. So easy. Yeah. Come to hospital now. Okay. In hospital, what is there? Main thing is only one thing. Patient bill. Okay. See the patient bill and compare with what? Patient bill you have to compare with register. Patient bill compare with the register and see that patient are correctly charged. Also, bill is issued to all the patient from whom amount is recoverable. Check the cash collection in cash book and compare it with counterfoils of receipt issued. Understood? Yes. Now same grid is there. GRID. See, first patient you understood. About register of patient with the bill issued to them. In register of patient, 12 patient are there, but bill is given to 8. Why you have not given to 4? Okay. Second, see that see that all the amount is recoverable from the patient is properly recovered before he discharged. Check the entries in cash book with counterfoil of receipt. This to you understood. Now same grid is there. Tell me full form of grid. What is G? Says G is what? Grant. R is what? Rent. I is what? Interest. D, dividend donation. See investment register to see all interest income from interest, income, dividend, rent is collected. Trash all the subscription and donations from cash book. Reconcile the subscription due. Donation received for specific purpose are used for that purpose. Grant received from government are duly accounted for as per AS12. Same thing. So easy it became. Grid payment. Vouch all the purchase and expense. Verify capital expenditure is there. You have purchased the ICU, okay? You have purchased the COVID machine. You have purchased some heartbeat ECG machine. Verify all the capital expenditure is sanctioned by the trustee or managing committee. Increment to staff is duly authorized. Check the amount of expenditure and compare with budgeted expenditure. If there is significant variance, you have to report to managing committee. Asset is very simple. See, depreciation is charged on all the asset. Inspect bonds, shares, credits, okay, and compare it with investment register. Check all the shares, credit, bond, debenture, and compare it with investment register and see any investments are not left out. Obtain inventory, especially stores and stock in case of hospital, and do physical verification of the inventory and compare with the respective ledger balance whether physical verification is matching with balance. If not, appropriate adjustment. In hotel, in hospital, lot of inventory will come, lot of utensils will come, lot of clothing will come, lot of chappals may come, lot of other things may come, syringes may come. Okay, examine internal check means work of one is reviewed by another. Regarding receipt and issue of stores, linen means bed sheet, apparatus means those utensils etc for urine etc, clothing, instrument, they are properly recorded in inventory register. All the utensils, the linen, clothing, okay, apparatus are properly recorded in the inventory register. Nothing great. Here what was given? Receipt, payment, asset. Receipt, payment, asset. I hope you are getting it. It is too easy. If you don't understand general, you have to understand one thing and then entire flow. Okay, sir. But if you don't read, it is going to be havoc for you this chapter. If you read, it will become very easy. Tell me, are you little more confident now? Yes, sir, much more confident. Okay, but remember, these lectures are in no way substitute to the regular or fast track. They are needed. Till now, we have done education institution, hotel, hospital. Moving on. Moving on. Hey, moving on. Hey, moving on. We are going to club now. Yeah, club. I will do party in club. Okay, do. Okay. Club. Club means what? In Ahmedabad, we have Rajpath Club. Okay, we have what? Rajpath. We have another club also. YMCA Club. Rajpath Club is there. YMCA Club is there. Karnavati Club is there. Club is not the place. Dancing Club is not there. Oh, Bargal will come. No, 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 no. Not that. Clubs are there where you go for recreational activity, you go for gym, you go for swimming, you go for wine. Okay. You go out with friends, hang out. That club we are talking about. Okay. So in club, mainly what is there? Subscription fees are there. Okay. Entry fees are there in club. For member, less fee. For guest, more fee will be there. Okay. If you use any utensil, okay, if you use any facility, account of the member is appropriately debited. All such things you understand, right? But in club, main thing, wine is there. Okay, people will order wine. See, appropriate money is charged. Proper gross profit is earned. Are you clear? Basic things I told you. Let's see in detail. General, only one point. See, financial powers of secretary, and if they are exceeded, report to managing committee. Secretary misusing his power, bringing his friends, okay, sanctioning unauthorized expenditure, report to committee. Receipt. Entrance fee. Vouch entrance fee with members register and counterfoil issued to them. Whatever entrance fee are there, same is debited to members register or counterfoil of receipt issued to them. Subscription. Very simple. Vouch proper subscription has been received. Verify total subscription with subscription received, subscription due. So subscription is 100, okay, due is 40, then received should be 60. Are you clear? See, if last year arrears are there, they are correctly brought forward to current year and recovered. See, if subscription is received in advance, it is properly adjusted. Okay. See, if subscription is not received, appropriate steps are taken for recovery of subscription. If any subscription is written off, it is written off under sanction of appropriate authority. Simple points. I have not read. I am just telling you like that. Trace receipt with register of member. Reconcile total subscription with subscription due and outstanding. Arrears are correctly brought forward. Arrears are adjusted of current year. Amount considered irrecoverable is written off. Are you clear? What shall I explain? Simple it is. Food item and amenities. Verify proper internal check is there. When a food item comes, there is a proper entry. Whenever it is taken out, there is a proper entry. In English, we call it internal check. Whenever wine bottle comes, there is an entry. Whenever wine bottle is served, there is an entry. Only then check will happen. Otherwise, someone will take wine bottles free of cost. Then club will be in huge loss. Okay? Yes. Verify internal check. Members are charged for food item, drinks provided, billiard service, tennis service. See debits in the members register. See, every member account is separate, club account is separate. See debit in the members account. Okay. Payment for sports item is properly done. Any capital expenditure is done. It is done with proper authority. Verify the purchase is done of what? Food items, okay? Wine, cigar. Are you clear? And see, appropriate gross margin is earned on them. So you have to maintain for food items separate account. Appropriate margin is earned. Otherwise, what will happen? Okay, some wines will be issued free of cost. Some food items free of cost. Club will be in huge loss. Unsold goods are in inventory. For assets, nothing is there. Physical verification of inventory. Compare with the register of the inventory to see if they are matching. If not matching, do adjustment. Very simple. So in club, entrance fee, subscription. Entrance fee, subscription. Then food item. Entrance fee, subscription, food item. Payment, asset, liability. I hope you are clear. Fully clear. Fully super duper clear. Don't worry at all, sir. Now, charitable organization. Remember, charitable organization and NGO are exactly same. After that, we will shift to something else you will enjoy. Are you clear? Let's finish two. Charitable and NGO is over. Okay, all the basic are over. Are you clear? Then something new is there. You will surely enjoy. Can we start? If you are ready only, then we will start. Don't get bored. Okay, till the time we have to live, there is a struggle in life. So enjoy charitable trust. Remember, charitable trust only has one thing. Okay, it is set for education, religious, or any other purpose. If you are sleeping, get up, get up. Okay, charitable trust. Education, religious. Bal Mission Trust. Remember, Bal Mission is what? It is Bal means child. It is for child welfare. So it should be used, the funds of the trust should be used for same purpose and not other purpose. Are you clear? Trust. Study the constitution under which it is set up. Examine the trust deed as laid down. Verify whether the trust is functioning as per the system given. Examine the system of internal check. Verify in detail income and amount is deposited to bank regularly. Are you clear? General points are simple. Subscription and donation. Ascertain changes in annual life membership fee. Whether official receipts are issued. In trust, this is the big problem. Okay. Charitable trust. What is the biggest problem? Charitable institute. Okay. Remember, whenever we give donation to them, it is exempt from income tax. So many trusts do what? Okay, you are giving 100 rupees to them, they will pay you 95. Okay, why the hell are you giving them 100? Why they are paying you 95? Remember, it is basically a fraud. You are not giving money for welfare of trust, you are giving for deduction in income tax. And they will show what? Entry in the trust, but that money doesn't go anywhere, it goes to founder of trust and they are doing fraud. So you will pay them 100 rupees, they will pay you in cash 95 rupees. Simple. 5 rupees went to their pocket, they will show the entry in trust, but they will do no child welfare. Nothing will happen and you will get benefit in income tax. Too much fun, 50% benefit, 100% sometimes. Enjoy. This is how life works. Confirm control over unused receipts. Unused receipts are properly kept. See interest, receipts are issued, funds are used for same purpose. Okay, unused receipts are kept under proper authority. Otherwise, someone will issue the receipt and do the fraud. Okay, see the counterfoil of receipt issued with cash book. See entries made in cash book. See where the funds are used from cash book. Verify total subscription and donation. Examine system of internal check regarding flag days are there, box collection day is there. Grant. Then to very simple. GRID. Tell me grade full form. Grant, rent, interest, dividend, deposit. Grant, rent, interest, dividend, deposit. This is so too simple. Verify the amount received with minutes book. Obtain certificate from the official showing amount of grant. Interest income. Check calculation of interest. Calculation of interest, see whether it is ex dividend cum dividend. What is ex dividend? Okay, excluding dividend. What is cum dividend? Including dividend. So if you purchase after record date, okay, after record date means, see, whoever is member on record date will receive dividend. So if you purchase after record date, it is ex dividend. Ex dividend means you will not receive dividend, excluding dividend. Okay, if you purchase before record date, okay, price will be little more because you are going to receive dividend, cum dividend. So see, investments are ex dividend or cum dividend. Schedule of investment. Rent with counterfoil of received rent agreement. Special function like drama, concert is there, etc. Vouch refund of income tax. If for TDS is deducted for trust, they are exempt from tax. So refund is appropriately obtained. If they purchase anything and TDS is deducted, okay, then they have received the refund of the same. Payment of grant and trust is made under trust. Verify cash and bank payment. Assets. Verify schedule of movable and immovable properties and do physical verification of fixed asset as well as inventory and compare with the records to see it is proper. If not proper, appropriate adjustment is made. Nothing great. Exactly same. Exactly. Control C, Control V is NGO. Shall we read once? Yes, sir. After NGO, we will try to shift the chapter in another direction and you will love it. Okay. NGO. What is NGO? Non-governmental organization. NPO, you have non-profit also. Non-profit organization. Being human is there. CRY is there. CRY is child relief and you. Vidya is there for education. So NGO and charitable trust is used for what? Okay. In this, lot of money is received and they use for particular purpose. NGO is also for particular purpose, but both are different. Non-governmental organization, non-profit organization. Few examples I took: being human, child relief and you cry is there. Vidya is for education. In general, NGO. If you don't remember anything, tell me 5 points. You remember 5 or forgot? Obtain understanding of fundamental legal status of the entity. Obtain and study their fundamental legal document. What is the third point? Examine the internal control system of the NGO. Okay, what is the fourth point? Examine the powers of board member or managing committee member. Examine the minutes of board meeting or managing committee meeting to see all the appropriate decisions or major decisions taken. Same, study the accounting system and accounting records maintained. See, same. Knowledge of NGO mission, all statute, legal form, NGO chart, okay, examination of minutes of board or managing committee, study the accounting system and accounting control. This is new. Setting materiality level. For NGO also materiality is must. Above that we will audit, below that we will not audit. Nature and timing of report, involvement of expert, review of previous year's report. Receipt, very simple. Same thing is there, then I will not teach. Grant for project. Okay, if money is given for specific project, you have to use it for that project. Okay, if it is given for only children's education, you have to use it for that. agreement with the donor, and grant letters are there to ensure funds are used for that purpose and properly accounted. Fundraising program. Many times, being human will do what? Fashion show. Okay, Jacqueline will come. Okay, Salman friend Shahrukh will come. All other friends, Arbaz will come. Malaika will come. Okay, all these people will come. Fundraising program. So see that receipts of fundraising program are properly accounted and they are used for NGO and not personal purpose. Are you clear? Internal controls are there for collection of funds and collection is appropriately shown in the bank also. Fees received from membership register. Ensure proper classification is made between entrance fee, life membership fee, and annual fee. See, entrance fee is going into the NGO. Okay, annual fees are there, life membership fees are there. All three are different. Why? Annual fees is revenue, but life membership fees is capital, credited to capital account. Reconcile fees received with fees due and how much, total fees with fees due and how much received. Subscription is proper, interest and dividend. Understood? Okay. Program and project expense. Verify agreement with donor, okay, who has given the fund for particular project. It is used for same project. In case project involve contract, okay, ensure income taxes did. See, many times you are making the payment, okay, income tax they will deduct. Okay, now you have to apply for refund because for NGO taxes refund. Establishment expense like PF, ESIC are properly deposited. Postage stationery. Check requirement for earmarked funds. If your earmarked funds are there, they are used for same purpose. Fixed asset. Vouch all the acquisition or disposition of fixed asset. Check donors agreement for immovable property. Check investment register whether the investments are in the name of NGO, whether appropriate dividend is received or interest is received on the investment. Verify the cash in hand at the close and whether it tallies with books of accounts. Verify the bank balance. Okay, verify inventory in hand and do physical verification and see physical verification and actual inventory are matching. Liability, very important. Corpus funds. Many times two funds are there for specific purpose and corpus. Corpus is what? Total funds of the NGO. It can be used for future project. So if nothing is given, these funds will go to corpus fund. Contribution or grant in the nature of corpus fund should be vouched with letter from donor. From donor, letter will be there. Should be used for specific purpose or transferred to corpus fund. If they have told transferred to corpus fund, then vouch the agreement from the donor. Then the donor is returned, send it to corpus fund. Vouch transfers from project program with donor letter and board resolution of the NGO. Simple. Vouch transfers from program with donor letter and board resolution of NGO. So if donor letter is there, then it should be transferred to reserves when they are appropriately transferred. Very, very simple. I hope you understood. Nothing great is there. Very, very easy. NGO is also over. With this, how many are over roughly? Okay. Number one, educational institute, hotel, hospital, club, charitable organization, similar nature was NGO. Okay, now we are moving a little, okay, discussing something good, something different. Okay, in that these five parts are not there, it is little different. So three organizations now we will take which are little different, important also. So stay very attentive. Are you ready? Yes sir. Cooperative society. Remember, I will talk about cooperative society 1 minute only, then start this. Cooperative society is two part: single state cooperative society, multi-state cooperative society. Whose objectives or business is limited to one state is known as single state. Whose objectives are not confined to one state but they operate in multiple states are known as multi-state cooperative society. This much understood? 125% understood. If their objectives are confined to one state, single state. If their objectives are confined to multiple state, they are multi-state. Understood? 129% understood. 129, yes. Second, let me tell you, see, cooperative society, there is one important thing: for the member, by the member, of the member. Their main aim is not to earn profit but welfare of the member. See, if alone I will go and sell my milk, see, cooperative societies are usually formed for milk, housing, farming. Three things are there: milk, housing, farming, or any other such purpose. Best example of cooperative society is Amul Doodh Peeta Hai India. Amul is multi-state, it operates in multiple states. But there is Sumul, it operates in Rajasthan only. Saras Cooperative Society in Rajasthan only. So remember, single state is what? One state. Okay. Sumul, I think, is not in Rajasthan. Saras is in Rajasthan. Saras Cooperative Society operates only in Rajasthan. Are you clear? Any other cooperative society you know? Write in comment. No, please write. Okay. So cooperative one. Their main aim is not earn profit but increase the bargaining power. If I alone will go to sell the milk, what will another person, corporate entity tell? Oh, we will pay very less for the milk. But now, if I give them tremendous power, we all farmer go together. Our bargaining power will increase or decrease? Increase a lot. If I want to purchase also something, I need some raw material. If I go alone, no discount will be there. But if we go together, our buying power is more. Discount will be available. So I hope you understood. Cooperative society has basically 4 to 5 objectives. Number one, their main objective is for the member, by the member, of the member, and not personal profiteering of members. Okay, their another aim is, okay, middlemen should be removed. Directly we want to connect to consumer, so we can give them goods at nominal prices, at the same time earn little profit also. See, I'll tell you first principles of cooperative society here. Check whether objectives of cooperative society are achieved. Objectives are what? Not earn profit but welfare of member. Expenses should be incurred economically. There is no wastage of fund. Middlemen or commission are removed so we can directly sell to consumer. Are you clear? Check whether objectives of cooperative society are achieved not in terms of profit but in terms of welfare of member. Okay, there should be no middlemen. Expenses are incurred economically and we are able to give the goods to customer at lowest price. There is no wastage also. Understood? Now, if you have understood this much, things will be very, very easy. So, cooperative society is for the member, by the member, of the member. Okay. If the objectives are limited to one state, single state. If cooperative society works in multiple states, it is known as multi-state cooperative society. In any cooperative society, as we discussed, main aim is not earn profit, but for the member, by the member, of the member. Remember, now, there is one person who manages cooperative society. He is known as registrar. Tell me, what is his name? Registrar. Sir, one more time tell no. Registrar. Registrar for Gujarat is Mr. Shah. Are you clear? So we will take again and again example of Mr. Shah. So for Rajasthan, it can be different registrar. For Kolkata, different registrar. For Tamil Nadu, different registrar. For Chhattisgarh, different registrar. Every state has different registrar. Okay, registrar is who, sir? Registrar is a person. He is a friend, philosopher, guide of cooperative society. In case cooperative society has any problem, any member is doing anything wrong, we will go to Mr. Shah. Are you clear? Mr. Shah is the registrar. Now, first we are discussing single state cooperative society, then we'll go to multi. In multi-state, so they have to coordinate with all registrar. No, 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 no. There is central registrar. In case of multi-state cooperative society, there is central registrar. Oh, understood. Very good, very good. Yes, sir. Start. Now it will be very simple. If you understood this 5 minutes, no, gone. Easy. Number one, as per section 17. For single state cooperative society, registrar shall audit or he shall appoint any person authorized to act on behalf of registrar. Who will audit cooperative society? Either registrar will audit or he will appoint any person authorized to act on behalf of registrar. Who can do audit of single state cooperative society? CA. Person holding diploma in cooperative department of government, in cooperative accounts. Person holding diploma in cooperative accounts or auditor in cooperative department of government. Learn nicely. Who can do audit of single state cooperative society? CA, you and me. Okay. Person holding diploma in cooperative accounts or person working in cooperative department of government. Are you clear? Auditor in cooperative department of government. One last time, who can do audit? Please tell me, no, who can do audit? CA can do. Yes, sir. If CA is not there, who can do? Okay. Second person who is responsible for doing the audit is, okay, person holding diploma in cooperative accounts, diploma, or auditor working in cooperative department of government. Very simple. Break of 3 seconds. Over. Who will do audit? CA. Person working in cooperative department of government. Last point. Okay. Person holding diploma in cooperative accounts. Last point, auditor in cooperative department of government. Auditor concerns. We have to check these things. Restrictions on shareholding. No member can hold more than 20% of the total shares. Why? Why you cannot? Maximum 20% or 1,000, whichever is higher. Are you clear? Whichever is lower, sorry. Maximum 20% share or max value 1,000, whichever is lower. So why you cannot hold more than 20%? See, then bargaining power will not be there. You alone will dominate. Cooperative society is for the member, by the member, of the member, or 1000 maximum, or max value 1000. 1000 is to too less. Cooperative society shares are of 1 rupee, 10 rupee. Are you clear? So this 1000 is too much actually. So number one, how much shares I can hold? Maximum 20% or 10,000, whichever is lower. Loan, I can't give loan to any member. I can only give loan to cooperative society. Are you members? Okay. I can't give loan to anyone. I can only give to members. Okay. I can give to any other cooperative society if registrar permits. Can cooperative society give loan to all? No. They can give loan only to member or to any other cooperative society. But that is required with the permission of registrar, Mr. Shah. Okay. State government may put further restriction. Can I borrow money from anyone? No. I can borrow money only from members subject to restrictions and bylaws of society. May accept loan and deposit from member subject to restrictions and bylaws of society. If bylaws means rules of society allow, only then. Very important. Appropriation of profit. Okay. Now remember, when whatever profit I earn, 25% of that should be transferred to reserve fund. For single state cooperative society, whatever profit it earns, 25% of profit should be transferred to reserve fund before payment of dividend or bonus to the member. So before paying dividend or bonus, 25% has to be transferred to reserve fund. We can reduce the percentage but not below 10%. If we want to reduce also, we need to take permission of Mr. Shah. Are you clear? One more time. Whatever profit I earn, 25% transfer to reserve fund. I can reduce but not less than 10%. But when I reduce also, I need permission of registrar. Okay. This transfer should be before distribution of dividend or bonus to the member. Okay. Now, whatever fund is left, 100 was there, I transferred 25, 75 is left. Again 10% has to be transferred for charitable purpose. 10% has to be transferred for charitable purpose. We can transfer amount not exceeding 10% for charitable purpose. After that, whatever is left will be given as dividend or interest to dividend or bonus to member. Contribution to education fund is there, but education fund is not appropriation of profit. It is charge against profit. Let me explain. So, education fund is not transfer from profit. Before calculating profit only, it has to be deducted. Contribution to education fund is charge on profit and not appropriation. Appropriation means out of profit you are distributing. But this is before calculating profit only we need to do it. I hope you are clear. According to certain act, transfer to dividend equalization reserve and share capital reserve fund is also charge against profit. So many states say dividend equalization reserve or share capital redemption fund is also charge against profit, and many say it is appropriation of profit. So depends. Dividend equalization reserve, share capital redemption fund. Clear? Simplify. Forget that last point. Simplify here. Whatever profit I earn, 25% has to be transferred to reserve fund. I can reduce percentage, not below 10. After that, whatever is left, up to 10% can be transferred to charitable purpose. Up to 10% has to be transferred to charitable purpose. After that, whatever is left, okay, I can do other things, dividend or bonus to the member. Remember, contribution to education fund is charge against profit and not appropriation of profit. Simple. Now, reserve fund may be used for what purpose? 25% you transfer to reserve fund, agreed. It shall be used for what purpose? Number one, in business or society as working capital. May invest as per provisions of act. May be used for some purpose likely to promote objectives of the society. I hope you are clear. Reserve fund can be used for three purposes. May be used as working capital. May be invested as per provisions of the act, or may be used for some purpose likely to promote objectives of society. 25% was transferred to reserve fund. Yes sir, yes sir, yes sir. For what purpose it can be used? It can be used by society as working capital. Second, may invest as per provisions of the act, or may be used for the purpose which is likely to promote objectives of society, like farmer, like agriculture. It can be used for that purpose. One last time, 25% transferred to reserve fund, understood? Yes. Can be used for three purposes. May use, society may use as working capital, may invest as per provisions of the act, or third and last is what? May be used for objectives that will promote the objectives of society. Now, investment of funds. Second point was there, where all society can invest the fund. Reserve fund may be used for investment. Okay. For what all purpose? Where you can invest the fund. A single state cooperative society may invest in 5 places. Number one, in central or state cooperative bank. in any other cooperative society, sorry, in any other cooperative bank is approved by register. Where can single state cooperative society invest the fund? In, remember, cooperative society, there is only one benefit: member, and cooperative society. They take care only of other cooperative society and its member, no one else. Their main objective is not profit, but only cooperative society. Where they can invest the fund? In central or state cooperative bank. In any other cooperative bank other than central or state, as approved by registrar, in share, security, bond, debenture of any other society with limited liability. 3 points are over. Number one, in central or state cooperative bank. In any other cooperative bank, okay, other than central and state as approved by register. Number one, you can invest in central or state cooperative bank. You can invest in any other cooperative bank as approved by register. In share, security, bond, debenture of any other cooperative society with limited liability. Are you clear? In respect of securities specified by Indian Trust Act and any other money permitted by central or state government. Very simple. For five purpose, reserve fund may be invested for five purpose. Number one, in central or state cooperative bank. Second, any other cooperative bank other than central or state as approved by registrar. Third, in any other cooperative society with limited liability. 3 points are clear. May invest as per provisions of Indian Trust Act. May invest in securities specified by Indian Trust Act. Okay, in any other money permitted by central or state government. You have to learn nicely, very nicely you have to learn. Where can I invest the fund? See, very simple. In central or state cooperative bank. Any other cooperative bank other than central or state as approved by register. In any other cooperative society with limited liability. Clear. In any of the securities as specified under Indian Trust Act. In any other money permitted by central or state government. Break 10 seconds. Done? Okay. Tell me, I can invest the fund in one of the more central or state cooperative bank. Any other cooperative bank other than central or state as permitted by registrar. Okay. Third, in any other cooperative society with limited liability. Fourth, okay, as per the securities of in any of the securities as specified by Indian Trust Act, and last, any other money as permitted by central or state government. Special features of cooperative audit: 6 months to 5 years. See, I have to show bad debts. Okay, whenever I show bad debt, overdue debt, not bad debt, overdue debt. If I have not received the money, I have to divide into two parts: 6 months to 5 years, more than 5 years, have to be reported to auditor. Overdue interest: if we are not receiving interest, it has to be reported. Bad debts, see, when they are bad debts can be written off only it will become bad debts when it is certified by the auditor, or if auditor does not certify, managing committee should authorize write off. We will do bad debt only when certified by auditor. If auditor doesn't certify, when management committee tells. Valuation of asset as per AS2. Cooperative principle already studied. Verification of members register: if we have given loan to member, it should show in members register also, and we have to take confirmation from the member. Examine entry in members register regarding loan given and repayment of loan, and also confirm balances. Very important. Special reporting to register: in these cases, auditor will do special reporting to register. Who auditor? Whoever was appointed here. In these cases, we will do special reporting. Nice question. FMDP. See, normal report every time we will send to register because he appointed us. But in this case, special reporting will be done by register. Auditor will do special reporting to register in 5 situations. Number 1, FMDP. Financial management and Deepika Padukone. What a combination. Okay, what a combination. Detection of fraud relating to expenses, purchases, store. If there is any fraud relating to expenses, doing purchases or stores, are you clear? Mismanagement. Decisions is against cooperative principle. Cooperative principle was not to earn profit, not to benefit member. It is for the member, by the member, of the member. If you are taking any decision which is against cooperative principle, okay, then I will do special reporting. Disproportionate advance given to vested interest group. You are giving the funds to what? Members of managing committee only. To relatives, you are always giving loan and they are not repaying. Relatives of the managing committee. It is wrong. Are you clear? Disproportionate advance to vested interest group. Or if advances are given without proper security or without judging the credit worthiness of the party. Personal profiting is done by members of managing committee. Whenever you want to order raw material, okay, you are ordering from your son only or from your relatives only and then taking commission from them because you are giving them raw material order from cooperative society. Personal profiting is done by members of managing committee. So in these cases, remember 5 cases special report has to be sent to register. Tell me in how many cases special report has to be sent? 5. FMDP, fraud relating to expense purchase fraud, expense purchase store. Okay, mismanagement, decision against cooperative principle. D, disproportionate advances given to vested interest group. Okay, advances are given without proper credit worthiness and without checking documents. Okay, personal profiting by members of managing committee. Simple. Fraud relating to purchase expense store. Mismanagement, decision against cooperative principle. D, disproportionate advance to vested interest group. Advances are given without the credit worthiness of the borrower, okay, or without checking document. P, personal profiting by members of the managing committee. Simple, very simple. F is fraud, okay. M is mismanagement. D, disproportionate advances. P, personal profiting by members of managing committee. Simple. Break 10 seconds. Done. Speak. Detection of fraud relating to expense purchase of store. Okay. Mismanagement, decision against cooperative principle. Disproportionate advance to vested interest group. Advance are given without proper security and without judging the credit worthiness of the borrower. Personal profiting by members of the managing committee. After this, after entire audit is done of single state cooperative society, auditor will give class to the society, class A, class B, class C. After judgment of overall performance, auditor will give class to the society as specified by register. If the members of the if the management is not satisfied with the class awarded to auditor, they can appeal to register. Okay, if you are not satisfied, you felt that class is too low. Why this class is important? Based on this class only members will join the cooperative society. If class is not good, then cooperative society is not trustworthy, you don't join. So if management is not satisfied with the class awarded to their cooperative society, they can appeal to register. Register, if they feel that members are genuine, can tell auditor again, please review the class to this cooperative society. I think there is some problem here. Very simple. Okay, discussion of draft audit report. See, cooperative society is for the member, by the member, of the member. Directly you cannot issue report. You have to discuss with managing committee before giving the report, because many issues they will solve or they will tell don't print this. Members will feel bad. Okay, it is against the principles, etc. We will try to solve this point. So on conclusion of audit, auditor will ask secretary to convene the meeting with the members of managing committee and discuss draft audit report. Are you clear? So before giving draft audit report, you have to compulsory discuss with the members of managing committee. Simple. Single state cooperative society is fully done. Once if you read, it will become super smooth. Now it's the time for multi-state cooperative society. Next, multi-state cooperative society is those society whose objectives are not confined to one state. They operate in multiple states. Remember, for them multiple registers are not there. Why? If Chhattisgarh register will call, Rajasthan will call, Tamil Nadu will call, Amul will close down. Because for them central register is there. Who is register? Same friend, philosopher, guide. Understood, sir. Applies to cooperative society where objectives are not confined to one state but operate in multiple states. Their funds cannot be used for political purpose. Why? Because central government deals with them. So usually these cooperative societies are formed. Why? Okay, to collect the funds and then they give funds to central government. So many times many people want to give funds to central government, they give funds to multi-state cooperative society. Via them it will go to government, but not allowed. Qualification: who can become auditor? This is a serious matter. This is a big cooperative society. Any local people, person holding diploma in cooperative account? No, 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 no. Only CA. Only CA. Who is disqualified? Same disqualifications is applicable to company audit, body corporate, officer or employee of multi-state cooperative society. Same point. Body corporate, officer or employee. person who is a member or who is an employee of officer or employee of multi-state cooperative society. Same points. Any member of multi-state cooperative society not allowed. Employee, okay, any employees there of officer or employees there of employee who are working in multi-state cooperative society not allowed. Person who is indebted to multi-state cooperative society, or if we have given guarantee in connection with third person more than 1,000, then also we are disqualified. If you are indebted to cooperative society, you cannot do audit, or if you have given guarantee in connection with third person of amount more than 1,000, then also disqualified. Very very simple. These points are already discussed before. Okay, number one, body corporate, officer or member of multi-state cooperative society, person who is a member or sorry officer or employee of multi-state cooperative society, person who is a member or employee of officer or employee of multi-state cooperative society, person who is indebted to multi-state cooperative society, or if you are not indebted but you have given guarantee in connection with third person of more than 1,000 rupees, then also you are disqualified. Power, right to access books of accounts and voucher kept at head office or anywhere, shall be entitled to officer or shall be entitled to explanation as he think necessary. Very simple. He can access books of accounts at all time. He can ask for information and explanation from any member of multi-state cooperative society. Power of special government, central government to direct special audit. Very, very important. When can central government give instruction for special audit? Remember, there it was what? Special reporting to register. Here special audit is there. Special reporting comes in single state. In multi-state cooperative society, special audit. When can central government give instruction for special audit? Under section 77, central government can give instruction for 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 special audit. Remember, in three situations, SSS, but you can give instruction only when more than 51% of the stake is held by central government or state government, or both coming together hold more than 51% stake. If you are not holding the stake, then you cannot give instructions for special audit. Okay, so if you hold more than 51% of say shares, only then you can give instruction for special audit. In three situations, important. Special audit, power of central government to direct special audit. Affairs of multi-state cooperative society are not managed as per sound business principles. Okay. Second, affairs of multi-state cooperative society are managed in such a way it is likely to cause serious damage or harm to the industry, trade or profession in which it operates. Okay. And last, endanger its solvency, harm its solvency. In three situations, power of central government to direct special audit. In three situations, affairs of multi-state cooperative society are not managed as per sound business principle. Their main aim is welfare, but it is not managed in that way. Second, affairs of multi-state cooperative society are managed in such a way it is likely to cause serious injury or damage to the business, profession or occupation in which it pertains. It is likely to cause serious damage or injury to the interest of business, trade, occupation or profession in which it pertains. And last, it may become insolvent. Then members will suffer huge loss and endanger its solvency. Then it can take three situations. Number one, it's not managed as per sound business principle, serious damage or injury to the business, trade, occupation, profession, and last, endanger its solvency. It will cause harm to solvency. Central government will direct special audit. Central government shall order for special audit only if the government or state government, either by itself or together, hold more than 51% of the paid up share capital in such multi-state cooperative society. Very, very simple. No, sir, extremely simple. Central government for order for special audit only if the central government or state government, either by itself or together, hold more than 51% or more of paid up share capital in multi-state cooperative society. Simple, yes, sir. Special audit. Okay, special audit report will be sent to central government because they are only told. On receipt of the order, central government may take action within 4 months. If they don't take action in 4 months, report will be sent to multi-state cooperative society, and this report will also be sent to all members or read out before members in the meeting. Are you clear? We central government within 4 months, if they don't take any action, shall send the report to multi-state cooperative society, full report or extract of the report, and circulate it to member or read before the member in the meeting. Expenses will be determined by central government and paid by multi-state cooperative society. Okay, if they don't pay, it is recoverable as an area of land revenue. Simple. Now, this was special audit in three situations: sound business principle, serious damage to the industry, trade, occupation, endanger its solvency. Inquiry or inspection by registrar. See, registrar may do inquiry or inspection in following situation, in four situation. Inquiry or inspection if it receives a request from federal cooperative to which multi-state cooperative society is associated. See, there is a milk society in which except Amul lot of people are members. Now another member like Mother Dairy will complain, sir, Amul is not working nicely or Amul has this problem. Are you clear? Then again problem will happen. So it may, when inquiry or inspection will take place, number one, federal cooperative to which multi-state cooperative society is associated. Creditor, one third of members of both, one fifth of total members of multi-state cooperative society. Understood? One last time. It may on request of federal cooperative. Number one, inquiry or inspection will take place in four situations. Federal cooperative in which multi-state cooperative society is associated. What is federal cooperative? Another fellow member is complaining that something is not going nice. Are you clear? Then central registrar may do inquiry or inspection. Second, creditor may request. More than one third of members of board will request. More than one fifth of total members of multi-state cooperative society can request. If any one of them requests, federal cooperative to which multi-state cooperative society is associated, creditor, more than one third of members of board, more than one fifth of members of the multi-state cooperative society, we may hold an inquiry or inspection, okay, into working and financial condition. However, before holding inquiry or inspection by central registrar, 15 days notice should be given to multi-state cooperative society so they are prepared. Okay. What is the power of the person holding inquiry? Either central registrar will do himself or appoint any person. He can access books of account security. He may tell officers of society to hold. He may tell officers to hold general meeting. Okay. But at least 7 days notice should be given before holding general meeting. He can tell members. He can tell the officer, please hold general meeting, I want to talk with all the members. Okay, so but 7 days notice should be given. He can summon any person who has knowledge of affairs of multi-state cooperative society and they have to come at such time and such place as specified. Central register shall within a period of 3 months from the date of receipt of report communicate the report to multi-state cooperative society. As soon as report is received of inquiry or inspection, within 3 months central register will send the report to multi-state cooperative society, who will of course improve. So 2-3 question good here. Special audit can come. Second, inquiry or inspection can come. Special audit report within how much time central government will take action? 4 months. Here what is given? Registrar shall send the report, okay, within 3 months from the receipt of report to multi-state cooperative society. There's central government. Sir, why central government here and why register? Here central government has instruction for special audit. They have given instruction. So they will receive report. Your inquiry or inspection, whom you told? Central registrar. So we'll give report to them and within 3 months, they will give the report to you. Okay. This is over, this is over. Very, very simple. Very, very simple. I hope you are clear. Till now, single state cooperative society, multi-state. This you might find right now difficult. If you read once, I assure you, it will be super simple. Next, audit of government. Government audit. Very, very simple. Government audit means we are not talking of government company like BAIL, SAIL, Steel Authority of India, Bharat Heavy Electrical Limited, ONGC. No, 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 no. We are talking of central government, Narendra Modi. We are talking of Tamil Nadu government. We are talking of Gujarat government. We are talking of Rajasthan government. We are talking of Meghalaya government. I hope you are clear. So we are not talking of government companies. We are talking of central government, state government, union territory. One more time, central government, state government, union territory. Tell me, who will do audit? In India, government audit. Government audit means central government, state government, union territory is done by CNAG. Right now, CNAG, what is the full form? Comptroller and Auditor General of India. Very easy, please concentrate. Comptroller and Auditor General of India. If you don't know who is the CNAG right now, it is Girish Chandra Murmuru. GC Murmuru. Girish Chandra Murmuru will do the audit. In India, government audit is done by CNAG of Indian Audit and Accounts Department. Who shall appoint CNAG? He shall be appointed by President of India. Who is the President of India? Most useless person. Remember, in central government, who is no good for no use, he becomes the president. Usually, Pratibha Patil is there. Then another one was there. Abdul Kalam was, of course, there. After that, so all are just mimicry figures. Okay, those who don't do anything, they are appointed as who appoints president? Central government. So, central government president is appointed by central government. Then president will only appoint CNAG. Will he catch central government fraud? Of course not. Very simple. See, central government appoints president. Majority members are central government only. Then president appoints CNAG. Means inside directly or indirectly CNAG is appointed by central government only. How the hell he will catch fraud? It happens only in India. Tell me, can he be removed? Yes, on ground of proven misbehavior or incapacity. On ground of proven misbehavior or incapacity. He can be removed only when both houses of parliament vote for more than two-thirds of majority. Two-thirds of majority in Lok Sabha and Rajya Sabha should be there, only then he can be removed on ground of proven misbehavior, or proven misbehavior can be proven only when both houses of parliament vote with more than two-thirds of majority present and voting. What is incapacity? Maximum 65 years. If you become 65, gone. So 6 years, his tenure will be 6 years or 65 years maximum. 6 years maximum, or if 65 is reached, gone. Example, if he is currently 52, he can continue till 58. If he is currently 62, he cannot continue for 6 years, max 65. Salary equal to judge of Supreme Court, so he doesn't get biased and he audits in a proper way. Very simple. In India, government audit is done by CNAG from Indian Audit and Accounts Department. Appointed. He shall be appointed by President of India. Can he be removed? Yes, on grounds of proven misbehavior or incapacity. What is incapacity? 6 years or 65 years. His tenure is. So if he becomes 65, it is incapacity. Or 6 years are over, incapacity. Otherwise, what is proven misbehavior? Proven misbehavior means both houses of parliament present and voting. More than two-thirds of majority should be there, only then he can be removed. Otherwise, what will happen? He will catch the fraud. We will remove him. Oh, Murmuru, we told you not to catch fraud. You caught. Get out. Get out, Murmuru. He shall be paid judge equal to salary of Supreme Court. Duties of CNAG. Compile the account and subsidiary account. See, they will not make the accounts. Accounts are already made of government. They will mix, compile all account and subsidiary account and report to. Report to whom? Okay. If it is central government, their accounts are known as Consolidated Fund of India. Okay. Central government accounts are known as consolidated. Remember, this much is over. In government, basically there are three audits. Okay. Audit of receipt, audit of expenditure, audit of stores and stock. In government, basically three audits are there. Audit of receipt, audit of expenditure, audit of stores and stock. Remember one last time. In government, only three audits are there. Audit of receipt, audit of expenditure, audit of stores and stock. Now continue. What are duties of CNAG? Compile the accounts and subsidiary account and report to. Central government accounts are known as Consolidated Fund of India. We report that to President. State government accounts are known as CFS. CF, Consolidated Fund of the State. It is reported to governor. For every state, there is a governor. Union territory accounts are known as CFUT, Consolidated Fund of Union Territory, which is reported to administrator. You have to remember this. Central government is known as CFI, report to president. State government CFS, report to governor. Union territory CFUT, Consolidated Fund of Union Territory. It is reported to administrator. Now, next is audit of receipts of union or state or central government. Audit of receipts. Next will be what? Audit of expenditure. Audit of expenditure. Very simple. Audit of stores and stock. Now, okay. Very simple. Three things: audit of receipt, audit of expenditure, audit of receipt, audit of expenditure, audit of stores and stock. I already told you three things are there in government audit: audit of receipt, audit of expenditure, audit of stores and stock. Audit of receipts and expenditure again. See, first is audit of receipt. Second, audit of expenditure, audit of stores and stock. Audit of receipt and expenditure of any authority which is substantially financed from CFI, CFS, CFUT. CFI, CFS, CFUT. Okay, what is CFI? Consolidated Fund of India. CFS, Consolidated Fund of State. Consolidated Fund of Union Territory. any authority which is substantially financed from CFI, CFS, CFUT, okay, their accounts are also, their receipt and expenditure is also audited by CNAG. What are duties of CNAG? Receipt and expenditure of any authority which is substantially financed by CFI, CFS, CFUT. Sir, what do you mean by substantially financed? If the grant is more than 25 lakh, oh, okay, grant is more than 25 lakh, and if the grant is more than 25 lakh and more than 75% of the expenditure of that authority comes from either CFI, CFS, CFUT, then it is substantially financed. In two situations, it is substantially financed. Number one situation, remember, if more than 25 lakh contribution comes from CFI, CFS, CFUT, and more than 75% of the expenditure of that authority is met from CFI, CFS, CFUT, then we can say it is substantially financed. Audit of grant and loan and audit of government company. Audit of grant or loan, or see, any grant or loan is received, it should be used for same purpose. That is the audit of government company. Government company audit CNAG will not do. They will appoint auditor of government company, already learned in company accounts. Very simple. What are duties of CNAG? It is very simple. Compile the accounts and subsidiary account and report. Compile the account and subsidiary account. Audit of receipt, audit of expenditure, audit of store and stock. Compile the account and report. Compile the account and subsidiary account and report. Audit of receipt, audit of expenditure, audit of stores and stock, audit of receipt and expenditure of any authority that is substantially financed from CFI, CFS, CFUT, audit of grant and loan, audit of government company. Very simple for me, I don't know for you. Read all these points. See, first point you understood. Compile the accounts and subsidiary account and report. Understood? Whom you will report? Consolidated Fund of India, President. Consolidated Fund of State, Governor. Consolidated Fund of Union Territory, to Administrator. Now very simple. Audit of receipt, audit of expenditure, audit of stores and stock. Okay. Next, audit of receipt, expenditure, stores and stock. Audit of receipt and expenditure of any authority that is substantially financed from CFI, CFS, CFUT. Audit of grant or loan. Audit of government company and corporation. Read nicely. Done. Tell me, what are duties of CNAG? CNAG, please tell your duty now. Please, please, please. CNAG, we love you. Okay. Okay. Compile the account and report the accounts. Compile the accounts and subsidiary account and report. Audit of receipt, audit of expenditure, audit of stores and stock. Audit of receipt and expenditure of any authority which is substantially financed from CFI, CFS, CFUT. Audit of grant and loan and audit of government companies. Powers of CNAG, very simple. Inspect any office of accounts under the control of union or state government. As soon as you go to office, you will ask for books and records. Put question to such person who is in charge of the office. In carrying out, he can check any account or class of transaction in detail if they want. Number one, inspect any office which is under the control of state or union government. Ask for books of accounts or document. Ask any information and explanation. And last, carry out detailed checking into any account or transaction as he may think necessary. Now, basically, there are three things, okay? In government accounts or government audit, there are three things: audit of receipt, audit of expenditure, audit of stores and stock. One last time: audit of receipt, audit of expenditure, stores and stock. Expenditure is big, receipt and stores and stock is time pass, very easy. Okay, so I will explain receipt first. All the receipts are properly accounted. If the receipts are received, they are used for the same purpose. If any loans are received, they are used for the same purpose. Any special purpose grant is received, it is used for same purpose. Are you clear? Very simple. Expenditure is important. 5 points are there. Audit against rules and order. Audit against sanction. Audit against provision of fund. Performance propriety audit. One last time. Audit against rules and order, audit against sanction, audit against provision of fund. Okay, performance audit, and last is what? Performance audit, and last is what? Performance audit, propriety audit, performance propriety. One last time: audit against rules and order, audit against sanction of fund. Okay, audit against sanction, audit against provision of fund, propriety, performance. Very simple. Rules and order. Remember, any expenditure incurred should be as per the laws. Are you clear? It should not exceed the higher power. Rules. Here we'll see laws, rules, regulation issued by authority, and expenditure is as per the laws, rules, and regulation. I hope you understood audit against rules and order. Now, there are certain rules and orders laid down. Okay, expenditure should be as per them only. They are as per the provision of constitution, any laws made thereunder. They are not in conflict with rules or regulation made by higher authority. They are as per the requirement of audit and accounts of CNAG. In case they are not approved by authority, issuing authority possesses necessary rule making power. Very, very simple. Can we start one more time? Yes, sir. See, audit against rules and order. In that 4 points are there. Expenditure is as per the constitution of laws, rules, regulation. Second, they are not in conflict with rules made by higher authority. Remember, in government there are certain rules, this much expenditure only allowed. Then highway department will make its own rule. Infra will make its own rule. Okay. Airline ministry will make its own rule. Telecom ministry will make its own rule. Number one, they are as per the provision of laws, rules, regulation. Second, they are not in conflict with rules made by higher authority. Okay. They are as per the requirements of audit and accounts as laid down by CNAG. CNAG will also maintain certain rule. In case they are not approved by any authority, necessary authority has necessary rule making power. Are you clear? Very simple. See, there are certain rules. All expenditure should be as per the rule only. That as auditor we have to check. That rules are made by what? Laws, rules, regulation. Second, they are made by authority. Third, they are made by CNAG. Okay. As auditors, we have to check that all the expenditure are as per the rules and orders of government. We are not spending any money beyond the rules and order. Okay. Second, sanction. Remember, there is a sanction obtained. Okay, sanction. Number one, expenditure is covered by the sanction. And second, authority sanctioning it is competent for the purpose. For example, for highway, 2000 crores are there. It is sanctioned, but highway central government is sanctioning it. Not any other. State government cannot sanction 2000 crore for highway. In audit of sanction, only two things are there. Number one, funds are out of expenditure is covered by a sanction, and sanction is given by appropriate authority. Very simple. In audit of sanction, 2 points are there. Number one, expenditure is covered by sanction. Sanction is given by appropriate authority. Third, audit against provision of funds. Audit against provision of funds. Okay. In that 2 points are there. Number one, expenditure is incurred for the same purpose for which provision is made, and expenditure should not exceed the provision made. Example, we have made provision for construction of riverfront. So expenditure is incurred for the same purpose of riverfront and not for COVID. Or if funds are received for COVID, expenditure is incurred for the same purpose for which provision of made. And expenditure doesn't exceed the amount for which provision was made. Simple. 3 are over. Rules and order, sanction, provision of fund, propriety audit. What do you mean by propriety audit? Sometimes expenditure is as per the rule and order. It is sanctioned also. Provision is also made, but it is a wasteful expenditure. Okay, school. You are constructing a big school, but it is not used only since 5 years. Sardar Patel statue, they made huge statue. Are you clear? Huge statue they made. But what was the need? What is the expenditure? So much expenditure was incurred. It is any use Sardar Patel statue. God knows why they made such a big statue. Propriety audit. Many times, though expenditure is sanctioned, it is as per rules and order. Provision is also made, but it may be a wasteful expenditure. In infruitful expenditure, okay, such expenditure which is not needed. So here we'll find out those cases which are wasteful expenditure. Auditor will see wisdom, faithfulness, and economy of transaction. General principles are laid down in this. See, to check propriety audit, general principles are there. Expenditure should not be more than what the occasion demands. Okay, so where thing can be done in 2000, you cannot spend 3000. It should not be more than what the occasion demands. Even public officers should exercise same vigilance as member of ordinary prudence would exercise. No authority sanctioning the expenditure shall pass expenditure to its own advantage. It shall not be utilized for benefit of particular person or particular community. Amount of the allowance should be regulated. It should not be source of profit to the recipient. 4. In propriety audit, there are general principles. Expenditure should not be more than what the occasion demands. Okay, it should be just as much a man of ordinary prudence would exercise. Second, any expenditure sanction should not be for the benefit of that particular person. Okay, no authority sanctioning the expenditure shall sanction for its own advantage. No expenditure shall be sanctioned for benefit of particular person like Adani. All contracts are given to Adani. Is it no expenditure shall be sanctioned for particular person or particular community? Third, amount of allowance should be regulated. It should not be source of profit to the recipient. Sir, this I did not understand. See, whenever there is a case that 5,000 flight ticket is there, okay, and 2,000 train ticket is there, train might take 2 3 more hours. You can go by train. Why the hell are you going by flight? Are you clear? Many times what will happen, you will go by train but submit the invoice of flight, prepare a dummy invoice. It should not be source of profit. Expenditure, with the help of expenditure, it is for your facility. You should not earn profit out of the expenditure. Understood, sir? So four things we have to keep in mind. Expenditure should not be more than what the occasion demands. Okay, a man of ordinary prudence should exercise same expenditure. No authority sanctioning the expenditure shall sanction for its own benefit. Expenditure should not be sanctioned for particular person or particular community. An amount of expenditure should be so regulated, it should not be source of profit to recipient. Last is performance audit. In these three things we'll see: efficiency, economy, effectiveness. Efficiency, economy, effectiveness. What is efficiency? Whether schemes are done economically. Okay. Efficiency, whether goods, what the relationship between goods and service produced and cost used to produce them. Benefit should always exceed the cost. Economy, whether we have acquired physical, human and financial resources economically. Whatever you have acquired, more money should not be spent. Whether spending authority have exercised economy. Simple. Government has acquired physical, human and financial resource economically. Whether spending authorities have exercised economically. Effectiveness, okay, what benefit you have got. Appraisal of performance of various programs, schemes, okay, with targeted objectives. Are objectives achieved? Effective. Appraisal of various programs, scheme with targeted objective. Economy, whether we have exercised economy in acquiring physical, human, financial resources. Second, whether spending authority have exercised economy. Efficiency, schemes and projects are done efficiently. Okay, the cost required to do the schemes and benefits received, we will compare two things, whether they are giving desired result. And third, relationship between goods and service produced and resources used to produce them. Very simple. One last time, five types of audit of expenditure. Five things: audit against rules and order, second, audit against provision of fund, audit against sanction, performance audit, propriety audit. Performance audit, propriety audit. I hope you are clear. One last time. Okay. Tell me, audit against expenditure. In expenditure, 5 points are there. 1, 2, 3, 4, 5. Audit against rules and order. Audit against sanction. Audit against provision of fund. Propriety, performance. Propriety, performance. In performance 3, effectiveness, efficiency, economy. Effectiveness, efficiency, economy. Clear? Yes, sir. Fully clear. Okay. With these three nice things are done. Cooperative, a single state cooperative society, multi-state cooperative society, government audit. Clear? Yes, sir. Next in the list is leasing company. If those of you who don't know leasing company, okay, there are two types of lease: operating lease and financial lease. Where risk and rewards are transferred to the lessee, it is known as financial lease. Where risk and reward remain with the lessor only, okay, only asset is given for use, is known as operating lease. Let me explain you again. See, first of all, there are two people. Whoever gives the asset is known as lessor. Whoever takes the asset is known as lessee. So if I am giving the asset, I am a lessor. Okay, we have to think from lessor point of view. Leasing company means whoever will lease the asset. Lessor will lease. Who will take the lease? Okay, lessee. So remember, there are two people. Who gives the equipment on lease is known as lessor, and whoever takes the equipment is known as lessee. Two lease are there: financial, operating. In operating, what will happen? Owner is what? Lessor only we are giving on the asset on lease to the lessee. But in financial lease, what is there? Risk and rewards are transferred to the lessee. It is just like financing arrangement, but that we are not concerned that much. AS 19 you must have studied in detail. Number one, in leasing company, you have to check what? Object clause, whether they are allowed to give the asset on lease. See, object clause of leasing company to determine capital goods, consumable goods. Can they give them on lease? Further, see whether company can undertake the financing activity. Leasing is nothing, purchasing the asset, then giving on lease. They will pay rental. So it is like financing only. So see whether they can take such financial activities. Okay, financing activity, whether there exists a procedure to do credit analysis of lessee. Is there a procedure that you will do credit analysis of lessee, whether he is able to pay the lease or not, credit worthiness of the lessee, capital strength, his past record, collateral security. Are you clear? Very simple. See the object clause of the company to see whether they can give the assets on lease. Second, what you have to see, okay, whether company can undertake financing activity. Third, there exists a procedure. What procedure? To do credit analysis of lessee, like seeing few things about lessee. Number one, his capital record, past commitment, can he pay? Now in lease agreement is there. In lease agreement, we will see following points: description of lessor, lessee, location where equipment is kept, amount of the lease, date of payment, late charges, any advance to be paid, whether equipment shall be returned to the lessor, okay, on termination of agreement, and who will pay the cost of shifting, lessor or lessee. Whether agreement prohibits lessee from subletting the equipment. Can you sublet? Can you do subleasing? Examine lease proposal form is sent by lessee to lessor that I want this kind of asset. Okay. Third, examine acceptance letter is received from lessee indicating that he has received the equipment and the equipment is acceptable to him. See board resolution authorizing particular director to enter into lease agreement. Enter, ensure invoice is proper. See copies of insurance have been properly obtained. I hope you are roughly clear with this, yes or no? Yes, sir, roughly to clear. Not very nicely, but roughly clear. Yes, see, this is very easy also. Number one, see the object in leasing company. See the object clause allows you to enter into leasing or not. Okay, see whether company allows you to undertake or enter into such financing arrangement, whether there exists a procedure to do credit analysis of lessee, like seeing his past record, capital commitment, security offered, capacity to pay. Lease agreement will be there. In that we will see what? Lessor, description of lessor, lessee, equipment where it is kept. Okay. Third, what is the lease rental, date of lease payment, late payment if any. Third, whether agreement allows you to do subleasing of the asset or not. Okay, whether agreement, whether there is lease acceptance form is submitted. Sorry, whether lease request form is sent by lessee to the lessor. Lease request form is there. Yes. Okay, whether that is sent or not. Whether lease proposal form is submitted by lessee to the lessor. Whether acceptance form is given by lessee that the equipment is acceptable to him. See whether there is a board resolution authorizing a particular director can only enter into lease agreement. Invoice is properly written. Copies of insurance are properly taken by lessee. Simple. LLP, very simple, limited liability partnership. In this only few things are there, they are very easy. Every LLP has to file form number 8, statement of account and solvency within 30 days of the completion of financial year. So every company has to file what? Form 8. So statement of account and solvency, every LLP has to file statement of account and it is solvent within 30 days from the close of the financial year. Within 60 days, okay, after expiry of 60 days, they have to file annual return. Okay, so you have to remember this can come as good MCQ questions are there. So every LLP has to file statement of account and solvency within 30 days from the close of financial year. Every LLP has to file statement of annual returns within in form 11. See statement of account and solvency form 8, annual return form 11 within 60 days from close of financial year. Account shall be audited as per rule 24. You are allowed exemption is there if turnover is less than 40 lakh or contribution is less than 25 lakh. Any one is more, audit compulsory. Turnover is less than 40 lakh or okay, contribution doesn't exceed 25 lakh. The exemption is available if turnover doesn't exceed 40 lakh or turnover is less than 40 lakh or contribution is less than 25 lakh. Very simple. Tell me when is exemption available? Turnover doesn't exceed 40 lakh, contribution doesn't exceed 25 lakh. Any one exceeds, audit compulsory. However, partners of LLP can decide to get the accounts audited from LLP. Okay. See, partners of LLP are responsible for ensuring accounts are audited. Registrar has the register. See, for LLP also, like company, who is responsible? Registrar. Registrar can ask any information from designated partner. Designated partners are those partners which we designate. Designated partner, partner or employee. He can summon any partner, partner or employee. In case information is not furnished, okay, or submitted, he can ask information from designated partner, partner or any employee. Auditor. When will auditor be appointed? First auditor can be appointed anytime before the end of financial year. Anytime you can appoint first auditor. LLP can appoint, designated partners can appoint. See who will appoint the auditor? Designated partner. If they fail, partner. If they fail, partner. Designated partner can appoint the auditor of LLP anytime before the close of financial year. First auditor. Subsequent auditor, before 30 days of close of financial year you have to appoint. Okay, at least 30 days prior to end of financial year. Casual vacancies shall be filled by designated partner. Who will fill casual vacancy? Designated partner. If designated partner will fail, then partner will appoint. Then who will appoint? Partner will appoint. Understood? Yes, sir. Very simple. Let us close this. First auditor will be appointed by LLP before the close of financial year. Subsequent auditor, okay, will be appointed before 30 days of closure of financial year. So before 1st March you have to appoint ideally. Casual vacancy will be filled by designated partner. Normal vacancy also by designated partner. If they fail, auditor. Advantage of audit of LLP are what? Helps in detecting fraud or error. Helps in settling the dispute at the time of admission, death, or retirement of partner. Okay, bank and financial institution will lend money only basis of audited statement. Periodically visits and suggestion by auditor help you in improving the management of LLP. I hope you are clear. Yes, sir. What are advantage of LLP? Helps in detecting error and fraud. Helps in settling the dispute at the time of helps in settling dispute between partner with the help of auditor. Settling accounts at the time of admission, death, or retirement helps. Banks and financial institutions will lend money only on the basis of audited statement. Periodically visits by auditor help in improving efficiency of LLP. Very simple. What are benefits of getting the accounts audited for LLP? Number one, helps in detecting error and fraud. Helps in settling the dispute at the time of admission, death, or retirement. Then helps in settling dispute between the partners if audited accounts are there. Okay, bank will give loan on the basis of audited financial statement. Periodically visit by auditor helps in improving efficiency of LLP. Simple points are there. Auditor's duty is what in case of LLP? Number one, auditor should get definite instructions as to what work to do. Auditor should mention whether records of the firm are correct, whether he has obtained all information and explanation, whether any restriction was imposed by him. If partner maintain minute book, he shall see the minutes book to see all important decision. Auditor should read LLP agreement which will say what all is there: amount contributed, profit sharing ratio, borrowing power, rights and duties of partner, loans and advances to partner, profit sharing ratio, etc. Simple, nothing great. Few things are there here and there which can come for MCQ. Audit, tell me compulsory, not compulsory if turnover is less than 40 lakh or contribution is less than 25 lakh. Okay, every LLP has to file form number 8, statement of account and solvency, within 30 days of close of financial year. Every LLP has to file annual return form number 11 within 60 days from the close of financial year. Who will appoint auditor? Okay, designated partner. If they pay, normal partner. First auditor shall be appointed anytime before the close of financial year. Subsequent auditor shall be appointed before 30 days of the closure of financial year. Too good, sir. Yes, sir. Yes, sir. Very good. Very good. Last, oh my God, let's read hire purchase first. What do you mean by hire purchase? In hire purchase, when do you become the owner? On payment of last installment. So hire purchase is an agreement. Washing machine you can take on hire purchase. You become owner on payment of last installment. Hire purchase is agreement signed by all parties. Hire purchase agreement should clearly state higher price of the good. Higher purchase price of the good will be of course more because interest will be added. Cash price of the goods, had the goods been taken for cash, date on which agreement is there, number of installment you have to pay, date of payment and amount of each installment, goods to which the agreement relates, and you have to check all installment are regularly reviewed. Very simple. In hire purchase, when do you become the owner? On payment of last installment. Hire purchase agreement should write 4 or 5 things. Number one, hire purchase price of goods, cash price of goods, date on which agreement is processed. Okay, number of installment, date of payment, amount of each installment, and goods to which the agreement relates. Very simple. Last. Finally, Bahubali chapter getting over. Oh, bhai, local body is the last one. Yeah, yeah. What do you mean by local body? Same like government. Okay. See, government means central and state government. But many local bodies are there. What are local bodies? State, city-wise government is there. No, Delhi Municipal Corporation, Ahmedabad Municipal Corporation, Chennai Municipal Corporation, okay, Pune Municipal Corporation. These are local bodies, okay. So their audit is also necessary. Who does the audit? State wing, okay, state wing. So state wing does the audit of this usually. But let's understand what is the income for them. Property tax. Are you clear? House, in if you buy a house, you have to pay property tax. That usually goes to local body, that is Ahmedabad tax of my house goes to Ahmedabad Municipal Corporation. Octroi, they collect octroi. Parking auction they do. Advertisements are there, okay, whichever a banner are there. So if you want to do advertisement, money will go to that local government, okay, local body, okay. Profession tax, etc. Property tax is the revenue for them. Other municipal tax, tax on advertisement, toll, parking auction. 3 grant they receive. General purpose, special purpose, compensatory. One more time. General purpose, special purpose, compensatory. What is general purpose? It is there to bridge the difference between needs of the local body and resources available to them. So if the local body expense are 1000 crore, okay, and they have only 800 crore, state government will give. For example, Gujarat government will give grant to Ahmedabad Municipal Corporation. General purpose. Specific purpose for construction of COVID hospital, okay, for maybe construction of riverfront, okay, for construction of statue, for provision of certain specific purpose. Compensatory grant means, see, earlier octroi was collected by Ahmedabad Municipal Corporation. Now it is collected by Gujarat government. Earlier, okay, tax on alcohol was collected by local city. Now collected by state and central government. So state and central government should pay compensation to local body. Yes. Loss of any revenue on account of tax taken over by local government. Okay. So 3 types of grant: general purpose, special purpose, compensatory. Expenses, they are basically concerned with regulatory expense, maintenance and development expense, and expenditure under following health. What do they do? Public health, public safety, education, public work. Public health, safety, education, public work. Very simple. Of course, city does what? Public health, public education, safety, and public work. They don't do this, but they should do ideally. Auditor should understand financial administration of local body. In financial administration, there are 3 points. We have to understand the financial administration, budgetary procedure. Who will make the budget in the local authority? This is done to see financial accountability and control of expenditure. Main objective is to ensure funds are spent as per the rule. So who will make budgets in local authority? Does local authority themselves only make the budget? Then to, of course, they will make such a high budget and certain money put in pocket. So what is the budgetary procedure? Expenditure control. Your audit is done by state government. So it is the only way they can control the expenditure of municipal corporation. So expenditure control. Third, accounting system. Usually their accounting system is criticized a lot. Either they do very less accounting or they do very detailed accounting, not what is required. So we have to understand their budgetary procedure, expenditure control, and accounting system. Municipal accounting and budgeting format have been criticized as either they are too simple or too detailed, sometimes providing too much information, sometimes not providing only. Both this is bad. Both this is bad. So 3 things are there. Okay, very simple. In local body, budgetary procedure, expenditure control, accounting system. Budgetary procedure, expenditure system, accounting system. Very simple. 3 types of things are taken by local body. Tell me, we need to understand 3 things in administration of local body. Auditor should understand financial administration, 3 things: budgetary procedure, expenditure control, accounting system. Budgetary procedure, expenditure control, accounting system. Now audit starts here. Till now all time pass was given introduction. Now audit is starting. Local wing of the state government is responsible for municipal account. See, local wing of state government, local audit wing of state government, okay, for Gujarat state. Local audit wing of Gujarat state is responsible for auditing municipal accounts of Ahmedabad. Local audit wing of Tamil Nadu government is responsible for auditing accounts of Chennai government. Okay, for Delhi Municipal Corporation, Mumbai Municipal Corporation, they will appoint their own auditor. See, for small municipal corporation, small local body, local audit wing of state government. But bigger municipal corporation like Delhi, Mumbai, they have the power to appoint their own auditor. That is why their fraud never comes out, because they only appoint their auditor. Too much fun. Local audit wing of state government is responsible for auditing local body. But bigger municipal corporation like Delhi, Mumbai have their own auditor. They can appoint their own. So that is why their fraud never comes out. Auditor has to report on truthness and fairness of financial statement. Everything is proper. Now, last points are same of expenditure. Do you remember in government audit of expenditure was there? What was there? Audit against rules and order, audit against sanction, audit against provision of fund, proprietary, performance audit, propriety, performance, same point. Audit is as per laws, rules and regulation. Audit is as per provision of fund. Audit of fund expenditures are sanctioned by general or special authority. Different scheme, program where large expenditure is incurred is giving desired result. Same 5 points they have repeated. Number one, audit against rules and order, audit against sanction, audit against provision of fund, propriety, performance audit. With this entire chapter is over. I hope you enjoyed as much as I did putting it up forward for you. We have worked very, 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 very hard for this entire marathon. I hope you could see our hard work. I hope you could see our dedication. I hope you could see the endless efforts put by us. Okay, we want nothing. We just want one thing for you. If you like our lectures, okay, please share it with maximum friends. Okay, it will motivate us to work even harder, even better, and give you world class quality content free of cost. If you genuinely like our lectures, this is just the trailer. Regular lectures are love. You will love them, I assure you. Okay, so please share with your friends. Okay, tell at least 2 friends. Okay, if you like our lectures, that there is one man who works very, very, very hard, who will make your life easy. He will not make you understand. He of course make you understand in detail, but he will make you learn also. Okay, so if you really want combo of real life audit, you want to understand, you want to learn also, of course we can't do that in marathon. Regular course is 100 hours. Then tell them go for this. He will make your life super easy, super fun for you. Thank you so much. I hope you enjoyed this journey as much as I did. Okay, and we both have worked very, very, very hard. I sincerely hope, I sincerely pray that you clear audit with the nicest possible marks. Okay, nothing else I want to say. Thank you so much. Okay, for all the love, for watching all the lectures, for every single thing. Please share this masterpiece of audit with every single student who is facing difficulty. More than me, he will thank you. Thank you so much. Bye bye. Good night. Take care. Thank you. Very, very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, today we are revising the most anticipated chapter. Many people skip this chapter thinking it is very, very hard. But be rest assured, we are here to make this chapter super simple, super easy, super mind blowing, super amazing for you. Okay, we will try to give you a brief knack about the chapter, how to read the chapter in the most easiest way, so your life at home is sorted. It's a bigger chapter, but be rest assured, we will try our best that in your brain we can put how to read this chapter, how to understand this chapter. Of course, it cannot be learned. It's a very big chapter, but once you understand the right approach of this chapter, then it's very easy to crack this chapter. Okay, during this one lecture only we will finish entire chapter. Rest assured, wonderful video this is. Okay, let's start right away. Chapter number 5, audit of item of financial statement. Basically, remember how many items of financial statement are there? 4 things are there in financial statement: balance sheet, P&L. Inside balance sheet, 2 asset, liability. Inside P&L, income, expense. One more time: P&L, income, expense, balance sheet, asset, liability. Okay, so these 4 heads are there. How to audit this 4 head? Below them there are a lot of items. Let me take example. In income we have other income like interest income. Then we have sales, so there will be procedure of sale, other income. In expense there is purchases, legal expense, printing, stationery. Okay, In asset, tangible, intangible inventory is there, trade receivable are there. Okay, now come to liability, share capital is there, borrowings is there. How to audit each item we are going to learn, but we have designed a super amazing, mind-blowing, easy time pass technique. So anything is asked, it's very easy to crack. So that is why we are here. If you are new to this video, okay, do consider liking this video, because we have put in a lot of hard work. If you feel, and do share with others also. If you are new to channel, subscribing the channel is a must. Okay, without that it is not allowed. Okay, so we keep on bringing such amazing content to you. Okay, now let us start. What we will check, always remember, first of all, there are two approaches. Number one, test of control, test of detail. Anything you audit, let's take an example of sales. Okay, I will audit sales. Never ever sales audit is done first. First of all, in sales, what I will check, always remember, in sales, what is the first thing I will check? Sir, in sales, first thing is always check the process. What is the process of the sales? Okay, understand the risk of material misstatement in sale. Okay, then if you feel understanding the process, after understanding this, if you feel process is good, then only you do test of control. If process is bad, no need to do TOC. What is the use of testing those controls which are bad? So first understand the process. In that process, see, process of sales is strong or not. Okay, understand the process, risk in the process, related control to mitigate risk. Okay, now you have to understand whether process is good or process is bad. Sir, if the process is awesome, amazing, mind-blowing, then go ahead and test control. Sir, if process is good, why do I test control? In test control, I will take samples of entire year. Okay, 25 samples I take in TOC, in Big Four, test of control. After that, if you feel controls are good, then substantive will be less. Okay, but if you feel, okay, process is good but controls are weak, process is good but when you did test of control it is weak, then substantive will be done more. All that we have discussed in chapter number 3, chapter number 4. Then what is this all about? This is chapter number 5. What to check inside substantive. Many people will say, understood, substantive we will do, but what do I check in substantive? Can you tell me that? What will I check in substantive? Okay, I know all this compliance and substantive. Okay, one more time, first understand the process. If process is good, do test of control. In test of control, if you find controls are awesome, then substantive will be less. But if you feel controls are third class, then substantive will be more. But in substantive, what I will check? In every item of financial statement, what will I check? Okay, very simple. 4 things: asset, liability, income, expense. One more time: asset, liability, income, expense. Sir, but in asset, liability, income, expense, what to check? Assertion. This entire chapter is about assertions. Okay, so assertion we will check. This definition we have already done in another chapter, but let's do it again. Assertions are representation by management. See, what is the meaning to assert? Assert means to state, to mention, to specify, to tell, whatever English you know. Assertions are representation by management, explicit or otherwise. Now you will ask me, what is explicit? Clearly explained. Assertions are representation by management, explicit, clearly explained, or otherwise means many assertions are implied. Okay, see, sometimes your mom will directly tell, I love you so much, but your dad will not hug you like that. Okay, but doesn't mean your dad doesn't love you. Okay, dad's love is implicit, it's implied, it's visible in the actions. He wants you to study, he wants you to pass. In English, that is also love. Assertions are representation by management. Management is telling that we have followed this. Okay, assertions are representation by management, explicit or otherwise means implicit, implied, that are embodied in the financial statement. What is embodied? Included in the financial statement and checked by auditor to detect different misstatement that may occur. Absolutely not understood. One more time. Assertions are representation by management. Management is clearly asserting, management is specifying, management is telling, okay, we have followed this. Representation. Okay, example, if sales is written 700 crore, it clearly tells that sale has occurred, that sale is complete. Are you clear? That's occurrence, completeness assertion. but it also tells you the amount is correct, measurement. Some things are explicit, explained, some are implied. What is implied? Presentation and disclosure is proper. It is disclosed as per schedule 3. Simple. I hope you understand. Yes. So assertions are representation. Management is clearly telling, explicit or otherwise, that are included in the financial statement. Embodied means included and checked by auditor to detect different misstatement that can occur. Very simple. One last time. Assertions are representation by management. Management is telling, explicit or otherwise. What is explicit? Clearly explained. Otherwise is implied, that are included in the financial statement. Embodied means included, and auditor will check or checked by auditor to detect different misstatement. In simple words, plant and machinery 600 crore. It's clearly valued, it's complete, its presentation and disclosure is proper. Management is stating, asserting, mentioning. Auditor has to check whether it is proper or not. Very simple. Last line. Okay, in asset, liability, income, expense, what to do? Assertion checking. Assertions are representation by management, explicit or otherwise, that are included in the financial statement and checked by auditor to detect different misstatement that may occur. Read nicely. Small break, 5 seconds. Over. Last time, assertions are representation by management, explicit or otherwise, that are included in the financial statement and checked by auditor to detect different misstatement that may occur. Simple. Yes, sir. Now come ahead. Now, there are certain income statement assertion means P&L, certain balance sheet. We have to check how many things today? 4. Asset, liability, income, expense. First, we will check all item of income expense. Income and expense comes where? In income statement, P&L. So, any item of income statement, be it purchase, be it sale, be it other income, be it printing stationery, we will check this many assertion. Technique is awesome presentation. Anything in PNL, awesome presentation, awesome presentation. But awesome spelling is so weird. Why? Because in the technique this is fitting. I know actual spelling is AWESOME, okay, but in technique this is fitting, okay. So awesome. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. One more time. Occurrence, completeness, cut off, measurement. One last time. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement, presentation and disclosure. Very simple. We have to study all this in detail, but let me take sales example. Okay, you have to tell me. Okay, you are champion. Tell me, when do I know that sale has actually occurred? How to know sale has actually occurred or not occurred? You tell. Sale has occurred. Dispatch document I will check. Yes. If it is dispatched, means it has occurred. If there is a lorry receipt, if there is a gatekeeper receipt, means occurred. In every item of P&L, I have to check whether it has occurred or not. It should not be fake sale. It should not be fake purchase. Clear? With invoice, you cannot check assertion. Difficult, difficult, difficult. Invoice, I can prepare dummy also. Okay. Occurrence. Second, completeness. Okay. Is the sale complete? Usually, remember, there are two things in completeness: overstatement, understatement. Sales are less, sales are more. Never we show more sale. Why? Sorry, always we try to show more. Why? So profit is also more, share price will be more. But never I will do understatement. I can do in some case when there is subsidy. For example, my sale have become 10.5 crore. If it is below 10, I will get 10% subsidy. Then I can do wrong. Okay, in many business it is there. If sales is below this limit, you will get subsidy. So in those case, I will do. Completeness of sale is there. Cut off. Cut off means what? The transaction of sales have not gone to April. Many time, okay, April sales I will take in March. Why? Pressure is there. I need this much funding, so this much sales should be there. To maintain this share price, my sales should increase by this much. So I should show dummy sales, or I will show April sales in the month of which month? Okay, in the month of March. Then how to catch all this? If there is too much sale return in April, realize there are fake sales. Okay, many ways to reconcile. We will see that. Cut off means transaction should be recorded in correct period. Purchase, what we will do? try to show March purchase in April. Why? So profit is more. We tend to do such things in India. Okay, lot of people do lot of things in listed company which are wrong. Then how does auditor certify? It happens in it's India, yeah. So it's okay. We cannot do anything. That is why we are supposed to check. Okay, if everything was so correct by management, why would audit come? Cutoff means transaction should be recorded in correct period. Understood? Okay. So for all item we have to check same. Yeah. Next, measurement. Transactions are recorded at correct amount. Okay. How to check contract? Many times contract rate will be different. Invoice rate will be different. Purchase order rate absolutely different. Problem. Okay. So we have to see all rates should be correct. Yeah. Okay. Presentation and disclosure. Transactions are properly presented in the financial statement. Properly presented in the financial statement. Clear? Yes, sir. Fully, super duper, amazingly, mind blowingly clear. Okay. Presentation. Transactions have been classified and presented fairly in the financial statement. Any doubt? No doubt whatsoever. Fully clear, amazing, mind blowing. Okay. Income statement assertions. I hope you are clear. Okay. Awesome presentation. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. What is presentation? Presentation and disclosure. Any doubt? Okay, all are, see, meaning of all is clear. Presented means it's properly shown in schedule 3. As per shown in schedule 3, part 1 of schedule 3, it is presented as per that. Okay, so first try to remember, because in everything we have to check these assertions only. Now P&L, any item is there in the world, you have to check this only. Awesome presentation. Awesome. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. Presentation and disclosure. Occurrence, completeness, cut off, measurement. Presentation and disclosure. Occurrence, completeness, cut off, measurement. Presentation and disclosure. Clear? Any doubt? Any doubt? Doubt some doubt? No. Okay. Shall we go ahead then? Able to learn also? If you are able to learn, will not waste your time. Okay. What will the question come? How to check completeness of sales? How to check completeness measurement of sale? How to check presentation and display? Understood? These are the questions. Now, balance sheet we'll do later, because first half, 1 hour, we have to do only P&L things. Okay. Next 1 hour, we have to do only balance sheet things, sales. First area is sale. In sale, what to check? Always remember, sales is a big account. So ROMM of sales is usually high. There is a high chance there can be risk of material misstatement in sale, because every company wants higher sale. Why higher sale? So higher profit. Why higher profit? So higher share price will be there. Always remember, entire audit is from listed company point of view. We never think of small people in audit. Okay. Small people want to save tax, but this is statutory audit. Okay. Continue. Sales is the most important area. As per SA 315, ROMM of sales is always high. Risk of material misstatement. So first understand the process of sale. If the process is good, I will go ahead and test the controls. Okay. If in control testing, I feel controls are really good, then what I will do? Less substantive assertions I will check less. That is what is written. We will test control. We will check sample of items for purchase order, invoice, etc. to test control. We can also do analytical procedure. Okay, do month-wise sale. Okay, compare with last year. See the trends in the sale to understand risk are more or less. This is general thing. Main thing we are starting now. Number 1, audit procedure for sales occurrence. Whenever I start any item, you have to tell me 1 point. If you tell 1, then all rest 5, 6 will be clear. How to check occurrence of sale? Sale has actually occurred or not? Are we showing dummy sale? So number 1, what we will see? Any entry is repeated twice. Have you done any entry twice? Second, any invoice which is cancelled. Okay, many times sale is cancelled, but still you have recorded. Is it like that? Okay, that is the another way to check occurrence. Okay, then confirm with customer whether they have received delivery of goods. Okay, customer has not received delivery and you are showing sale. Okay, see in the year end, are there fictitious sales? Okay, customer is not confirmed, you have just prepared the bills. Okay, is the state real? Second, how to check occurrence? Whether sale is dispatched. Trace the sale with shipping documents. If shipping is done in the month of April, how dare you recognize sale in the month of March? You are too manipulative. Understood? Basic thing. If you remember 3-4 things, you can easily point out 6-7 points. Okay, over. Read. Any sale is recorded twice, we have to check. Okay, or cancelled sale is there. Second, trace few sales invoice with sales daybook. Many people prepare rough daybook of sale, so we'll check with that. Simple. Third, obtain confirmation from customer regarding genuineness of sale. You have to take confirmation from customer. Is the sale genuine or not? Okay. Next, any fictitious sales are recorded. You have to check that also. Any dummy sales are recorded or not recorded. Okay, check that. How to check? Dispatch document. Okay, after confirming with customer. If customer is not confirming, sale is dummy. Second, any sales are done in the year end, especially check 30th March, 31st March. Okay, it will be just to inflate the sale to achieve the targeted figure. So we get that funding round. Okay, next, whether any unearned sale is there. Okay, next, see the sequence of invoice. Okay, many times if bills are missing, there is a fraud. Review sale return. If there are a lot of sale return in the month of April, means these are dummy sales. They were just done to increase the target. Okay. Review unusual transaction. What is unusual? Let me take 3 examples. Entries passed after 12 o'clock in the night. Entries passed by CFO. Entries passed by other than authorized person. Are you clear? These are dummy sales. Easily you can remember if you tell me 4 points. Okay. Number 1, sales daybook check. Any invoice is recorded twice, check. See, cancelled sales are recorded. Okay. Then see sale return to sale. Okay. What else we can check? Okay. Confirm with customer. Okay. Especially during year end, lot of sales are done. Okay. See, any unearned income is recorded. Approach you understood. You cannot learn this. Come to next one. Completeness. Completeness and cutoff is similar. Completeness and cutoff is similar, almost similar. Okay. How to check completeness? Usually we do overstatement of sale. Understatement is never a tension in life. Remember, no one will show less sale unless subsidy, but forget that case. Completeness. How to ensure sales are complete? They are not inflated. So you have to be very much emotional only in one point. Cutoff, cutoff, cutoff. We will check the dispatch documents to see, okay, when risk and rewards are transferred. There are two ways sales are done in life. One is FOB, one is CIF. Not given in your book, just for knowledge. What is FOB? Free on board. What is CIF? Cost insurance freight. What is free on board? Okay, you just have to keep it at the port. As soon as you keep at the port, your responsibility is over, your sale is done. In CIF, full form, cost insurance freight, you have to deliver it to opposite parties' location. As soon as it reaches the location, your sale is done. So you have to see it's FOB sale or CIF sale. Based on that, criteria is different. Okay, if few goods of customer you have kept, many times you are saying sale is done, but customer has told keep with us. Confirm with customer. Is it there in agreement? See, sales is recorded as per the invoice or risk and rewards. When is actual sale done? When risk and rewards are transferred as per AS9. Okay, sir. I hope you understood. Okay, so this is what we have to check basically. Then how to check completeness? One more figure I remember. Check with GST. You are showing sale this much. Check multiply by 18% GST. This much we have paid. Many times what we do, we inflate the sale, but we don't pay GST to government. Good way of doing fraud. Good way of doing fraud. We should not do. Check reasonableness of sale with GST returns. Okay, or with GST, try to get a fair idea of sale. On 100, GST is 18. So this 18, 100 is how much? Seems good? Okay. Number 1, perform cutoff procedures and see sales are not tempered during year end. Same what I told. Cutoff error will arise when sale is based on invoice rather than risk and rewards. Many times we recognize sale on invoice. We should not risk and reward. Next, credit notes are issued after year end. Means credit note means these were dummy sale. These are full chance of dummy sale. Next, trace shipping document with sales journal. Shipping documents you have to check. Okay. Next, check reconciliation of sale with stock record. Wonderful point. Check the sales with stock record. Opening stock plus this much production minus closing stock. It should match with your sales figure. Okay, number of unit wise, we are not telling amount wise. Opening stock plus production, okay, this much stock plus you produce minus this much was leftover stock. Balancing figure should be same, okay, and then check with GST records. Review GST return and see the revenue reported in P&L. Multiply total sale with GST rate to get GST paid figure. If it reconciles, your comfort will be skyrocketing. Understood? Okay. Simple, nothing great I am doing. Measurement. Correct amount is there or not of sale. In 1 second we can recognize. Tell me how. How? Simple. Take few transactions from starting to end. Okay, verify few transactions from starting to end. Check everything in those transactions. What you will check? Number one, you would have sent a quotation. Then customer would have given a purchase order. We want to purchase. Then we would have sent a contract. Okay, sorry, first quotation we would have sent. Then he would have given a purchase order. Then there will be a contract. Third, then you will send the invoice. So contract rate is this much. In purchase order, same rate is there. Invoice also same is there. Okay, comfort will be skyrocketing. It's perfect sale, no problem. Okay. So we have to trace few transactions, reconcile what? Purchase order, contract, invoice. If the rate is same, comfort will be much higher. Okay. Second, how to see the measurement of sale, the amount is correct. Okay. We can also check by GST. Okay. To verify few invoice, contract with party, same thing. Trace few transactions from starting to end. Recalculate the prices of the transaction as per terms of contract. In contract, 25 rate was there. In invoice, same price is there. Look at the comfort. Okay. If you have export sale, AS11, reconciliation you have to do, recalculate the sale. Next, auditor should understand the operation and related gap issue. Is it point of sale method or percentage completion method? You have to see point of sale method or percentage completion method. Okay. Which method you are there. Compare the sale with related party. Very nice point. Okay. A related party sale and see is the terms proper or not. Are we receiving the amount from the related party? Is board resolution passed? Whenever related party come, I will give you 5 points. Number 1 point. Okay. Compare the rate of related party and review them for collectivity. Second, in related party, board resolution is passed or not. Third, the terms of AS18 are followed or not. Next point, disclosures are done for related parties separately or not. Okay. Last point, whether the transaction is done at arm's length price. Directly 5 question asked. Okay. Be it any point. Okay. This is a good way. See, point of sale method should be followed or percentage completion. What is point of sale? Whenever sale is done, recognize sale. But in construction contract, okay, remember the building will be constructed for 5 years. They cannot recognize the sale on 5th year. Why? It will be too much late for 4-year loss and 5th year directly so much revenue. So they follow percentage completion. How much ever contract is done, that much revenue they recognize. Usually it is done like that. But that depends on client also. Clear? Okay. So only new point was here, this one. Rest to nothing was there. Presentation disclosure, remember, nothing I can teach you. It is properly presented as per your final accounts. Okay. So here what is given. We will see disclosures are proper as per part 1 of schedule 3. Part 1 of schedule 3 gives the format. Okay. So disclosures are done as per part 1 of schedule 3. Here what I will tell. Whatever you are doing in final accounts. Okay. In final account, what is there? Sale of product is there. Second, sale of service is there. Third, other operating revenue is there. Okay. Brokerage and discount other than trade discount should be disclosed. Trade discount, so don't disclose. It is deducted from sale. Brokerage and discount, if you give, show. Related party separately show as board resolution is passed or not. Whenever related party transaction is done, board of directors should pass a resolution that we have done this transaction. Second, separate recording is done or not. AS18 is followed or not. Over. Biggest item we are done. What did we do? Awesome presentation. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement, presentation and disclosure. Now to time pass chiller other income. Other income is chiller, interest. How to check? Don't apply brain. More brain you have, more you will go wrong. Very simple. Obtain a list of all investments. See for how much time you have done the investment. Okay, FD is there. FD for how much time? Sir, I started on 1st July. So how much ever? 9 months are left. Okay, 1st July. 9 months on 31st March. multiply. What is 10 lakh is the amount into 9 upon 12 into what is the rate? 7%. See, is it matching? Perfect. This is the only way you can verify. Second, interest income on FD should be recognized on time proportion basis. Time. Two things you have to consider: amount outstanding and interest rate. Over. Check the amount and interest rate. This much amount, this much time, this much interest rate, cross multiply. If it is matching, your comfort will be here. It is that income which should not be linked to core operations. Of course, FD income is not my core operation. My core operation is goods and service. Second, dividend. When would you recognize dividend? Okay, when right to receive dividend is established. Amount can be reliably measured. Okay, very simple. Right to receive is when established. When opposite party sends an email, you get an email that this much dividend is declared by company. Right to receive is established. This is the rate which is approved by shareholder. Okay, when should dividend be recognized? You have to think as an investor. Okay, it's your income. When right to receive is established, amount can be measured. When it can be measured? When you receive a mail, this is the rate of dividend. It is probable benefits will flow to entity. Simple. Okay. Right to receive is established. Amount can be measured. Benefits will flow to entity. Simple. Clear? Okay. Simple. Whenever shareholders pass a resolution after balance sheet date, that time you can recognize. Means as an investor, you will recognize in next year. Interest income on FD, repeat telecast they have done. Repeat telecast they have done. Okay. Obtain a list of all fixed deposit. In that, check two things: number of days deposit outstanding along with interest rate and number of days. Come to next. Verify arithmetical accuracy of interest by multiplying deposit amount with rate and number of days. Verify the accuracy of interest by multiplying deposit amount with number of days interest. Repeat telecast. For deposits outstanding at the year end, if it's outstanding, trace the balance from the bank. Tell bank, please confirm this is the balance. I am showing this much balance. Yes. Obtain confirmation of interest income from the bank and verify is that matching with your calculation. Bank is showing this much income. As per Calci, you can also calculate. Is it matching? How to calculate? Number of days multiply by 365 divided by into rate. Next, obtain a copy of 26As. See, bank will deduct TDS on income. When they pay you interest, they will deduct the TDS, okay, 10%. So as soon as they deduct, reconcile with that. 1000 rupees my income. They have deducted how much? 100. So based on that, I can say 100 is deducted. So what will be my income? 1000. Is my income coming the same in calculator also? Comfort will be too high. Okay. If you want to know how much FD interest is there of mine, in 1 second you can tell. You will tell, sir, 26As data give. I will give you 26As. You can directly tell this much is cut, so this much should be income. Simple. Disclosure. Disclosure. Disclosures are made as per part 1 of schedule 3. Same repeat telecast. What you have to show there? Interest income, dividend income, other income. Next, gain or loss from mutual fund. Last one. How to check mutual fund gain or loss? Okay, very simple. Okay, number one, when should you recognize the gain? When you sell the mutual fund, sell it. Okay, when you sell it. Okay, verify that gain or loss is booked only when transfer of title from the entity. They will say that these are sold. Difference between the redemption price and carrying value of investment. Example. Your mutual fund has NAV of 11 rupees when you purchased. Net asset value per unit value 11. When you are selling, it's 32. 11. So 32 minus 11 into number of units. First you do on Calci. Now check with their record. Is it matching? Perfect. Compare the gain or loss and trace with books of accounts. Difference between redemption and carrying value. Okay. Compare with mutual fund statement. Trace it with books of accounts. Simple. Now, fully out of total 4 children, 1 child is over. You will tell me which child is over. Very simple. In income statement, I have to check 2 things. What 2 things? Okay. I have to check what income, expense. Income is over. Now we are on to expense. Biggest ever expense and the only expense, rest are time pass. Purchase. In purchase also, first write English. First understand the process of purchase. Understand and see whether controls are strong or not. If controls are strong, go ahead and test those controls. Okay, test of controls we will do. Okay, after doing test of controls, what we will do? We will see whether we can rely or not. If we can rely, assertion checking will be less. Test of detail will be less. If we cannot rely, test of detail will be more. But this all is given in module. You don't have to write all this. You will be given only one thing: how to check occurrence, how to check completeness. See here. Auditor needs to verify internal control over purchase. Auditor should see controls are good or not. Auditor selects sample of transactions and checks everything in those transactions: GRN, gatekeeper, invoice. Okay. Analytical procedure also can be done. Last year said same points. Now, occurrence. Tell me whether purchase has actually occurred or not. Whether any purchase is recorded twice. See the purchase done in April, sorry, March, are recorded in March only. See gatekeepers register. Okay. See how to see. Many time I will show dummy purchase also. What will I get with dummy? I will put money in my pocket. I will say for Innova car we had taken on rent. This is actually service, but I'm taking just an example. Okay, for Innova we had taken on rent. We had actually never taken the Innova. I just told the vendor prepare dummy invoice and send me. Vendor will say, okay, no problem, I will send, but what I will get? I will say 20% I will give you. What is the invoice value of Innova? He's saying 10,000 per day, so for you want 40,000. I said I will pay you 4,000. Just prepare the bill. Then I will say all employees due to COVID we sent in Innova one day, or due to late night shift. Who will remember? 4,000 I will give him money for preparing the bill. Rest 36,000 I will put in my pocket. So how to ensure purchase are perfect? Number one, see in gatekeeper entry book is there. Okay, as soon as goods will come in gatekeeper, there is book entry or not. After gatekeeper, okay, quality inspection of the goods is done. Okay, quality inspection department will do. After quality inspection, is it entered in GR and goods receipt note? Okay, first gatekeeper. Second, is it entered in GR and goods receipt note? Third, quality inspection is done or not? If these three things are done, it's fair enough to believe that it's a genuine purchase. Okay. Fourth, most important point above all, see there is a vendor selection process. Do you invite quotation? Okay. Do you have any process to select the best vendor? Or any vendor can be selected? Then though there will be a high chance that dummy vendors are there, fictitious vendor are there. Number one, is there vendor selection process? Has anyone approved the purchase? Is vendor selection process approved by anyone? How are vendors finalized? Understood. Because if there is a strong system of finalizing vendor, out of 10 we will finalize one, there is a high chance fraud will not happen. Okay. Okay. Purchase occurrence. Number one, whether any fictitious vendors are there. Purchase have been recorded by following vendor selection process to confirm existence of vendor. Second, now the very simple, see here. Whatever I told you, absolutely same. Number one, when goods are received at factory, is there entry in the factory inward register? After that, GRN. Whether GRN is signed by appropriate person, goods receipt note. After that, quality inspection is done in the factory or not. If it is entered in factory gatekeeper register, goods receipt note also entered in quality inspection, and vendor selection process is also there. Purchase has to be true. What more you will check? Next, three-way checking is done. Very good. Two-way, three-way both is given. I will teach you three-way only. And stock is updated by all people. See, how many evidence? Vendor selection perfect. Also entered in gatekeeper. Also checked by GRN updated. Also quality inspection. Also stock is updated. How many evidence you need? Okay. And three-way match is also there. See, what is three-way match? POGRN invoice. See here, it's written. What is invoice? Quantity into rate. Everyone agrees with this? Invoice is quantity into rate. Quantity I will check with GRN, goods receipt note. If I order 10,000 units, in the invoice 10,000 is written. But I got only 9,800. Then I should be billed as per 9,800 units only. How dare you bill me for 10,000? Simple. Simple logic, right? Yes, sir. Fully simple. See here. Quantity into rate. One last time. Quantity is this much. I have been told this is the quantity and this is the rate. Okay. Now my quantity is 10,000 in invoice, but I have received 9,800. Then bill me as per 9,800. Rate. I sent purchase order. This is the rate I am ready to pay. How dare you enter more rate? But if we enter same rate, it's perfect. See, quantity into rate. Quantity should match with GRN. Rate should match with PO. Over. Three-way match. Invoice, GRN, PO. I hope you understood. It's not easy. It's too easy. Special audit of purchase. Now, few extra points they have given. Purchase invoice should be in the name of entity only. Okay. Original invoice should be there. Purchase should be done when risk and rewards are transferred. It's a FOB purchase or CIF. FOB is your purchase when you have received the goods. CIF is your purchase. Sorry, FOB is when they have reached the port. CIF is when you receive. Only then you can recognize your purchase. Invoice should be in the name of entity. In case of related party, whether board of directors resolution is passed, whether transaction is at arm's length price or not. Okay. Auditor should see purchases are capitalized or P&L. What is capitalized? Fixed asset purchase is there or business purchase is there. Unusual transaction, same. Completeness, how to check purchase? Is it complete or not complete? Again, trace with the records, stock records. What is stock record? Opening stock plus purchase minus closing stock, okay, is equal to sales. Okay, you can substitute the formula. Opening stock minus sale. Okay, sorry, opening stock is this much we have sold, this much closing is left over, so this much would be purchased. Directly you can reconcile. Okay, is it matching with that purchase? Perfect, your comfort will be too high. Or cut off, second the cut off we will do. Okay, we will check few purchases done in the March are properly recorded. Also check purchases of April are not recorded in March, but usually reverse happens in purchase. I will purchase in March but show in April. Now you will tell me, why are you showing in April? What is the reason? Purchase is to done in March. Then why to? Very simple logic. I want to inflate. I don't want to, many time I don't want to inflate my expense. I want to show lower expense. Okay. Yes, sir. Ensure goods are correctly entered. Goods in transit also have been entered. Okay. If goods are in transit, then we have to see, is it FOB sale or CIF? If CIF is there, then don't recognize this purchase. If FOB is there, it's already your purchase because his responsibility was to only bring on board. Okay. Obtain WR from management, written representation, all purchase are recorded. Analytical procedure also I can do of purchase. What is analytical? Consumption. See, I will check. Okay, whenever this much sales are done, this much RM is consumed. In order to do this much sale or this much production, this much RM is there. So I will see that much RM is ordered or not. If usually to do purchase of, usually to do a production of 1 crore units, my RM required is 50 crore. So this year I will see how much production we have done. 50 lakhs. So RM required how much? Understood? Okay. RM consumed with manufacturing units of previous year. It is known as analytical. Second, stock composition. Okay, to produce one FG, how many units of A, B, and C are required? A this much, B this much, C this much. Okay. I will see same proportion is it used this year. Then completeness, approximately figure match. My comfort on completeness will be on 7th heaven. Okay. Auditor should also see creditor turnover ratio. Quantitative reconciliation is the last point. I told no. Closing stock with opening stock, purchase, consumption. Disclosures. Part 1 of Schedule 3. Related party purchase are separately shown. Purchase of stock in trade is separately shown. Goods in transit separately shown. Changes in finished goods, stock in trade, WIP is shown. Over. Rest all are time pass now. All are super. See, don't try to think that in every chapter I will score 5 on 5. Here 2-3 questions will come from this chapter, but you cannot score full 5. It's okay. If I get 3 also, it's comfortable. 2.5, 3, 3.5. Okay. We cannot get 5. If we try to get 5 here, other chapter will be left. Okay, so it's okay. Every chapter has a different philosophy. Employee benefit, even more simpler. In payroll, what do you want to check? Occurrence, completeness, measurement, everything at once given. In module also given in the same order. Don't worry. From module only we have copied. How to check? Employee benefit is payroll. Payroll is salary. Completeness, how to check? Number one, okay. See, the process of selecting, process of employee is proper or not. Attendance records are proper or not. Is there a chance of dummy employee? Then he would be paid salary, but it would be taken by supervisor. Many times what I will enter? I don't have money, so I will enter. We have kept 3 new workers. See whether the attendance process is strong. Is there any chance of dummy workers getting entered in the system? Or is there a proper system that person with appointment letter, person with physical presence, where attendance, only his attendance will be recorded. See the attendance process to see dummy workers can be entered or not. Because if they can be entered, I will pay them salary but put in my pocket. Second, in the year end, obtain a list of existing employee, new employee, left employee. 3 times divide. Existing employee, new employee, left employee. 3 parts. What I will do with this? Very simple. In 1 minute over. Okay. For which employee? Existing employees. Okay. Sorry, first let's take new employee. For new employee, see the salaries as per the contract made with them. I made a contract with them. We will pay you this much salary. Are we paying them that much salary or not? Okay. Because if 1 month salary is perfect, all other months will be perfect. For left employee, all the employees who have left. Okay. What I will check? Very simple. For all the employees who have left this company, oh my god, we will check full and final settlement. Okay, whether full and final settlement is done properly or not. Okay, full and final. Anything recoverable from them, have we recovered? For existing employees, what to do? Check salary per employee per month. Compare with last year. Per employee per month salary is this much. How it has increased? Oh, we have done some research. So 4 new engineer we appointed. Analytical check. Then you have to see PF, ESIC is properly paid or not. Okay. From that also you can reconcile. PF is this much, salary is this much. So PF should be 12%. Is it coming the same? Okay. Means everything is proper. Read. Obtain understanding of employees process of capturing the attendance. Okay. What's your process of capturing attendance? Is there any chance of dummy worker being included? Okay. Next. Obtain the list of employees. 3 parts. Number 1, new, left employee and existing. New, left, existing. Divided into 3 parts. New, leavers and continuing. For new people, check the appointment letter. Is the salary matching with appointment letter or are we paying them more? Okay. And subsequent month will be proper. For resigned employee, see full and final settlement. All dues they have paid. They have to pay notice period salary sometimes. Have they paid? Compare average salary per month per employee to find out variation. Provision is made for PF, ESIC gratuity. See this we have to pay later, but have you made proper provision? Why? Because employee will retire at that time we will pay. But we still have to do provision as per matching principle. He has given service this year. So this actuary will calculate. Have we done that? Compare PF, ESIC with basic salary. Multiply basic salary with 12%. You will get PF. Is it matching approximately or not? Matching, then your comfort will be skyrocketing. Disclosure. Ensure disclosures are done as per schedule 3 or not. Simple. Employee benefits, salary and wages, PF, staff welfare is shown separately. Depreciation and amortization, even more simple. Whether first, see what depreciation is, amortization is done on all assets or not. The method of depreciation is proper or not. Okay. Third, what you will check. Okay. Obtain a list of all the assets and do depreciation rationalization. How to do? You took the list. Then see what is the rate applicable. Plant and machinery, what is Companies Act rate? Okay, furniture and fixture, what is the rate? This land and building, what is the rate? Multiply and see your depreciation calculation is matching with system or not. If it is matching with system, comfort will be excellent. Okay, if any assets are deleted, any assets are discarded, see depreciation is not charged on them. Otherwise, negative asset value will become. Many times in system, we forget to remove asset. System will still charge depreciation. It will become negative asset. So say check that also. Very simple. Obtain understanding of entity's method of charging depreciation. Obtain fixed asset register as revenue items can be capitalized. Obtain sample of fixed assets based on depreciation charge. Obtain list of all. Ensure intangible assets like goodwill, patent have been properly amortized. Depreciation is charged from ready to use and not put to use. Very important. What is ready to use? Ready. See, car is ready. Okay, you have not put, you bought a Mercedes. Depreciation should be charged. Sir, but I am not using. Still, then the double should be charged. Are you clear? Because car will get spoiled. Okay, it should be ready to use. If you use or don't use, your headache. As soon as the car comes out of showroom, 30% value down. You take a Mercedes, okay, as soon as you take it out of showroom or in the showroom also, if you keep 5 minutes and you decide, "Arey yaar, I did not want to buy, actually I did big mistake," you will go to sell 30% less. Ensure depreciation on revalued item is proper. Depreciation is as per the IT Act, okay. Ensure additions as per IT Act. And check depreciation is proper. Is it matching with accounting list also? Additions, depreciation will be different. Analytical procedure you can do what I told you. All assets multiply with the rate and will get one figure. Depreciation is charged as per useful life of the PPE, plant, property, equipment, and intangible asset. Residual value is proper. If you have changed the method of depreciation, sorry, change in life is there. Effect should be prospective and not retrospective. Okay, change in life is there. Prospective effect is given. Whatever you know about PPE standard, you can write here. Disclosure. Disclosure will be whatever is the formula is the disclosure. Accounting policy for depreciation, residual value, useful life of asset, simple, same thing. And depreciation method. Other expense, rent. Now one minute is there. First of all, take rent agreement and see whatever is written in agreement, same rent is charged. Second, see it is charged for all 12 months. Have we received the rent or not? Okay. See whether we are, it's income, no. Sorry, expense is there. Okay. So take a rent agreement. Okay. See, rent is paid for all 12 months. If there is a escalation clause, 10% rate will increase from July. See, effect of that is given or not. See, rent is paid for all 12 months as per agreement or not. Over. Obtain month-wise rent. Verify expense of all 12 months is booked properly or not. Third, special consideration is given to escalation. If the rent has increased, check that whether that is paid. Also see agreement is in the name of entity. Most important thing, okay. Agreement should be in your name and whether you are using that entity, okay. Many times you have taken premise on rent, but your wife's showroom is going on there. Wife is selling jewelry from there. Wrong. Then it should not be charged as a part of company's rent. Over. Power fuel. See, monthly power fuel is proper. Try to link it with production units. Okay. For to make 1 unit of FG, we require this much power. Then see how much power. We made this many units. This much power is used. Wonderful. Factory light bill you can do like that. And if you can do, amazing. Obtain month-wise schedule. Verify all 12 months expense charge. Multiply the monthly power units with the rate. Link the electricity bill with FG production. Verify reasons of variation. Okay. Simple? Yes, sir. Amazing. Next, insurance. 1 minute over. Take copy of all insurance policies. See, the premium is properly charged, okay, in PNL. If there is a prepaid, because insurance you have taken in July, year will end in March. See, proper distinguish is made between this year and prepaid insurance. Okay, over. Obtain summary of insurance policy. Verify expenses are correctly classified between prepaid and current period. Over. Legal and profession. If there is a monthly agreement with a lawyer, see all 12 months payment is done. If there is any new lawyer, okay, if there is any new legal advisor, okay, we will see provision is booked for same case, okay. Check the agreement and see which case we have paid the fees. That case provision is booked or not, okay. Month-wise, consultant-wise summary. In case of monthly agreement, see all 12 months salary is paid. In case non-recurring expense, verify a sample and vouch of the attributes of same. What is attribute? Characteristic. If that is a case, why have we not booked a provision for that case? In case of legal expense, see, provision is made for dispute for which fees are paid. Travel, last one, travel, repair, maintenance, printing, stationery. How to check all this? Invoices, check all 12 months invoice. Compare with last year. Third, compare with per unit. But usually, how can stationery compared with production? I don't understand. Repairs may be little. Travel, how can you compare with production? Okay, but still they have written. Monthly summary you can prepare to see trends. Okay. Second, perform analytical procedure regarding reasonableness of expense with per unit of production. Difficult. How you can do per unit of travel? Okay. Auditor should see expense per unit and compare with last year to know this year our expense have increased or decreased. Okay, this much increased, maybe due to inflation. Okay, nominal. Disclosure. As per final accounts, part 1 of schedule 3, rent, insurance, power, repair, legal, printing, travel, miscellaneous. Tell me, fully comfortable or not comfortable? We are done with P and L. Income done, expense done. Over. Not even one word skipped. Okay. Now only dash is pending. 1R was this. 1R is balance sheet. Our P and L assertions are over. Everyone. Now only balance sheet pending. Perfect. Now in balance sheet, what we will check? Again, assertions. Over. Balance sheet also we will check assertions. What do you mean by assertions? Very simple. Balance sheet assertions is inventory. Okay, let's take example of inventory here. Okay, same technique, remember. Concentrate, absolutely same. Awesome presentation. Occurrence, completeness, cut off, measurement. Okay, presentation and disclosure. Instead of occurrence, here the word is what? Okay, occurrence. We cannot say inventory has occurred. We will say inventory has existence. Same thing. Word is different. We cannot say fixed asset have occurred. Fixed asset exists. How to check existence? In one word, physical verification. Over. So instead of occurrence, what's the word here? Exist. Meaning is same. Whenever you talk P&L, we speak occurrence. But whenever we tell balance sheet, we cannot say asset has occurred. We say asset or liability exist or not. And how to check whether fixed asset is there? Physical verification. How to check inventory is there? Physical verification. Completeness is same. All assets, liabilities, income. All asset, liability are complete. Okay, are complete. That was supposed to be recorded is recorded. Okay, overstatement, understatement is not there. Cutoff is there. Should be recorded in correct period. If you have purchased the asset this year, record this year. Next year, then next year. Now, instead of measurement, we have valuation here. We see transactions are measured. Asset cannot be measured. Asset is valued. Inventory cannot be measured. Inventory is valued. Okay. Same meaning. Same. The word has changed. Only English has changed. From measurement, it is now valuation. Asset and liability are correctly valued. If it's 700 crore value of plant and machinery, it's proper. Take last year figure, add additions, minus debris. This year figure should come. It's correctly valued. Okay. How to check? Invoice. All revenue expense are not capitalized. All these things. So existence, completeness, cut off, valuation. Here one more, presentation and disclosure is there. Whether it's properly presented as per schedule 3. Schedule 3. Now come to rights and obligation. Always remember, here one extra assertion is added. Asset is my right, liability is my obligation. But when will I say asset is my right? Okay, when the invoice is in my name. When can I say this house is mine? If the title deed is in my name. If immovable property is in my name. If legal documents are in my name, so I will check invoice, I will check property documents, okay. If they are in my name, asset is my right. When I will say liability is my obligation. In loan agreement, if company's name is written, company has to pay the liability. If the creditor invoice is in my name, so I have to pay creditor. Simple. So there is awesome presentation. You are also same. Don't look for new technique or else you will be confused. Same. Instead of occurrence, existence. Completeness, cut off, measurement. No, no, no. Valuation. Presentation and disclosure. Rights and obligation. Presentation and disclosure. Rights and obligation. Simple. Simple. Okay. So balance sheet, what we will check? Very simple. Tell me one word, I will check. For all the balance sheet items, very simple, one word. Awesome presentation, but in awesome letter. Instead of occurrence, existence, completeness, cut off, instead of measurement, valuation, rights and obligation, presentation and disclosure. Over. Now, any damn item, same things we will check. Any damn item, let them go. Start. 1, 2, 3. Let's rock. Audit of tangible assets. So first we'll take assets, then we'll finish liability, but all super duper easy. Asset. PPE, plant property equipment. Okay. How to check existence of PPE? You tell me. Whether plant property equipment exists. Physical verification. We will see management is doing physical verification at regular intervals. Okay. We will see the physical verification report of management is backed by sheets. We will check the sheets are proper. Is there adequate tagging done? They are saying that we have checked the tags. Is the tagging done on all assets? Okay. What is the tag? There will be label on the asset PQR. This asset is 4329. This is 8225. Okay. Random basis you can check. Check the sheets of management and see whether assets are there properly or not. Okay. Yes. And if the entity's plan is reasonable in checking or not. If it's proper existence, we will have no doubt. Only way to check existence is physical verification. Read. Review entity's plan for physical verification. Entity's plan you check. Second, evidence of those performing PPE should be examined. Who has done physical testing, physical? Bring them. Obtain physical verification report, okay, backed by working sheets from entity. Report along with the working sheet. Okay, in that what you will check? All items are tagged. All the items in factory have proper tagging. Okay, reconciliation of items with fixed asset register. You order register. Where is register? This. I want to check few items. Check it. Verified discrepancies if found. If you have found any difference, how they are dealt with the same. If more than 10%, it's a material difference. Simple. Simple. Now, inventory also existence, absolutely same. Why I am telling you? So at that time again same I will not teach. See here. Inventory, absolutely same, no change. Review entities plan for inventory. Second, ensure goods consigned means others goods are not included. If other goods are kept at your factory, don't include. Many times we will also keep our goods others. We have to consider that. That is part of our inventory. Take maybe physical confirmation from them. Okay. Auditor should participate in inventory counting. Test count of auditors. Same as SA 501 if you remember. SA 501. Audit consideration. Specific consideration for selected item. There. Observe the employees are following the plan. All items are tagged. There is proper supervision. Okay. Reconciliation of test count with the tags. Okay. Significant difference is there. Properly adjusted. Same. Now let's come back. Let's come back. Additions. Okay. We have to check addition. In addition, what we need to include? Don't include third party additions. If anyone has kept goods at your godown, plant property, don't include that. But if our assets are kept at other place. Okay, maybe we have kept our machine at a other place because our factory was full. We have to include that. Don't include third party additions. But if our additions are kept at third party, then we have to include. Verify movement in PPE schedule. How to check additions? Movement check. Opening plus during the year minus deletion is closing. So last year opening you had checked, plus add additions minus deletion. Is it matching with closing? If it is matching with closing, additions are correct. Check arithmetical accuracy. Figures also. Trace opening balance with last year. Add addition minus closing. Sorry, minus deletion should match with closing. Now additions we want to check. Verify quotations were asked before buying the machine. If they were asked, then the system is perfect. Verify additions are approved by appropriate person. Is a proper sign of department head. Okay. All expense are capitalized. Day-to-day expense should be charged to P&L. Invoices, see the invoice to see correct capitalization is done. Okay. It's more of measurement. Verify deletions and find out the reason. More than completeness, they've included measurement point here. Okay. Verify the deletion and see effect is properly given in P&L. Simple. All these points which I can see here. Last four. Expenses, capitalized. These are basically of valuation. But in valuation, they have given what? Only depreciation. See, depreciation is charged on all items or not. Okay. See, amortization, though we'll see in intangible asset. Depreciation is properly charged. If the asset is even below depreciation, impairment is there. Okay. See, impairment loss is properly given as per AS 28. Verified depreciation is charged on all plant property equipment unless it is a freehold land. Freehold land doesn't have depreciation. Okay, because land is always less, so it's an appreciating value. But if you do land and building, it will depreciate. Verify proper method of depreciation is charged as per benefits linked by entity. Okay, benefits consumed. If you feel SLM is best, follow that. If you feel WDV is best, follow that. If you feel your depreciation is based on number of units consumed, this machine will work for 80,000 units. This year I produced how much? 17,000. How much depreciation? Value into 17 upon 80,000 over. Okay. If your machine is like that. Third, see whether impairment assessment is done as per AS 28. Over. Very simple. Existence I checked. Completeness I checked. Okay. Then what I checked? Valuation I checked. Rights and obligations. Simple. Asset should be in the name of entity. If there is a conveyance deed or sale deed, it should be in the name of entity, immovable property. Many times I don't do sales deed in my name. You will ask me, why am I not doing sale deed? Because I have to pay GST. What many people do? Buy the asset because they will sell in 6 months. Then why to buy? For trading. They will buy the asset, sell at a higher value. They do that. Buy the asset, then sell to someone. Okay, but they will not do GST. Same year they will sell. But many times I am not able to sell. Then see, sale deed should be in my name. Only then I can tell it is my asset. Okay. Many times I will give the asset to others as a pledge, as a mortgage. Verify register of charges to see if the asset is pledged and against it loan is taken. But in register of charges, what I will write? Asset is mine, but I have given as a security to third person. So I cannot sell the asset. There are several ways to check asset is mine or not. How to check? Simple. All invoice should be in name of entity. Second, for all additions, see conveyance or sale deed to see who is the real owner. Third, auditor should see original title deeds of immovable property. I will check the title deed. House should be in your dad's name. Only then it is your house. Third, in case original deeds are with third party, many times we keep with bank, third party. Take confirmation from third party. Simple. In addition, if I have given as a pledge, okay, I will verify register of charges to see whether PPE is given as a security to third party. Okay, if I have given a security, register of charge. Simple. Disclosure. Over. Disclosures are made as per part 1 of schedule 3. Land separate, building separate, PPE separate, furniture, vehicle, office, others. Assets under lease also show separately. Over. Intangible asset. Goodwill, patent, copyright, mastheads, publishing title. Existence. How to check intangible asset existence? Tell me. It's an identifiable non-monetary asset. We know it's an asset, but actually it's not an asset. You cannot touch goodwill. Show me goodwill. How to show physical verification? It's identifiable but non-monetary asset. We know you are there, but you are not there. It's an identifiable non-monetary asset. I know this is an asset, but this is not an asset. How to check? So it should be in active use in production or supply of goods and service. Is Apple is able to sell phones with its brand name, with half Apple? If Apple is selling so many iPhone, the brand name is there. It should be in active use in production or supply of goods and service or rental to others. I can give franchisee rights also in the name of Apple. I can, in the name of McDonald's, give franchisee. Then that intangible asset is there. Or if design and drawings are intangible asset, you are saying our design and our drawing. Are those design and drawing used in the goods? If they are used, intangible asset will exist. Simple. Any brand name will exist if I am making use of brand name in production and supply of goods and service. If it is design and drawing, I am using those designs today, then it's okay. Since intangible asset is identifiable non-monetary asset without physical substance, we have to see their use in production or supply of goods and service or rental to others for admin purpose. Simple. Design and drawing. For products for which design and drawing is purchased, are those sold by entity? If these products are sold, design and drawing are valid. Understood? Okay. Intangible asset is not in active use. But if those design and drawings are not used, they are of outdated product, write them off. Write them off. Okay. Entire asset should be amortized. Additions, same procedure. Verify movement in intangible asset. Opening plus addition minus deletion. If they match with closing, perfect. Arithmetical accuracy. Assets are authorized by appropriate person. Proper procedure like codes, standards are there. Very important. No research cost is capitalized. Always remember, any intangible asset divide into two parts. Divide into research and development. Research, at research stage, we don't know asset will be developed or not. Pharma companies do crores of research. They don't know medicine will be developed or not. Once they receive approval, development will start. From that day, you can capitalize because we know some asset is going to be developed. From the day you know something is going to be developed, its development cost. As per AS 26, research should be charged to P&L. Check the certificate report given to the entity. Date of such intangible asset is linked to commercial production. From this date, you can start commercial production. From that date, you can capitalize maybe. Deletion procedure is proper or not. Okay. Valuation. Simple. Whether entity has amortized all intangible assets. The method used for amortization is as per the benefits consumed by entity. If the value is even below more than amortization, see, impairment loss is charged. Okay. Impairment of goodwill is very complex. Maybe you will learn in CA final, or maybe if not even CA final, you will learn only. After that, when you will learn. Okay. CCM. Amortized all intangible assets. Amortization method reflects patterns consumed by entity. Auditor has, management has done impairment assessment or not. Simple. Rights and obligation. Simple. All the intangible assets should be in the name of entity. Over. Disclosure. Proper disclosure of goodwill, brand, software, masthead, mining right, publishing title, licenses. Over. Next, loan and advance. What do you want to check in loans and advance? Existence. You tell me how to check existence of loan. Does loan exist? Physical confirmation. Okay. External confirmation. If that party says, yes, you have given me loan. If their balance is in their book, okay. Confirmed. See here, same one only. For existence of loan in advance, direct confirmation should be done. Same like debtor. But here we can also confirm principal amount, interest, terms of loan. All this we can confirm. Agreement. Agreement is another way. How to ensure completeness? Take the list. Management give me list of all the loans. See whether same loans are there. For new loans, what to check? Okay. See board resolution authorizing a new loan. If the loans are given to related party, okay, what we will check? If the rates are proper or not, terms and conditions are proper, okay, are they properly secured, terms of repayment are proper. Obtain list of loans and advance. Second, verify loan agreements in respect of loan outstanding. Okay, see the agreement. Third, only loan is granted if agreed by memorandum and articles. Inspect the minutes of board of director to confirm all the loans are approved by board of director. If it's related party, see at arm's length price. Most important, if you have given any advance to government authority, see it's reflecting in online returns. You have to given, okay, is it reflecting in online returns? Okay. Advance for GST, is it telling in the books of accounts or not? Okay. Simple. Any doubt? No doubt, sir. Now, valuation, even more simple. Assess the provision for bad and doubtful debts is done for all the loans in which we are not receiving amount. So classify the loan. How you could classify? Aging report. Aging means how much time not received, not currently due. 30 days due, 30 to 60 days due, 60 to 180 days due, 180 to 365 days due, more than 365 days. Especially for 180 to 365 and more than 365, why are you not paying? Agreed not paying, why are you not booking provision? After analysis, discuss with management why a provision is not done. Second, assess the bad loan to see if provision is booked or not. Check write-off is authorized by appropriate authority. If foreign currency loan is there in valuation, always remember, restated as per AS 11. Simple. Had I not been there, you would have still told me this only. Disclosure. Security deposit, loan to related party, capital advance, other loan separately disclosed. Disclosures you just have to copy from there. You cannot learn. Okay. In real life, I am telling. In all the loans, what we'll do? Secured, considered good. Unsecured, but still good, and doubtful ones. You have to show separately. Bad and doubtful show separately for all loans. Seems good? Good till here. Tell me, trade receivable, debtor, absolutely same as sales. How to check existence of debtor? Physical confirmation. Okay. You tell me what else we can do except external confirmation. Tell me. Chalo. Invoice and delivery notes, absolutely perfect. Bill, perfect, perfect, perfect. Very good. Excellent. Lot of points you have told. Number one, check whether control exists. Any invoices, same point repeat. Any invoices recorded more than once. Ask for aging report. Okay. Check whether realization is done invoice wise or risk and reward wise. Perfect. If any balance is outstanding for longer period of time, ask the reason why this balance is outstanding. Okay. Most important, send confirmation to all. Small accounts on random, big accounts fully. We can send four types of positive, negative. I hope you remember. SA505. Okay. Any discrepancy, do further inquiry. Review sale and accounts with last year trends. Okay. In last year, this much sale, this much was debtor. This year, is it the same? Then analytical will be good. Okay. I hope you understood. Absolutely copy paste of same. So I will not go very much detail here. Completeness. Same like cutoff. See the last 5 transactions to see. Okay. Goods are dispatched, only then sales are recorded. Otherwise, you cannot record the sale because sale should not be recorded on invoice. I am repeating all this. It should be recorded based on risk and rewards. Ensure all the goods prior to year end are dispatched, only then recognize in debtor. Third, trace the few invoice in debtor with original amount to see correct amount is recorded. Okay. Match invoice with shipping date. For some goods, that are not dispatched, okay, but it says bill on hold. Bill on hold means what? Bill and hold. Bill but keep the goods with you. Check terms with customer. Many times they will tell no problem, bill us, we don't want the goods right now, but bill us right now. Okay, so check terms with customer, why they have told like that. Okay, maybe their go down is full or whatever, rates are going to increase, then you can recognize the same. Every time they are not wrong. Many times they will tell bill and hold with you. Now you say why? Because rates will increase in future. Okay, no problem. But what if tomorrow something happens? Responsibility is ours. We trust you. Don't worry. Okay. Review sale return after year end to see profits are inflated. Okay. Year end, check the sales return. Same thing. Discount is valuation. Valuation, what do you have to do? Okay. Classify all the debtors not currently due. 30 to 60 days, 60 to 180, 180 to 365, more than 365. Obtain a list of debtors, compare with last year. Analyze doubtful debts and see whether they are not included in provision. Okay, and see provision of debtors is done at a reasonable rate. Okay, for all the outstanding for more than 1 year, 20%, and whatever you feel adequate. Check all the write-off is authorized by appropriate person. Same. Now the very time pass. 1 minute over. Cash and cash equivalents. Existence, completeness, valuation, existence, completeness, valuation, rights and obligation, presentation, disclosure, all in once. Cash balance, what you will check? Check, go do physical surprise check of cash balance. Okay. And while doing the surprise check, okay, don't do on year end because they know year end you are going to come. So they will write everything perfect. Go on any random day and do what? Cash verification. Go there and do cash verification. While doing, always ensure auditor is present. While doing, always ensure auditor is present in the cash verification. Now you will ask me why auditor is compulsory to be present in cash verification. Okay, sorry, cashier should also be present. You will say why cashier should be present? Because many times he will tell you have done fraud. Now we tell, Arey yaar, this cash is less. You have removed. I think you removed. Why will I remove? I am auditor. You are there with me only. So keep him also together. If the cash balance is kept at branches with the people, okay, what to do? Verify. Go there also. Go there also. Are you clear? So I hope you are clear. Cash and cash equivalent. Go everywhere. For bank, what to do? Take confirmation from the bank. If they are not giving confirmation, check online balance. Okay. Is online balance matching on 31st March? If that is also not possible, go to bank. You have to after Satyam fraud, we have to physically go to the bank to verify. Okay. Is the balance matching or not? All points are not simple, super duper simple. One time if you read 100%, you will remember. Surprise check should be done for cash balance, not on the year end. BRS also we can do, absolutely perfect, absolutely. But anytime after year end you can do. Okay. Anytime during year end, anytime after year end. Okay. Cash must be kept on last day, you will keep to tally. So don't do on last day. If it is at more than one place, head office, branch, employee, we should test check to ensure there are no malpractices. It is recommended cashier should be present while counting the cash. Otherwise, blame will come on auditor. Okay. If there is rough cash book, okay, check the entries from the main cash book. If there is a rough cash book, see that also, okay, and see entries are made in main cash book. Many times I will write in rough, but in main I will inflate the things, okay. For example, refreshment expense. In rough I wrote 600, but in main I wrote 700 and 100 rupees in pocket. So that also check. We should check the BRS and client system of making bank reconciliation statement. A significant and important activity is to contact the bank, okay, and confirm current account deposits, okay, saving account deposits, escrow account, okay. Certain accounts are used only for dividend, check that also. Check 100% confirmation in case of what? Bank account. Compulsory. Why? You will tell me. It's very compulsory after Satyam fraud, okay. Check them with bank statement or send the members of audit team to confirm. In addition, last point, okay, foreign currency accounts are restated as per AS11. Foreign currency account restate because dollar rate will change. Simple, easy, no super duper easy. Inventory existence already done. Ownership inventory should be in the name, okay, our name it should be. Consigned goods, if others goods are kept, don't include. Collateral agreement, you have given inventory to as a security to third person for loan, etc. Examine invoice. For inventory kept with third party, take confirmation. Inventory valuation, divide into two parts, RM, WIP, FG, all simple. Costing, remember. In raw material valuation, see the rates are matching with what? Invoice or not. If standard cost method is used, see the appropriation of standard cost is proper. See what all things should be included in raw material, okay. Maybe carriage inward will be included, non-refundable duties will be included. Remember your costing. See, depending upon how business operate, see FIFO or weighted average method. Reasonableness of method is proper if your business is FIFO based or weighted average, see that. Second, ascertain what elements are included in cost. Carriage inward, non-refundable. Second, if standard costs are used, see the method of standard cost. Test check the prices, okay, with invoice received. Follow up on damage or obsolete inventory with a view to establish NRV. Clear? Okay. This last point we forgot, standard cost. Test check the prices with invoice, okay. If raw material are lying idle since long time, then they should be valued at NRV, net realizable value. Don't forget that. For damaged or obsolete inventory, find out the NRV. Explain or understood? Understood. WIP. What do you mean by WIP now? Work in progress. Even more simple. Okay, first of all, see the method of understanding working. It's very difficult to find out WIP. Why? You will tell me, sir, why is it difficult to find out? How much windmill is complete? How you will know? Okay, I am not a champion of windmill. How I will know 40% complete, 30%? First, see the basis of WIP is proper. If you remember our working capital chapter, those of you who don't know, we teach FM, SM audit the best in India. So in our FM working capital chapter, we take raw material 100% and overheads and labor 50. You remember? Okay. So here also we will see, okay, that valuation is proper or not. What is the basis of valuation? How much overheads and labor to consider? That one. Understand how stage of production is measured. In case of estimate, what is the use of, how you have arrived at such estimate 40% complete, 50%? Ascertain what elements are included in cost. If overheads are included, a certain basis of those overheads are proper or not. Ensure. Material exclude abnormal cost. Don't exclude abnormal. Finished goods valuation. Ensure what costs are included in the finished goods. Okay. Finished good to simple. Okay. What is included in the finished good? What's the procedure of valuation of finished goods? Overheads, labor. Okay. Don't include selling expense in finished good. If you remember, why? Only to manufacture the goods. Follow up on damaged inventory. Okay. Whichever is damaged, this NRV should be reduced. This FG is lying since 6 years, 4 years. NRV, the value is much lower, net realizable value. Request client to provide breakup 0 to 30, 30 to 60, 60 to 120, 120 to 180, 180 and above. 60 to 90, 90 to 180, 180, 360, 365 and above. Especially on older, why you have not done provision? Do the provision, find out the NRV, see the write-off is authorized by appropriate person. In all valuations, these 3 points are there. Write-off is done by appropriate person, proper write-off is done. See the vendor list to determine price is less than current price. If the price has reduced, charge the actual price because we have to show inventory value today. Verify correct application of cost or NRV. See the stock turnover ratio to find out obsolete inventory. Clear? See, this inventory is not getting sold only, and this obsolete inventory, write them off. Simple. Share capital, even more simple. In share capital, now only two things are there, okay, because trade payables and all is absolutely same as purchase, okay. So very simple, share capital. First of all, real, we are done with three things, just 20 minutes now left or 15 minutes over. What all we are done with? Number one, assets. So number one, income. Number two, expense. Number three, asset. Number four, and the last thing left is liability. In liability, share capital will be there, reserves will be there, borrowings will be there. Current liability to same, okay. Start. Share capital. Share capital, what I want to check? Existence, completeness, valuation. Remember, in real life, 99.99% times, okay, share capital is same. So just compare with last year. Authorized, issued, paid up. Is it matching with this year? Then nothing to do. Okay. Trace with last year. Is it matching with this year? Absolutely nothing to do. Okay. Second, okay, I trace the share, but if there is a change, then lot of things to do, okay. But if there is change in authorized, issued, paid up share capital, then see it is as per the AOA MOA, okay. If we have increased the paid up share capital, see the terms of company law are followed or not. Now more of a company law lecture will be there, okay. All the terms, if there is increase in authorized and paid up share capital, various forms you need to file, whether you have filed the same. Okay, if you have issued new capital, whether terms of issue are proper, okay, a minimum subscription criteria is fulfilled, separate bank account is there, okay, share application money is received properly, 100 things, compliance of SEBI is there. If new issue, see, share capital can either be done in 5 minutes or it will take 10 days. Why 5 minutes? If no change, 99% time no change, so same in real life. But if there is a new issue, then to unlimited time you need to spend. Read. Tally the share capital authorized, issued and paid up of last year with audited statement. Second, in case there is no change, obtain confirmation from management. There is no change in the capital structure. Third, in case there is a change, paid up capital is within the limits of authorized share capital. Authorized share capital should be examined by verifying MOA, Memorandum of Association. Okay, authorized share capital. Obtain, see the paid up share capital is within the limits of authorized share capital. Authorized share capital can be done by checking what? MOA, Memorandum of Association. Obtain copies of relevant resolution passed at the meeting of BOD authorizing increase or decrease in share capital. See the resolution passed of board of directors. Okay, for increase or decrease in share capital, resolution is properly passed or not. Next, in case of fresh issue, minimum, this all you know, law, try to write maximum law, minimum subscription, minimum application money, separate bank account, payment of commission is done. No shares are issued at discount. Compliance with SEBI is done or not. Obtain and verify copies of form filed with MCA. Whichever form you will file, okay. SH7 for increase in authorized share capital. Pass 3, increase in paid up share capital. You have to remember this, okay. If it comes directly, you will get 4 marks. SH7, increase in authorized share capital. Pass 3, paid up share capital. In case of increase in share capital, Company has correctly calculated the stamp fees and duty payable to MCA, Ministry of Corporate Affairs. Okay, over. Shares issued at premium. Okay, whenever shares are issued at premium, see proper bank account debit to equity share capital to security premium. Over. Bank account debit to equity. See, separately money is credited to security premium. Security premium cannot be used for five purposes. Whole world knows this. Do you remember what are five purposes? Number one, for issuing fully paid up. It can be used for issuing fully paid up bonus shares. Okay. It can be used only for five. For writing of preliminary expenses. For giving discount on issue of shares. All these points are there. See, in case shares are issued at premium, verify. Adequate premium is transferred to security premium. Application out of security premium is used only for five purposes. Buyback of share purpose. Towards issue of fully paid up bonus share. Writing of preliminary expense, writing of any other expense in connection with issue of share, premium payable on redemption of shares or debenture for buyback of the share. Simple. This you know in company law. Okay, same. Okay, so security premium. See, the amount is credited to security premium account, and that security premium can be used only for five purposes: bonus share. Okay, fully paid up bonus share. Second, for buyback of the share. Third, for writing of preliminary expense. Fourth, any other expense incurred in connection with issue of share. And last, premium payable on redemption of preference share or debenture. Over. Reduction of share capital. Many time company is going through downturn. Okay, company's wealth is suffering. Okay, company is not able to repay liabilities. Then we go to tribunal. Okay, then tribunal will revise the terms and conditions. Okay, and words will be used and reduced. That is internal reconstruction chapter. You have solved enough sums on that. You have a fair idea. Whenever there is reduction of share capital, 4 or 5 points. Number one, whether tribunal order is passed for reduction of share capital, see the terms are fulfilled or not. Third, if tribunal has told you have to use the words and reduced, whether you are using the same words or not. Okay, the tribunal copy is filed with ROC or not. Okay, you have to tell that also. Okay, then I hope it's okay. Same thing. Okay, see here. Auditor has to follow requirements of section 66. I hope you know whatever you have learned that. Copy paste. Special resolution is required at shareholder meeting for reduction of share capital. See, special resolution is passed for reduction of share capital because it's a big thing. Special resolution, not ordinary. Special resolution is passed. Second, verify articles authorize reduction of share capital allowed as per AOA. MOA is also suitably amended. AOA and MOA, what's the difference? MOA is to the World Memorandum of Association. What are objectives of company? What we intend to do? AOA is internal rules and regulation. So see whether AOA is amended. See whether MOA is suitably amended for reduction in share capital. Any default you have done in the payable of interest on deposits, etc. Okay. Examine order of tribunal confirming the reduction and verify the copies filed with ROC. Company has complied with all conditions given by tribunal for reduction. Check the registered certificate as regard to reduction of share capital. See the words and reduced have been used. Okay, if tribunal has told the same. Disclosure very simple. How many shares are there? How many new are issued? Okay, what's the change, etc. Reserves and surplus. Existence, completeness, valuation. Absolutely same. Picture perfect same. How to check reserves and surplus? First of all, closing last year should be matched with the opening. Last year closing, this year opening. Whatever we have earned during this year, is that added in P&L and closing should match. Last year closing, this year opening, plus additions, okay, of P&L closing. Trace the opening balance with year end. For additions in current year, okay, trace the movement of P&L during the year. Check the movement of P&L during the year figure. Okay. Second, movement can also be traced with statement of changes in equity. You can also check with SOCI. For adjustment relating to dividend and tax, verify resolution is passed by shareholders for dividend. If the resolution is passed after the balance sheet date, it should be shown in next year. See here. Verify resolution by board of director. For dividend declared after balance sheet date. Okay. Then as per AS4 revised or Ind AS10, we should show in next year. Very simple. Trace the opening balance. For additions during the year end, see also with statement of changes in equity. Dividend and tax resolution is passed by board of directors and shareholders. Second, if dividend is declared after balance sheet date, then you have to show in next year. Over. Disclosures. Part 1 of Schedule 3 of Companies Act. What? Capital, reserve, redemption, reserve, security, premium, retained, earning. Over. Borrowings. How to check existence of borrowing. Whether borrowing exists or don't exist. Okay. How to check? Borrowing. Take confirmation, okay, from bank whether we have borrowed. If bank will confirm, it's perfect. See here. Review the board minutes for new lending agreements. You have to see the board minutes are there. Whenever you lend, board of directors resolution is there. See the board minutes for new lending agreement. During the year, see all the new agreements. Agree loan detail with loan agreement and see borrowings don't exceed the limit. Obtain confirmation from bank, of course. Take the details of lease, hire purchase if you have taken anything. Okay, see that agreement also. In case of debenture, see the terms of redemption. What are they? Obtain written representation from management. They have included all the borrowings. Completeness. Same. Obtain a list of all the borrowings. First of all, compare with last year. Okay, whichever are new borrowings, okay, for that what we have to do, see the loan agreements for all new borrowings. Second, see board of director resolution is there. If they have discussed it in board of director minutes and resolution is there, it's perfect. Okay, obtain a schedule of all the loans. Consider evidence of additional debt through examination of BOD, significant contract, confirmation from bank, subsequent disclosure. Trace the closing balance. Review subsequent transaction to see loan after balance sheet date. Okay, after balance sheet date, whether you have taken any loan. Roll out independent confirmation take. Send the confirmation to all. Send reminder to those who are not replying for confirmation. Compare balance with, if you receive confirmation, compare balance with books of accounts. Over. I think this is last. Yes. Borrowings. How to do valuation? Very simple. Check the loan agreement. In loan agreement, this much is there, this much. If you are going to pay premium, okay, on redemption, then recalculate, see terms are proper. Determine accounting policy valuation of debt. Agree the loan balance with loan agreement. Recompute interest payable on redemption of debentures. For foreign currency loan, see, it is revalued as per AS11. Understood? Yes. I hope you understood a knack of this chapter. What is this chapter trying to tell? Everything is same, but it is not same. Okay. So it's just whatever we have done, it's repeat telecast of that. Nothing new is there. Not even a single word. Okay. Hope you understood. Okay. With this, we complete our wonderful, amazing, mind-blowing journey of audit. Okay. I hope this lecture is very, very, very fruitful to you and work very, 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 very hard. Two people really want you to pass at any cost. Those are your mom and your dad. The day you pass, I think two people, for them it is life. Okay, they say after few years, love between mom and dad will reduce, but they are alive. Okay, they are kicking, they are working so hard because they want to see that child see. And when you become CA, they get a new lease of life. They feel, oh my God, everything zero now. For us, he is the main thing. Okay, we have achieved whatever we wanted to achieve. The day you become CA, your mom will become half CA. Okay, so work for them. That is what we want to tell. Okay, and nothing else. Okay, all the best. Thank you so much. See you all very soon. Bye bye.